So that's a difficulty that I think not only India faces.
No, but specifically on FPI flows coming to the equity market, Harold, what is your sense? Because India was anyway not getting too much flows. July, we started seeing outflows. Now, will this tariff issue become an additional overhang, or will investors look through this as they look at Indian equities?
No, I think it will be a little bit of an overhang because they have excuses to look at other markets which look really interesting at the moment. And that is really North Asia, Korea and Taiwan, even more so than China. So far, the Chinese market is done pretty okay, despite the tariffs and these sort of things. Like India is a domestic-oriented market, but the excitement for the moment lies in Korea because of corporate governance changes taking place there. But also, they make particular what are called high-density memory chips that you use in AI, and it's the same in Taiwan, where they make custom-made chips for NVIDIA that are being used in AI. So there's this feeling that there's growth in North Asia. In addition to that, we got global defense spending that benefits companies in Korea again as well. So there's a lot of attention that goes there, and that needs to be funded. And India is one of these markets where people say, well, a little bit expensive, growth is coming down, they get tariffed anyway. So it's a sort of an excuse to use that and reallocate money elsewhere.
All right. Hi, Harold. Good to see you. But, you have a neutral call on India. And as you said, valuations has been one of the problems. But now we have done some bit on the fiscal side. There's monetary push as well that's taking place. And the Q1 earnings, in fact, are not as bad as what the street was working with. There is hope that we see a recovery in the second half of the year. If that's the case, would you be looking at changing this stance? We've already pulled back a little bit from the recent peak. We're down 1,000 points in the last 1 month or so. And from the peak as well, we have seen a bit of a correction. At what level do you think you will start getting back into India?
Yeah, I think actually a little bit over a year ago, we had 10 worries about India. It was expensive and these sort of things. Everybody was overweight already. Probably 8 of these 10 worries are now out of the window. Valuations have come lower, earnings expectation lower. People have sold out and reduced their weightings in India. So all of that is actually on the margin positive. What we now need to see is that regionally starts to fit in as well. And then I would say things, the stars are really aligning for India. And we might not, to be honest, too far away from that, because as I just spoke about Korea and Taiwan, to be honest, those stories have been rallying for some time now. And at some point in time, we'll probably start to fizzle out as well. AI is really exciting, but you can't have stocks just go up and up and up for a prolonged period in time. Because then they run into valuations issues. Well, were that to be the case, then I think you could actually see that money that I just said was left India to go to Korea and Taiwan might actually start to return back into India. And that might well be something that happens in the second half of this year. What we need to see is that we get more confidence on growth in India in the first place. Now, we're in the midst of earnings season, and some of that confidence is starting to come through. But so give it a bit of time.
Was a interesting bunch of points you make, Harold. The other point I was just thinking as you were talking, Harold, the big global theme, right? I mean, the one singular theme globally for the last 1 year, 1.5 years is, as you just said, AI, right? Bulk of the new money has gone into, has tried to find ideas around it. I mean, either direct plays, big global tech giants, supplies into it, power, whatever, right? I mean, that's been the big one. And that theme kind of is absent in India, right? Except maybe, I mean, if you want to play it through the power side, there are no plays, I mean, actually. And that could perhaps, at the margin, you think, Harold, explain why, I mean, FII selling this year has been about $10 billion. So you think that's partly a factor?
Yeah, that's partially affected. I mean, this is why we see this rotation into Korea and Taiwan, because they're so very well exposed to this particular team. They are the hardware producers to keep AI running, the chip makers. And you see, if you go deeper in these markets, there are other companies that benefit from this as well. You got companies, for example, for AI, you need large data sets. So you have companies that organize servers and these sort of things. Even in Malaysia, there's a company that is involved with that and has also performed very well. But you are right. that is very much a Korean-Taiwan story. China has its own DeepSeek and its own companies there as well. India and ASEAN are much less exposed to this. They don't really make this particular product, so or not really into that particular food chain. So that means that at the moment that's not really good, but that can change, right? Because at some point in time, it's not going to be AI and making it. It's about how companies will implement it, how it makes them become more productive, how they maybe can redistribute their product, rebrand it, reposition it. That's why Indian companies, of course, can benefit as well.
Yeah, it's quite interesting that today morning, most of the major markets, I think even Taiwan, none of the markets were down big time, despite the 100% tariff on semiconductor imports. But then that's just how it is. Just finally, quickly, Harold, you said things are becoming a little better for India, including earnings. Most people here say that it'll be 9 to 10% earnings growth this year. I mean, tell us what you're thinking, and whether 10% earnings growth will be enough to get foreign interest back.
Yes, I suspect it. Actually, at the beginning of the year, we made a rough guess, and we thought, earnings growth in India probably is going to go to 8 to 10%. At that time, it was 18. So the growth expectations have come down to where we start to feel like this is probably reasonable. What we now need to see signs that actually that is happening, that it doesn't fall further to 6, 5, 4, 3, 2, 1 or something like that. So if we get some sense of stabilization at, say, 9%, 10%, that is good, because then we can price off that. And then, as I said, we've seen lower valuations already. People have already sold to India. If you see some tiredness in the AI story and or China, then suddenly India might look okay again. So we're working into that direction, it seems, but we're not there yet.
Relative. Life and markets tend to be always relative. All right, Harold, thank you very much for joining in. Great perspective. Good speaking with you this morning. You have a great day, and we'll connect again soon. Well, there you go. That's a market perspective coming your way on how India is positioned and how it's competing, not just in trade, but of course, inflows as well from regional Asian peers. Let's move on and get you some reactions from India Inc. as well on Trump tariffs. Lupin's management has told us that if Trump's 250% tariffs on pharma become a reality, then it will have a significant impact on the U.S. market, as 75% of the drugs in the country are imported. Take a look at what the company's interpretation is of all this tariff talk.
If there is a 200% or thereabouts, I'd say anywhere from 20% to 200% tariff on pharmaceuticals, it would have a significant impact on the U.S. market per se. I mean, as we've talked in the past, 70% of the drugs in the U.S. are imported. 50% of generics are imported from India. So obviously, high tariff will have an impact on drugs that are imported from India. We would expect to see price increases, so inflation in the U.S. Generic, business and pricing, and in competitive areas where there's an asymmetry on tariffs from different countries, we would expect potential disruptions, especially essential medicines that are highly competitive and on thin margins. So we would expect a combination of inflation on generic prices, as well as potential supply chain disruptions in the U.S., both for the industry as well as for ourselves.
Well, time to slip into a short break. Up next, we'll be joined by the management of Pearl Global to decode the tariff impact on Indian textile industry as Trump hits India with an additional 25% tariff. Stay with us. Welcome back to Bazaar Morning Call. Well, as promised, let's get straight to the management of Pearl Global and decode the tariff impact on the Indian textile industry. We have Pallab Banerjee, the Managing Director and Group President at Pearl Global. Hi, Pallab. Good morning. Shocker coming in from Trump. Give us a couple of numbers now. How does India stack up post this recent tariff with some of the competing nations? If you could help us out with that.
Yeah, thank you again. Just spoke last week with all of you.
Yeah,
and by the time
another shocker comes in, so that's why we re-invite you.
So 25%, we were all struggling to mitigate that risk. But now with 50%, most of the retailers immediately want to move out the business from India to other countries. Fortunately for Pearl Global, we have been working all through the night already, as soon as this announcement came in. They want our US part of the business to be moved out to Bangladesh, Indonesia, and Vietnam, where we have our facilities. And I think that would be I would say, a death knell for at least for this particular season, which is coming up for the Indian industry, because 50% tariff, most of the retailers won't be able to absorb or have any mitigation.
But Pallab, sorry to come in over there. Exactly on this, I'm so glad you joined us this morning. Now, I want to understand, because you're also manufacturing in Bangladesh and in Vietnam, and you're saying you're going to be shifting some of the business, as in some of the manufacturing, to them. But there's transshipment. Now, that transshipment tariff, does it only apply if the goods are originating from China? Or, I don't know. I mean, is there an issue over there?
No, it's not transshipment. We will be manufacturing this product in Bangladesh. Or
so you'll get the Bangladesh tariff, yeah. Okay, you'll get the Bangladesh and
if you make somewhere and then you send it to somewhere and then you export it out of there.
Yeah, okay.
I mean, that is anyway illegal.
That's true. That's true.
Pallab,
Nigel, just one question. And this is a basic fundamental question. There are two dates here, Pallab. One is August 27th and the other one is September 17th, right? And the executive order says goods that were loaded at the port of origin and in transit by August 27th and entered before the cutoff date of September 17th are exempt from the additional 25% tariff. So actually the final date is September 17th. Am I wrong in that understanding?
Yeah, so no, correct. So what will happen is that whatever goods are in production, so every customer wants those goods to be shipped immediately before this deadline comes in. In the August itself, whatever we can put onto the boat, it has to be shipped out. There will be some pressure on the air shipments also, because it says that it enters the customs of US. So I think that clarity we will be getting. So these are the two pressure that will come immediately, because 50% is quite exorbitant and more like a staller, I will say.
No, so Pallab, if you send stuff now before 27th of August and it reaches US before the 17th of September, then it is exempt, right?
Yeah.
There are no tariffs.
Only the 25% would be
correct. The additional 25 will not be applicable. So my question is, will we see a big push? For example, I think we've seen this in previous instances, right? When something similar happened with China around Liberation Day, and they said tariffs are going to be implemented, there was a huge surge of exports into the US to beat the tariffs. I think
whatever goods are ready.
Whatever goods, of course, they have to be ready, and ships have to be available, right? You can't fly them. You have container space, etc. as well, ship space, etc. as well, right?
Absolutely.
But we've seen this. I mean, even with Apple iPhones, to beat those duties, I mean, there was the report that Apple sent hundreds of millions of iPhones made out of India into the US to beat that tariff deadline. You think we should expect a big surge between now and 27th?
So whatever the goods are in stock, most of the retailers are reaching out already to the respective suppliers and vendors to ship it out immediately. So that's already in motion.
All right, very quickly, I think 50% of your revenues from the United States, right? How much of it goes out from India to the United States?
So what we have been working upon over the last few years is to have this dependence on US to come down, because geopolitics and all these uncertainty is coming into play. So today we are almost like 50% from each region, if I have to look at it. India, this 50%, as of now, this particular year also, we are running at a run rate around that. So that has to be immediately now brought down further and goes to these other countries. And the other production, like my customers of Australia, Japan, So those are the production that will be coming into India. So this shuffling and juggling will be happening now.
No, so Pallab, what we're trying to understand is, let's talk about your revenue pie. How much comes in from the US market?
Approximately 50%.
Okay, so 50%. Now, as you go around changing some of the manufacturing bases, in the immediate next quarter, now, I mean, right now we are in Q2, Q3, will there be a revenue hit just because of this disruption? Just trying to get a quick near-term guidance.
So our results are supposed to come out today.
Okay.
So may not be the numbers, but what I would say is that what we are seeing that immediately since the tariff got finalized for the other countries, so we saw a huge surge of demand in those places because business always looks for uncertainties and not uncertainty. So India is still uncertain because there could be some further negotiation. Things might change. But other countries, it's more or less things like for this next 5-6 months, it seems to be this is 19 or 20% tariff is already there. So what we are seeing is immediate surge of business in all other regions. India, we need to adjust. Some of the US production has to come out of India to other countries and have to be, the same capacity has to be filled up by the other countries' production, which may be happening in Bangladesh, will bring it down to India. So that's the juggling that will happen. It's a short-term pain. And of course, I think with the strategy that US administration has been taking, I would say the uncertainty doesn't end here. So we might see more changes in the next month and so.
Okay, all right, Pallab, thanks very much. Good getting you back and sort of getting that clarity with regards to what can happen. But this is all very fluid, right? I don't think anyone expects this 50% to be permanent. We'll see this going lower. I think GIFT Nifty came up on your screen indicating a 70-75 odd point lower start. Dharmesh Kant is with us, Head of Research at Chola Securities. Dharmesh, good morning. Good to have you here. As far as individual stocks go, what's on your radar? 2 or 3 names on the back of earnings or, of course, all this tariff-related news flow. Dharmesh.
Yeah, good morning, Prashant. I think domestic centric, focus companies should be looked into. And there, I think Hero MotoCorp and Bajaj Auto came out with numbers. So we are, bullish on the two-wheeler space. Hero MotoCorp, we have discussed earlier. But the numbers to my mind was very good. If you compare that to Bajaj Auto. And the reason being, if you look at Hero MotoCorp, there was around 11% decline in the sales volume, the bikes being sold in the Q1. And still they managed to, come out with a higher operating margin and around 2 to 3% kind of a decline in profitability on a pro forma basis. And the July numbers and June numbers of the bike sales were fairly encouraging. Around 21% kind of sales growth was there. Keeping this in mind, and if you compare this with, say, Bajaj Auto, which came out with decent set of numbers, but the volume growth is missing out there. It's only hardly 1% kind of a volume growth was there. And July numbers were for dismal, 3.3% kind of a volume growth. Going forward, their con call suggested around 5 to 6% kind of a volume growth. So that is a bit scarier. So I think like by like comparison, Hero MotoCorp looks a good value buy. It's trading at 19 times 1 year forward PE multiple, where Bajaj is at 30 times 1 year forward PE multiple, with ROEs of Hero MotoCorp and Bajaj Auto both at same place, 23 times of PE multiple. So going into the festive season, this time even, Ganesh Chaturthi is being advanced into a month of August. We think that 5 lakh kind of a run rate is very much likely for Hero MotoCorp with export sales. So we are going with a green on Hero MotoCorp for this season. So that is one area which we are finding quite interesting, along with Mahindra and Mahindra.
Okay, Hero MotoCorp and Mahindra and Mahindra. Dharmesh, those are the 2 stocks that you like from the auto pack. Got that? Stay with us. For the time being, we'll slip into a short break. We'll continue our chat with Dharmesh. We'll also get you some trading ideas. Don't go anywhere. Well, we've had a lot of new age companies that have come in with the IPO, and after a while from the old economy, we have JSW Cement that will be opening for its issue today. That's the IPO issue. The price band comes up for you around 139 to 147. Implied market capitalization will be around 20,000 crores. What's the total fund they're looking to raise? It's around 3,600 crores via the IPO route, and out of that, the fresh issue is close to around 1,600 crores. OFS is around 2,000 crores from investors. The promoter holding, because of the dilution, will come down because of the dilution from around 78% to around 72%. Why are they raising this money? Part of the money will be used for their capacity expansion. At Rajasthan, remember, they are expanding capacity out there. The total cost of the project was ballpark 2,500 crores. They've already incurred close to around 1,250 crores. So close to around 800 crores will go towards this. The remaining of the money, some part of that will be going for debt repayment. Close to around 520 crores. As of the last reported number, around 4,200 crores is what their debt is at. So close to around 12-13% of the net debt will get reduced. They have exposure majority to South India and parts of West as well as East India. They've already said they're around 20.5 million tons, which is going to double in the coming years. And most of it will be organic in nature. If we're looking at their numbers for the past year, last year for the industry itself, it was a weak year for the industry. So they reported net loss. Their operating profit as well came down. But for this year onwards, things actually will look up for the entire industry, and for JSW Cement as well will be no different. Valuation-wise, it's not coming at very, very cheap valuations. JSW Cement, their price, they are issued at quite a elevated level, because on an EV per ton basis, it's more than $120 per ton, and even on EV upon EBITDA, it's close to around 19 times. We know the group pedigree has been such where they've created wealth. Whether you look at steel, whether you look at energy as well. But we'll have to keep an eye out on this one. For the time being, this year will be a far better year. They'll reduce debt. They're looking at capacity expansion as well. Dharmesh, what do you make of this issue? Did you have a look at it? I was at the conference, and Jindal very candidly said at one point of time they were thinking of selling it. Then he came in there, he turned it around, and today it's a 20 million ton plant. What's your view on this issue, and what do you like from cement?
Yeah, good morning, Nigel. I mean, the issue is fairly priced. It's not very attractively priced, if I may say so. And the horizons are good. I mean, they are talking about doubling of capacity and all, but the concern remains of the geographies in which JSW Cement would be operating. So primarily into South India, which is already supplied with over capacity, and then the East India, where the competition is fairly high. And their UltraTech has been, fairly robust in gaining the market share. So it has to be seen how, effectively they are able to gain market share in the East India geography. At the same time, the gap between the clinker and grinding capacity is way too high than the industry standards. So around, clinker capacity is 40% of the grinding capacity. Usually it is at 60% or so. So that means they will be buying clinker from the market. So these are our 2-3 concern areas for JSW Cement. So we are giving it a pass as far as, IPO is concerned. We'll see how the performance happens, and then maybe we can have a coverage on this. As of now, it's more of a neutral to a slightly negative bias on this IPO.
Got it. Okay. All right. That may stay with us. We'll take a short break, come back. Technical experts as well will be joining in.
Welcome back. Let's quickly take a look at some of the Asian markets. The color is a little more mixed. When we started off at 7:30, it was a wide sea of green. Now, not so much. Look at the Hong Kong market. It's quietened down. China's flashing a little bit of red. The Japanese market, however, is the best performing across the region today with a gain of about 0.7%. Let's get the implied open up. Last we saw it was about 70 points lower. Yeah, still 70 to 75 points lower. That's the indicative start. Let's take a break. We'll come back with the trading setup and more, of course, trading ideas for the day.
Okay, welcome back. There's about, a minute to go for the pre-open session. And the pre-open, actually, we will spend a minute or so looking at the rates, etc., would start to come in. But let's get Sudarshan Sukhani and Mitesh Thakkar, who are with us, with what they'd want you to do as far as trade is concerned. Gentlemen, good morning. Good to have both of you here. So we take what we get, and I think what we're getting is about a 60, 70 point, now what, 80 point lower start, Mitesh? How would you trade it? Is there a trade? And then we'll talk stocks.
Good morning, Prashant. So I think, the Nifty will most likely, the way GIFT Nifty is indicating, will open below or just around 24,500. Now, that's my support level. So I'm not in a hurry to immediately open short positions. But in case we see there's no recovery post the gap down opening, then I think you will look at some kind of negative trades. We already have some put spreads on the indices. I've been advocating maintaining put spreads because, one, this is an extremely sensitive market with the news flows, and therefore volatility could increase. And the idea is that it's a slightly safer bet, still give you advantage in case the move happens on the downside, which is what we've been cautioning against. So I think let's see, 24,500 is an important pivot for me. In case we don't see follow through selling, then I think we might be in for a bounce back from these levels. In the last 5-6 days, on 2 occasions we have bounced back from around 550, 500 zones. So I would not ignore this level.
Okay, all right, Mitesh, take that on board. Let's ask Sudarshan as well. Sudarshan, so the implied open has been indicating that it's probably going to be a 70 to 75 point lower start. Would you trade the index at all?
Yeah, good morning. Well, the Nifty has been in a correction of some kind. The idea was that maybe 24,500 could act as support. We have been roaming around this level for the last 3-4 days. I do not think this support is going to hold. You know, the markets hate uncertainty, and we are going to remain in an uncertain environment, not just for a day, but for weeks altogether. This also coincides with the seasonally weak months, 2 months, September and October. So I'm assuming that sooner or later, 24,500 will break down. We'll look for lower levels. I can't say what levels, but the drift is on the downward. So the trade in the Nifty is, if you see a rally, use that rally to build short positions using options, nothing else.
And you will short the Nifty at how much bounce, Sudarshan? How many points bounce?
It depends. See, from the open or from any low, if you get a 200-point bounce, that would be an excellent place to short it.
Okay, all right. Let's talk about a couple of stocks then. What are the trading ideas, Sudarshan?
Well, the stocks are mixed after many days. Otherwise, we were only having buying ideas. Hind Copper is a buying opportunity with a stop under 239. Oil India is a buy with a stop under 423. I have 2 intraday shorts. Marico, where you can consider selling above 729 with a stop above 729. And APL Apollo, where a short is justified with a stop above 1594.
Okay, all right, got that. Mitesh, morning, coming to you for your stock list of the day. What are you working with?
Yeah. So I also have a mix of buys and sells. Good morning, Subbu. On the buying side is a lot of slabs. See, after a good rally, the stock appears to have, kind of hit support level. So likely levels to bounce back. So buy with a stop around 822 for targets of 860, and you might get it a slightly better entry point with the gap down opening. Also on buying side is Pidilite with a stop below 3020 for targets of 3085. And on the sell side is Coforge with a stop at about 1665, look for targets of 1570. And Sun Pharma sell with a stop at 1616 for targets of 1555.
Okay. All right, gentlemen, thanks very much for all the trading advice. We'll come back to you a little closer to the open. The pre-open is here, and it's suggesting about 0.8% kind of a drop for the Nifty, which translates into a 200-point cut. Let's see. I mean, it's early in the pre-open. Let's see if this settles.
So they say, right? 1%, 0.8, 1% to banta hai. Itna to banta. Because if it, it's...
Oh, theek-thaak.
Otherwise...
Nahi to 50% tariff ka kya matlab hai?
No, think about it, right? I mean, if the market actually is higher and Trump switches on CNBC TV18...
India stocks rallying.
50 aur lagao. No, I'm not joking. I mean, so the market behaves appropriately. I'm actually half joking, but I'm saying if it is not, there has to be some reaction, right? There has to be. So I think if we get away with 0.8, 1% kind of a cut by close, I mean that's par for the course.
I think we'll get away with that. But I think the rupee is open more or less stable, which is encouraging, right?
Yeah. So if you, I was making this point earlier, Nigel. If you looked at the overnight 1 month forward deliverables, that was absolutely flat, stable, nothing, no movement. So, and this is in line with
really heartening.
What is going on. Maybe some stocks, etc., will come, which we will be, these textiles, these chemicals, and these. I mean, there maybe individually there perhaps will be some pain or whatever.
So Avanti feeds 4% lower. Gokuldas is in pre-open is down 3%. So these are some of the names.
I'll tell you what, Hormuz is standing by. He's got a list of companies that he's saying, Hormuz, break it down for us.
A lot of brokerages have written about yesterday's tariff announcements from the US president. I'll start off with Citi, and they mentioned that although these are still under implementation, if these 50% tariffs do get implemented, the average US weighted tariff will increase to 42.5% from just 13.25% currently. That will be a substantial increase, and as a result of which their linear model is suggesting a 0.6 to 0.8 percentage point risk to India's GDP. But the actual impact on GDP growth could be higher, because at this rate most of the exports will become unviable to the US. And This would also result in an impact on the current and capital account flows, and the currency markets could see pressure, which could result in the Reserve Bank of India leading to some forex intervention to stabilize the currency. Now, on the equity front, they mentioned that there is still uncertainty around the final outcome, and that could remain an overhang for the near term with regards to domestic sentiment. And they say that these domestic-oriented sectors, be it telecom, hospitals, staples, and insurance, they could act as potential defensive plays in a market like this. Now, Mahesh Nandurkar of Jefferies also wrote earlier this morning that the direct finance cost for India to replace Russian oil is less than 15 basis points of their GDP. And the oil market price movement over the last 1 week, which has been more or less flat to the downside, is indicating that there is enough supply that is still available in the global markets. And the political fallout is the bigger implication here because of the US demands for the agri sector and the dairy sector. But they still remain hopeful that sooner or later there will be a deal that will be stuck with the US. Now, when it comes to stocks and sectors, of course, we keep an eye out on textile names, as you mentioned, be it Gokaldas, Indocount, Wellspun Living, KPR Mills, and all of these companies get anywhere between 50 to 70% of their revenues from the US. The shrimp feed manufacturers, Morgan Stanley wrote earlier this morning that India's seafood industry is staring at huge losses because of this tariff implementation. Chemical names like Navin Fluorine, PI Industries, SRF, capital goods names Cummins, Thermax, KEI Industries, of course, and the auto component names Sora BLW and Bharat Forge. So a lot of sector-specific action potentially possible, but for now the pre-open though is suggesting some resilience for our own markets.
All right. Thanks very much, Hormuz, for that. Very interesting sort of list of companies that we have to we wanted to put out. 100 points lower, right? I mean, and 260 odd points lower on the Nifty and the Sensex. Now you could look at this rate and say, well, you know, this is a market is kind of ignoring it, or it's not really paying too much attention. Maybe that'll change. I mean, we're just sort of coming to the end of the pre-open session. But I think there's also the other element, which is the fact that, you know, this 25%, of course, is big and harsh and all of that, but it was promised. You know, something big was promised in 24 hours, and something big has happened in 24 hours. So, you know, in that sense, it's not a surprise for the market. So I think that is that is playing out as well. Sridhar Shivaram is with us, Investment Director, Enam Holdings. He's with us here in our studios. What a morning, Sridhar.
Thanks for inviting me.
So, what's the playbook here? I mean,
if anybody knows exactly
how do you even talk through this?
So I think the way you guys have also evaluated it quite well, that, you know, it affects a few sectors. They have specifically exempt a few sectors. So like pharma, electronics are out. My gut feel is that pharma will stay out. I mean, it's very difficult to precisely say, because if I look at what US is trying to do, and also the RFK Jr., who's the health secretary, they've been trying to bring down healthcare costs in the US by putting a 50% tariff or 100% tariff on generics doesn't really help their cause. So I think they also understand. So if you see specifically, certain segments have been exempt. So I think this is a give and take situation, but obviously some sectors do get affected. And I think the overall relationship has got affected more than anything else. And I don't know how that plays out. That is the thing to watch out. Maybe there are newer alliances which are cooking up. But I think this is not a good time from a market standpoint. There's so much of uncertainty right now.
Yeah.
So
there's no point talking about which sector or that sector, this sector. What do you think has gone wrong, Sridhar, in your opinion? I mean, you're a close watcher of global stuff. I mean, you know.
So what I hear, you know, from Delhi sources is that something changed after the war with Pakistan. And something related to, you know, the hill that we bombed. And there are rumors about some nuclear sites there. So it's not very clear, but something has happened there, because till the day before that, US said that we don't want to be involved. And the day after that, everything changed. So I think only, you know, people in Delhi will know exactly what has happened. But if I look at chronologically, from that day onwards, the tone of Trump also changed.
Yeah. This is the Kirana Hill bombing. And I remember we discussed this internally. I was discussing with a couple of people as well, that whether that'll have, and the position that the US took after that day, whether that'll have a bearing on trade or not.
I mean, this is my guess. Okay, I think something has happened there. We will never know the full story. But there are a lot of reports, floating around as to what was there in Kirana Hills. But I think that has changed, because it looked like India has a dominance in certain military capability, which surprised US and Europe. So whatever be it, that may have played.
You know, and also to Sridhar's point, I mean, just bringing it back for viewers' reference, the point on newer alliances. Yesterday, China's statement in support of Brazil and talking about the BRICS needing to be strong, a strong global south. I think it's a very, very interesting geopolitical times. But
so I think these are moving parts right now. We'll see how these things play out. But these are uncertain times for the market, and I think you can sense it in the market, right? It's not like our markets are running away.
This is nothing new, right? But it just makes no sense, right? I mean, at a logical level, I mean, you are, for years, what was the one big consensus in Washington, in the US, was that everybody, Republicans or Democrats, are anti-China, right? That was the only thing they agreed on. So how is...
That's what I'm saying. What changed? I mean, chronologically, if I look at it, that is the only thing that changed. That something has happened there which has spooked the relationship. And maybe it was an unwritten rule. We don't know exactly what has happened. I mean, we may never know what has happened.
We'll never know.
We may never know. But obviously from that day, something has changed. It is for the experts and others to, dig deep and find out. But we may have some, some stories for that. But will I know for certain? No. But something has changed from that day. And we can see that playing out.
All right, Sridhar, just hold on to that thought. I want to understand what do you think is the possible solution from here on? Come to you in just a bit. But let's get in Sudarshan Sukhani. Sudarshan, what's your 910 call?
So the 910 call is look to buy Hind Copper with a stop under 239.
Got it. Hind Copper is the one that you're looking at. Mitesh, what about you?
Yeah. I'll go with the buy on Pidilite for targets of 30.85.
Pidilite. Got it. Thanks a lot for that, gentlemen. We'll keep coming back to you all. It promises to be an action-packed day. Let's focus on some stocks, though. Vamakshi joins in because she's tracking BHEL, who came out with a set of numbers. Vama, take it away.
Well, Nigel, absolutely weak set of numbers coming in from BHEL. The revenue was flat this time around. When you look at the gross margins, they too have declined marginally by 14 basis points. But it's the other expenses that have more than doubled, or rather just doubled, to 675 crores. This has resulted in the company reporting an EBITDA loss of almost 540 odd crores, and the loss at the bottom line is has widened from around 211 crores in the same quarter last year to 455 crores. Keep in mind that the street was working with a profit expectation this time around, so therefore it's a big blow to BHEL this time around, and this is largely being led by their power segment. Keep in mind the revenue here has declined by 5.5%, and the losses here have widened from 53 crores to around 510 crores. On the flip side, when we look at the industry segment, that has done quite well, 17% uptick in the revenue, and the margins have improved from 4.67% to 19.37%. Apart from that, the ordering activity was quite robust for the company. It was up almost 42%, and the order book at 2.04 lakh crore was also quite healthy. In fact, came in higher than what the street was anticipating, but that doesn't take away from the fact that it's a dismal set of numbers, much below the street expectations.
Okay. All right, Vamakshi, got that. Actually, I'll reserve my question for post-market. I want to ask you, Sridhar, whether this is a bottom in terms of earnings pessimism, bottom in terms of the India-US relationship, but how much worse can it get, right? And markets love bottoms, but we'll ask you that question, I think, after the opening, because I think another 10 seconds we should get the rates.
I think let's just look at the GIFT Nifty, the Nifty, the pre-open, where it is finally, I think, settled at. I mean, the dollar rupee is flat, 100 points lower on the Nifty, so nothing, actually. We'll just... come up with the first rates, and then we'll go across to Sridhar. So what do we have? First, rates on the Nifty Bank, mid and small cap indices. Actually, mid and small caps looked absolutely smashed. I mean, the market breadth, just lack of interest over the last few days, in any case. So 1/3% lower on the Sensex. The Nifty, I think, is starting lower by about that much. 24,500. Nifty Bank at 55,300 or so on both those indices. Mid-cap index is down 0.5%. The small-cap index is down about 0.4% or so as well. So this is, the lay of the land, right at the word go. Oh, wow. Just 70-point cut now coming through on the Nifty right now. So this is... 1/3% lower. That's it. Bulk of what is starting right now on the Nifty heat map is lower, and you've got a few names which are higher at this point. And Sridhar was talking about some pharma technologies there, but again has been sold into quite heavily. Otherwise, about 40 of the names, 41 names are lower. Surabhi.
Okay, so 62 points lower. Let's see where the weakness is coming in from. Let's start with Trent. Numbers came in. Now, the margin picture is better than estimates, but the top line growth is 19%. The market doesn't like that. So first reaction is negative. Bajaj Auto has been trying to reassure the street that growth will be fine. I mean, their domestic outlook is, I think 6-7% growth. Again, stock's still under pressure, 2% lower. Even Bajaj is talking about holding margins, but the market wants growth, and that seems to be missing. Let's look at what else. Kotak Mahindra Bank, where we're expecting big trades today and maybe some foreign investors cashing out. That stock's about 1.5% lower. There's Eternal, where again there's block action. That's anticipated. Eternal is also lower by about 1.5%. Tata Steel, Coal India, Shriram Finance. I'm just reading out the list of Nifty losers. And then you have the biggies, Reliance and SBI, both exerting downside pressure on the market this morning. So let's see what's holding up. Not too many stocks, actually. Some buying on Cipla. Hero Moto is seeing some traction, 0.5% up after its numbers. And there's a little bit of a trickle here and there on Nestle and ITC. But the short point is that there is no real leader index or any sort of a counterweight sector today. It's largely soft and somber. And the Nifty is trying to, put up a fight at 24,500 now. Nigel.
Well, the stocks that are getting knocked are the usual suspects, right? Wellspun Living, that stock is pulling back in today's trading session because obviously US market's a big one for them. It's already seen a lot of selling pressure in the last few days. That continues to be the case. Gokuldas Exports, that's the other one that's getting a bit of a knockback. What else is losing out? You have Prince Pipes. They came out with a set of numbers. For the time being, the street doesn't like it. That stock is down more than 5%. Volume's pretty large on that one. JSW Stainless, actually, the numbers look good. The problem is the global uncertainty. And remember, exports for them were around 16-17% till around, I think, 8 quarters or so ago. That number's come down to sub 10% for the last many quarters. We'll have the management later on during the course of the day. Stock goes on with a cut of around 4.5%. What's the way ahead? How can they mitigate the losses on the export front? So that's another stock. Sarada Energy, that's the one that's been running along. One of the best results of this season, I think so. And we had the management speaking to us here exclusively on CNBC TV18. They're talking about the EBITDA number go up by more than 40% in FY26 with debt reduction. So that stock continues its upward journey. Rain Industries is another one that's reacting favorably to its numbers. So that stock as well is up. I'm looking at the Lumax group of stocks. You have Lumax Auto, actually. That is higher in today's trading session. So that one, in fact, has moved up smartly. While you have Lumax Industries, I think that came out with a set of numbers. That's down close to around 6%. So both those two going out in opposite ends. Sanghi Movers, that's another one. The renewable play, the cranes play are out there. That's seen a sharp correction from the recent peak. But for the time being, it's popped up close to around 4.5%. And Godfrey Phillips, a stock that we here on CNBC TV18 had given you a heads up. When Philip Morris came out with its set of numbers, the commentary wasn't great on the whole, but the commentary on India was good, which gave you a bit of a read-through. And that's why, in fact, that stock, it opened up. And now, in fact, after the big run that we've seen, more than 10% move is what we've seen in the last few trading sessions. Well, that one has come in for some mild profit taking from the high point of the day. But down only 60 points. For the time being, it appears the street is digesting that peak Trump tariff tantrums are behind. At least that's what it appears like.
And that was the question, Sridhar, if I can go back to it. Yes. I mean, how much worse can it get, right? Earnings, Trump tariff tantrums. Are we close to bottom?
So we've seen I would say a time correction for almost a year now. You look at large cap, mid cap, small cap, almost all of them have been flat to mildly negative. And I think if you go back a year before that, which is exactly a year back, the consensus was that we had a very strong run-up. And we had earnings disappointment, which came through. I think the earnings disappointment may continue for maybe another 1 or 2 quarters. Finally, it's only when earnings start to, come is when we see the markets go up. We may see some more time correction, maybe for another 3 months. Very difficult to gauge this. I do expect that second half will be better, which is festive season starts early this year. So you could see a slightly better, outlook. Also, what I'm gathering from my Delhi sources is that some big announcement on August 15th. I don't know what. I have no clue. But this is what I've been told. Some big announcement on August 15th. Obviously, if you see the Twitter feeds of various people, they're talking of some reforms. I don't know what reforms. I have no idea. But I hope the government wakes up because we haven't seen any reforms in this term. So hopefully it's overdue, and we always do well when we are faced to our backs facing the wall.
You know, one of the I remember speaking to two economists based out of the US, and both one was from Princeton, the other one was from another university. And both actually were saying that maybe this will force. It'll kind of watch exactly what you're saying. I mean, us to do things which needed to be done. Maybe it's an impetus, which is not necessarily in the long. It looks tough now and looks it's like, you're forcing us to do it, but in the long run, it doesn't hurt. Actually, it perhaps helps. Pankaj Tibrewal is with us as well, founder and CIO at Ikagai Asset. Pankaj, good to have you with us here on the program. Thanks very much. What is your assessment? I started by asking Sridhar, how do you even sort of talk through some of this 50% business? What is your sense on markets? Let me actually put it in a very sharp way. Is this likely to today is absolutely steady, nothing really, but is this the way you think it'll likely be, or slowly, this kind of starts to seep in, worry? As Sridhar also pointed out, even if this 50% eventually is negotiated lower, the broader question is the relationship perhaps is soured and that needs repair. And foreigners have been big sellers, right? $10 billion this year so far. So that's the question, Pankaj, for you to start with.
You're on mute, Pankaj.
Yeah. So, Prashant, if you look at tariffs, 25% or 50% doesn't matter, because no businesses operate at such high margins that they can absorb 25% or 50%. So it's a number. But what it brings is a lot of uncertainty, and markets don't like uncertainty. And I think my sense is that we have to look inwards. And as Sridhar mentioned in his earlier remarks, that we haven't done anything on the economy side from a government perspective. I think it's time to probably think inwards and start doing the reforms, because if you put numbers into perspective, our sense is, excluding pharma, electronics, others, $18 billion of exports get impacted, and that's roughly about 0.4% of GDP. How do you negate that? I think it should be the brainstorming which should be happening among corporate India as well as government. And I think this is the time to escalate going forward. Look at what China has done in the last 3 months. There was pressure on tariffs and other issues, and they have moved into the anti-deflation mode. And last 1 month to 1.5 months, all commodities are climbing up massively, whether it be coking coal, polysilicon, and they are announcing projects which the world hasn't heard of. The latest hydro project, $170 billion. And so many other projects will follow it to it. I think we have that appetite to do as well. So in the near term, I think uncertainty will be large, but I think markets are behaving very maturely if you look at for the last few weeks. But one thing to note, Prashant, this is not an easy market. Market breadth is narrowing down substantially. The easy money which we saw for the last 4 years, I think is behind us. I think markets are rewarding growth and earnings over a period of time. And if you look at the last 1.5, 2 months since the market has been correcting, there are only few pockets which are performing. Otherwise, it's a very, very tough market to generate returns.
Hi, Pankaj. Good morning. Good to see you. And it reminds me when I used to come home from an exam and Dad used to ask, how was the exam? I used to say, it's difficult. He said, exams are meant to be difficult, Nigel. But this market's tricky. And you have to look at, various segments. I think one segment or one piece that you have liked is chemicals. I recall a few months ago, you had called out for the bottom. And from there, actually, quite a few stocks have done well. Would that be one of your top themes that you still believe presents an opportunity?
Yes, I think, Nigel, if you look at the overall chemical segment, barring the uncertainty in the near term, there are two big macro developments which are happening around the globe. One, I think China, as I mentioned, has moved into the anti-deflation policy, where chemicals has been one of the sectors where they have created enormous capacities. And if you look at in the last 1.5 months, all chemical prices have started to inch up, and it's the government dictate that please close down excess capacities in China. So that's a very, very important point to note. And the second important point to note is that the large chemical companies out of India cater to agro. Very few cater to pharma. And from an agro perspective, for 3 years, we saw a destocking cycle happening. Our sense is that that's coming to an end. and probably the order inflows and the demand from agrochemical side will start to escalate. And the third most important is that we are calling for a Europe upswing in the economy. Our sense is markets follows first, economy follows later. And in Europe, we are seeing that unification of many countries in Europe after this Trump issue coming together. And could be that CY26 could be a surprise for European economy. Early green shoots are to be seen. And if that happens, the agri-related sector can do well. And a lot of chemical companies catering to European markets can also do well. So our sense is that chemicals is one area where we believe near-term uncertainty related to tariffs definitely there. But if you take a slightly longer-term view, I think many companies have created that moat around them. And for the next couple of years, we believe that the earnings growth will be far better than the overall average market growth.
See, if I was copy editing or writing a sales side note, I would call it the Braveheart call, right? That is Pankaj's Braveheart call for the morning. Go with chemicals, look through the noise right now, the tariff noise, and it'll serve you well. But Pankaj, what else? Good morning, by the way. What else? The thing with the market is that the no-brainer trades are not working. Earlier, when there was market uncertainty, when things were off, you would go buy pharma and IT. But now people are very scared to do that. And you'd go buy financials. But look at the first quarter earnings season. There are asset quality issues. Credit costs are going up. Margins are under pressure. So then give us some more names, because the no-brainer segments are confusing right now.
So, Surbi, if you look at our senses, whatever the weakness in economy you are seeing is because of the tighter policy we ran till CY24. And whatever good has happened by RBI and regulator in the last 4-5 months, you will start to see pick up from September to December quarter onwards is our call. There will be one more quarter of pain on financials, largely the private sector banks, because of the NIM pressure. But third quarter onwards, as the deposit starts to reprice, we will see better earnings growth. And FY27, if you take Nifty as a whole, banking sector will be one of the biggest contributors in terms of earnings growth. The second, our sense is consumption. Though consumption is weak at the ground level, but early green shoots have been started to be seen. Even managements on their conference calls are calling out that rural is doing well, and earlier green shoots are to be seen on the urban side also. So consumer durables, small ticket purchase items, I think all should start doing better as you move ahead into Diwali, Dussehra, and the festive season. So our call is consumption should be one space, especially the discretionary names. And the second part could be financials. You have to bear one more quarter of pain in financials, but December quarter onwards, I think the NIM pressure will subside and asset quality at its peak. I think you will see better times, and credit growth, which has come down to 9%, should start moving to 11-12% is our sense. So these are the pockets where we see opportunity coming in. And last but not the least, I think the pharma and especially the domestic and the CDMO place, I think that's clearly an opportunity whenever market is offering decline in this uncertain environment. That's one other area we should be focused on. So that's broadly is the thought from an overall sectoral perspective. But let me again give you a caveat that this is a stock pickers market. In this earnings season, we also saw the dispersion within the same sector is very, very high. One company is reporting 25% earnings growth, other is reporting a 20% earnings decline. So you need to be very, very focused on which companies you are betting, which promoters you are betting, which cash flows and balance sheets you are betting. In this really next 1 or 2 years, uncertainty, I think managements will play a major role.
Sridhar, you have any likings, anything you'd want
I broadly agree. It's a bottom-up stock pickers market. But broadly, I would say the same. Wherever you have earnings, like power equipment is a space that we like, EMS is a space we like, but they're all very expensive. But they're also showing very strong earnings growth. So they're showing 40+ earnings growth. So I think market's starved of growth. So wherever you're seeing growth, people are just hanging on to it with whatever valuations.
Actually, the other day, we were just counting in the studio areas with 15-20% growth visibility. Hospitals, there's power equipment, and capital market, right?
Yes.
Which is asset management.
Yeah, which is the other interesting space.
Space.
But it's a cyclical space, right? Yeah. So you will see ups and downs. But if you remove the cyclicality from there and you say, I'm going to hold for, say, 3 years, 5 years, and you assume that markets give you 12-13% returns, then they will have that sort of earnings growth there at least, plus the volume growth of newer people coming in. So it looks interesting, but it's not a straight line. That's what you have to
I know, Sridhar, you look at pharma very carefully. So where are we at? Will we get these tariffs on pharma or no? Because it's not... You heard that interview that President Trump gave to CNBC US, right? Towards the end, actually, he said it's coming in within the next 1 week or so.
Yeah.
And he said, I like to call them excluded tariffs. This Section 232.
So I'll be very surprised. As I said, I follow RFK Jr. very closely. I think they're doing a lot of reforms in the US, specifically when it comes to big pharma. And if I look at the agenda seems to be to bring, the healthcare costs down. I find it strange that it's not like you can replace generic, pharma from India to some other country, because it takes a lot of time, FDA approval. There is a host of things that is to be done. So it looks very difficult to me that it can be done.
You own pharma names?
We do own pharma names, and we like pharma names. Okay. So we don't think the tariff is coming, but even if it comes...
It's been an overhang for a while.
Yeah, but I'm just saying, even if it comes, there is no replacement for that. So these drugs will go to the US. Eventually, the consumer will have to pay. Nobody has that much of, margins in India.
Absolutely, and that's a point that I think a lot of the pharma companies have been making as well. They can't overnight replace, and I think Indian drugs comprise almost 40-45% of the total pharma market in the US. So it's a huge number. You cannot replace it overnight. So we'll have to wait and watch. Thank you very much, Sridhar. Great to have you in the studios today. And thanks to Pankaj as well for joining us short notice. But we live in very, very interesting times. So really great that both of you could make it, to us for this conversation. Well, with that, we'll get to some corporate commentary and corporate conversations as well. Quick glance at the market. The market's absolutely fine. It's just 34 points down on the Nifty. To Prashant's point, if Mr. Trump is watching, he'll be very disappointed, saying, what is this? Indian rupee is not falling. Indian equities are also not falling this morning. What are these Indians up to? On a lighter note. Anyway, let's talk about Torrent Power. We're looking at the company's Q1 performance. We have, what looks like a bit of a muted start to the year for Torrent. There was, of course, lower power demand. That seems to be an overarching sort of overhang on many power producers. We have Saurabh Mashruwala, CFO of Torrent Power, joining in. Saurabh, let's start right there. How much of this Q1 subdued sort of numbers, how much would you attribute it to just lower power demand? And do you see signs of a pickup?
It is mainly because of the early onset of monsoon, as well as the higher LNG prices. It has impacted the Q1 of the Torrent Power. Same is the impact with the other producer also, particularly in terms of merchant power. But going forward, we have a contract with the NVVN, which is about a 6-month contract. So partly this contract is being used in the Q1 quarter, and the balance contract will be used in the Q2 as well as Q3 contract also. So hopefully, and the merchant demand is all depend on the weather condition and how the weather stands out in India. So that will impact the merchant power. So, but we are hoping that this NVVN contract, which is being utilized in next 2 quarters, will be helpful to us in terms of merchant power.
Can you give us some numbers and some rates we can work with? In general, I mean, are you expecting improvement in spot prices, and also on your merchant tariff side? Where were you at the end of Q1, and as some of these new contracts come on stream, overall your realizations on the merchant side, how will they shape up?
So it is up to the expected leveling, I would say. But going forward, it will all depend on the demand supply situation, particularly the peak power, I would say. Peak power deficit, I would say. It will all depend on the peak power deficit.
Okay, all right. Hi, Mr. Mashruwala. Good morning. Hi. Good to see you, Ben. What about inorganic growth? There are various reports that indicate that Torrent Power is looking at L&T's power business, the Nama project. Any truth to that?
We can't comment on the speculation at this moment.
Do you want to deny it?
No, we can't comment on this. But we can always, we have an expansion plan, our own expansion plan. We are growing in renewable. We have about 1.8 gigawatt renewable capacity currently. We have about 3 gigawatt renewable capacity under construction right now, which entail investment about 20,000 crores. We have a storage expansion plan, pump storage expansion plan of 3 gigawatt in total investment of 14,000 crores. We are also, as you know, we are also in the distribution side in franchises licensed distribution area.
So, sir, we'll just get back to your expansion plans, which sounds very interesting. So, do you think L&T's, power project could be a strategic fit for y'all? we'll have to see how interested you all are, but that could fit in well strategically.
We are looking at coal asset also, either greenfield or brownfield. So that is in the investment horizon, I would say. So, but it's too early to comment on this Nabha power project right now. But so we are definitely interested in having a coal asset, either greenfield or brownfield.
And how much would you be willing to pay, or if you have to give it on a pay per megawatt or something on those lines? What would be attractive if you have to set it up by yourself and if you have to buy it, from the inorganically?
It depends on the quality of asset. It depends on many factors, I would say. It depends on the quality of asset, PPAs, balance period of PPAs, coal linkage. So we can't put any set numbers, I would say.
No, okay, so let me ask that question slightly differently. From a balance sheet perspective, Saurabh, just give us an update on the balance sheet, cash levels, and if you have to take on debt to acquire a large thermal asset, how much debt would you be comfortable with? What is the size of an asset that right now you think you'll be able to digest? Because you made it very clear that you want a coal-based asset, in your portfolio.
Yes. So as far as balance sheet is concerned, we have a very strong balance sheet. We have about net debt to EBITDA of 1.4, which is very, very strong, I would say, which is very, very comfortable, I would say. Debt equity ratio is 0.40, I would say, which is unheard, I would say, in terms of infrastructure company. So balance sheet side is very comfortable and which can take up a significant quantity of debt also for the expansion project. In fact, we have 50,000 crores expansion project under pipeline. So where we generally borrow 70% of the debt. So balance sheet is quite comfortable, I would say, to take up the debt level.
So by when can we hear of something, this inorganic plans on the thermal side? By when? Next couple of months?
So yeah, we are working on many opportunities, I would say, in the renewables side also, in coal also. So it's an ongoing process, I would say.
So for this Nabha project, so the reports indicating around $1 billion. Do you think that would be a fair estimate for whoever is buying it? May not be y'all, but you have to put a rough value to it, given its strategic location, given the quality of the asset. Could that be a fair number?
We can't put any numbers on it right now.
Okay, let's, not putting any number on it. So let me talk about your regular organic growth again. I'm going back to the merchant side because a lot of the street experts also point out that lower merchant contribution led to the slightly soft performance in Q1. Can you give us some update? What is the kind of volume you'll do? How are merchant tariffs shaping up? And basically, what can we expect from your merchant business? How much more growth volumes going into Q3, Q4?
So we can't give the guidance. It all depends on the weather patterns, weather condition, I would say, in the country. And particularly, as I said, the NVN contract is a 1.3 gigawatt contract we got. It's spanning into 2 quarters, I would say. So Q1 contract was partly utilized. The contract will be fully utilized in the Q2 as well as Q3 also.
Just for the sake of clarity for our viewers, this MVN contract, this is in Maharashtra. Can you just elaborate on which contract this is?
It is something as sourcing power for the meeting the peak demand, peak requirement, I would say. Some crunch period demand, I would say.
Okay. So this is going to take your overall realizations and volumes up by how much?
About 1 billion, 1,000 MUs contract, guaranteed MUs they have to pick up, they have to take. So this is a guaranteed amount. That contract will be utilized in Q3 as well as Q4, Q2 as well as Q3.
Okay, all right. So what about your capex plan? Could you break it up for us? You mentioned a couple of big numbers. For this year, how much will it be? And for FY 26, 27, 28, break up your capex plan for us.
So capex plan, we are expanding our renewable capacity currently 1.8 gigawatt to another 3 gigawatt, which will be commissioned in the next 2 to 3 years, and will be the capex plan of 20,000 crores. We have one contract with MSCB Steel, home storage contract with MSCB Steel in Maharashtra, about 2 gigawatt, but we are setting up 3 gigawatt home storage capacity with an investment of 14,000 crores. That project will come up in the next 4 to 5 years. As you know, we are in the distribution area also, for life distribution area, consumption distribution area. We are also looking for new acquisitions of new areas also in government for privatization, and in UP as well as in Maharashtra. So that also we are keenly interested. In distribution side also, we have capex plan about more than 15,000 crores. So put together about 50,000 crores capex, committed capex, when I would say, is on the horizon. Additionally, we look at the coal asset also, greenfield, either greenfield or as well as brownfield also.
Okay, all right, Mr. Mashruwala, we'll leave it on that note. Thank you very much for joining in and giving us some perspective on your business. That's Torrent Power at the end of the first quarter. We need to take a very quick break. On the other side, we will get chatting with the exporters of India. Sudhir Sekhri of Apparel Export Promotion Council and Vipul Shah, former chairman of the Gems and Jewellery Export Promotion Council, will join in to discuss the implications of Trump's tariffs on both gems and jewellery as well as textile and apparel exports. Welcome back. So the market's dealing with a cut of about 0.3% for the time being. Mid-cap index little better off the mid-cap. So there's no major slide. That's the short point. The market's trying to digest all this news. And let's see if we get buyers further on in the day. For the time being, let's try and understand the impact of these new tariffs and the additional tariffs that have been levied on India on both the apparel and textile industry as well as the gems and jewelry sector. We have Sudhir Sekhri, chairman at the Apparel Export Promotion Council, joining in, and we also have Vipul Shah, former chairperson of the Gems and Jewelry Export Promotion Council. Gentlemen, thank you very much for being here with us. Mr. Sekhri, let me start with you. Now, for a moment, if I say let's forget 50%, let's leave out this additional oil penalty. Even if we're working with 25% tariff, Indian apparel and textile exporters, does it make the business in the US totally unviable, semi-unviable? What happens? I mean, and what do you expect in the next couple of days in terms of just the conversations with US buyers?
Well, okay, the 25% that was imposed earlier, we had, kind of started speaking to our buyers and the government, of course, and we had, we were able to find a way out of it because we thought, the consumer, we told the buyers that the consumer should bear part of it, the buyer should bear part of it, and the exporter should bear part of that. And we were arriving at some kind of an agreement, even though it was very devastating. But now this additional 25% tariff is really will break our backs. So this is something which, whether it be small exporters or large exporters, nobody can bear this. And the buyers have already started walking away. Let me be very honest. Since the last 2 days, buyers have they cancelled orders. They've asked to stop orders, whichever are in production. And they have clearly said that they're moving back to China. This is
okay. We take your point. We take the concern on board, sir. So what you're saying is last 2 days, some cancellations have started happening. But otherwise, if it was just 25% tariff, you tried to work out a sharing formula of sorts that everybody picks up a part of the load. I believe there were some conversations as well with the government on higher duty drawbacks, some more incentives. Can you just elaborate on that? What is your ask from the government right now?
Well, you see, AEPC had requested the government for some direct fiscal intervention. I cannot specify what exactly it is, but we had asked them to support us directly through certain schemes. And of course, the scheme that I can talk about is the interest subvention scheme, which the government has withdrawn. So we had asked the government to reinstate that. And besides that, some other schemes. We also spoke about, the ROCTL and ROTEP being extended for the next 5 years, which the government has agreed. But that is something which is very small. That not really help us with that 25%. So what we are looking at is more support from the government. However, let me also be very candid that it is. I think with this 25% additional tariff, even the government cannot support us. The only way out is now for government to start negotiation with the US government to somehow, remove this additional 25% tariff. Because if that doesn't happen, and I mean, this has to be, and this also has to happen like yesterday, because
right.
Our spring-summer orders are usually placed in the months of August and September. And we cannot even wait for the 25th August US delegation to come to India and then resolve this problem. This problem has to be resolved now.
Mr. Sekhri, a couple of questions. First, will you be able to reroute your exports to other markets like UAE, Europe? Have you already started speaking to other countries in GCC, ASEAN, Africa? Are you going to be looking at that more seriously?
Okay. See, let me explain to you. Out of that 50, I'm talking about apparel here. Out of the $16 billion that we export apparel, about 5.2 billion goes to the US and about 7.8 billion goes to Europe. The other goes to smaller countries like UAE and Africa, etc. Now, this is US export is a major chunk of our business. Now, what we see here is that if we take textile and apparel together, this is about $10 billion. And with this 50% tariff, we clearly see the next 2 months, about $5 billion of worth of business is going to move out of India. Now, to come back to your question of looking at alternate buyers or countries, yeah, I mean, that's a process. That's not going to happen tomorrow. I mean, to get onboarding onto a large retailer takes anything from 1.5 years to 2 years onboarding itself. I mean, to be on the vendor matrix. So that's easier said than done.
Okay. And just one more point to complete the loop, because as of now, the expectation still is that this 50% tariff is more of a bargaining chip rather than a fixed policy, and ultimately the tariff rate could end up lower. So just for the sake of simplicity, if you assume 25%, what would be the expected sharing between you, the buyers, distributors, and the consumers?
Okay. You're talking about the earlier 25%, right?
Yes, assuming the tariff settles at 25%.
Okay, yeah, let's keep our fingers crossed and we assume that, we hope that this happens. But that 25% that was we were hit with earlier, that we had started talking to our buyers and we had asked them to split it 3 ways. One third would go to the consumer would bear it. 1/3 would be borne by the buyer. And 1/3 would be borne by the exporter. And out of the 1/3 to be borne by the exporter, we would go to the government and ask them for some support in some form or the other. Because you see, even that 1/3 works out to about 8.33%, which again is much higher than the net profit that a garment exporter makes.
Okay, that's on the apparel and textile side. Let's get to Mr. Vipul Shah as well. Mr. Shah, I mean, if we talk about all of our gems and jewelry exports, then US is a very huge destination, right? If you could just appraise of the latest numbers as well. And what happens here? What happens at 50%? And let's assume 50% will not stay. There'll be something changing. But at 25% tariff, can it be entirely passed on to the buyers?
Yes, good morning, first of all. And yes, it's a big catastrophe for the industry, for the gems and jewelry industry as a whole. We work on very low margins, and it's a very labor-oriented industry as such. With 10% baseline tariff itself, we were struggling. And effective from today, it's going to be 25%, which we have not yet absorbed. And on top of it, we are hearing this news of additional 25%. So the industry has come to a standstill. We don't know, and we will be figuring out what exactly would be the next step. Because the gems and jewelry cannot be going into this kind of tariffs, and the business to US will be completely standstill.
Indeed. Have you spoken to any of the companies, sir, in the gems and jewelry space? Are you also hearing about orders being cancelled, buyers walking away? I mean, what's the extent of pain we will see?
Yeah, see, the majority of our exports to US, that's in the form of studded jewelry, goes from SEZ. That's almost approximately, say, $7 to $8 billion of exports was going from there. So all the orders right now are on the standstill, because until now it was 10% baseline tariff and some kind of activity was taking place. But with 25% kicking from today, all the orders were standstill. And now with this 50%, it is a no-starter. So we don't know exactly. So for some time, we have to just wait and watch what's happening, what's going to hit next, because then only we'll be able to start thinking how do we move forward, because we need to see our competitors, like countries like Vietnam, Turkey, they have lesser tariffs than India. So maybe in coming months, if things are not sorted, industries will start moving. That's going to be a big blow to our employment. So I'm seriously looking for the support from the Ministry of Commerce. I'm sure they will be looking into this industry very closely and try to take some appropriate steps, what they did in COVID times.
By the way, we're getting statements from the Prime Minister, and that's the first line that we have. Just going to see if we can get a transcript and more on this. The first line is that India is not going to compromise on farmers' interests. It takes us back to the crux of everything that we've been discussing with experts right from the morning. The reason why this deal is stuck is that there seems to be no give up, no let up from the US side on the critical issue of dairy and agriculture. And there's a lot of political pressure also obviously building in, saying that India should not back down, ready to face whatever it takes to protect interests of farmers. There you go. You've got a statement now from the Prime Minister himself. The MEA statement yesterday was quite measured. The MEA statement said that India will do what it needs to do to protect its national interest. And the Prime Minister now seems to be spelling out that national interest very, very clearly, that we are ready to face whatever it takes to protect the interests of farmers. And India is not going to back down on at least the agri piece, agri and dairy. That's what it looks like. So for all the participants in the market and all the commentators and everyone who's hoping for a deal to happen immediately, the oil piece, yes. The oil piece perhaps can be dealt with, can be negotiated. India has already stated its position of buying more LNG, buying more oil and gas from the US. That can still perhaps be discussed and debated. But it seems from this statement, it's very, very clear that farmers' interests are sacrosanct, they're paramount, and India does not want to cave in, at least on that one piece. So we need to see, even if the 25% oil tariff goes, will India still have to deal with a 25% tariff overall from the US? But I don't think the last thing has been said to this, which is why I've always been saying that I think we need to be a little cautious in terms of assuming that this is going to be immediately resolved. These things don't work that way. Negotiators have been at it for 4 months now. Clearly, there are some issues which remain stumbling blocks.
Well, that's right. Our Prime Minister standing up and saying, I'm going to hold on to my stand. I'm going to be protecting our farmer community out here and taking that stance. So now all eyes on what we can work out with the United States with regard to oil as well as defense. Absolutely. Maybe some kind of negotiation on that front. So that's the latest statements. We'll keep getting you what our Prime Minister has to say. But it's not been such a bad morning going by the overnight news. Mitesh joins us. Mitesh, not so bad as of now, but what is your trade on the Nifty? And then fill us in with a couple of your trading calls?
So, Nigel, you said perfectly, not so bad. In fact, it's not a market which is falling freely. It's managed to bounce back a bit. But again, I would want to see if the closing is about 24,500 and we are right there. So we'll keep a watch. On the stock side, I have one buy and one sell. CG Power is a buy call with a stop just below levels of 675, 674 for target of 706. And Kotak Bank is on the negative side. Sell here with a stop at about 1990 for targets of around 1935.
Okay, all right. Thanks a lot for that, Mitesh. Well, I'm tracking Jindal Stainless and the numbers were very, very good. I stick to that. You know, if you look at it on a sequential basis, the volume numbers are more or less flattish. On a year-on-year basis, though, it was much higher. The problem is yesterday, intraday, the stock from being down close to around 2%, it had ended with a gain of around 2%. So it appears there was an element of pre-positioning out there. And because of the overnight news with regard to tariffs, that's what's hurting sentiment. But let's pull up some of the graphics with regard to how the numbers were. That's the volume number. Good growth is what you're seeing on a year-on-year basis. And most of the top line growth has come in on a year-on-year basis because of, of the higher volumes. The EBITDA number, though on a year-on-year basis, it appears just a little bit better. The margin improvement is something that you like on a sequential basis. So just take a look at the way the margins have recovered. Last quarter, they did around 10.5%. This time around, it's a recover to close to around 12.8%. Even on an EBITDA per ton basis, the entire realization gain of around 4,000 rupees per ton, that's come down to the EBITDA per ton as well. So realization gains have flown down. So you like that at around 20,000 rupees on a per ton basis. The debt number is more or less constant in spite of going in for some capex. And one of their subsidiaries, which is JUSL, out there, the operational performance as well has improved. So the reason the stock is down is because maybe an element of pre-positioning, maybe some uncertainty on the tariff front. Given that their export contribution from around 17% or thereabouts around 8 quarters ago, it's come down to around 9%. So they'll struggle on the export piece, but otherwise these numbers look good. There's a sequential recovery in terms of the EBITDA per ton. But talking about metals, let's hop across to Manisha. She's joining in to tell us about the commodity markets. Manisha?
Nigel, thank you for that. I'm keeping a keen eye on the tariffs right now because 25% kicks in from today, and we've been speaking to various segments and sectors within the Indian markets which are not very comfortable with that 25%, and the 50% that could happen in the next 21 days clearly has many of these markets very, very jittery. Well, India is one of the most heavily tariffed country as of now. Brazil is one, and Brazil only has a few commodities that are tariffed at such high price. But India clearly looking at very dire consequences as we've been talking to many of those segments there. I'll start with gem and jewelry, and you were talking to the former chairman of GJPC. Now, $9 to $10 billion of export of gem and jewelry happens to US. It is 30 to 35% of our export market. And from where the things stand right now, exports at 50% are absolutely not viable. As he said, 10% was not good, 25% was jittery, and 50% is something that they can absolutely not work with because this industry works with 3 to 4% of margins. So even as you break down those margins as in sense of they will take less profit, the consumer will have to pay more. But even with that, there's not too much happening. When you look at the GJPC numbers, the exports to US in the month of July fell by 75%. And many of this industry participants tell us that for the month of August, you perhaps may not see anything at all. It could be to zero because it's everything as at a standstill. It's not just gem and jewelry. When you look at the Indian textile numbers, well, $8.5 to $9 billion of a market is what US is for us. That is 35% of total Indian exports. And when you look at that breakdown of numbers, apparel exports to US is $5 billion and home textile is $3.5 billion. At this point in time, they say they will lose out to other markets, which is in sense of Vietnam, Bangladesh, Turkey, China, Pakistan, etc. With this 25 to 50%, India is just not competitive in the international markets. So there are concerns coming in for this one as well. The third industry I want to put on the table is India's seafood industry. So here as well, the numbers stack up to $2.7 to $3 billion of exports to the US markets. And we already are estimating something like 24,000 crores of a loss if we actually do see that 50% of tariffs come into the market. It's a bigger disadvantage for India. This has been one of the most growing segments in the Indian agriculture or farm industry for that matter. So this could be a big hit as well. This industry as well is seeking government support to explore alternative markets or incentives to export to begin with itself. And the final one that should come in on your screen is the rice exporters. Now, basmati and semi-basmati is what is exported to US, and that market is nearly about $42 million. So lesser than the earlier segments that we spoke about. But here as well, it is going to be not competitive. And when you look at the numbers overall, we understand that the in-transit cargo is allowed till 15th of September. But beyond that, no new cargoes, no new orders are being talked about right now. India could actually be losing its to Thailand in sense of rice and its competitiveness as well, to Pakistan for that matter. And trade stands suspended until there is clarity. That's exactly the line that we've seen come in from everybody. That trade is suspended, no new cargoes or no new orders are being discussed, whether it is gem and jewelry, textile, seafood or rice for that matter. There is no trade at this point in time until there is clarity.
Thank you, Manisha, for that. In fact, we're getting in Prime Minister Modi's first reaction to the 50% tariff hike, Trump's tariff hike. And his message is firm. The interest of farmers remains paramount. Listen in.
हमारे लिए अपने किसानों का हित सर्वोच्च प्राथमिकता है। भारत अपने किसानों के, पशुपालकों के और मछुआरे भाई बहनों के हितों के साथ कभी भी समझौता नहीं करेगा। और मैं जानता हूं व्यक्तिगत रूप से मुझे बहुत बड़ी कीमत चुकानी पड़ेगी, लेकिन मैं इसके लिए तैयार हूं। मेरे देश के किसानों के लिए, मेरे देश के मछुआरों के लिए, मेरे देश के पशुपालकों के लिए आज भारत तैयार है।
Okay, that's a strong message that the Prime Minister has delivered at a public event. I think this event was happening in New Delhi. He's spoken just a while back, and a loud and clear message going out that India is not going to compromise in the interests of farmers or, of course, people in the dairy industry as well. So it's as clear as it gets. And like Nigel has been saying, and that makes absolute sense and logic as well, that you can negotiate, you can talk about energy, you can talk about defense, you can talk about tech transfers and all of that.
Not at the
cost. But you draw the line on agriculture, on farming and on dairy. He spelled it out. We've drawn the line. So let's see.
Jeffrey's put out, they're saying that 200 to 250 million farmers or labor derives their income from agriculture in India. Yeah. And that's 40% of India's workforce, and therefore it's a strong political lobby. And plus there is also an additional estimated 50 to 60 million dairy farmers. And the influx of US dairy products can potentially cause a significant decline in milk prices in India. So we're talking about big numbers, right? Yeah. 250 to 300 million people could be potentially impacted.
Okay, talking about numbers, let's get straight to Bharat Forge. That's the company on our radar. The last quarter's numbers, well, it was plagued by uncertainty, and things are likely to continue in that direction. Going ahead, let's welcome Mr. Baba Kalyani, the Chairman and Managing Director at Bharat Forge. Good morning, Mr. Kalyani. Well, we know, I think, your business has close to around 40% export exposure from the international markets. How much of it is to the United States? And you've also got a couple of plants in the United States. So what are your plans to mitigate some of this pressure with regard to the tariffs?
Well, I think, it's very difficult for any industry to mitigate a 50% tariff.
Yeah.
Well, let's understand that. That's impractical. We've been talking to our customers. The customers understand this. They're supportive. And they all believe that there will be a political solution on the table sooner than later. So we are all hoping for that, and let's hope that this happens quickly. Mm-hmm. And because, manufacturing industry has spent almost 30 years cultivating that market, creating capability, creating the knowledge that is required to supply into highly technology-oriented markets and technology-oriented components.
Yes.
And you can't just wish it away overnight. It's just not going to happen.
Right. And just to clear out that number, sir, 40% of your business is the exports?
No, it's more than 40%, but our...
And how much is from the United States? So just help us with both the two numbers.
I'll come to that. Our exports to the US are roughly about $300 million. $200 million, sorry.
$200 million, okay.
So, and all our customers are still supporting us, so let's see what happens. But obviously, the 50% number is just undoable. You might as well not have a business to do it. But I think there will be a solution in place.
All right. So close to around 10% of your total business has exposure to the United States, very roughly, right?
Exactly.
Sir, in the interim, while there is a political solution on the table, any of your clients, customers are deferring their purchase decisions?
No, nobody has deferred any purchase decisions. Matter of fact, we had a talk with one of our biggest customers just this morning at a early morning breakfast, and even he said that we need to go ahead with the investments that we have planned to support his product launches, which are coming next year and year after next. So everybody is, supportive, and everybody feels there will be a solution in place.
So now we'll wait by for what the tariff number settles at, 25%, 50%, somewhere in the middle. But in your conversations, sir, with your customers and clients, have they shown willingness to absorb at least some of the tariff burden?
They are right now absorbing all of it.
All of it is?
Yeah.
Okay. And even if it comes at 25%, you will be able to pass it on entirely?
The tariff, no, 50% is not possible for anybody.
Not 50. I'm saying it settles at 25%, just, for a number, for the sake of...
If you see our last quarter's numbers, we have taken a tariff hit of about 14 crores, okay, which is roughly about $1.6 million on an export of roughly 200 million, okay? So as a percentage is 0.8%.
Mr. Kalyani, morning, sir. Two different questions for you. First, my first question to you is on the 200 million US business that you spoke of, that, you're doing 200 million in revenue every year from the US. As a business group, as a conglomerate, would you at all, because of all this that's happening, would you at all consider investing in the US, setting up a capacity, either in the US or in some other geographies which have got the blessings of lower tariffs? Or do you think it doesn't make sense from an Indian perspective to do that at all?
We have two factories in the US. We have, in the last 2-3 years, invested a large amount of money to set up capacities in the US. And I think we just have to now make them work at full capacities. And so we see a lot of traction there. But there are challenges to make that happen, instantaneously. I think in a year or two, this will all happen. But that is not going to replace the products that we supply from India. Those are different products.
Got it. So if at all you expand in the US, it will be additional capacities, newer products, not at the cost of the investments you're putting in India. My quick last question to you, sir, is on the defense business. Just tell us what's the trajectory ahead this year that you see for your defense business in a world where, again, India is being pressurized to buy more and more from the US, and maybe we give in to that. I mean, we've never shied away from more US defense procurement. How do you sort of sum it up?
Our defense business will continue to grow. It will continue to grow in double digits. We have multiple programs on which we are working with the Ministry of Defense. And we are exporting a lot of our defense products. We might even have some exports to the United States very soon. So that business will grow and continue to grow.
You want to give us a number, sir, for the year? Because, from a run rate of around 250, 300 crores on a quarterly run rate, you had gone to close to 500 crores. And then in the last 2 quarters, again, it's come down to roughly 270 crores per quarter.
Is, you export guns and the number goes up. When the gun order goes down, the number comes down.
So for the year, around 2,100, 2,200 crores of defense revenues is doable?
I don't know what our defense revenue last year was. It was about 1,600 crores, right? And I think we should see roughly about 15-20% growth on that.
Okay. All right. That sounds, I'm sure your investors are going to be very happy with that, given the uncertain environment, still expecting that sort of growth for the defense vertical as well.
Another area where I think we see a lot of growth, that is aerospace.
Aerospace. Okay. Point taken, sir. Point noted. Thank you very much for joining in. and giving us some perspective on your business. One Indian company that, of course, has its placement in several arenas, including auto components, including defense and aerospace. Well, we get back to market conversations now. The market's dipping again. It's about a 100-point cut as we speak, but it's just about 0.5%. Sunil Singhania is with us. Sunil's been waiting patiently. Sunil, apologies, short delay there. We've just been, it's been a flurry of reactions since the morning, trying to understand the implications of what this new 50% means. But your sense, on if we, let's say, manage to work through the oil tariff, and the actual tariff is still 25%, is this a bit of a bottom in terms of peak negative news for the market? Does it get better from here?
Good morning, and thank you for having me. So first of all, a disclaimer, we always try and be optimistic on Indian economy and markets, and I think that's played out pretty well over the last 2-3 decades, despite all the ups and downs which we have seen. I think this is also one factor which has obviously come up. I don't think we can ignore this. It's a major thing. But at the same time, it's relative. So as long as, we as a country are relatively okay compared to the tariffs on other countries, I think we should be fine. Having said that, I think the events of the last 4-5 days have been definitely not so pleasant. It's been a negative surprise. And as is expected by all, we also believe that finally, it's a question of negotiations, diplomacy, a lot of politics rather than only economics built in. And hopefully things will settle down.
But Sunil, do you think there is some amount of complacency that's being built into the market? I mean, the reaction to really bad news also seems to be such an underreaction. Even today, we're just down close to about 0.3%. Like, everyone is confident that we will be able to strike a deal, which is good for us. So do you think there is some complacency and that might get shaken up?
I think we've all grown up, reading and listening to the fox and the sheep story. And I think this is, again, similar to that. The first instance of announcements always have a big reaction, and that is what we saw in January and February, and then also in April. But subsequent to that, I think every reaction and every comment has not been held on to. We have had multiple to and fro, some countries, tariffs being increased, some deferred, some decreased. It's been a complete sort of a chaotic kind of announcements. And therefore, I think maybe that is the reason why no one is taking them as seriously as the first few announcements, which were in January, February, and then April were. So that is one reason. The other thing is, I would agree that 80-85% of the concerns which we have seen over the last 1 year seems to be behind us. In terms of geopolitics, world is a little bit more peaceful than it was. India, Pakistan, and the Middle East scenario, I think, except Russia, Ukraine, which continue to fight, most of the places are pretty, I would say, stable. The world is starting to grow a little bit, except this tariff issue. And even in India, you have liquidity in our favor. There's been a huge surge. Profits are slow, but they are recovering. So I would say that except this tariff, a lot of other things are sort of from a headwind starting to become a tailwind. And once this tariff issue is sorted, I think we can see a resurgence of optimism both in the economy as well as corporate profit base. And maybe, investors are looking at that. At least we are looking at that.
Okay, so perhaps close to the bottom. That's the sense one gets. So, Sunil, in this environment, because even if, like you're saying, that, gradually once this tariff issue settles, other issues seem to be already, settling down, leave us with an outlook on how one should be looking at a portfolio from at least, let's say, a 1-year basis, because things are still very confusing. You still don't know what happens with pharma. Should you be only looking at domestic-facing stories? I mean, EMS, etc. At some point, if electronics gets hit, so a lot is still up in the air. So, where should one place bets where there's a reasonable conviction in terms of growth and then hopefully stock price appreciation?
So, I would say that at this point of time, we should not do too many changes to the portfolio because it's still a scenario where everything is not settled down completely. We don't know the final end to this whole saga. I'm very sure the end is pretty near, at least in terms of clarity. So let clarity comes. We continue to like pharma because irrespective of what happens, I think Indian pharma is the most competitive in the world. And we are not exporting, medicines at 10x the price or 20x the price, which Trump is alluding to. We are more a support function in terms of our CDMO in generic pharma space. But I would say that rather than trying to do too many, changes in the portfolio at this point of time in an uncertain environment, it is better to be patient. I know that a lot of people got very excited on export-oriented companies when tariffs on other countries were levied, and we all know what happened when the same was done in India. So it is better to let things settle down. I would say that don't make too much changes in your portfolio over the next 15-20 days. Just bear with this whole uncertainty. I know it is a time when one has anguish and one has anxiety, but it also pays to do nothing in these kind of times.
Okay, advice well taken. Sunil, thank you so much for joining in today. Really great to get some perspective from you on a morning like this, very, very uncertain times. But Rima, that's actually 2 thumbs up for pharma. Pankaj Tibrewal on the show today saying, don't get worried, stick to your pharma bets. And even chemicals, a sector that he likes. And Sunil also saying that...
Pankaj spoke about CDMO and the domestic pharma plays, which I presume like the hospitals, etc., which are fairly unaffected. Okay, but that's the advice coming in from Sunil Singhania. Weather the storm for now and wait for clarity. Don't tinker around too much with your portfolio. Let's get into a break for now. On the other side is our special segment. It's The Economy. Lata will be in conversation with Soumya Kanti Ghosh of State Bank of India and Lakshmanan V of Federal Bank on the impact of Trump's tariffs on the Indian economy.
Well, the shocking additional 25% tariffs imposed by Trump is likely to see at least a 0.5% hit on India's GDP. But no economist whom I spoke with has yet revised their figures in anticipation that some deal could be reached before August 27. The current account deficit may also be hit by around 0.2 to 0.3%, some economists told me, because goods exports can fall by about $30 billion. That's to the US. The rupee is, however, steady as of now, and dealers are attributing this to the presence of the Reserve Bank as a dollar supplier. But everything is speculation. To understand more about the direct and indirect impact on the Indian economy, I have with me Soumya Kanti Ghosh, Group Chief Economic Advisor to the SBI Group and member of the Finance Commission. I also have with me Mr. B. Lakshmanan, who heads the Treasury at Federal Bank. Gentlemen, good morning and thank you very much indeed for joining me. Soumya, I'm getting figures of 0.5%, 0.6 in terms of impact. Any ballpark impact on the economy, GDP?
Yeah, thank you, Lata, for having me on the show. I think in terms of the GDP impact, we have on the 25% tariff was actually become operational. So we have actually factored in a 20 to 30 basis points decline in the GDP. The additional 25%, if we go at the same rate, which is a little difficult, a linear approximation, the hit could be actually larger. But as of now, we have a projection at GDP projection at 6.3%, which is lower than the RBI baseline forecast of 6.5%. So that's why we are sticking to the GDP forecast of 6.3%. But we may actually look into the numbers in details if the possibility of a trade deal appears a little difficult in the remote horizon.
Oh, okay. Yes, that's very, very fluid. That's the kind of replies I got when I tried to do a poll. What about current account deficit, Soumya? Immediately, there will be, that amount of dollars not coming in by way of exports.
See, in terms of the current account deficit, this year we have been looking actually at a current account deficit, which is significantly lower than 1% of GDP. So maybe in the range of around 0.5% or 0.6%. So even if suppose the current account deficit goes up by around 20 to 25 basis points, it will still be below 1% of GDP. The good thing about the current account is that in the last couple of years, the service exports have significantly caught up with the goods exports also, if not outpaced it. So from that perspective, I think that has been a positive, and that actually had a significant positive impact on the current account deficit. So on that CAD front, as of now, we are not too much worried. Because we believe that the other aspects, the other components could actually make up for the loss, if any, in the goods exports.
Okay, current account and capital flows are telling on the currency at this point in time. And let me invite Mr. Lakshmanan on that. Good morning, Mr. Lakshmanan. Thanks for joining. What are you picking from the market? The rupee hasn't moved. If anything, it's a bit stronger.
Yeah, no, thank you so much for having me here. I think the markets of today morning, be it the rupee market, be it the bond market, be it the stock market, I think are reasonably, evidencing the fact that this is another one of those shots that we've seen on every single morning over the last few months. One. Second, if I were to just reflect to you another small data point, if you just look into the FPI flows, right, over the first week of August, I think on the 1st of August, if I recall, we perhaps had more than $500 million kind of a negative. But for the rest of the days, the flows have been broadly par, to the extent yesterday's number, and I saw this morning, was actually a plus 250 million, all asset classes put together. So all I would want to say is there's reasonable evidence that market is not wanting to overreact at this stage. Very clearly, everyone would want to wait out for the conversations to happen, and then take any action. So overall, from a currency standpoint, if I were to state, that level of 88 that we saw a few days ago continues to be a strong bar at this particular point. And it's only after one more conclusive evidence of action in some fashion beyond just this rhetoric that we've seen. / any dollar currency move, which takes the dollar significantly back stronger from the dips that's seen right now to about 98.
No, what's your forecast in terms of the currency?
88, as of now, as a resistance still remains, in my view. So
sorry, what remains?
88 as a resistance at the higher
resistance remains.
Still remains, and I would not want to take a conjecture at a level going ahead till the time that particular level breaks, which essentially means that an 86 half to an 88 kind of a thing would remain, unless, as I stated, there are incremental actions beyond this, which mean more than rhetoric. / dollar goes up much more strongly across other currencies.
Okay, got that. Soumya, what is your sense? Should we be prepared for 88 plus 89 sometime soon?
No, I think so. On the rupee front also, if you look at the reaction today, I think the markets are now accustomed to the fact that this possibly could be the more the additional tariff which is being implemented by the US, the more it indicates that the US is actually want to strike a deal with India on the tariff front. So from that perspective, the thinking in the market is that possibly, because I mean, no country or no country can survive within 50% tariff rate in the long.
Yeah.
So if that is the logic, I think the markets are now getting more attuned to the fact that there will be possibly a deal in the future, which will give some takeaways from here and there. So my sense is that the weakness in the rupee, I don't see too much significant weakness in the value of the rupee, maybe some additional 20-30 paisa movements, but overall, I think the rupee has actually run its course because the numbers on the external front still look favorable to India on all multiple fronts.
Yeah, but it is on a dime turning negative because of the capital flows. That's why I asked. And today in the chatter, people were kind of freely talking like 89 is back on the table and things like that. But Soumya, more importantly, we discussed the direct impact as about 0.5%. If it went to 50, which is an unreasonable level of tariff. What are the indirect impacts? The people who are exporting to the US, the top two industries, gems and jewelry and textiles, are very labor intensive. So are there more indirect impacts as well?
I think this is a very important point, Lata. First, I think we should understand the Indian export dynamics to the US. India's overall export, if you look into it, 20% goes to the US, but India is also diversified. The top 10 basket of India is around 53% to several countries. The second in the list is the UAE. But having said that, I think if you look into India's top 10 primary exports, the first is the electrical machinery, which is a share of around 18%. Which incidentally is exempt from all this tariff because that also includes smartphones. Next comes gems and jewelry 11.5 and pharma 11.3. So textiles actually the share is around 3.4%. So my sense is that there will be indeed the most important impact will be on the gems and jewelry segment and the textile segment. On the pharma segment, the interesting point is that if India were to say, for example, the Putin countervailing tariff tomorrow on the pharma products, it will actually hurt US much because the share of India's pharma exposed to US is around 47%. So, from that point of view, I think the impacted sectors will be gems and jewelry, the textiles, and also to some extent the autos where the government is actually trying to broker a deal. But the problem will be basically on the sectors which are labor intensive, where it will be difficult to strike a bargain.
So, people keep telling us that therefore we must use this adversity to reform. In 1991, the Forex crisis, we reformed. In 2013 as well, we replied with an inflation targeting framework and all that, when currency was hurt. We reform under crisis. So what is the reform we can do? And separately, should there be some packages for those who are in the line of fire, the gems and jewelry and textile exporters? Should they get some kind of, subsidy from the government?
Yeah, I think that's a very important point. Yes, we reformed. You have reformed in 1991. We have reformed also. We have been doing small incremental reforms. I think one of the first thing which comes to my mind, I think in the budget, there was an announcement that there was a policy of exports, agricultural exports policy. I think now it's the time to actually unveil the policy. Also, there has been several pending reforms which has been announced in the union budget. One of them is setting up the regulatory commission, which basically looks into all the aspects of regulations. I think that's a working group has already been set up in RBI to look into all the master circulars and to prune it down. The other important thing in terms of support for the labor sectors, yes, there could be a support. If you remember, the export credit scheme was discontinued in December 2024. So there could be possibly, I mean, if it is required, there could be, and that credit, that guarantee scheme could be revived for a limited period for the affected sectors, which actually could give a lot of shy of relief. But my sense is that I think there is a lot of things to reform, and some of the small incremental reforms, even if we go ahead and do, that will be beneficial for all of us in the long term.
Okay. Unfortunately, out of time, it's an important day, Mr. Lakshmanan and Soumya. Thank you very much for quickly sparing time for us. Let us see how things pan out. At the moment, it's kind of steady in all financial markets. Wrap up on Bazaar on that note. Chartbusters coming up.
Hello and welcome to Chartbusters. We are coming to you live from the CNBC TV18 Motilal Oswal studio. I'm Nigel. With me is Mangalam. And as you could see to the top of the screen, the markets are spooked by what President Trump had to announce overnight. The 25% tariff has been increased to around 50%. For the time being, the markets are still taking it in its stride. But interesting to see whether or not we can hold on to these lower levels, because the last 15 minutes, there's a fresh down leg that we're seeing. Hey, Mangla.
That's right, Nigel. You know, for the last few trading sessions, the Nifty has held on to levels of 24,500 to 24,550, rather 25,500 to 24,550 thereabouts. I'm just trying to see what happens from here on. And the Nifty Bank will be extremely crucial because that has more domestic-facing moves than, the other sectors which do get directly impacted. And then the commentary between both what Prime Minister Modi says, the Indian officials, as well as what Trump says, will be extremely crucial. The second half of this trade will be very important to watch out for. But amidst all of this, there are a lot of numbers that have been coming in thick and fast as well. So for the first management that's joining us on the show today, Blue Star, despite, weakness coming in, the numbers were in line because the street was largely prepared for these numbers. It was an unseasonal rain and a short summer. We do have the chairman and managing director, Veer S. Advani, joining in to decode the quarter gone by. Mr. Advani, thank you so much for joining in. And understandably, it was a quarter that was marred by unseasonal rains as well as a shorter summer. If you could give us a sense that after all of this that has happened in the first quarter, do you still stick by your annual guidance, or do you think you will revise it lower for your UCP and room AC business?
Morning. Thank you so much for having me. You're right, it's been a weak quarter, actually a weak quarter after many strong quarters for the company. Overall, revenue grew 4% to 2,982 crores. EBITDA dropped by 16% to 200 crores, and PBT dropped by 28% to 163 crores. As you rightly pointed out, the degrowth was quite severe in segment 2, which is our unitary cooling products division. Actually, segment 1, which is our B2B business, grew well, 36% revenue growth and 11% EBIT growth. It was segment 2 that got...
Mr. Advani, we have these numbers. They're publicly declared. What we want to understand is at the start of these, at the start of the year, when the summer prospects were looking fairly strong, in fact, at some time, scarily strong, so that, there would be limited supply as well for you guys. That turned around, and you were targeting 20-25% growth for the full year with 8.5 to 9% margins. Do you retain that after what has taken place in the summer?
No. So we will not be able to make up all the lost business of Q1. When you have a lost summer, it's difficult to make up for the full year. But what does happen is that the second half of the year typically will be stronger than what we had.
So full year, what does your guidance now stand at as you see things for the revenue and margin, standpoint?
Yeah, so I think against that 20-odd% growth, I think we should be able to do about 10% growth. And on the EBIT side, we should be able to get to that 8.5%.
All right, so EBITDA margin guidance downgraded from 8.5 to 9% to 8 to 8.5% on the back of revenue growth lowered from 20-25% to about 10%. That's right?
Yes.
All right, Mr. Advani, you want to break it up for us segment-wise?
Sure. So sorry, that was about segment 2.
Okay.
Yeah. So what we're looking at is a recovery in segment 2. We will not be able to deliver that overall growth rate that we had wanted, but we do expect the festival season to be better. And as you know, there's a BEE table change that happens on January 1, 2026, which will also fuel some purchasing in Q3, and that'll go into Q4 as well. Segment 1, actually, of course, you've seen quarter 1 revenue growth very strong at 36%. I don't think that's what will happen for the full year. It will be in line with what we have been guiding of to about 20% growth overall, and the EBIT will be about 7 to 7.5%. What happens in segment 1 is that you have business mix changing, right? We have a projects business, and then we have the commercial air conditioning equipment business. Both contribute to that segment. In Q1, the projects business grew a lot faster, which is why you see revenue growth much faster and an EBIT drop. But on an overall annual basis, we should be at last year's level of 7 to 7.5%.
Okay, all right. What about market share? I think you had a target of 15%, right, by the end of this fiscal. That's on?
Yeah, so we closed this quarter at about 14%. If you look at GfK data, you'd have seen that even though the market has degrown, we have degrown less than the market, which basically implies that small market share growth. So that is on track. We continue to, 15 is the target, is where we've been looking to get to. We've just crossed 14, so we'll keep working hard to try and get to that number.
All right, and finally, before we let you go, on the second half of the year is where you make up for some part of the lost summer, but that also entails that you'll have to do a hard push. If you could give us a sense of what's the inventory which is lying in the channel right now, how does that compare with the usual times, and will that mean that there would be higher discounts and perhaps lower realizations for you to liquidate that inventory as we move towards the festive season?
Yeah, so we have not done any discounting to liquidate inventory. We've been quite fortunate that our tertiary sales have been strong. And so between the channel and our warehouses, we're holding about 75 days of inventory. In a normal course, it should have been about 45 days. So there's about 30 days of excess inventory for Blue Star in the field. We are confident that we'll be able to clear that out. As you know, because we're doing all our own in-house manufacturing, we were able to stop production in a timely manner, which typically you would not be able to do if you're buying. So because of that control, we are not so worried about the inventory. That should clear out. It is more about, like you said, the second half demand to recover, and we do need to push primary sales through our channel. We're quite optimistic about doing that. We're increasing market share in the north as well as holding fort in the south. So we're quite confident that we should be able to close the year on a positive note.
All right, take that point. Thank you so much for joining in and giving us this perspective. Wish you a better second half of this year as well. But let's talk about the overnight developing news, which is extremely important. The US President Donald Trump, who's doubled tariff on India to 50%, which is among the largest that we've seen in the world. Are further negotiations still on the cards? Parikshit has spoken to some of his sources in the ministry and the regulatory authorities. Parikshit, are more negotiations on the cards?
Well, the fact that the 25% additional tariff will come into effect only after 21 days, this, according to our sources, indicates that the time period has been given for negotiations. Purchase of Russian oil, according to sources, is perhaps not the only reason why India is being penalized, because China is a big buyer of Russian crude oil and fossil fuels. It is the biggest buyer of Chinese fossil fuels since 2022, even before the war began. What India will try and do is to negotiate a settlement, some sort of solution within the next 21 days within the larger bilateral trade agreement. So whatever solution we have is not going to be outside the BTA, it will be within the BTA. Also, when it comes to purchase of US oil and Russian oil, Indian oil PSUs have been purchasing crude oil from all over the world based on market conditions and the best pricing available. Similarly, from the US, we have been seeing how oil imports from the US have significantly gone up in the last 6 months in the range of 114 to 120%. And this is because the Indian companies want to diversify supply and they found the pricing attractive in the US as per their own strategy. We're also learning from our sources that we have to take a long-term view of the India-US partnership. This is a partnership where we've invested a lot in over the last few decades, and this partnership cannot be derailed because it has a strong political tone. There are very strong people-to-people ties and very strong business-to-business ties as well. So our effort would be to find a solution within the next 21 days, even as we try and strengthen our exports to other markets around the world.
Thanks a lot for that, Parikshit. We'll keep coming back to you with regard to the latest that you're picking up. For the time being, we'll slip into a short break. On the other side, we'll be joined by Mr. Ashutosh Raghuvanshi, the MD and CEO of Fortis Healthcare. Stay with us. Welcome back. You're tuned in to Chartbusters here on CNBC TV18. As promised, let's get chatting with the management of Fortis Healthcare. The company reported a strong set of numbers. The profits jumped up by 57%. The margins expanded to 22.6%. To help us out with the quarter gone by, we're joined by Ashutosh Raghuvanshi, the MD and CEO of Fortis Healthcare. Hi, good morning, Mr. Raghuvanshi. Thanks a lot for joining in. Well, let's get a couple of details out of the way. What kind of occupancy are you looking at? How do you see your case mix shaping up moving ahead? And also the average revenue per bed. These three numbers, if you could help us out with, the broad range will do.
Good morning. Thanks for having me. So the quarter has been good. We had about 69% occupancy during the quarter. We expect this to go to 72% over the next quarter and improve from there on. As far as RPOB is concerned, that is a result of the case mix, as you asked. And what we have seen is that our growth in some of the high-end specialities has been much faster than the core specialties. So oncology segment, for example, has grown very fast, and it is one of the largest segments for us now. And there, the realization is typically higher, and that has led to a higher RPOB. So we expect that our momentum of both occupancy as well as RPOB growth will continue, and that should result in better outcomes in future.
All right, better outcomes in future on the top line. I'm looking at your margins. They improved as well, and you've given a guidance of holding on to these margins between 22 to 23% for the entire year, led by both your diagnostics business as well as your hospital business. What I want to understand is that there are a couple of underperforming properties as well that you have, Jaipur, Vashi, etc. Do you plan to, hive them off in your margin guidance? Is that baked in as well? Because you recently did sell the Richmond hospital.
No, at present we have no plan to hive off anything. Most of these facilities which were underperforming, there were 4 facilities which were underperforming. 2 of them have turned around significantly, and the 2 you mentioned, Vashi and Jaipur, have still underperformed. However, there are signs of improvement in both these units, and we believe there is a potential in these units, especially Jaipur, where we are looking in terms of adding additional capacity and also adding additional modalities like oncology, radiation therapy, etc. And with those facilities, we expect that this hospital has a great future potential, and we expect to persist with these.
So this margin guidance that you've given us includes the possible turnaround, or that could be an additional bonus if that happens?
No, that would be additional. We are currently talking only about the current performance.
And how much would that additional bonus be? 50, 100 basis points?
We expect it to take more than a year, so I don't expect that to contribute this year, but certainly the next year.
Okay, all right. Mr. Raghuvanshi, a quick word on, on your debt number. Where do you see this one stabilizing at? And also, if you could help us out with plans for an IPO. In the past, there's been a lot of to and fro, Agilis. Do we hear something about it sometime in this fiscal year?
Yes. So as far as our debt status is concerned, EBITDA to debt ratio is about 0.93 at the moment. We believe this is a comfortable ratio, but we don't expect it to go up from here. It may marginally go up during this financial year, but it is expected to come down by the end of this year. Most of our brownfield expansion, which we have about 900 beds getting added during this year, is coming from internal accrual. So that way, the debt situation is pretty stable, and I think this is a peak for the moment, and we expect it to come down from here. Now, as far as Agilis is concerned, you would have seen that the performance has improved, but it was lagging for past few quarters. And this quarter, there has been a growth both in terms of volumes as well as in terms of ARPU. That's why the bottom line is better. So we expect that trend to continue. We are focusing on improving the performance of the diagnostic business. We are rationalizing the lab networks, etc.
Are you doing an IPO, Mr. Raghuvanshi? Are you doing an IPO for Agilis?
We will do that at the right time. It is not in the works at the moment.
All right, take that point. Thank you so much, Mr. Raghuvanshi. You are not ruled out that possibility, but definitely not happening in the very near term as well. Wish you good luck for the remainder of this year on the operational front and the case mix and the RPOB improvement that you've spoken about as well. The street likes your numbers. The stock up nearly 4% in a weak market. Take a short break, get you more on the markets and a lot of stock-specific action. Welcome back. The market still continues to reel under a bit of pressure. The mid-cap index, at one point was in the green, but now currently at the low point of trade for the frontline indices, the Nifty bank, as well as the mid-cap index, all of them come up for you. The Nifty, remember, was poised for some support around the current levels that we were at. But now if it falls further, then maybe, we'll keep an eye out on whether we see further decline from here. 24,350, 24,400 thereabouts. Important technical supports coming in for the index as well. Just pull up the dollar index to see, or rather the rupee dollar to see whether there has been an impact on overnight news that has come in on the currency as well. My sense is that the rupee opened slightly weaker and now currently as we speak is hovering around the 87.7 mark itself. So we'll monitor all these things as they come along. It's not just a today or a stock specific market, perhaps a lot more to do with the shift in strategy that takes place as well. While that happens, let's get you a few ideas for profit. Our colleagues from Money Control Pro joining in. Lekha is the one who has a stock she's tracking.
Yes, sir. So we like Bajaj Diagnostics, which recently reported a strong Q1 results, beating market expectations. Now, despite concerns over margin pressure from the new centers, Vijaya maintained a steady EBITDA margin of 39.1%, supported by 20% revenue growth. This performance was driven by increased footfall and test volumes, which were up 15% and 17% respectively. Our radiology segment accounted for 39% of the revenue mix, which was its best contribution so far. This led to an improvement in the revenue per test by 3%. Also, quick ramp-up of new centers and ongoing growth in the existing ones provided strong operating leverage and supported the margins. Talking about its expansion plans, the company commissioned 5 new centers in Q1 and plans to add 7 more in FY26. Vijaya has also fully integrated the newly acquired PS Diagnostics in Pune and is expanding well beyond its home market. The management projects 15% top-line growth in FY26, driven by volume growth and modest price hike, while also maintaining the margins. We believe Vijaya is well positioned to capture significant market share in the underserved regions. The company's strong growth strategy, focus on tier 2 cities, and the recent PS Diagnostics acquisition should drive earnings accretion going ahead. Currently trading at around 29 times FY27 estimate EV/EBITDA. The valuation is slightly above the historical average. However, Vijaya's robust outlook and expansion plans suggest potential for further stock upside.
Well, interesting one. Lekha, thanks a lot for joining in and giving us an update. But we've completely run out of time on this edition of Chartbusters. Stay tuned. Trading Hour comes up next.
Hello and welcome to Trading Hour live from the CNBC TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me as always as Hormis Patakia and Reema Tendulkar. Well guys, a lot happened last evening, right? And we've been discussing it since morning. But you know, we started the morning where the markets were like, okay, we're shrugging off most of the concerns, but now we're seeing that sharp cut that has come by on the Nifty. It's a 150-point downtick on the Nifty currently. It's below that 24,450 mark as we speak. And that's an important important level to watch out for as well. Mid caps not doing well, but in line with what the benchmarks are doing. That index is down 0.5%. We have Bank Nifty, which is sitting with cuts as well. And largely these export-oriented sectors. We have Nifty Metals, Nifty Auto. These have been big drags. Nifty Energy, that continues to be on our radar as well. All of these extra tariffs have come in because of oil that India is procuring from Russia. A lot of it we'll be watching out for because we still have the 21-day deadline, and that is where the 6th round of negotiations with the US will start as well. But for now, markets are taking that sharp turn lower as we speak, and it remains to be seen which way things go as far as trade talks are concerned.
So it's 24,422 on the Nifty. We've breached the 100-day moving average on the way down, which was a level of 24,450. So now well below a lot of the support levels. Technical analysts were pointing out that how the 24,450 mark was an important support, and that's gone. As Sonal pointed out, we started off with a fair degree of resilience, but now weakness is seeping through. I guess the two sectors which are relatively unaffected, they're in the red right now, but not with deep cuts. It's IT and FMCG. And in terms of individual frontline stocks, it's Hero MotoCorp, that's up close to about 0.7%, Power Grid, HDFC Life, some small odd pockets of green today.
Indeed. I mean, to keep in mind that today is also the weekly options expiry. And before we carry on with the show, let's go across to Parikshit now, who is in an exclusive conversation with Rajiv Bajaj, the Managing Director of Bajaj Auto.
Bajaj Auto posted a revenue growth of 6% year-on-year in Q1 FY26 at 12,584 crore rupees. The company's exports, premium motorcycle sales, CVs and Chetak delivered double-digit growth. The company delivered an EBITDA of rupees 2,500 crore and profit after tax of 2,100 crore. Bajaj Auto and TVS Motor Company have been leading electric two-wheeler sales, followed by Ola Electric. But the big issue and hurdle for the EV industry has been the rare earth magnet crisis, and now the industry will also have to face tariff uncertainty. There are US-India trade tensions, but that also has a ripple effect on tensions all around the world. Joining us now to discuss Bajaj Auto's trajectory here on in this uncertain environment is Rajiv Bajaj, the Managing Director of Bajaj Auto. Mr. Bajaj, thank you very much for joining us. Let me begin by asking you first about the US tariffs. An additional penalty of 25% coming in 21 days. If we don't have a solution, the tariffs would be 50%. How bad is this for the Indian industry overall?
Hi, Parikshit. Well, I don't know about the industry because every company's situation is specific to itself. For Bajaj, I can tell you in a word that we are quite unconcerned, and I'll tell you why. Our exports to the US are basically in two brands, KTM, that's about 10,000 vehicles a year, and Triumph, which is about 5,000 vehicles a year. So, firstly, it's 15,000 vehicles a year in a volume of about 5 million vehicles. So that's less than 0.5% as far as volume is concerned. Nevertheless, it's an important market. It's a very profitable market. So it's not a business we would like to lose. And I don't think we are going to lose this business. And I'll tell you why. In any case, from around this time, from August, September onwards, exports to such markets, including the US, do dip. Because goods will only reach there, by November or so, by which time the winter sets in and demand, turns down significantly. So, in any case, the next 3-4 months are the weakest months as far as exports to such advanced markets are concerned, which means we have time to rejig the supply chain until almost December or January, when we will start again exports for the spring and summer season. And therefore, we have many options, whether we continue exporting from India because there is a rethought on the tariff, or whether we go via facilities that are in Europe or in Asia, such as Thailand, or somewhere in LATAM. There are many possibilities. So frankly, we are not impacted significantly, and we are not concerned.
Right. I would also like to ask you about how the global tariff situation is impacting your exports. And do you expect a hit in FY26 because of the sentiments and the uncertainty globally?
Not really, Parikshit. I mean, in a word again, or in two, I would say I don't see any impact. You know that post-COVID, once our export markets started recovering, particularly in Africa and LATAM, exports came back to a level of about 140,000 a month compared to about 200,000 a month pre-COVID. And as you may have seen in recent months, they have come now nicely to a level of 180,000 a month with an all-round secular recovery, and particularly so in LATAM, which we are very happy about because, again, with pulsars and dominars, it's a very rewarding market for us. Really, the single sore point that remains is Nigeria, that used to average 50,000 motorcycles a month and is still hovering around 20,000. So with the exception of Nigeria, for motorcycles and some markets like Egypt for three-wheelers, where three-wheelers are now currently banned, really our export markets have come back strongly. And I'm actually quite hopeful that if this trend continues, it may not be long before we are back to that level of 200,000 a month.
Right. Just to speak about the rare earth magnet crisis, in April this year, you had said India's EV industry could come to a grinding halt due to the rare earth magnet restrictions by China. What would be your outlook now, as China has not lifted the restrictions for India still?
Well, that is still a very, very uncertain situation. I must say this, every day is a new day. Again, it's a very company-specific situation, Parikshit. For us, as you are aware, that in the first quarter of this calendar year, the Chetak became the market leader in the electric scooter segment. And in the recent Q1 of this financial year, our electric three-wheeler, the GoGo, became the market leader in that segment. So what I'm trying to say here is that our volumes are quite high. We would like to do typically 30,000 Chetak a month and in excess of 10,000 electric three-wheeler a month. So for a high volume player, there is a big impact because we don't carry the kind of inventory in number of weeks or months that a low volume player would. And therefore, the immediate solution that seems to be working for us now is to get low rare earth, or LRE as it is called, magnets from China. That has started up. The next step would be to try and source LRE from elsewhere, because what if China bans LRE tomorrow? Then you're back to square one. So where else in the world can we source these from? And finally, I think all of us are working towards ferrite magnets or solutions that have no rare earth at all. So I think that is the roadmap ahead of us.
Right. What has been the cost implication of this to get low rare earth magnets? Have you had to do re-engineering?
Yes, of course. You have to incorporate certain changes in fundamentally your motor design to be able to operate at temperatures that are conducive to maintain performance, to maintain reliability with low rare earth. So fortunately, the R&D has really been working through the day and night on this for the last several weeks. And they have solutions in place for both the Chetak and the GoGo. And therefore, even as we speak, we are producing now with low rare earth magnets.
Right. Now, to what extent is the rare earth magnet crisis impacting your deliveries? In quarter one of FY26, what was the impact in percentage terms? And what is the kind of impact you expect in quarter two?
As things stand today, I must again say this is a very uncertain situation, and tomorrow I could have a different answer. As things stand today, first of all, in quarter one, we had almost no impact because the inventory that we were carrying between ourselves and our suppliers has seen us through in Q1 largely. And for the whole year, also, I think we will not have impact. Now, more specifically, in July, as you know, with the Chetak, we were at about 50%. With the three-wheeler, we made it to about 90%. I think we made 8,000 of the GoGo electric three-wheeler. I had said a couple of weeks back that I see us staring at a zero production month in August as far as electric vehicles are concerned. But I'm happy to say that, as I just mentioned, things have changed a lot in the last 2 weeks with the availability of LRE. We are now looking at least a 50% availability as far as the Chetak is concerned in this month, in August, and perhaps about 70% as far as the GoGo is concerned. Things stand today. For the month of September, actually, we should post our highest numbers ever, again, as things stand today. But we will still fall short of demand only because, demand is really high next month, anticipated to be very high because of the festive season. So today, if I have to hazard a guess, I would say something like 40,000 electric scooters, that is the Chetak, and well over 10,000 of the GoGo electric three-wheeler in September is not out of the question if the LRE magnet supply continues as it is continuing today.
Right. So if we were to ask you about the full fiscal, would you trim the production outlook, or you would say you will remain on track despite the crisis?
Neither of those two. I will actually say that we think we can now do better than we had even planned for the whole year, because by October, production should completely normalize. We should have made up for what we will lose, what we have lost in July and what we will lose in August. And in fact, the reception is so good. As I said, both these brands are market leaders in their segments. So in fact, I think we will hope to make and sell more in the second half of this financial year than we had anticipated at the beginning of the year.
Right. So if I could ask you, sir, what is the kind of overall numbers that you're looking at for the full fiscal in terms of production and the growth over FY25?
That's hard to say, Parikshit, because again, it's very, very uncertain. So it can get a little hypothetical. But I will tell you this, that in terms of capacity, we've pushed it up to 40,000 for the Chetak, and in anticipation of future launches, we are moving it up to 60,000 in the next few months. And for the three-wheelers, I think I would be right in saying we are pushing to 15,000 a month. We'd like to go even higher because although we are market leader, we are still a shade under 40% share. With the ICE three-wheeler, as you know, we have close to 80% share. And that's certainly our goal that, why shouldn't we have 80% share in the electric three-wheeler segment as well?
Right. In terms of more launches, what about the EV electric scooter plans? Are we going to see more variants of the Chetak at different price points, electric motorcycles, other EV products?
A bit of everything, actually. So as far as the scooter segment is concerned, as you know, we exited the ICE segment nearly 20 years back. So this is a segment in which we had to, we had a fresh start. So we started with the new avatar of Chetak as the electric. I think to answer your question, various SKUs of this platform at various price points, that's been done, I think, quite effectively, which is why we acquired leadership. Of course, more of the same will continue to happen, but we need to launch a new platform, which quite frankly, we would have launched in this quarter. We have deferred that now to Q3, possibly even Q4, as in January. It all depends on the availability of magnets because, as long as there is some constraint, we want to keep making more of what is obviously currently selling before we introduce a new product and make life even more difficult for ourselves in terms of additional demand. As far as three-wheelers are concerned, unlike with the scooter, this is where, as I said, we are 80% ICE share. We are the market leader. We are leveraging that leadership, or we have leveraged that leadership with the GoGo. And I think we are going to take it further. I anticipate you asking me a question on our e-rickshaw foray. And again, we are starting production as we speak. I believe we will go to market in the first 4 markets on 10th of August under the brand Riki, R-I-K-I. So that's going to be our brand for the e-rickshaw segment. And as we had done with the GoGo, we'll build it up slowly. We will wait a quarter or two before we scale it up because, again, we need to get the product absolutely right. We are still, making our way up the learning curve. in all respects of technology, product, and customer service as far as electric technology is concerned. So the scale-up will be gradual, but we are going to be in the market from this month. As far as motorcycles are concerned, this is not something that we have talked about so far, but I'm happy to share a first information on this, that this is a segment where, it's a bit between the Chetak and the three-wheeler. It's not that we are not in the ICE motorcycle, but we are not exactly the market leader or overwhelmingly the market leader.
Rajiv Bajaj there in an exclusive conversation with Parikshit, and the conversation continues. But we take a short break. Just before that, the market, though, has now slipped to the lowest point of the day, 160 points down on the index, now 0.6% lower. Of course, we need to keep in mind today is also the weekly expiry, so that also has a factor to play. The Sensex is down almost 500 points as we speak. We take the market conversation forward on the other side, but we also put the spotlight on the crypto sector in our new special offering, Coin DCX's Sumit Gupta speaks to Manisha Gupta on the other side. Stay tuned.
CNBC TV18 presents Crypto Corner, powered by Coin DCX.
Welcome back. You're still tuned into Trading Hour. Cryptocurrencies are steadily moving into the financial mainstream, and a growing number of investors are eager to understand where digital assets fit in the broader investment landscape. In our special offering starting today called the Crypto Corner, CNBC TV18, in partnership with CoinDCX, aims to simplify crypto investing for the viewers by decoding the latest trends. In our inaugural episode, Manisha Gupta spoke to CoinDCX co-founder Sumit Gupta and began by asking him on how Indian investors view crypto.
See, over the last 18 months, I have seen crypto becoming a very integrated part of an individual's portfolio. From the modern portfolio theory, people want to sort of maximize the returns, risk-adjusted returns, and crypto is an asset class that fits very well there. Of course, the percentage depends upon risk appetite, but I have seen that a lot more sophisticated investors are now seeing crypto not as a speculative asset, but rather a very important asset in their portfolio. And from that point, I think the data also suggests that we were checking the data on our platform. From the last year to this year, H1, we have seen a 24,000 crore increase in trading volumes, roughly 40% of that. And overall, when you look at what is the holding period of an individual, it also tells us that people are now looking at Bitcoin, Ethereum, or the top blue chip crypto assets as a long-term holding asset rather than a short-term.
Investment rather than short-term trading. Sumit, also, what are the various kind of investment options that are available within crypto right now? Because for the longest time, we've spoken about buying and selling, and then it has been about yielding. People are also leasing their cryptos. Are Indians apt and doing that?
I think people who are doing investment in crypto assets are now evolving more to different instruments. I think just like how we have in stock markets, here you can do SIP. So you can start with as low as like 100, 200 rupees, do a weekly SIP investment. People who don't know when to get in, what is the frequency when to buy. So SIP is there, simple buying and selling is there. People do trading as well outside their trading hours. When the stock market closes, people now move to crypto and then
it's a 24-hour market.
It's a 24/7 market. It's more exciting, more volatile. People love it. Traders love it. People are also doing derivatives, in crypto assets. That's also emerging. And people are doing yield. For example, if you have Ethereum, so you can stake their Ethereum and get 5% yield on that.
But what percentage of Indians are actually doing that or understand that?
It's increasing very fast. So on our platform, I would say roughly 10 to 12% of people, of investors, use these kind of different instruments to maximize their returns. But that number is increasing pretty rapidly.
Sumit, why would you say that the interest in this space is increasing? Is it because of US, because we've seen very strong legislations come in from there? Or is it because of the returns that you see? Or people really do think that crypto now is a strong portfolio diversifier?
It's a combination of multiple things, Manisha. I think so many things are coming together at the same time. We have seen increasing regulatory clarity, so many discussions happening in the US. It's not like, just one other topic. It is actually the prime topic of discussion when it comes to financial landscape in the US. Bitcoin price has essentially demonstrated that highest ever inflows, Bitcoin being the most successful ETF ever. There is mainstreaming happening. So many people are talking about it because when price goes up, people start to read about it. It just triggers their curiosity. And when people read about it, they build their conviction, which creates a ripple effect. So I think everything is coming together, which is going to make it mainstream.
What is the investor profile right now? Because earlier it was only about enthusiasts and then people who wanted to try something new. But now we do understand that it's corporates, it's institutions, investors, even HNIs or family houses in India also seem to be getting into this.
Oh, yeah, absolutely. I think so I've been into this space for almost 8 years now. When I was starting, it was mostly young, geeky people who sort of want to do ICOs and, this white paper came and let's just read it. But now it's a lot more serious. I get like messages from our VIP customers. We have a Prime offering, CoinDCX Prime, where all the HNIs, ultra HNIs can reach out and we handhold them. We've seen massive activity there. In terms of the average age, it used to be 25, 26 back then. Earlier it used to be 21 and then 25, 26. Now it's like 30. 28 to 35. We are now floating in that range. People who are either working professionals, people who are doing businesses, they are now getting more and more aware and they also want a piece of the pie. They want to have like 2%, 5% Bitcoin in their portfolio. No one wants to miss out.
Oh, absolutely. And those are all opportunities, by the way. But Sumit, let's focus on the challenges as well. And What is it that you would say a first-time investor should know about crypto? Would you say Indians are now getting used to those higher taxes? And then there are, of course, challenges because of the kind of volatile moves that crypto puts forth.
Look, Manisha, crypto is volatile, it's risky, and that's the reason why returns are higher than other asset classes. People need to think beyond hype. People who are thinking to invest in crypto should not look at it as a 5x or a 10x multiplier, that they'll put X amount and it will suddenly go 5x. I think we've gone beyond that. Now it's more moderate. Volatility has reduced what it was 3 years back.
Right.
Yeah, I mean, like there are millions of tokens, but important to restrict it to only quality assets that have demonstrated their potential over several years now. Anyone who is starting new, I think the general advice is start small, understand, learn about it first before you just directly put your money.
Small is what, 2% of your portfolio?
I think it depends. People have different researches. I think people have said like 2 to 5% of a portfolio gives the highest Sharpe ratio, which is like risk-adjusted returns, if you want to maximize that. So yeah, I mean, people can start with 2 to 5%. Of course, some people are more bullish like me. I have a much higher percentage allocation to crypto assets. But I think for a general investor, I think they can start small. And as you learn, as you get more comfortable, then basis your risk appetite, increase your portfolio. And when you are starting, just understand that it's a risky asset, it's a volatile asset. So only invest what you feel you can afford to lose. And then when you are really educated about this, the technology, the category, then basis your comfort, you can increase it.
CNBC TV18 presents Crypto Corner, powered by CoinDCX.
Welcome back. Now, at the core of the US-India tariff tensions is a long-standing demand from Washington. US wants greater access to India's agricultural and dairy markets. And this push has come up in every trade negotiation. And in a way, it was a deal breaker for why we haven't struck a deal so far with the United States. But India's position has been firm, even now as we are slapped with a 50% tariff. In fact, speaking at an event earlier today, Prime Minister Modi said that he remains focused to protect the Indian farmers' interest. Listen in to Prime Minister Modi's first reaction to Trump's tariffs.
हमारे लिए अपने किसानों का हित सर्वोच्च प्राथमिकता है। भारत अपने किसानों के, पशुपालकों के और मछुआरे भाई बहनों के हितों के साथ कभी भी समझौता नहीं करेगा। और मैं जानता हूं व्यक्तिगत रूप से मुझे बहुत बड़ी कीमत चुकानी पड़ेगी, लेकिन मैं इसके लिए तैयार हूं। मेरे देश के किसानों के लिए, मेरे देश के मछुआरों के लिए, मेरे देश के पशुपालकों के लिए आज भारत तैयार है।
Very firm response coming in from Prime Minister. He stands behind India's agricultural and the dairy market. But let's get in a market opinion now. Markets are slipping. We're down close to about 150 points on the Nifty. Prashant Khemka, founder of White Oak Capital Management, is with us on the show now. Prashant, hi. Thank you for joining in. You know, we just spoke last week on Editors Roundtable, and at that point, it was unfathomable, right? A 50% tariff. A friend would become a foe. But now, as we're dealing with this reality as it is right now, it may change tomorrow. How are you dealing with it? What are your initial thoughts on how this is going to play out?
Certainly, Rima. Good to see you. He is, as we discussed at the roundtable as well, Trump is, by design, by his choice, unpredictable. So let's first of all agree that it is not possible to predict where it would all settle. I think India is reacting in a very responsible manner with the patience that India has shown in not rushing into any kind of a trade deal. Because even if you strike a trade deal, there is no saying that Trump will stick to it. He can always come back and, like if we had struck a deal a month ago, he could have always come back and because of Russia importing the Russia oil import, he'll impose additional tariffs on what is already agreed upon. And there's no, you can't, argue with someone who, openly can defy logic at his whims and fancy. So I think the only thing we can do is wait. In my assessment, having said what I just said, it is his negotiating tactic. If you look at his past pattern, he generally jacks up his rhetoric and his tweeting with some such measures as they imposed on India, with other nations as well, when they're close to reaching or they are in final stages of negotiation. Here he is trying to hit two targets with the same arrow. One is the Russia negotiations that they're having in the midst of related to Ukraine war, as well as the India trade deal. So I think it's very convenient and it is predictable. At least I think it's become somewhat predictable of Trump that close to final stages of negotiation, he ratchets up his rhetoric and such measures. And hopefully, as and when some kind of a deal is finally settled, my assessment is that final tariffs will be well below the 50% and hopefully would be well below the 25% initial tariff measure as well.
So if once and when we see the final deal as well, Prashant, considering that it is below 25% also, do you think there could still be some sectors which could be at risk? We spoke to a lot of textile companies today. The gems and jewelry sector spoke about how it could be a big hit if it does come about. Do you think below 25% as well, these sectors are at risk?
Those are the sectors most at risk, Sonal, that you pointed out, particularly, let's say, textiles. We are competing with nations like Vietnam, Bangladesh, and to somewhat lesser extent other South Asian countries and even Turkey, they are all in the teens, mid-teens to high teens or 20%. Yeah. So for us to be presently, as you're showing, 50% certainly renders us uncompetitive in a business that is very cutthroat and margins are slim and returns on capital are slim. But even if it is at 25, even a 5 to 7% or 10% incremental tariff would impact that sector because of the competitive levels in that sector. So either the government would have to step in with some additional support measures for that sector, or the final tariffs would have to be lower than the 25% announced for the textile garmenting sector to not feel the brunt of the competitive hit.
So in that light, Prashant, does the portfolio tilt acquire a more domestic-oriented theme now that because of this uncertainty with the textile names, the shrimp feed names, a lot of these exporters being under the radar, does the portfolio tilt acquire a more domestic-oriented face, say for the likes of the consumption names and so on and so forth?
Sure, Hormuz. I think it is possible that for incremental money, you can do that. If you're putting, whether it's fund managers like ourselves or even individual, I don't think there's benefit to be gained by, making U-turns in the portfolio or right turn, left turn, or whatever turn spaces in the existing portfolio, such macro, news. I haven't seen anyone make, maybe I'm wrong, but I haven't found myself a way, our team hasn't found a way, nor have we seen anyone make consistently any money other than the brokers when you churn your portfolio so much. But yes, on incremental money, if you want to wait out the uncertainty, then it may make sense to be more domestic oriented. But as and when, the final deal is out and it settles much lower, then you run the risk of being in the wrong place again. So we always keep a balanced portfolio, meaning we have a good measure of portfolio that is exposed to domestic, a large portion. In fact, the vast majority of the portion of the portfolio is exposed to and invested in domestic opportunities and has always been, not just right now. And there is a decent amount of exposure to export-oriented companies as well. Not only, first of all, IT services doesn't get impacted by all this, but services are out of the ambit, right? So there is a decent amount of exports-oriented exposure in the portfolio. We at least are not changing the mix in any manner.
Prashant, this China plus one was also seen as India's big opportunity to gain from global supply chain diversification. Whether it comes to EMS companies, electronics, auto components. Now, given that India's position may be a little unfavorable versus some of the other peers whose tariff is currently lower, does that derail the entire strategy and the value proposition for investing in auto components or EMS companies?
No, I don't think so, because those are far more structural decisions that global corporates make from a decades perspective rather than weeks or months perspective. I don't think anyone believes this 50% tariffs are here to stay for good. I mean, even if you assume that Trump sticks to them, Trump finally is only 3 years or 3+ years left. That's a long time, I know, but still, I doubt these are factors that global corporates would cause global corporates to make a U-turn. Yes, on the margin, maybe people would go a little slower to see where things settle. But remember, there aren't many alternatives for China plus one in some of the sectors. India, given its abundant workforce and the huge size of the domestic market, is a natural or a strong, I won't say the only alternative, but a strong alternative. So what you're saying, Rima, is true. If this uncertainty sustains for a very long period of time, it can slow down that decision making. But I don't think that reversing, because corporates worldwide have the tariffs, if anything, have demonstrated very strongly that your supply chains can't be dependent on one country or two country or a specific geographical area. So that diversification anyways would continue from China. And India remains a very strong alternative.
Okay, so even if our tariffs are between 20-25%, we're still a very stable, reliable alternative to China. Prashant, in any way, do you think markets are being a little too complacent about this tariff threat? What is your own opinion? Because every time, it just seems like a bit of an underreaction by the markets.
I think, look, if you see in April, when Trump first announced early April the tariffs, hardly any of those have panned out the way he announced. Yeah, most of them have been curtailed down. Yes, India has gone the reverse way, but given the experience that the market has had over the last 3 months, market, I think right now is appropriately assuming that these tariffs on India would not stick, first of all. That. Secondly, if the tariffs were to stick, yes, there would be further potential downside for economic growth expectations and corporate earnings expectations and whatnot due to the economic growth. The direct hit of tariffs is going to be only on a few sectors which are very small from a market perspective or the index perspective. But if the tariffs were to stay at 50%, maybe it could cause some hit to the economic growth. And that could have impact on broader other sectors as well. And that could be few percentage points further on the market. It's not a development that would cause, in my view, a double-digit kind of decline on its own.
The primary reason why the markets also went down, Prashant, could be attributed to earnings, right? We went down from 26,000 plus to sub 22,000 after the second quarter results last year. And this quarter as well, barring a few names, has been nothing much to write home about. Do you believe that this earnings disappointment is here to stay for another couple of more quarters before the low base kicks in and we start seeing some improvement? Or this was possibly the last of the sluggish earnings period that we have seen?
Very hard to say almost, but I think most corporates, what little they know from what they see in their end market, they are suggesting that another quarter or two of sluggishness is there. However, having said that, in my experience, corporates always say, when in a downturn or in a sluggish environment, they always say a quarter or two of sluggishness, and then we see markets picking up. They have no clue beyond 6 months themselves, but that's what everyone is saying. So everyone else is also saying the same, towing the same line. One has to almost also keep in mind this year's somewhat slower growth is on the back of very strong growth that we've seen after COVID, post-COVID. So 18-20% kind of CAGR we saw for 4 years is not sustainable over time. We have grown low double digits in earnings growth. So in a way, this year is a year of normalization. And going forward, we believe earnings growth should be in line with nominal GDP growth rate of low double digits, 10 to 12%.
Okay, so you rightly pointed out, nobody has any idea beyond 6 months. It's been quite volatile, and we really don't know what happens with the commentary coming in from the US and President Donald Trump as well. Always a pleasure speaking with you, Prashant. Thank you so much for joining in today with your views on what's happening with the global picture and Indian economy as well. Time for a short break now. Management of Jindal Stainless will join us next to discuss their Q1 numbers and more.
Welcome back. In conversation now with the management of Jindal Stainless with good sequential improvement in margins during the quarter. Tarun Kumar Khulbe, the CEO of the company, is now joining in. Mr. Khulbe, thank you for sparing time and joining us today. You know, the first question has to be about the overnight developments, right, with regards to the tariffs on India from the Trump administration. How much of your business relies on exports to the US? If you could share that number. And considering this action, if it is a significant number, do you see that now trending down considering the recent developments, or you're hopeful that things would turn for the better in the near term?
Thanks always, first of all, for inviting over here. And yeah, so this tariff in US, this is definitely a hot topic for the discussion. But if I talk about our industry, that is stainless steel and steel, here the tariff comes under Section 232. And these tariffs were already, they have come in two tranches. The first tranche was in 2018 in March, where 25% tariff was given. And then in this year, last month, June, beginning of June, around 4th of June, another 25% was put the tariff on the steel and stainless steel. So already our industry is having a tariff of 50% from the last month itself. Now,
yes, go ahead.
Yeah, and now if we look at from the market perspective, US, if we look, they are a net importer so far as stainless steel is concerned. And we believe that immediately ramp up of capacity there also would be taking time. So their market is also going to change, the pricing and all in their market. But so far as we are concerned, as a company, I will say that we are a lot domestic focused company. Our markets are doing well. Here, the demand in the domestic is pretty well. And we are continuously focusing on it. And the balance, we are balancing the exports as a balancing number. So US market, otherwise, in terms of while it is important, and we consider that to be important, but in terms of volume, it is not so significant for us. And that is why we are able to constantly give the growth, and we are able to keep our commitments of the volume growth, what we have given to the market. And we are confident that whatever the guidance we have provided volume growth, we will be meeting that.
So, Mr. Khulbe, just confirming, your exposure to US is very minimal. Can you quantify that for us? Is it low single digits? Is it high single digits? Because around 17% of Q1 FY24 revenues came in from exports. So, just wanted clarity on that. And when you say you'll be able to maintain your guidance for FY26, what is the volume guidance that you have for FY26? Q1 did 9% growth in terms of volumes. What will you do in FY26?
Okay, so Sunil, over a period of time, like you mentioned, FY24 Q1, the markets have changed, the demand supply situation has changed, everything has changed over the last 2 years. So many rulings have come and trade protections everywhere, everything has changed. So I think that number we should not be considering. To answer your question, you're on it is on the lower single digit. But as I said that, we are pretty focused on domestic. Domestic markets are doing fairly good, and our demand is well. And we have provided a guidance of 9 to 10% over the last year for the annual guidance. And that annual guidance, we believe that we are sticking to that, and we feel that we'll be meeting that.
Okay, so 9 to 10% volume growth for FY26, exposure to the US, exports to the US in low single digits, and you're already faced or slapped with a 50% tariff. So there is no incremental headwind. And this 50% tariff happened in the month of June. What about realizations? How are prices today versus Q1? What is the number? And even for EBITDA per ton, how are you likely to trend from here on, sir?
So EBITDA per ton, Rima, also we had provided a guidance of on a console basis 19 to 21,000 rupees per metric ton, and on that we have already performed in Q1. So far as prices are concerned, let me put it like this: that in the stainless steel, always we have been saying that prices are a factor of the raw material movements, and so far as Q1 prices average and current prices are concerned, because in the raw materials not significant movement, so prices are also have not moved much. They are at a similar level. But again, I'll repeat that our price movements are mainly with the movement of the raw material prices.
So, Mr. Khulbe, now talking about the other one, Jindal United Steel, you've been going around about a 200 crore a quarter EBITDA run rate. Do you expect that to sustain for this year, or do you see some more incremental upside to that number?
So, Thomas, this Jindal United Steel, JUSL, first of all, let me just put it again that this is our 100% subsidiary and of JSL. And this company essentially runs on a job work model. And because our volume growth is there, and already I have confirmed that whatever volume growth guidance we have provided, and we are sticking to that. So aligned to that, JUSL EBITDA is also moving. So yeah, I think we should be hitting the similar number what you have just mentioned.
Okay, last question before we let you go, Mr. Khulbe. What is the capex spend in Q1 that you did, and what is the targeted debt that you will be looking at, considering the FY26 capex number as well?
Okay, so our targeted net debt is around 35 to 3,700 crores. This guidance we had given, which in the beginning, at the end of Q4, it was around 4,000 crores. Capex guidance we have provided for this FY26 is 2,700 CR, and in Q1 we have done 665 crores Capex.
Mr. Khulbe, we leave the conversation here. Thank you very much for joining in. For the markets, still down about 150 points. It hasn't incrementally fallen since the start of the show, so 0.6% down. I think mid-caps, the position has gotten a little bit worse, so 500 points down on the mid-cap index. That brings us to a close on Trading Hour from the entire team. Thank you for watching. Don't go anywhere. Halftime report is up next.
Trump's decision to hike tariffs on imports of Indian goods to the US from 25% to 50% hurts sentiment, with investors hoping for an early resolution of the differences. Metals, auto and energy are the big drags.
Eternal sees large block trade of 5,600 crore rupees, with Antfin likely to be a key seller exiting the stake in the company, while Kotak Mahindra Bank too sees a prominent investor selling shares worth around 2,000 crore rupees via block deals.
Exporters across sectors like textiles, engineering and gems and jewelry point to a standstill on exports after US announces a 25% additional tariff. Some even see order cancellations and fear a shift of orders to other nations. All hope for a speedy resolution of India's differences with America.
Sources tell CNBC TV18 that India is looking to use the 21-day window before the additional 25% tariffs kick in to try and negotiate a solution. This even as the Prime Minister states India will not succumb to pressure and compromise the interests of its farmers following Trump's raising India tariffs to 50%.
Bajaj Auto MD Rajiv Bajaj sees exports scaling back to its earlier peak of 2 lakh units a month soon. He also expects use of low rare earth metals, helping it to meet the year's target for EVs. A slew of launches, including the new Pulsar and its e-rickshaw RIC, will only add to the mix.
Hello and welcome to Halftime Report, live from the CNBC TV18 Motilal Oswal studio. I'm Ekta Batra, and with me is Manglam Malu as well as Vinny Motiwala. Well, it is turning out to be a day definitely where we are seeing pressure on the markets, and that was expected to happen considering the tariff news overnight. So we have the Nifty, which has slipped below 24,500 as we speak. We have the mid-cap index, which is down around 1%. And important to point out that it's not only today where we've seen the pressure come through in the markets. On a year-to-date basis, now the Nifty is up around 3%, but the mid-cap index is now in the red on a year-to-date basis with a cut of around 1.6%. So let's see whether the next few days could probably reverse that and reverse the news with regards to the tariffs. But as of now, weak as we speak. In terms of stocks, lot of stocks in focus today. So we have a lot of results coming out today. BSE, Biocon, Cummins India, Godrej Consumer, Metropolis, a couple to watch out for. And stocks in focus on account of numbers today include Trent, Hero MotoCorp, BHEL, to name a few. Hi, guys.
Hi, good afternoon. You know, we have seen some weakness in the market, understandably, because of the fear that was. But the interesting part is that a large part in the street were expecting some sort of recovery to happen, just the way it happened the last time. The first 25% was announced as well. But now the Nifty is broken below lows of that day itself. 24,471 was the low, what I remember, on the day the first 25% along with, the penalty was introduced. But today the Nifty is below the 50-day moving average, the 100-day moving average and the 20-day moving average. The broader markets paint a scarier picture as well. And we have the India VIX, which is spiking up as well. So all things are pointing towards some sort of weakness. Let's see whether in the second half of trade or not we see some sort of recovery, because then you'll have the expiry factor playing out as well.
Absolutely. Hi, guys. Good afternoon. But, some bit of a green that I want to highlight. PVR Inox, yesterday they reported their numbers. After that, we are seeing today also it's managing to hold on to some bit of gain of almost 3%. And because of that, Nifty Media is the only sector as of now that's managing to hold on to some bit of a green. PVR Inox, 3% gains. But like we're talking about numbers right now, Keystone Realtors, they managed to report their Q1 numbers. Good set of numbers that came in Q1 FY26. In fact, the company saw its best ever Q1 pre-sales and achieved the 57% of its launch guidance already in Q1 FY26. Now, what more is lined up for the company? We have the management, Boman Rustam Irani, the chairman as well as managing director at Keystone Realtors, joining us to give us more details about the outlook. Mr. Irani, good afternoon, and thank you so much for giving us your time. Let's start by talking about this guidance of yours, right? FY26 seems to have started on a strong footing. Guidance you've given for pre-sales is 4,000 crores. This quarter, pre-sales come in at 1,068 crores. Your launches are at 4,000 crores. Project additions are also quite good. Now, what should we be expecting? Should we expect an upside in that guidance as well? What is the target?
First, let me thank you for calling me on your show. Secondly, let me revel in the moment for a little bit before I give further guidance. We are extremely pleased. They say pleased as punch with the way the year has started. We've achieved more than 25% of our guidance for pre-sales. And normally, I mean, why this is so important is because normally the first quarter is always the slowest quarter. And then, it starts building up, especially in Mumbai and Maharashtra, with Ganpati now in August, etc. So our second quarter will be even a little more bumper. And that's what we're counting on. I'm not making any future guidance right now, but I promise you I will after the second quarter results. And, what added to our entire team's morale was we closed 1.25 times the kind of projects that we had said we had given guidance that we would close or get for the entire year. We've given a guidance of 6,000 crores. We've already locked in projects of 7,700 plus crores. And another interesting part, in the first quarter, we've had launches of close to 4,000 crores. Now, all these three are a first time. And I think our team is well poised to take on the year. If you remember what I had said in the earlier, when I gave my earlier reporting, that Rustomji is at an inflection point, and we are very well proving it. From here, we see a huge upside happening for our sales and our production.
Okay. Mr. Irani, thanks very much for joining in. Just wanted to discuss demand, but I'll come to that in just a bit. First, I wanted to address the redevelopment projects that you have. Around 11% of your sales come from redevelopment. Tell us, is the momentum slowing when it comes to that? Because we do understand that there are a couple of projects which have been cancelled when it comes to redevelopment. It's becoming even tougher to get consensus right now. Is that a space which is slowing, and your guidance there?
With all due respect and with all humility, I want to say this, that basically people who don't know how to go about the process were jumping in, and everybody was making higher bids. And that was becoming a little bit, I would like to say, unnecessary for our market, right? And of course, this is like when you give a higher offer, everybody wants to go for it, and it becomes the norm of the day. And of course, over a period of time, if the markets don't sustain, then you see people backing off, or you see people, trying to cut corners, or people just saying, look, we can't do this, and then the society is backing off. And you have to understand, society is not one person. It's an entire, other than the committee, there's an entire general body that finally takes the call. And when you look at that, this general body has to be kept aligned, it has to be kept focused, it has to be kept together. And that can only happen if you stay in line with what you have assured in the first go itself. So be very, very clear that we at Rustomji are someone who handles the entire process end-to-end by ourselves. We do not work with external agents to try and get us the proposals. And that really helps us because we are the ones who are giving the proposal. We are the ones who are holding the hand through the entire process. And we are the ones who are giving delivery. And lastly, again over here, I'd like to say that some amount of credit is given to our history, where we've completed more than 2,000 families in the redevelopment space. And most of the places that we go to, we tell people that you can go to anyone's house and ring a bell and check on the Rustomji credentials, and they do so sometimes, and they get great responses, which is what really helps us continue to grow in this space.
Right, we take that point, Baman, and to your credit, Rustomji has done fairly well in the MMR region, especially in the the positioning that you are at. Just wanted to know a couple of things from you. One is there any problem with demand in the very near future? Because there are a lot of builders, looking at the Mumbai market, some looking at the high luxury, premium, and, the relatively affordable, what it can be in the way Mumbai is right now. What is your sense of demand out here? And beyond Mumbai, I was in Nagpur over the weekend. I heard a couple of murmurs of Rustomji projects coming out there as well. So are you looking at places outside of the MMR?
Let me start off by assuaging you and telling you we are a largely Mumbai or MMR-centric developer, and we will stay so for a very long time to come. One of the reasons we do that is because of our belief in this market itself. This market is strong, it is deep, it is wide, and we are developers from this market. We understand the pulse of this market, and we are able to kind of maneuver our way through most of the issues that other people would be facing, when they get over here. Secondly, yes, it's true, we've entered Nagpur, and it's a very small play in Nagpur as of right now. The total project size is about 1,000 crores GDV, and our investments are no more than 22 crores or so as of right now. We're looking at launching that project either in this financial year or then early next financial year. It will be a learning. We will set that vehicle up. And if it does well, we will continue to be there. Nagpur, of course, has got great infrastructure. I see that market growing, maybe not at the pace that we're used to, and then we will decide about that. Thirdly, you spoke about the demand. And let me tell you, demand is a yes and a no. There is a whole host of developers coming in, which is, let's say, spreading some amount of thoughts that there could be a slowdown. But if you look at the sales quarter on quarter amongst all developers, they've been extremely strong. So what really is happening is with the growing infrastructure, the growing demand of this beautiful city, and with the number of new commercial buildings coming up out here, and the number of new offices locating themselves out here, I think this demand is bound to continue. And builders have been extremely rational this time. There has been no, like some parts of the country, there has been no jump in prices. So prices have been controlled. I think this trend should continue for quite some time. I don't think we are anywhere near a worrisome situation.
Okay, all right. We're going to take that positive guidance forward. Thanks very much for joining in. I'm sure the dynamics in terms of demand could probably even change with regards to what's taking place with tariffs, but we'll know the impact only after a period of time. We'll take a short break, but we'll get back with the management of Pidilite on the other side to discuss the quarter gone by. Stay tuned.
Welcome back. Just keep an eye out on a couple of stocks. There are signs of some buying at lower levels for the frontline index, and it's visible more in the Nifty as well as the Nifty Bank, more so on the Nifty Bank. So pull up the Nifty, it's mildly off the day's low by about 20-25 points, and you have the Nifty Bank as well, which is now sitting with a cut of about 230 points, which is slightly off the lows of the day as well. What is the common element between both of them? HDFC Bank. Just pull up that intraday chart and you would see that HDFC Bank has now moved fairly into the green, currently seen a recovery of nearly 2/3% from the lows and has moved to the high point of trade. The other couple of stocks which are doing well are the IT stocks as well. So if you pull up, the IT index, you would see that there has been a recovery of almost 0.5% from the lows on the IT index, just about breaking into the green as we speak, and that's on account of TCS and Infosys. So if this continues, these two are fairly decent weights on the frontline index, and given the shorts in the system and the kind of call writing that we've seen at 24,500, there could be a case for some sort of short covering, but for that we'll have to watch out for the market very, very closely. Amidst all of this, there is management that is lined up for you on the show today. Pidilite, consistent, good performance, continues in the first quarter as well, a healthy volume growth of near double digits. And we have the management with us. Sudhanshu Vats, who's the managing director of the company, joins in now. Sudhanshu, you know, it's consistent, near double-digit volume growth as you've been guiding, even in a tough consumer environment. But now, as we hear from all the other consumer companies, things are improving. Do you think from here on you will do even better? Could you give us a sense?
I think Pidilite, as you rightly pointed out, has been delivering consistent underlying volume growth. And I think we've done that when the demand situation was a little tight. Even in the quarter gone by, the demand situation was slowly improving, but we've delivered a double-digit underlying volume growth with a revenue growth of about 10.6%. I think as the situation continues to improve, we remain equally buoyant and we will get advantages of that tailwind as and when it comes. So it should be able to lift it further as we go forward. Because as far as we are concerned, Mangalam, we are here to continue to strengthen our portfolio. We do a lot of work with our users and applicators, and we do that very consistently and on the ground and month on month, actually day after day, month on month, year after year. And we continue to bring in innovative, user-friendly solutions, and therefore that innovation in terms of our product pipeline, in our user marketing, and our focus on distribution and continuing to be pioneering in our approach will always help us.
Okay, that's surely interesting to hear, Sudhanshu. But what about the overall margin trajectory? This time you've seen a 100 basis point improvement there, even revenue growth of around 10-11% this quarter. What are we watching out for the full year?
I think when we talk of our EBITDA corridor of 20-24%, first of all, these numbers should always be looked in an annual context. As you know very well, that Pidilite business has seasonality. Our quarter one tends to be a much higher quarter compared to the other quarters that follow in the year. So therefore we have, and especially for waterproofing business and some of those other things. So I think what you are seeing is our corridor of 2024 remains. Now, if you look at this 25.1% EBITDA margin that we've delivered at consolidated level, there is an advantage which will go away, which is that ANSP is a little subdued and percentage ANSP even more so because of the seasonality. We do ANSP or advertising based on what the brand and the business requires in that quarter. We don't manage it quarter to quarter. So therefore, that keeps going up and down a little bit, and that will change. And there is an advantage of that in this quarter as you see the numbers. I think the place where we will continue to see a little bit of advantage is that input costs currently are benign, and we see that scenario at least in the short to medium term, 3 to 6 months out. We are also beginning to see slightly more scale leverage as our volumes grow. So we've delivered an underlying volume growth of 9.9%, but our total volume growth is far in excess of that, a factor of 2 plus actually. So therefore, the scale leverage as we continue to grow our business will continue to come to us. Having said all of this, we stay steadfast on our guidance on EBITDA corridor of 20 to 24%.
All right, 20 to 24%. You've spoken about double-digit revenue growth. Can you break that up for us, both for your B2B and your B2C business? Because if I remember correctly, last 8 quarters, B2B business has been doing double-digit volume growth, and it's actually outpacing the B2C vertical.
This is the 8th straight quarter of B2B business delivering double-digit volume growths, underlying volume growths. We are confident of sustaining that. We are seeing considerable momentum in our projects business, part of the B2B business. We are also seeing good momentum in our joinery business, which is basically the off-site furniture making piece, which is there. So we are seeing very good business there, improvement there. I think what is very heartening in the quarter, which is now here, and I think is somewhat reflective of improved demand situation you are talking about as well, is that our consumer and bazaar business has also delivered a 9.3% UVG Mangalam as I speak to you. And this is indeed one of the best consumer and bazaar performance in the recent quarters. So I think, so that lift is coming in. B2B will continue to remain strong. So as far as our UVG is concerned, Mangalam, for the quarter that has happened, what I'm very happy to report, it is a UVG that we've delivered across regions, across categories, and arguably across most products. So it's a very wide 360 kind of a performance, which is very heartening as we move forward.
Okay, all right, fair enough. So if we are seeing some pricing growth and double-digit volumes, can FY26 have low double-digit teen revenue growth?
So underlying double-digit volume growth with the margin guidance we spoke about. And I think you are already seeing a little bit of between 70 to 100 bips of pricing that is different now as we go forward, as we have come out of that cycle of having passed on all the prices. So yes, you are right. We could see as we go forward, if the demand strengthens, we will continue to see an improved performance from Pidilite. And I think what is very heartening, and I think for the quarter that has gone by, this gives me a lot of confidence, is despite all the global macroeconomic situation, the entire confusion around tariffs which has prevailed, and also the results which I've seen up to now of many large listed entities across sectors, I think we've consistently delivered. And as a matter of fact, we've upped the ante a little bit. We've delivered a strong underlying volume growth and a good revenue growth at good profitability.
Point taken, Sudhanshu. But do you think that tariff-related uncertainties could impact the raw material prices, or is it already baked in?
I think the raw material prices, from what we have seen, continue to remain benign. I think there could be some supply issues or managing those issues, but we are adapted that. I think how do you sort of plan for it? I think those are things which we will keep in mind. Our direct exposure to US in terms of tariffs is very, very low, as you know. We do export a little bit to US, but it's very small as far as Pidilite is concerned. There is a little bit of cascading impact of it on industries that export quite a lot, and particularly in our B2B business, industrial business. But I think we should be able to manage it as we go forward.
All right, you should be able to manage it going forward, so that doesn't, bring any more uncertainty. Let's talk about the two new businesses. One is the paint business. How's the performance of that been like? Can you give us, any specific numbers out there? And the early response to EVs and electronic adhesives, in which you have announced a foray. Could you give us a sense of what your total addressable market here is?
On Haisha, the good news to share with you is that we are consistently growing quarter on quarter, month on month, across the 5 states, largely southern states, where we are there, where our pilot is happening. We are focused on rural and small town India, and I think we will continue to remain focused in that space. So the good news is that we are growing month on month, quarter on quarter, but I think we still need to do a lot more work on fine-tuning our business module, establishing a clear right to win, and what more work we need to do with users, the classic Pidilite mantra and our DNA, as to how do we become better at that as we work with the applicators, even in this space, so that we have a competitive advantage. So I think we are going to fine-tune that for some more time before we fully scale it up, but the progress is good. That's on paints. I think on electronics and EV, once again, we basically now are in contact with, or as I speak to you, some of our products are getting specified or sort of are getting tested for specification more accurately along the large electronic manufacturing services, EMSs, contract manufacturers, and many EV players as well. So I think we are making good progress. In the quarter that has gone by, I can share with you, we won one additional large EMS account, and that's heartening. This is a journey we've got to stay steadfast on, Mangalam, and I think we will build on it slowly but surely. And I think this is a big opportunity, which over a period of time will play out as we go forward.
Okay. What's the TAM for electronics adhesives? Have you put an aspirational target there?
So I think if you look at the electronic adhesives market, the way it could go to 2030, assuming a lot of manufacturing comes into India, it will be a sizable market. But I will be a little careful in giving a number, especially at this juncture, with all the discussions happening on global tariffs and how this will eventually play out. So therefore, it is a sizable number, though, I can tell you. It's an attractive, sizable number, where there will be multiple players, because it's also a very complex space, even for anything. Even if you look at mobile, the number of additional places, thermal padding and all that which you need to do. So we will be one of the formidable players in this space, but there will be many. And I think, both international and perhaps a few local. But I think that's the place we are very watchful of. It is a large market, potentially a large market as we go forward.
Okay, all right. We're going to leave it on that note. Thanks very much for joining in and speaking with us. So that's the management of Pidilite saying that the demand situation did see a marginal improvement in Q1. And the stock, as you can see, just about higher by around 0.2%. We need to take a short break, but as we do that, a short note, remember to tune into the all-new CNBC TV18 Prime, bringing you insights from policymakers, business leaders and economists, shaping both the world and India's future. CNBC TV18 Prime decodes global shifts and their impact on Indian businesses, giving you unparalleled insights. Tune in to CNBC TV18 Prime at 12 noon for the Global Reset, at 1 p.m. for the Big C, and Global Lens at 8:30 p.m.
Welcome back to Halftime Report on CNBC TV18. Not much of a recovery that we've seen come again in the market, so that is something that we'll be keeping an eye out on. But a lot of stocks that are moving in trade as well. In the last half an hour, odd, we've seen E-Clerk, Shobha that have seen a recovery. But which are these other buzzing stocks? What is the reason for their move? We have Vivek joining in with us for that.
Well, thank you so much for that, Vinny. You know, what's actually transpired in the last half hour or so is that stocks from the broader end of the markets have seen a bit of a recovery. A couple of stocks, from the power space. The first one has to be CESC. Now, yesterday, a very important development as far as the SC verdict is concerned. And so power stocks who have Discom franchisees stand to gain significantly. CESC up over 4% on the back of that. Fortis Healthcare, very strong margin expansion in the quarter gone by. That particular stock, one of the top gainers, cooled off a little bit from the day's highest points. Select mid-cap companies, especially in the last last hour have seen a bit of a bounce back. Coforge almost higher by 2.5%. And ICICI Lombard, very sharp recovery from the day's lowest points. Sources indicate to us that a motor TP hike may be on the card soon, and that particular stock has recovered quite sharply. On the other hand, quite a few laggards as well, especially names from the chemical pack, exporters over here are ones that will face the significant higher tariff, and on the back of that, SRF down almost 3%. BHL, very weak quarter. This particular company execution has been very muted despite a strong order book, down by over 6%. GNFC, this particular stock, top line has fallen almost 20% on a year-on-year basis, down 8%. And Prince Pipes, again, for this particular company, a muted quarter, across all parameters, it's been a miss, and that stock down by over 8% today.
Okay, all right. Thanks very much, Vivek, for that. So a lot of stocks buzzing around today, and especially towards the close of the earnings season as well. Aditya Agarwal now joins in to tell us what he's tracking technically today. Aditya, hi. It's a busy, volatile weekday, you'd have to say, for our markets. So in the midst of that, what would you recommend in terms of a call on the Nifty?
Hi, good afternoon, Ekta. Thanks for having the show. My sense is markets are still trying to find its feet. It's more of a consolidation and a slow grind on the downside. Slowly and steadily, we are heading to 24,400. And my sense is you could see a more of time correction rather than a price correction, because as and when the news flow on tariff is trickling in, markets trying to just digest that and have it in its stride. And the good part is it's not correcting big time. It's a slow grind. Some stocks are correcting post results, but on the Nifty per se, I don't see a major fallout and a correction that I foresee in the markets. It's a slow grind. I see 24,400 as a good support for the market as of today, and for the next week as well. My sense is we could see actually a short covering rally in the Nifty, and that could be led by Bank Nifty predominantly. My sense is you could see 55,500, 56,000 levels on the Bank Nifty in the 1 or 2 weeks of trading session that is left for August. And for Nifty, I think you could also see a bit of a bounce back and a short covering rally from current levels. Once it starts to trade beyond 24,500, 24,600, it can test levels of 24,800, about 25,000 as well. So I'm not that bearish right now in the market, given the fact we've already corrected from the peak. It's more of a consolidation that I foresee for next 1 or 2 days, and maybe next week onwards, you could see a bit of a short covering rally in the market.
Okay, and Aditya, which are stocks that you're keeping an eye out on?
So Vinny, I've got a couple of stock recommendations that are looking interesting for buy side. Because clearly I wouldn't be looking to short the markets. I'm not going short on stocks as well. The first one is DMart. This is one stock which has outperformed and bucked the trend post its numbers and then has shown strength breaking out of a narrow consolidation phase. So at current levels, there'll be a buyer in DMart, which is Avenue Supermarts, for a target of 4,500 on the upside, with a stop loss on the downside at 4160, 4170. The second stock on my radar is Hero MotoCorp, two-wheeler space. Again, more of domestic-focused companies are outperforming. So Hero Moto is also looking interesting. After a long consolidation, stock finally broke out and headed higher. So at current levels, I'll be a buyer in Hero Moto for a target of 4,900 on the upside and place a stop loss somewhere on the downside close to about 4,400.
All right, take that point. Thanks a lot for that, Aditya. Let's go across to Nigel now. Nigel, for the setup, we are seeing market making attempts at recovery, but is there any insight?
Well, that's right. Mangalam, the structure is really weak. But I tell you what, this 100 EMA is proving to be a very, very important market. It comes at around 24,453. So I think on a closing basis, actually, you want to defend that mark, the 24,450, because otherwise the 200 DMA comes into reckoning. And that's at around the 24,000 odd mark. So this is a very, very crucial band between the 100 as well as the 200 DMA. Now, the various arguments whether or not this market is oversold. The answer will have to be yes. Why do I say that? In the near term, you should see some kind of a pop. Why is that? The PCR has moved to around 0.69 the last time I checked. So that's point number one. The FI not short positions are at the highest in percentage terms all the way since March 2023. But the third factor is the RSI. Normally at around 30 odd is when you see it in the oversold zone. For the time being, it's hovering in that vicinity of around 37, 38. So that's the only factor, that's pending in terms of moving to an oversold level. Otherwise, both the other two, they're closer to the range where you do see a bit of a bounce. The problem is today's expiry day. So there could be some kind of volatility in the second half of trade. And the options data is looking very, very interesting because the bears believe they've got this covered. You look at the 24,500 call, just take a look at the premium. From 120 rupees, it's come to sub 15 rupees. So those call writers, well, they're well in the money. For them, till the market holds on to the 24,600 mark, they're very well, protected. As is the case with the 24,450 call as well. Out there, the premium has dropped from around 160 rupees to around 24 rupees. So those call writers as well, they are safe till 24,600 level is holding out. So that's a crucial mark. On the downside, there is some buying that we're seeing at around the 24,400 put. The premium in the vicinity of around 16 rupees the last time I checked. So there is a bit of a punt in case this market does see a big downtick in the last hour or so in the second half of trade. I'll tell you what, that PCR is getting to a level where you should see a bit of a bounce. Back to you.
Okay, all right, Nigel. Thanks very much for that. So that's on the F&O update. We need to take a short break with the news that the markets are still weak. We have the mid-cap index, which is down around 500 points at this point in time. So definitely trending on the weaker side. Sri Lotus Developers, do watch out for that stock. It's showing a good amount of volumes this afternoon. So at around 200 odd rupees, the stock is up around 2.5%. We'll take a short break. On the other side, Manisha Gupta will join in. She has with her Colin Shah of Kama Jewelry. Stay tuned.
Welcome back, and joining us on the show now is Kama Jewelry's Colin Shah. Colin, hi, thank you so much for joining in. Clearly, from all my conversations with the industry, 10% was a concern, and then came 25%, which is effective today. And there is this 50% that gets effective in next 21 days. What is the sense that you're looking at in sense of exports to you as the biggest market for jewelry as a sector? How have the numbers been in the previous quarter and even for the month of July?
Thanks, Akshay. So, crisis time, once again, I guess for our industry, it seems like, lockdown number one once again. But our 3-year average exports to the US have always been $10.5 to $11 billion, with April, May, June, the quarter one, being approximately at $3.5 billion. April, May, June, already because of the tariff impact, are at 1.5. So it's been 50% below the 3-year average. So we've already been at that level. July also has continued to trend at that. And the guesstimate from the industry, I guess veterans and analysts, is that August to March will be another 75% down if the tariff situation continues.
Tariff situation at what level, 25 or 50?
To be honest, even if it's 25 or 50 on natural diamonds, lab-grown, gemstone, plain gold, or studded jewelry, it's an unviable level. 25 plus 6% duty makes it 31-32% effective rate, which is already higher than most of our competition, which is Thailand and Vietnam and other countries. So at this high level, we will have a severe drop and loss of business to the other countries. And if it's at 50, I don't think we'll have exports more than $2.5 billion annually to the US.
Colin, the expectation is that perhaps we wouldn't have to see 50 because the conversations will begin in the next few days, and we have 3 weeks of a time to negotiate all of this. Having said that, as you mentioned, there are other countries which are already competitive, and India will be losing. It wouldn't happen today, August, September, October. It would take time before we can even start negotiating that 25%. What are the other markets during this time that India is eyeing and working upon?
What India should eye is, if you take the top 10 GDP nations, I mean, we don't have bilateral trade agreements with, I would say, most of them. So it would really help if new markets are opened up, like Brazil and Russia. I would name those two countries as, not Russia, China, I meant, sorry. China and Brazil would be, I guess, the top 2 markets. China is already, after US, the second largest export market for our commodities. And if that could be opened up, because it has high tariffs, and the Chinese economy, though not in the best shape, is still the second largest market. So if China and Brazil and South Africa could be opened up, I think that would really help our industry de-dollarize a little bit. I don't think overnight, we can replace half our exports, but at least inroads could be made in the next couple of quarters in these new markets. And of course, EU has been, on the anvil since a while now. UK has happened. So if the EU, I guess, BTA also happens relatively quickly, that would also help, our cause.
Colin, I remember speaking to you earlier part of this year, and you said the previous couple of years were not so great, but this year seems to be stabilizing, and perhaps we could be looking at better numbers. We did not account for tariffs at this point in time and not at these current levels. Would you say 2025 in that sense yet again could be a weaker one for the segment?
Yeah, 25 now, in light of everything which has happened, it's going to be like a pandemic kind of year, where unless we have huge government support and new markets opening up, I guess there's going to be a huge job loss in Surat and the SEZs. So we're really hoping that the government takes note of this drop in exports. We are one of the affected sectors. There are many sectors which may not be as affected, but we are definitely, affected in a big way, because US used to be half our exports. So 50% of the market going away overnight is going to have a massive impact. So the long-awaited SEZ reforms, a lot of ease of doing business initiatives which we need on income tax, on customs, on GST, if all that could be taken up on a war footing and could be solved, I would say in the next, 2 to 6 weeks, then that would give some relief to the industry in reducing the job losses. Job losses will happen, but it would help us to, I guess, tide over this crisis like we did during the pandemic.
A final word then, and with the festival season and the wedding season, and then you have Diwali, and then you have Christmas, etc. Would you say the demand from India and other parts of the world, in some sense, would ease that pain?
Yes, India would ease that pain to some extent because many of the manufacturers do have an India business and export business. So yes, India would ease the pain. But what we are a little worried about is in light of what has happened in the last few days, is there's going to be a lot of volatility now on gold pricing. There'll be a lot of volatility on the currency and the stock market. So if we have a little turbulent, currency, stock market, and gold and silver price, then that will have its impact even on the domestic industry. So we have to now, just watch what really happens over the next few weeks between the two governments, so that there is a little calm restored across all markets.
Right. Colin, just before we let you go, you said that there would be a lot of uncertainty and perhaps some job losses as well, pretty similar to what may have happened during the pandemic at that time. Do you think that would have an impact on the prices of gems and jewelry itself by, say, the underlying prices of diamond and perhaps lab-grown?
See, there are, like in natural and lab-grown, there is a certain amount, there are certain clarities and colors which work in different markets. So US typically has been more, on the lower end and promotional kind of diamond clarities. Over there will be an impact. But in the clarities which are consumed in markets like India, China, GCC, Europe, we will have a shortage because now there will be less rough imported, there will be less cutting and polishing, business viability question for a lot of units. So there will be shortage because there is less production. And that may have a reverse impact on pricing, maybe. But I'm saying it's too early to say, and we will only know how all this unfolds over the next couple of months.
Okay.
We're still hopeful that, like Manisha mentioned earlier, that our government can come to some kind of agreement which doesn't make it completely unviable for the Indian manufacturer to export to the US.
Absolutely. That point is completely taken. And the point about job losses, there will be job losses, but as of now, we don't know the extent and the extent of the impact. Thanks very much for joining in and speaking with us. So definitely a developing story there. We need to take a short break. We'll get you more on the markets, a lot of stocks in focus on the other side. Welcome back. Well, Lupin is in focus, and this is on our Insight Edge segment where we are talking about what the company has told us and the reason why the stock is higher. Remember that the numbers have already come out 2 days ago. It's reacting to its conference call takeaways, which took place yesterday post-markets, where they have indicated that FY27 management indicated the overall revenue would be in high single digits. Domestic business is set to outperform the IPM by 1.2 to 1.3 times over the next 5 years. The diagnostic business is targeted to become EBITDA positive by FY27, and the margin guidance stands at around 24 to 25%, but could be impacted by higher R&D and lower PLI benefits. Lupin, when talking to us, also said that they should see double-digit growth in FY26. They stick to their guidance of $250 million plus in terms of US sales per quarter at this point in time. They would stick to around a guidance of 50 to 100 basis points margin improvement. We could hear on the mirabegrin litigation, which is a particular drug which is under litigation in the US in the next few quarters. And they are preparing to launch semaglutide in India in the first wave, which is the diabetes drug. And tariffs on pharma would have a significant impact on the US market. That's what Vinita Gupta told us. And they could see inflation in the US, potential disruptions, especially for low-margin drugs. Manufacturing additional products in the US is a part of their mitigating strategy if in case it does come to pharma tariffs. Let's in fact listen in to what the management had to say.
You know, we obviously would like to try to do better, but I would stick to that guidance, given the fact that there are a lot of, headwinds also in the form of tariffs and a host of other things.
If there is a 200% or thereabouts, I'd say anywhere from 20% to 200% tariff on pharmaceuticals, it would have a significant impact on the US market per se. I mean, as we've talked in the past, 70% of the drugs in the US are imported. 50% of generics are imported from India. So obviously, high tariff will have an impact on drugs that are imported from India.
Okay, that is the management of Lupin. But on that note, we're going to slip into a very short break. But a reminder for our viewers, unlock a world of exclusivity, expertise and influence. Become a member of CNBC TV18 Access, our premium members only experience on CNBCTV18.com. The membership includes access to CNBC TV18's flagship events, interactions with our journalists, along with curated studio tours, e-learning sessions and masterclasses and curated lifestyle benefits. Welcome back to Halftime Report on CNBC TV18. Like you can see, the market is where we started the show with 24,400 levels, around that mark, down 0.6%. We have Kaplan Point that has reported their numbers as well right now. Revenue is up around 11%. We see a spike up that's coming in the stock as well. It's up almost 1% now that we were watching out for. Recovered from the day's lowest point. Net profit seeing an uptick of 23% as well. Other than that, in the broader end of the market, we are seeing some of these names like eClerx, Shoba, Craftsman Automation, these have seen some bit of a recovery from the day's lowest point, specifically in the last 1 hour that we're seeing an up move coming in for these stocks. So keep an eye out on that. We'll see where the market is headed in the second half of the trading session. As of now, not that we're seeing any sort of a recovery that's come in. But with that, we're absolutely out of time on this edition of Halftime Report. Thank you so much for tuning in. Up next, your business lunch will take you through all that market action.
Trump's decision to hike tariffs on imports of Indian goods to the US from 25% to 50% hurt sentiment, with investors hoping for an early resolution of the differences. Metals, auto and energy are the big drags.
Eternal sees large block trades of over 5,600 crore rupees, with Antfin likely to be a key seller exiting its stake in the company, while Kotak Mahindra Bank also sees a prominent investor selling shares worth over 2,000 crore rupees via block deals.
Exporters across sectors like textiles, engineering and gems and jewelry point to a standstill on exports after US announces a 25% additional tariff. Some even see order cancellations and fear a shift of orders to other nations. All hope for a speedy resolution of India's differences with America.
The sources tell CNBC TV18 that India is looking to use the 21-day window before the additional 25% tariff kicks in to try and negotiate a solution. This even as the Prime Minister states that India will not succumb to pressure and compromise the interest of its farmers following Donald Trump raising India's tariffs to 50%.
Bajaj Auto MD Rajiv Bajaj sees exports scaling back to its earlier peak of 2 lakh units a month soon. He also expects use of low rare earth magnets helping it meet the year's target for EVs. A slew of launches including the new Pulsar and its e-rickshaw Ricky will only add to the mix.
Good afternoon, you're watching Business Lunch. We are coming to you live from the CNBC TV18 Motilal Oswal studios. I'm Hormuz Fatakia. With me, as always, is Vamakshi Doria. Vamakshi, good afternoon. The penultimate day of the week, the weekly options expiry as well. When the market started off a little resilient, but still seeing some bit of selling pressure today, but not as much as what was feared.
Well, absolutely, Hormuz. Given the kind of headlines that we saw last night, one would have expected a much bigger fall. But for now, definitely the index is trading close to the day's lowest point. The Nifty for now is trading with a cut of almost 140 points. But nevertheless, the mid-cap end of the market is the one that is taking the, is bearing the brunt of all the action. The mid-cap index is down almost 0.9%. The small-cap index will also come up for you on the screen, and that will also indicate how the broader market is doing. It's down almost 0.8%. Apart from that, we'll take a look at NSDL. This stock listed yesterday. It saw good listing in yesterday's trading session. Today, again, that stock is up almost 9%. The other stock, is PVR Inox. It's up almost 2.3%. Lots of stocks reacting to numbers. Take a look at VIP Clothing. That stock is now at around 40 rupees per share, up almost 4%. But there are more stocks that are actually reacting to the numbers on the negative side, because we have names like Prince Pipes, which is down almost 9%. Lumax also down 8.5%. GNFC again down almost 8%, Hormaz.
Well, what a move on NSDL. It was a strong start yesterday, and with that move today, the stock is now up almost 40% from its IPO price of 800 rupees, and from there now they're at 1100 rupees. So a very strong move that NSDL has seen in the first 2 days of its trading journey. We just came out with some smaller pharma companies coming out with results. Lincoln Pharma is one of them. That reported numbers, and the stock had seen a bit of a spike after the results announcement. That stock was up 4%. There you can see Lincoln Pharma. Now it's up 8%. So a very sharp move seen on that stock. The other one that came out with numbers was Kaplan Point, and that too reported results just a few minutes ago. So a lot of these smaller pharma names seeing reactions to their earnings. Kaplan Point briefly moved into the green, but is currently trading around the flat line after a recovery of almost 40 odd rupees from the lows of the day. And the other one that came out with numbers recently was Prism Johnson, and that too, of course, not a drug maker, but has various business interests in the southern part of the country, and that saw a sharp spike and now is cooling off from those post-earnings highs. But the big story today, US President Donald Trump singled out India in his tariff war, slapping an additional 25% tariff on all Indian goods, penalizing India for its continued purchase of Russian oil. Now, the new tariffs, which take effect from the 27th of August, brings the total US tariff burden on India to a staggering 50%. Now, this move comes after Trump, in an interview to CNBC, said, and I quote, "They are fueling the war machine, and if they are going to do that, then I'm not going to be happy," end of quote. Now, the White House also said that the order could be revised if India takes measures to align sufficiently with the US. And in another instance, the order could be revised if India retaliates. Now remember, Donald Trump has upped the ante in his trade war with India, slapping unilateral tariffs after months of stalled talks. The US president accused New Delhi of blocking market access for American goods and took aim at India's growing alignment with the BRICS bloc. India, in turn, has called Trump's threats unfair and unreasonable, setting the stage for a fresh showdown in the global trade diplomacy.
Well, Hormaz, on that note, let's actually listen in to what Prime Minister Modi had to say in reaction to Trump's tariffs.
हमारे लिए अपने किसानों का हित सर्वोच्च प्राथमिकता है। भारत अपने किसानों के, पशुपालकों के और मछुआरे भाई बहनों के हितों के साथ कभी भी समझौता नहीं करेगा। और मैं जानता हूं व्यक्तिगत रूप से मुझे बहुत बड़ी कीमत चुकानी पड़ेगी, लेकिन मैं इसके लिए तैयार हूं। मेरे देश के किसानों के लिए, मेरे देश के मछुआरों के लिए, मेरे देश के पशुपालकों के लिए आज भारत तैयार है।
Now, with Donald Trump doubling the tariffs on India to 50%, are further negotiations still on the cards? Parikshit is joining us to tell us more on that. Parikshit, what are your sources telling you?
CNBC TV18 has learned from sources that while India considers the imposition of penalty to be unfortunate, the focus will now shift to negotiations and back-channel talks to find a way out. The actual date of imposition of this penalty is after 21 days, and sources say this is being seen as giving space to negotiations to find a way around the additional tariffs. India will try to negotiate a solution in the next 21 days within the larger ambit of the bilateral trade agreement. India hopes to work towards finding a solution which is a mutual win-win for both sides. Sources adding that it is important to take a long-term view of the larger India-US partnership which has been built over decades. Also, the purchase of Russian crude is not being seen as the only reason by India for US to impose this additional tariff. This is because China too is a big buyer of Russian crude. This is being seen as a negotiating tactic to put pressure on India in the trade talks. When it comes to crude purchases, Indian oil PSUs have been purchasing crude oil from all over the world, and they are guided by the best market prices. Oil imports from the US have significantly gone up in the last 6 months and are up by approximately 114 to 120% this fiscal. Indian PSUs are buying oil and gas from the US companies and will continue to increase purchases. So India will look at ways to resolve the situation, keeping in mind that India shares a very close linkage with the US industry and businesses.
Well, earlier on, we also spoke to a handful of experts on the impact of Trump's tariff and the road ahead. Let's listen in to excerpts from all of those conversations.
So if India put out a statement along with a deal that we are grateful for to President Trump for all the help he's given us, including in the India-Pakistan war, they can put in a way that is acceptable. But, you know, Trump feels like Pakistan recommended him for the Nobel Peace Prize and acknowledged his help, and India is not. And I am sure it is a factor. How big a factor? I mean, there are other things like big numbers that he can boast about, but it'll soothe the ego. So there's definitely an ego component to everything that Trump does.
Very surprised, as I said. I follow RFK Jr. very closely. I think they're doing a lot of reforms in the US, specifically when it comes to big pharma. And if I look at the agenda seems to be to bring, the healthcare costs down. I find it strange that it's not like you can replace generic pharma from India to some other country, because it takes a lot of time, FDA approval. There is a host of things that is to be done. Okay. So we don't think the tariff is coming, but even if it comes...
It's been an overhang for a while.
Yeah, but I'm just saying, even if it comes, there is no replacement for that. So these drugs will go to the US. Eventually, the consumer will have to pay. Nobody has that much of, margins in India.
We also believe that finally, it's a question of negotiations, diplomacy, a lot of politics rather than only economics built in. And hopefully things will settle now. Because I would agree that, 80-85% of the concerns which we have seen over the last 1 year seems to be behind us, in terms of geopolitics. World is a little bit more peaceful than it was. India, Pakistan, and the Middle East scenario. I think except Russia, Ukraine, which continue to fight, most of the places are pretty, I would say, stable. The world is starting to grow a little bit, except this tariff issue. And even in India, you have liquidity in our favor. There's been a huge surge. Profits are slow, but they are recovering.
Market experts on the recent turn of events. By the way, the mid-cap index has now slipped to the lows of the day, 1% lower now on that index. We also spoke to the management of Pearl Global, which is set to be impacted by Donald Trump's tariffs. Listen to what the management had to say here.
They want our US part of the business to be moved out to Bangladesh, Indonesia, and Vietnam, where we have our facilities. And I think that would be I would say, a death knell for at least for this particular season, which is coming up for the Indian industry, because 50% tariff, most of the retailers won't be able to absorb or have any mitigation.
Well, CNBC TV18 Sanjay Suri also spoke to former US Assistant Secretary of Commerce Raymond Vickery on Trump's proposed tariffs. Let's listen into that conversation.
The whole Trump tariff effort is unreasonable and unjustified. It's a huge, huge mistake for President Trump and his administration to combine the question of trade with Russia about oil with the question of overall tariffs. There are verities and issues and factors which are very, very different in terms of what Trump may view as a trade deficit and what is going on with Russia and Ukraine. And to throw those all into the same basket and come out with a 50% tariff is egregious and unreasonable.
Let's also get you some more highlights from the White House. Donald Trump said that there is a good chance of a meeting with Russian leaders and Ukrainian leaders as well, following what he described as very good talks between his envoy and Vladimir Putin. Now, this comes ahead of Trump's deadline for Russia to agree to a ceasefire in Ukraine or face new sanctions. Here's what he had to say.
Well, there's a very good prospect that they will. And we haven't determined where, but we had some very good talks with President Putin today. And there's a very good chance that we could be ending the round, ending the end of that road. That road was long and continues to be long, but there's a good chance that there will be a meeting very soon.
Well, on that note, let's slip into a very short break. But as we do that, here's a reminder for our viewers. Unlock a world of exclusivity, expertise and influence. Become a member of CNBC TV18 Access, a premium members-only experience on cnbctv18.com. The membership includes access to CNBC TV18's flagship events, interactions with our journalists, along with curated studio tours, e-learning sessions and masterclasses, and curated lifestyle benefits. Welcome back. Thanks for staying tuned into Business Lunch. Moving on, Reliance Industries chairman Mukesh Ambani, in his message to shareholders in the FY25 annual report, says the company is reshaping to become a new age deep tech enterprise. He points to over 1,000 scientists working on cutting edge research in AI, renewables, advanced materials, and digital platforms. He highlights the transition from vision to execution on the giga-scale solar and battery energy projects, and while he sees O2C and oil and gas businesses continuing to cater to India's growing demand, the focus is on building platforms to empower people and elevate India's position in the global economy.
On to a CNBC TV18 exclusive then. Bajaj Auto MD Rajiv Bajaj sees exports scaling back to its earlier peak of 2 lakh units a month soon. He also expects the use of low rare earth magnets to help meet the year's target for electric vehicles, adding that a slew of launches including the new Pulsar and its e-rickshaw Ricky will soon be launched. Listen in.
Post-COVID, once our export markets started recovering, particularly in Africa and LATAM, exports came back to a level of about 140,000 a month compared to about 200,000 a month pre-COVID. And as you may have seen, in recent months, they have come now nicely to a level of 180,000 a month, with an all-round secular recovery, and particularly so in LATAM, which we are very happy about because, again, with Pulsars and Dominars, it's a very rewarding market for us. And I'm actually quite hopeful that, if this trend continues, it may not be long before we are back to that level of 200,000 a month. The immediate solution that seems to be working for us now is to get low rare earth, or LRE as it is called, magnets from China. That has started up. The next step would be to try and source LRE from elsewhere, because what if China bans LRE tomorrow? Then you're back to square one. The availability of LRE. We are now looking at least a 50% availability as far as the Chetak is concerned in this month, in August, and perhaps about 70% as far as the GoGo is concerned. I will actually say that we think we can now do better than we had even planned for the whole year, because by October, production should completely normalize. We should have made up for what we will lose, what we have lost in July and what we will lose in August. We are starting production as we speak. I believe we will go to market in the first 4 markets on 10th of August under the brand Riki, R-I-K-I. So that's going to be our brand for the e-rickshaw segment. As far as motorcycles are concerned, this is not something that we have talked about so far, but I'm happy to share first information on this, that this is a segment where, it's a bit between the Chetak and the three-wheeler. It's not that we are not in the ICE motorcycle, but we are not exactly the market leader or overwhelmingly the market leader. So what we're going to do here is, I think we're going to work with 2 of our strongest brands, the Boxer in export markets and the Pulsar, the world over, quite frankly, is a very, very strong brand. We're going to work with these 2 brands, and hopefully in the near future, we'll have something on that front, i.e. on the electric motorcycle as well.
Well, that was the management of Bajaj Auto. But before we slip into a short break, take a look at the Nifty. It has slipped below the 24,400 mark for the second time today. Keep in mind that this is the lowest level we've been at since May 12. And in fact, we're only 250 points away from the low that we made during Operation Sindoor. So an important, development out there. The Nifty for now is trading with a cut of almost somewhere around 200 points. But slip into a short break for now. We'll get you more news and updates on the other side.
At the lowest point of the day is the index, the expiry session now taking full toll on the markets. We have broken below the May 12th low of 24,378 as well, and now a cut of 215 points and counting on the Nifty. Axis Bank has seen a sharp fall from the highs. Mahindra and Mahindra has seen a sharp fall from the highs. Take a look at that. Take a look at Axis Bank. Take a look at Mahindra and Mahindra. Take a look at Trent, and that too has taken a sharp knock from the higher levels there, and the sharp fall in Trent as well, 2% lower on that stock. But of course, can't not pull up the contributors as well, and that will give you an idea of who are the principal culprits in taking the index lower. It is ICICI Bank, it is Reliance Industries, it is Infosys, it is Bharti Airtel, and it is SBI. Of course, remember, SBI is reporting results tomorrow, so there you can see the contributors there. 40 points on the downside coming from Reliance, 21 from ICICI Bank, and some minor gains for HDFC Bank and for Hero MotoCorp. I'll get you more on the markets as the day goes by, but what could be a major relief for power distribution companies in the capital? The Supreme Court has directed for the liquidation of regulatory assets, potentially paving the way for price hikes. Ashmit is here to tell us more on that. Ashmit.
Well, a landmark judgment coming in from the Supreme Court to have sweeping impact across a trifecta of stakeholders. That's the discoms, the consumers, as well as the state governments. For Delhi discoms, a big win for them, a 27,000 crore rupee win for them. And for consumers, they could potentially be looking at, after the Supreme Court judgment, crawling up power tariffs or a bigger subsidy bill for the state governments. So this entire issue began with the Delhi discoms raising the issue of regulatory assets in the Supreme Court. Regulatory assets, roughly speaking, loosely speaking, the difference between the cost of procuring the power and the realization from the customers. There's been a shortfall over the last very many years. These regulatory assets have added up to over 27,000 crore rupees in the books of these Delhi discoms, and that is the issue that was raised before the Supreme Court. Now, the court came down very heavily on these regulatory assets, calling it a case of regulatory failure. Strong language being used there. And to that end, the Supreme Court directing that these power tariffs that are charged to the end consumers, such as you and I, needs to be cost reflective. So this is the guidance that has come from the Supreme Court. But importantly, the direction that has come is for liquidation of these regulatory assets. That needs to be done within a 4-year period. The clear mandate that has been given by the Supreme Court to the state regulatory commissions, they need to come out with a roadmap to liquidate these assets, regulatory assets, within a 4-year period. Now, how is liquidation done? Well, it is usually done by either increasing the power tariffs charged to consumers or by allowing the state government to foot a larger subsidy bill. One of two options needs to be considered, if not others. But broadly, that's the takeaway that the Supreme Court has given. Regulatory assets, that policy needs to be done away with. Only in exceptional circumstances it can be allowed. And then the ones that have accumulated so far needs to be liquidated. So for the discoms, a big win coming in for them. For consumers, they could potentially be looking at increased power rates. And as far as the state governments, they could potentially be looking at bigger subsidy bills. Back to you.
Well, thank you so much for that update, Ashmit. But with that, it's a wrap on this edition of Business Lunch. It's a red-looking screen. Don't go anywhere. Midcap Radar comes up next.
Good afternoon. Welcome to Midcap Radar live from the CNBC TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me, as always, is Vivek Iyer. And a sharp fall in the last couple of minutes was what we are seeing. The Nifty is down more than 200 points, off around 180 points from the day's high as well. The initial idea was we are shrugging off the tariff concerns, but that doesn't seem to be the case now.
That's right. Good afternoon, Sonal. And it's a red-looking screen. The mid-cap and small-cap indices are bearing the brunt of even more intense selling pressure, especially in the last hour. Like you mentioned, the advanced decline ratio, very weak. But we have a lot lined up on the show, an important corporate conversation as well. So let's start off with the top headlines. Trump's decisions to hike tariffs on imports of Indian goods to the US from 25% to 50% hurt sentiment, with investors hoping for an early resolution of the differences. Nifty Sensex slipped to the day's lowest point. Metals, oil and gas, along with realty are the big drags. Mid-caps under pressure.
Bharat Forge in focus after Q1 numbers. Consolidated revenue down 5% versus last year. Management tells CNBC TV18 that aerospace is the one business they're extremely bullish on.
Prince Stripes under pressure after a muted Q1. Revenue down over 27%, while profit declined 80% sequentially. The company says strategic focus continues to remain on strengthening distribution network.
Muted Q1 spark sell-off for GNFC. Revenue declines 21%, while net profit is down by 32% compared to last year. Company says annual turnaround at Bharuch complex has impacted financials.
Exporters across sectors like textiles, engineering and gems and jewelry point to a standstill on exports after US announces a 25% additional tariff. Some even see order cancellations and fear a shift of orders to other nations. All hope for a speedy resolution of India's differences with America.
All right, those are the top headlines. We've been talking about that big fall in the markets, and that is something which is led by most of the sectoral movers as well. We do have the metal index, which is at the lows of the day, energy, realty, PSU banking names, mid caps and small caps, all of them are trending lower right now. Most of them are the days low, actually. We'll talk about individual names in greater detail, but look at the fall that we're seeing, especially in the mid caps and small caps. 1% gone there, 1.5% gone on the metals as well. So let's talk about the individual names now. Hormuz is at the wall and is going to talk all about the mid-cap movers that we have in trade today. Hormuz.
Well, situations and times turn very quickly, and some resilience has now given way to capitulation, if you could call it that. The index at the lowest point of the day. So we'll start off with some losers then in the broader markets. Godfrey Phillips, after a breakneck run for the last 3 sessions, has now come off 9% in today's session, basically giving up everything that it gained in yesterday's trade. SKF at the lows of the day, RCF at the lows of the day, as is Forgings, losses of anywhere between 6 to 8%. And it's not as if there haven't been positive earnings reactions, and there have been some of them. Lupin's results have led to a strong move in a lot of the pharma names. Lupin still at the highest point of the day, 3.5% higher here. Kirloskar Brothers, and take a look at the move in Lincoln Pharma. At one point was up almost 8.5%, 9%. And Rain Industries too, seeing a gain of around 7% after its results. But on the flip side, GPT Healthcare, after its results, has slipped below its IPO price with this 11% fall. GNFC is down 8%, BHEL is down 7%, now the PSU name after another net loss, and Prince Pipes too has extended its losses, is down over 9%. Metals as a pack has been sulking today. Jindal Stainless, Hindustan Copper, NMDC, SAIL, almost every constituent of the metal index trading with losses of anywhere between 2.5% to 4%. And lastly, some stocks that are bucking the trend and are on the volume side. Look at Stovecraft, look at ITI. It's come off the highs of the day, still 6.5% higher. Avalon Tech won an order yesterday, is gaining around 6.5%, and CESC too seeing some gains on very strong volumes. Back to you guys.
Thank you so much for that, Hormal. You've managed to find a few specks of green in what is otherwise a very red-looking screen. But before we take that short break, here's a reminder for our viewers. Unlock a world of exclusivity, expertise and influence. Become a member of CNBC TV18 Access, a premium members-only experience on CNBCTV18.com. The membership includes access to CNBC TV18's flagship events, interactions with our journalists, along with curated studio tours, e-learning sessions and masterclasses, along with curated lifestyle benefits. Welcome back to Midcap Radar. Well, Gujarat Narmada Fertilizers is one particular company that declared its results post-market hours yesterday. Riya joins in with more details.
Well, yes, Vivek, GNFC has reported quite a weak set of numbers in Q1 of FY26. The revenue and the net profit have decreased by around 21% and 32% respectively, both on a year-on-year basis. In terms of the segments, we've seen lower volume availability affecting the revenue in both of these segments, and specifically for the chemical segment, tough market conditions have prevailed for certain products, which had a negative impact on realizations as well. But the company has highlighted that in view of the annual turnaround at the Bharuch complex in April of 2025 and its consequential impact on the revenue and the profits of the company, the financials of quarter backs the financials in terms of lower volumes, unproductive costs, as well as higher fixed costs, which are mainly for repairs and maintenance. However, the street is still not liking the numbers in terms of the impact on the profitability, taking a big hit on the margins as well, and the stock is down over 9% on the back of this.
All right, thank you, Riya, for joining us with all those details, but we are not done yet. Prince Pipes, that's on your radar as well. How did the numbers look?
Well, yes, weak set for Prince Pipes as well. The overall revenue and profitability remained quite weak for the company this time around. Revenue saw a decline of around 4% on a year-on-year basis, and EBITDA and net profit both declined by 31% and over 80% on a year-on-year basis as well. Margins have also contracted by around 270 basis points in this quarter due to a continued drop in the PVC resin prices that we've seen all along. That has resulted in inventory losses for the company. But despite the volatility in PVC resin prices, the volume growth has remained fairly stable, up around 4% on a year-on-year basis. The working capital days have also seen an improvement, coming in at 93 days versus 98 days at the end of FY25. And going ahead, the company remains optimistic about a demand recovery going forward. But nonetheless, the stock is still down 8% on the back of these weak numbers.
Thank you so much, Riya, for taking us through the internals of both the GNFC as well as Prince Pipes. Well, on the flip side, Fortis Healthcare reported a strong first quarter with strong profit growth and healthy margin expansion. Earlier today, we spoke to Ashutosh Raghuvanshi, the MD and CEO of Fortis Healthcare, to discuss the quarter gone by and quizzed him on occupancy, revenue outlook and debt picture going forward.
The quarter has been good. We had about 69% occupancy during the quarter. We expect this to go to 72% over the next quarter and improve from there on. As far as RPOB is concerned, that is a result of the case mix. As we have seen is that our growth in some of the high-end specialities has been much faster than the core specialties. So oncology segment, for example, has grown very fast, and it is one of the largest segments for us now. And there the realization is typically higher, and that has led to a higher RPOB. So we expect that our momentum of both occupancy as well as RPOB growth will continue, and that should result in better outcomes in future. As far as our debt status is concerned, EBITDA to debt ratio is about 0.93 at the moment. We believe this is a comfortable ratio, but we don't expect it to go up from here. It may marginally go up during this financial year, but it is expected to come down by the end of this year. Most of our brownfield expansion, which we have about 900 beds getting added during this year, is coming from internal accrual. So that way the debt situation is pretty stable, and I think this is a peak for the moment, and we expect it to come down from here.
Okay, that's Fortis Healthcare. Stock is higher 4% in a market like this. So that's the commentary coming in from the management as well. We'll slip into a short break now. Management of Carraro India will join us next to discuss their Q1 numbers and more. Welcome back. You're still tuned into Midcap Radar. Well, Carraro India, that is the management on our radar. Company posted a steady set of numbers with its margins expanding and the management guiding for a top-line growth of 8 to 12% going forward. Balaji Gopalan, who is the managing director at the company, is joining us now to take a few questions. Mr. Gopalan, good afternoon. Thank you so much for joining in. This time around, your exports grew by 5% on a YY basis, and you did indicate it is showing early signs of recovery after 2 subdued quarters. But now we do have a lot of updates when it comes to global tariffs as well. How much is your contribution coming in from the US markets? Is that update which has come by of 50% tariffs impact your order booking and the client commentary as well?
Yeah. Good afternoon, Sonal. First of all, thank you for getting me into your show. We have had a very good quarter as far as our exports are concerned. The overall market could give a different number, but the segment in which we are present and the kind of products we are exporting, there has been a good pull and good demand for our exports. And to that reason, it shows in the numbers that we have. Now, coming to that issue of the tariffs, that is currently very fluid, and we will not be able to give any concrete solutions or alternatives or a strategy for it, because we are actually very, very marginally affected by it, because Carraro India has just a 6 to 7% exposure to the US market. And what we are selling, the tariffs is not coming under our scope. It is managed by our customers. So to that reason, we are not really affected because the number of percentage of our exposure is low. Secondly, the kind of technology and manufacturing and the product that we are supplying over there, there is no replacement that is possible, because for a replacement like a product like a driveline or an axle, it takes 2 years for the validation to happen. So we are quite insulated, and it is absolutely not a concern for Carraro as of now. But we are looking at alternatives. We are always wanting to grow. So we are exploring other markets as well. But answering your question, there is no concern at the moment.
Okay, Mr. Gopalan, thank you so much for making that very clear. What we want to understand from you is the guidance that you had given at the start of year for FY26 was a growth of 8 to 12. Q1, there's been a revenue growth of 5%, so that implies a steep ask rate as far as Q2 and H2 is concerned. So are you maintaining the guidance? And secondly, you had also guided that you would see 100 basis points margin expansion every year for the next couple of years. So is that intact?
Yes, that is very much intact, and we are very aggressively pursuing that guidance that we have given. And all the indicators that are in front of us are supporting us that we will be achieving it. There is absolutely no going back in what we have said. 1% increase in EBITDA for the next 2 to 3 years. And this year, we will surely close at 11%. So we are well within our plans.
So, Mr. Gopalan, what makes you confident on this? Do you think second half will be better than first half? Because if I see the split, your biggest contributor, which is construction vehicle segment, has done well. There's a 16% growth there. But agri segment has seen a decline. What will these segments be like by the end of this fiscal?
Yes. See, we are looking at, as I said, a growth of 8 to 12% in the current fiscal. And surely the good monsoon now will spur up the rural economy, and we are expecting a growth. Already our order books are increasing for the four-wheel drive market that we are adhering to. As a market, the four-wheel drive tractor market is already expanding much faster than we were expecting. And we are having a good export orders also, like I said, for the teleboom handler business that we have got into very recently. So all in all, government also spending on infrastructure with a good monsoon. We are very confident, and we have order books from our customers who are approaching us. They are quite excited that the forward-looking months are very, very encouraging for them as well. So 10 to 12% growth in our revenue is something we are quite confident about.
Understood that, Mr. Gopalan. So sticking to your guidance firmly, 11% top line is what you have hinted at. Well, we want to understand, update as far as 3 new product platforms that you had earlier highlighted. The first one is the high horsepower transmission. We understand that the pilot study has been completed. When does it get on stream? What are the kind of customers you've managed to open? And also CVTs as well as e-tractor transmissions. What is the outlook here? Can you give us and can you quantify the kind of growth that you can see from here?
Yes, I will go to higher horsepower. And higher horsepower, the CVT, the continuous variable transmission, that is nothing but an automatic tractor gearbox. So the CVT and high horsepower are gaining momentum. We are exporting the high horsepower to major OEMs in Europe, and we are routing it through our headquarters where we have a tractor building facility also, which is outsourced from the big OEMs in Europe. Now, coming to the CVT, that has been successfully established and serial production should start in the month of November. We have already supplied about 30 transmissions and they have been very, very successful. While our volumes are okay, I think the investors need to know that the focus, because we are satisfied, we don't have a threat or a risk from US. We are not looking at any market being shrinking. So that side of revenue is taken care of. But the strategy is to improve the marginality. And we are working very strongly on marginality, and that is adding to the EBITDA guidance that we are giving. Coming to electric tractor, 2 years back, if you had asked me electrification in off-highway, that was something of a distant possibility. But very surprisingly, in the last 1 year, we have had major inquiries and we have bagged a successful project on electric tractors for India. The feasibility study has been completed. We have got the contract for the configuration of the tractor and we should be productionizing it. The customer should productionize it in early 2027 or mid 2027 with a volume projection of roughly starting with 10,000 tractors going up to 25,000 tractors in a period of 2 to 3 years. So the going is good. Futuristic technology, advanced technology absorption in India is happening because of food security requirement and farm efficiency requirements. And Carraro is exactly in the right segment where there is a demand for these technologies.
Thank you so much, Mr. Gopalan, for joining us, giving us a sense of how exactly Q1 panned out, sticking to your guidance for FY26, and what are the kind of new product platforms that are. Thank you once again, and wish you all the best for the rest of FY26. Well, a slight or a wee bit of recovery is what we're seeing as far as markets are concerned. One particular stock that's recovered very sharply from the day's low is Hero MotoCorp. Remember, results did come in post-market hours yesterday, and that particular stock has recovered very sharply. That stock higher at the day's lowest point. What's not doing so well? Well, some of the defense names like Solar Industries, those are some of the stocks that are seeing a bit of selling pressure near the day's lowest point. But with that, it's all the time we have on this edition of Midcap Radar. Mutual Fund Corner when we return.
Hello and welcome to MF Corner. I'm Sonal Bhutra and with me as always is Vinny Motiwala. And today we have with us Nirav Karkera, the head of research at Wisdom, to answer all your MF queries. And we've received a lot of them through SMS, through Twitter, through social media and emails as well. So let's get going and get to our first query. Nirav, thank you so much for joining us today and taking our time to answer all the queries that we have received. So let's get started with the first one because Devi is writing to us from Bengaluru. She's a long-term investor and wants to invest around 1 crore rupees for the next 5 years. She wants to know if mutual funds or alternative investment funds or AIFs offered by different fund houses are the better options. Nirav, it's a specific amount, 1 crore over 5 years. What do you suggest? Should our viewer invest in mutual funds or AIFs or diversify between the two?
So I feel first and foremost, it is important to understand the distinction between two, right? So of course, everyone knows about mutual funds, but AIFs focus on very specific niche mandates, right? They try and offer propositions to access alpha from opportunities that mutual funds are often than not able to capitalize upon, at least not in its entirety, right? So AIFs are a great proposition to look at. However, one important caveat here is that the minimum ticket size for AIFs are 1 crore. All right. Now, considering that the investor has only 1 crore to invest, if she were to go the AIF route, right, she would have to invest in a single strategy that would lead to a lot of concentration. So most AIFs are also considered to be slightly higher on the risk pyramid versus mutual funds. So too much, concentration into one strategy that is inherently riskier does not make for a sound portfolio. It makes sense for people with a larger portfolio who just want to manage their diversification through the AIF route. However, in this case, considering that the total investable amount is 1 crore, I feel a very, very effective job can be done through mutual funds itself. In fact, a more strategic approach of dividing the portfolio into core and satellite portfolios should hold the investor in very good stead. The core portfolio, of course, a larger portion of the portfolio could comprise of well-diversified funds belonging to flexi-cap, multi-cap, and such more flexible mandated fund categories. Some of the funds that we like in these and which could serve as a good starting point for the investor could include the likes of DSP FlexiCap, 361 Focused Fund, Kotak Multicap Fund, and a few of these other flexible mandate funds. And for the satellite portion, where we expect the risk to be inherently higher and exhibit higher volatility, but the potential for outperformance over a longer period is significantly high, this can comprise of your satellite portfolio. Here you can start delving into mid caps, small caps, and sectoral thematic plays. That is, if you are willing to actively manage the portfolio. So a good starting point would be to look at funds like an Edelweiss mid cap, a Bandhan small cap fund, or perhaps even an Invesco India contra fund if you're willing to go the strategic thematic route. So a diversified composition of such mutual funds that are strategically allocated towards for longer term return generation should hold you in much better stead than putting all your eggs in one basket that AIFs are.
Mm-hmm. Right, Nirav, that's an interesting one there. But, let's move on to the next query. Afternoon, Nirav. We have this query coming in from Lakshmi, who is writing to us from New Delhi. Now, she says that she is investing via SIPs and shares like L&T, Infosys, HDFC Bank, ICICI Bank, the top 100 ETF, as well as Motilal Oswal Nasdaq top 100 ETF is what she's investing through. So she says that she wants to replace her SIPs in L&T, Infosys, ICICI Bank with BEL, Coforge and KIMS. How should they be going about this?
So one good thing that's working really well for Lakshmi is that she's ensured that it's a very high quality blue chip portfolio. In fact, a very, very smart move to use a mix of mutual funds and stock as well. In fact, some of the names mentioned are marquee with a very strong track record of delivering consistent performance over longer periods. So this is going superbly fine for Lakshmi. However, with the entire concept of replacement, right? So I'm assuming there are two types of replacements that Lakshmi would be wanting to check out. So one is replacing the current holdings, the existing holdings with the new set of stocks that she's spoken about. So in such a case, you need to be very conscious of two things. One is, of course, there's going to be an immediate tax incidence, and which may or may not be warranted if capital gains are accrued. And second, the more preferred approach is to replace subsequent SIPs with some of these names. Now here, the biggest caveat is I'm presuming that all the homework, research, rigor has been exercised while arriving at these three stocks, because they belong to categories much beyond the blue chip category, right? So, of course, if you very strongly believe in it, you may continue to allocate incremental money towards these stocks. However, one must be very conscious of the fact that these are just three stocks that you spoke about, and you must be wary of the fact that as you move away from the blue chip, of course, the potential to generate great returns is also very high, but the probability of going wrong, or rather the margin of safety, is also very thin, right? And the probability of going wrong is higher. So you need to be very, very sure about these three bets. Of course, the portfolio is large cap oriented. There is a clear case for mid and small cap exposures to come in as a portfolio approach, but it is definitely warranted to also take the fund route to manage these exposures, because some of these stock names that you have presented, they are very thinly covered, at least versus the blue chip companies, and there's very little research that's available in public domain, secondary research, if that's what you're banking on. Right. So unless it is your primary research, you may want to take the fund route to increase your mid and small cap exposure. If you yourself are a professional or an experienced investor, and try and ensure that the subsequent SIPs are diverted in this direction. The core portfolio looks pretty solid with the names that you already have.
Okay, take that point. Looking largely beyond the large cap base of that's the query coming in from Lakshmi. Nirav, let's talk about the next one. Anand is writing to us from Telangana and wants to know the mutual funds that are good for an aggressive investor. Wants specific names that you can help with.
So aggressive investors, I'm assuming if you're aggressive, you will also have a longer time horizon. Please understand there is a thin line between being aggressive and being reckless. So the idea is not to completely overload on small cap, micro cap sort of funds. The idea is to still be risk conscious while participating in the higher degree of volatility. So a starting universe could use some very, very good focused mandates that are market cap agnostic, that are very focused on bottom-up style of stock picking. Some of the names that come to my mind immediately are 361 Focused Fund. On the mid-cap segment, yield-wise mid-cap fund has been doing phenomenally well. It has been showing a lot of promise going ahead as well. If you take a slightly thematic approach, Invesco India Contra Fund is a very, very good starting point. In the small cap segment, of course, you're an aggressive investor. Some small cap exposure is warranted. Bandhan Small Cap Fund is a very good fund to look at. Now, these are some of the actively managed funds that you can use as starting points. But apart from this, there are a few passive propositions also that you can use. It is it's not as conventional as an idea to use passive funds. But trust me, with the way the industry has evolved, there are some really good propositions that one can take. For example, factor-based propositions like DSP Nifty Small Cap 250 Quality 50 Index Fund, yield-wise Nifty 100 Quality 30 Index Fund, UTI Nifty Mid Cap Quality 50 Index Fund. These are some very, very good index funds which are factor-based and which will try and extract and optimize for quality even in the more riskier segments of mid cap and small cap. If you are an avid investor and you can actively manage your portfolio, you can definitely look at adding sectoral or thematic funds depending on what point in the cycle are you willing to invest and how actively are you willing to rebalance and manage the portfolio even going forward.
Some of these interesting names coming in there, but do keep an eye out on those disclosures, given that you are an aggressive investor, so where you should look to invest in. But on that note, we're going to actually sip into a very short break. Don't go anywhere. We'll be back with more of your mutual fund related queries after the break. Welcome back to MF Corner on CNBC TV18. Today we are solving all those mutual fund queries that you all have sent us. And we have Nirav to solve all those doubts. Nirav, we have this next query also which is related to small cap funds only. Sachin is writing to us from New Delhi and he wants to know the best small cap fund to invest in for 10 years. You did mention Bandhan small cap fund. So any other names that should come in, and should it just be one of these or in a couple of names that they could look to invest?
So I feel that's something, most investors are looking for. Anyone with a 10-year horizon wants to look for a good small cap fund. So at Fisdom, whenever we do our mutual fund ratings exercise, we try and prioritize for the ability to generate long-term, consistent, sustainable performance, even going ahead, basis quant qualitative factors, right? So, of course, I spoke about Bandhan Small Cap Fund, but there are two more funds that come to my mind that have incredible promise to perform really well over the longer period. It includes Edelweiss Small Cap Fund as well as Invesco India Small Cap Fund. Now, to your question, whether it should be just one of this, considering the distinct styles in which these three funds are approaching small caps and the reasonably lower overlap, it would be a smarter way to allocate in at least 2 to 3 different funds. Of course, it makes sense only if the portfolio overlap is very less, but when you're entering the small cap segment, bottom-up skills are highly requisite, and it really distinguishes one fund management strategy from another. So pick 2 to 3 funds with distinct investing styles, distinct philosophies, and less overlap.
Okay, so less overlap and a larger term horizon, or longer term horizon, sorry, when it comes to investing in small caps as well. Let's go to the next query now. Manthan Shah is writing to us from Rajasthan, has currently invested equal amounts in large, mid and small cap ones. He wants to know, Nirav, if he can increase exposure equally, or should he go about investing in one segment more and keep changing that ratio over a period of time? What do you have to say?
So right now, equal weighted is a good way to go about it. The way we look at valuations, the house view is that large caps right now offer a relatively good margin of safety. It is not deviating a whole lot from longer term averages. So large cap offers some good cushion. However, when you move towards mid caps, it is trading at a premium from a valuation standpoint. And small caps, for that matter, is trading at quite an elevated premium, even higher than that of mid caps. But having said that, these are aggregate commentaries on the entire basket. We strongly maintain that mid caps and small caps shouldn't be viewed at basket levels. They are not really homogeneous or as analogous set as large caps are, right? So there are still pockets of opportunities. If you have the ability to actively manage your market cap exposures and from a pure valuation perspective, it would make sense to increase your tilt towards large caps for now. And if you have to increase mid and small caps, you must be highly selective in the strategy or the stock that you are willing to back and put your money into to manage your small and mid cap allocations. If you are unable to do that on your own and you want to optimize at a market cap level, tilting towards large cap should hold you in good stead.
Okay, Nirav, this next query has come from Shankar, who's writing to us from Chennai. He says that he's planning to start investing in mutual funds and bonds, both through small lump sum amounts as well as SIPs. But however, there's a possibility that he may actually travel and move to the US, most likely. Now, he's read that NRIs, especially those in the US, have some taxations on mutual funds that can be significantly high due to FATCA. Would it be more prudent for him to actually focus only on direct stocks and bonds instead of mutual funds? What's your advice?
So right now, as long as you're in India, of course, mutual funds and bonds are the most cost-efficient, tax-efficient investing routes that you have. However, if you wish to go abroad and the plan is really concrete, you may want to start setting up outbound investments that are dollar denominated, right? So the Gift City option opens up a plethora of options for you to invest outbound in dollar denominated securities. That's one thing you must explore. In fact, if you were to move to the US and also still wish to continue investing in India with much more favorable tax terms, there are also inbound Gift City propositions that will help you do it more effectively. So Gift City becomes a very, very important aspect in your scheme of things. Please keep an eye out for the propositions that are available through various products, and several of these products also finally feed into Indian managed strategies, right? So Gift City becomes important here. Apart from that, of course, due to the FATCA norms, there could be a slight edge or benefit to maintain a direct stock portfolio, but however, it comes with a whole lot of other risks of individual stock selection that may or may not be worth the cost of saving taxes, right? So Gift City managed products are your best bet at this point in time.
Okay, all right. So that's about NRI investing and certain aspects of that when we invest in mutual funds and stocks. Let's get to the next one. Mani Kaku has been investing 50,000 per month for last 2 years. Wants to generate a corpus of 3 crores over the next 7 years. He has moderate risk appetite and wants to know the monthly amount in terms of SIP which was required to achieve this goal, and if he should be going ahead and reviewing his portfolio as well. Neera, what's your take here? Is this number okay? Do we have to be a little conservative when we talk about returns for the markets over the next few years?
Absolutely, Sonal. Like you rightly said, I'm just going to pick it from there. We can pencil in as many projections as we want, but we know that the longer term average has been close to the 11-12%. So even if you take a conservative 10% CAGR, hey, and conservative is important because you don't want to be caught off guard at the end of your long-term horizon, right? It's good to be conservative today than to regret tomorrow. So the current 50,000 may not really suffice. That is because the target is so high at a 10% CAGR growth expectation. And of course, you would want to adjust for inflation at roughly around 6%. You would need to maintain an average SIP that's almost 6x higher than what you're already doing, in around the ranges of 3 lakh to 3,25,000 per month. However, having said that, one scope of relief that I'd like to give you is you need not do it immediately. You can aggressively top up your SIPs and step up your SIPs because you have a long runway ahead. So as and when your income rises, and if you're really, really focused on this goal, please prioritize on stepping up. It should make up for any shortfalls that you have been having up to now. So you still have a good winning shot at this portfolio, right? So that's important. Also, on the screen, there were a couple of funds that have been presented as a part of your portfolio. A quick review and few observations. The portfolio is clearly tilted towards large caps. And in fact, it's not just large caps that's the problem. It is the overlap between these funds. Like there is Nippon India Next Nifty 50. There's iPro large cap. There's Aditya Birla Flexi Cap, right? If you look at these and in pairs, for instance, the Nifty Next 50 with the large cap has an almost 60% overlap, right? The Next 50 index with the ABSL Flexi Cap has an almost 50% overlap. And the case goes similar to, of course, large cap and Flexi Cap because it's a part of the same 3 large cap portfolio. So the overlaps are really high. You may want to simplify the structure, have just one passive large cap fund for cost efficiency, right? There's no incremental value that you're deriving. Instead of choosing another active fund with very high overlap, what you could instead do is increase mid and small cap exposures to create longer term wealth creation. Of course, through the course of this conversation, I've spoken about a few funds that we really like in the segment. Use that as a starting point, but instead of adding more and more large caps, considering you have a long investment horizon, try and up your mid and small cap exposure. So yield-wise, mid cap fund, Bandhan small cap fund, I've spoken about it. Good starting points. Dig around these fund mandates, and you'll be good to go.
Okay, keep an eye out on that. Couple of names that Nirav has mentioned through the conversation, but also, overlap is a big concern that comes in always as well. But Nirav, thank you so much today for joining us and helping us solve all those mutual fund related queries. And with that, we're going to wind down this edition of MF Corner on CNBC TV18. It's a goodbye from Sonal, myself, as well as the team who put this show together. But don't go anywhere. You have the last hour of trade that is still left, and closing bell is up next for that.
Go beyond market headlines to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC TV18 Motilal Oswal studio.
You're going to see a lot more. You're going to see so much secondary sanctions.
Most of the Asian screen is showing a tinge of green, and most of the other markets as well.
24,450, 24,500 first support is very near term.
We would expect potential disruptions, especially essential medicines that are highly competitive and on thin margins.
50% tariff, most of the retailers won't be able to absorb or have any mitigation.
1/3% lower on the Sensex. The Nifty, I think, is starting lower by about that much.
I do expect that second half will be better.
It's very difficult for any industry to mitigate a 50% tariff.
Purchase of Russian oil, according to sources, is perhaps not the only reason why India is being penalized.
It's a 150-point downtick on the Nifty currently. It's below that 24,450 mark as we speak.
For Bajaj, I can tell you in a word that we are quite unconcerned.
अपने किसानों का हित सर्वोच्च प्राथमिकता है.
Red looking screen, the mid cap and small cap indices are bearing the brunt of even more intense selling pressure, especially in the last hour.
Well, the last hour coming up, and it's been such a volatile session. We started off flat, then the markets fell all the way down to 24,350. But look at that intraday chart in the last 1 hour. There has been a recovery, and quite a stunning recovery. 100 points off the lows on the Nifty, 500 points off the lows on the mid-cap index. We're still down about 0.5%, but definitely off the lows. Hi, guys.
Hi, guys. On any other given day, you would have said, how does it matter? It's 100 points, 120 points. But the reason it matters is the range, the levels. And we've been precariously close to breaking a lot of, significant supports. The market's been dealing with the blow. It's down. But with this recovery, should we say, it's not out. Hi, guys.
Hi, and by the way, we're coming to you live from the CNBC TV18 Motilal Oswal studio. I'm Rima, with me, Surbhi and Nigel. Hi.
Well, hi, guys. So, it's going to be a volatile last 60 minutes or so.
It's also the expiry, right?
Yeah, it's 24,450. We'll either be 100 points higher or 100 points lower from here. I think just going by the moves that we've seen. Let's see how that goes, but we won't be at 24,450. Big move, big recovery, both on the Nifty as well as on the Nifty Bank. And the breadth of the market at least has improved. From around 400 stocks, we're up at around 800 stocks or thereabouts. The recovery continues, in fact. Let's see whether or not we could be 100 points higher from 24,450. It's a bounce in a market that structure has already got punctured. But we'll have to see whether or not we want to test higher levels.
That's inspiring, but let's see. It could be just some shorts that are covering. And that's fine. I mean, short covering bounces are also welcome. All bounces are welcome, right? Just to quickly put things in context, I just want to start with who's saying what. Because there's so much news flow over the last 24 hours, and there's been plenty of leaders speak even today since the time we opened out. So let's take it step by step. Now, the first and foremost important statement came in from Prime Minister Modi. He's made it very clear that India is not backing down from the interests of farmers and from our fishermen as well as dairy farmers. So that was point number one. And actually, once that statement was made, it was fairly early in the morning. That's when the market started looking at a gradual collapse, because it seemed very clear that those who were expecting a very quick breakthrough in negotiations and a quick rewind back of tariffs below 25%, maybe it's not that quick. Maybe it'll take some more time, some more push and pull. So that was statement number one. The next one was this. This is an AFP report, which is saying that Ukrainian President Zelensky, he's now saying he's ready to meet Vladimir Putin face to face. Now, important to keep this in mind. All of these are very fast-moving geopolitical pieces. The third statement came in from the Kremlin itself. The Kremlin has confirmed that indeed there is going to be a Trump-Putin meeting. This could be as early as the next couple of days, and they'll come out with the exact venue and location in a while. But this could be an important breakthrough, because as we know, if there is a breakthrough on the Russia-Ukraine war, then maybe that additional 25% penalty on us, at least that sword perhaps could be removed. Now, why is the market jittery? Why has the market taken this on its chin? One, because the technical factors have come into play. We're at virtually 3-month lows. The Nifty was last at these levels back in the middle of May, the 12th of May to be precise. This 24,500, it did not hold today. The Nifty simply easily has sliced through a lot of those, critical support zones. So now there's a fight back that's underway. And the biggest concern for the market right now, forget the GDP impact and the trade and the issues about what's happening with, textiles or gems and jewelry. It's about FPI selling. Is India going to be, say, designated as a riskier market because of these tariff issues, because of the India-US relationship or not? Will that spur more FII outflows? We've already seen outflows in July. Will it accentuate as we go forward? That seems to be the big concern. But guys, hey, we always keep faith in the domestic story, right? It's the domestic funds, domestic investors, a lot of us, you, me, and we've kept the flag flying high through a lot of the turbulent patches.
Indeed.
Oh, indeed. I'm just happy with the bounce because I thought when I start the show, we will say that the 1 year return on the Nifty has been completely wiped out. But now the 1 year return is about 0.6% on the Nifty. It's still nothing to boast about, but at least we're not in the red. The mid cap is still down 1% in the last 1 year. Small caps down 5%. Banks have done well. That's up nearly about 10%. And generally, money chases return. So when the returns start to falter, you will have people questioning that is this the place to park my money? And which is why trailing returns are always, important, and they are an indicator of how money, and the mindset around money tends to move. The Nifty, by the way, is about 7% off its high. Global markets are broadly in the green. In Asia, you had Nikkei up close to about 0.65%, Korean markets up nearly 1%, Hang Seng gaining about 0.7%, and Europe too. The last time I checked, broadly higher. The Dow futures is up close to about 100 points.
Okay, all right. Well, let's tell you what we have on the show. The market staged a strong recovery after a weak early trade as Trump announced that 50% tariff on India. The Nifty bounces back from its lowest levels since 12th of May. Even as Trump's tariffs shock hits, the rupee remains resilient though. Lata will join soon to tell us the math. We also spoke to the management of Pearl Global, Bharat Forge and Lupin earlier. We also got your views from the sector to be hit hard by tariffs, which come into effect from the 27th of August. Well, how do you position yourself though in the final hour of trade? Mitesh is back with us. Mitesh, some part of that short covering bounce has taken place. Reliance Industries has come off the lows. The Nifty Bank as well is fighting back. And actually the IT index, that's been resilient for most of the trading session. What do you think? Do you think, that 100 EMA has got protected and maybe in fact we do end higher from here? How would you retrade?
I think a couple of things. Yes, there's a good bounce back, and it was also looking at, coming as a result of extremely oversold levels on the hourly and the 2-hourly charts in the Nifty. Reversal would happen, in case you can get some upper levels being captured. So on the back Nifty, it's about 55,500, which needs to be captured. Similarly, on the Nifty, I would be happy if we can get past 24,550 again and start trading above. And I think once this happens, then I think I'll be more comfortable taking long positions. But for the time being, what I would advise is that people who have been, having or carrying some short positions of bulls or bear spreads, I think good time to take profits on them and wait it out. I think on the upside, I've indicated levels beyond which some kind of a reversal or a stronger bounce back would happen. And that's how we'll work it out. On the stock side, I have a buy on Maruti. Keep the stop below levels of 12,450. Look for targets of around 12,700 to begin with. I suspect 12,820 is what can also happen. And the other one is a buy on Blue Star with a stop just below levels of 1795 for targets of 1885.
Okay, let's get a handle on the futures and options space. So much is changing. There's so much volatility in the market. Mangalam joins in with what he's reading from the screen. Mangalam.
Well, in the morning, we expected that at some point there would be a bounce that would come by in the market. For most part of the day, the street wasn't obliging the bulls. And now as we look at it, as we move towards the business hour of expiry, there has been a sharp recovery from lows. If you look at the frontline indices, the Nifty Bank, as well as, the mid-cap index, there has been a recovery. Are we, still out of the danger? Perhaps not. But, at the same time, we've seen important recovery from important crucial levels as well. The India VIX, that has become a lot more benign. as soon as we moved higher. So that's a positive. And the Nifty's conquered the 24,452 mark. And why is this important? Because this is the 100-day moving average. Remember, we've been straddling between the range at 100-day moving average at the lower level and the 20-day moving average at the upper level itself. And now as we speak, the 24,500 call writers are back in action. Remember, they had been writing a lot of these calls earlier. If the market continues to stay higher and move higher, then these call writers will have to cover their positions, and that may further fuel an up move that we see in the last hour of trade. 24,400 call writers as well. They had gotten very active as the market at one point moved below the 24,400 mark. Will they start covering their positions or not is something that we will watch as well. On the other side, as these call writers will, feel a little jittery, put writers have come into action now. So it's 24,400 put and the 24,500 put. Both of them telling you that today's low and the important support of around the 24,350 to 24,400 mark stays crucial, and that's what the bulls are hoping for. The recovery should sustain as we move to expiry. The put call ratio, which at one point was 0.067, has now moved back to 0.85, telling you there is a bit of a tug of war between bulls and bears, and now this recovery goes to the bulls. And the advanced decline as well. Yes, more number of stocks declining, way more number of stocks declining than the number of stocks which are advancing, but those lines are coming slightly closer over the last 5 or 10 minutes. Just keep an eye out on the IT index. That's the heavyweight that is actually, taking the frontline indices higher. So the IT index comes up for you on the screen. The intraday chart would tell you the story of how the Nifty's up move and the IT index's up move have been fairly congruent. And finally, a couple of stocks where writers have been caught on the wrong side. We have, Blue Star as well as Hero MotoCorp. Both these stocks are higher on account of short covering. Godrej Consumer reports its numbers, perhaps post-market today. Ahead of that, a lot of long positions being added. And just watch out for RBL Bank. The overall open interest is closer to 92% of the market-wide position limits. If it does cross that 95% mark by close, maybe the stock goes into F&O ban.
Okay, all right, got that point. Mangalam, thank you very much for that. Important to know that, I was just looking at just the way we've traded. It's just been a very slow grind. So I don't know how many people could have benefited on the short side also. But even from the peak, end July, 24th July was the session. From that point onwards, the Nifty lost a good 750 points. Yeah. There was a long short side to play on. Yeah. Maybe some of those shorts are kind of covering now.
I'll tell you what, everyone's waiting for the bounce. I was, when we were talking the flow as well earlier today, is this market needs to stop falling. Because what is happening now is short positions are making money. Yeah. When those short positions don't get follow through, that's when the panic starts. The problem is now it's become such an easy trade, right? People are coming there, they're adding shorts, the market is falling. You're writing calls, you're making money. Now suddenly, this is making you think, because we've seen a bit of a bounce. If you can sustain this, stop falling is the first thing. Hold on to your ground, and then in fact, you continue. So I think that's the important point. Just one more point, Rima just made that point about the European market sitting in the green. Yeah. The Russian market is up 5%.
Deal.
Yeah, there's hope that there can something can come about with regard to Ukraine, Russia. So the Russian market, in fact, is the big outperformer today. So we had those indicators, and one of the key indicators is that the India VIX has not spiked up. In spite of seeing that correction that Sudhir spoke about, 750 to around 1,000 points is what you're seeing. The VIX is only at around 12. Even as we speak, the India VIX is in the red, with the Nifty down close to around 80-90 points or thereabouts. Sudeep Bandyopadhyay, Group Chairman, IndiTrade Capital, joins us on the show. Hi, Sudeep. I'm going to throw the floor open to you first. Give us a stock that in this sort of a market that is choppy, you would look to buy, because when the markets are going gung-ho, you have to buy the stock on the screen, and sometimes it runs away. And then you can't determine the price. When markets get jittery, actually you get the stocks you want at your price. Which one would that be?
Well, I've been bullish on L&T, and I strongly believe that all this Trump and tariff-related shenanigans have nothing to do with Larsen. We should go and buy Larsen. It's a great stock for somebody's portfolio, and nothing changes as far as L&T is concerned because of what all is happening around us. The other stock I'm going ahead and also naming a cement stock, which is Ultratech. I've been bullish on this as well for quite some time. Again, my belief is the same, that nothing changes around Ultratech because of what is happening around us. So go and take this opportunity to accumulate both Larsen as well as Ultratech.
Okay, all right, got that. Ultratech is a stock that Sudeep is going with. Stay on, Sudeep. Let's address some more stocks actually in the sea of green. One stock that's held out to, in the sea of red, I should say. One stock that's held out to the green right from the morning is actually Hero MotoCorp. Hero Moto is up about 4% now. Let's go across to Sudarshan, because clearly Hero's hit the right notes in the Q1 earnings season. Tell us more, Sudarshan.
So Hero MotoCorp is top Nifty gainer. Company announced its Q1 earnings yesterday, and earnings were in line to slightly miss to our estimates. But the major move in the stock price we have started seeing post 10:30 a.m. when company held the analyst call. And some of the takeaways that have come from the earnings call. First, on the margin front, the guidance on the margin is 14 to 16%, but company is saying that in near term, margin is expected to be in the lower band of the guidance, so it would be around 14 to 14.5%. Now, talking about the growth, for the domestic industry, company is saying that it will maintain growth in the range of 6 to 7%. So that's good. Second, better part is on the export front, where company is expecting growth to be over 40%. So it will be taken positively. Third part is the market share. Company saying that as per Vahan data, that is the retail market share, it's holding on to the market, overall market share around 31%. And in the entry-level segment, where company is the market leader, there also it's holding on to the market share in the range of 66 to 67%. One concern that industry has been pointing out was financial penetration. In Q1 for Hero MotoCorp, financial penetration had moved lower, but company has termed that as seasonal impact, and it's saying that in July it's back to the levels around 65%, which is very normal for the company. And last part, why the major move that you are seeing in the share price? Normally, whenever any company announces launches, it's being seen that companies expecting a strong demand. That's the reason it's coming out with launches. Now in Q2 FY26, in 25cc segment, companies announcing 2 launches, and that will be launched in Q2. And another launch that company is making in the partnership with Harley Davidson, and that launch will also happen in Q2. So because of the launch, you are seeing a big move in the share price.
Okay, so very quickly, that's Hero, and Hero, everything is going right. You also heard today commentary from Mr. Rajiv Bajaj Auto, because Bajaj Auto has kind of missed the sweet spot with investors for several quarters now. Quickly run us through them if you found any headlines there, and then we'll play out the bites.
So first, earnings for Bajaj Auto, I'll say if you compare with Hero, earnings are better than Hero MotoCorp for Bajaj Auto. Now, especially on the margin front, company has reported margin below 20% after several quarters. And that was majorly because of Forex. Now company is saying that rupee has depreciated sharply against dollar in the last 1 to 2 months, and that will help margin coming back above 20%. Now, major highlights that come from Rajiv Bajaj's interview. First, there was a concern regarding the EV production. Now, he's saying that because of the LRV supply that he's getting, he's saying that he was anticipating that production might be impacted. But if the current supplies continue, for FY26, the production might be the same what company had anticipated at the beginning of the year. So positive part on that front. Also, there are some launches coming from Bajaj Auto, also around 150cc segment. That will be also taken positively. And on export front, Rajiv Bajaj is saying that peak that company had seen was of 2 lakh units. Now, currently around it's 1.40 lakh units, but he's saying that very soon company is expecting that export will hit 2 lakh units. That is the biggest positive that has come out from Rajiv Bajaj's interview.
Post-COVID, once our export market started recovering, particularly in Africa and LATAM, exports came back to a level of about 140,000 a month compared to about 200,000 a month pre-COVID. And as you may have seen, in recent months, they have come now nicely to a level of 180,000 a month, with an all-round secular recovery, and particularly so in LATAM, which we are very happy about because, again, with Pulsars and Dominas, it's a very rewarding market for us. And I'm actually quite hopeful that, if this trend continues, it may not be long before we are back to that level of 200,000 a month. The immediate solution that seems to be working for us now is to get low rare earth, or LRE as it is called, magnets from China. That has started up. The next step would be to try and source LRE from elsewhere, because what if China bans LRE tomorrow? Then you're back to square one. the availability of LRE. We are now looking at least a 50% availability as far as the Chetak is concerned in this month, in August, and perhaps about 70% as far as the GOGO is concerned. I will actually say that we think we can now do better than we had even planned for the whole year, because by October, production should completely normalize. We should have made up for what we will lose, what we have lost in July and what we will lose in August. We are starting production as we speak. I believe we will go to market in the first 4 markets on 10th of August under the brand Riki, R-I-K-I. So that's going to be our brand for the e-rickshaw segment. As far as motorcycles are concerned, this is not something that we have talked about so far, but I'm happy to share a first information on this, that this is a segment where, it's a bit between the Chetak and the three-wheeler. It's not that we are not in the ICE motorcycle, but we are not exactly the market leader or overwhelmingly the market leader. So what we're going to do here is, I think we're going to work with 2 of our strongest brands, the Boxer in export markets and the Pulsar, the world over, quite frankly, is a very, very strong brand. We're going to work with these 2 brands, and hopefully in the near future, we'll have something on that front, i.e. on the electric motorcycle as well.
That was Bajaj Auto. By the way, don't lose sight of the market. The expiry factor seems to be at play much earlier than 3 o'clock because the up move continues. The cut is in between. It was just about 50 points. Nifty was barely 50 points lower. It's a dramatic recovery from the lows that we have seen. Let's see. I mean, if it gets us to a close at the highest point, close to the flat line, it will be. The bulls will absolutely take that. But very quickly, Sudeep, to go back, that's the sharp recovery that we're tracking. But Sudeep, quickly, Hero, Bajaj, both, either or, which one or none?
Well, I think if I have to pick one, I'll go for Hero right now. I mean, I also like Bajaj, but if I have to pick one, Hero, on the basis of the fact that I think there is a rural recovery definitely underway, and that will not get affected by all these, trade-related, tariff-related challenges. And that definitely gives Hero a big leg up. They have great penetration in rural India. The vehicles are rightly positioned there, and I'm sure they will benefit out of that. And the initial signs of that are already visible. The second point is, they were not in a big way in the export market. Now they are talking and, penetrating export market in a big way. Again, that should give them a leg up going forward. Valuation and everything considered, one stock, if I have to pick, it will be Hero. If I'm given a chance, I'll keep Bajaj as well.
Okay, all right. I just want to make a quick point. In the last few minutes, actually, we've got a few numbers that looked quite good. If I look at, just pull up rate gain, the deal wins over there are looking quite good. Rima can, weigh in a little bit out there, but that's a good set of numbers that we're seeing. They're sitting on a good amount of cash balance as well. The street likes it. The other one I'm looking at is Savita Oil, another one where we've seen a big underperformance, but those numbers look pretty good, and that's why, in fact, they're bouncing back after a while. So that stock as well from the broader markets has seen a positive reaction. And Kilburn as well, that's the other one in there, where you're seeing good growth on the top line, you're seeing margin expansion as well. That stock as well is moving up. So it's not just the frontline names, but there are stocks in the broader markets. All these 3 have come out with this set of numbers in the last 40 to around 50 minutes. And all these 3 numbers, in fact, looked quite good. But Rima, rate gain, the margin, I think there is some pressure out there. But otherwise, I think deal wins are good.
So revenue growth is 5%. Yeah. That is lower than the company's guidance for this year, which is 6 to 8%. Margins have fallen by 500 basis points quarter on quarter, but at 18.2%, it's still ahead of the guidance for this year. So the company had spoken about weaker margins in FY26, 15 to 17%. But as Nigel pointed out, what the street likes is the deal wins, because deal wins for the last 4 quarters was in a band of 60 to 65. And this quarter, it's come in at about 81. So that is the number the street likes, which is what you are seeing a bit of a reaction. That said, on the revenue, it's still things a bit slow, 5% revenue growth. Margins have contracted, but above the company's guidance. But you spoke about some companies where the numbers are good. But on the flip side, look at Igarashi Motors. It's a small company, but stock is tanked close to about 11% post the numbers. I think profits here declined by close to about 70%. Hikal is the other one, 6% lower. MCure Pharma, Edelweiss Finance. These are some of subdued setup.
What about the new listing, NSDL? It ended yesterday, what, with a gain of what?
It was about 918 or 910 by close.
NSDL, right? I think we should pull up the intraday chart out there. Today, it's seen actually some follow-through buying that should come up for you on the screen. BSE listed. I think it's up
20% up now.
Absolutely. Just take a look at that. So the issue was priced quite attractively. The initial day pop wasn't as much as what the street expected, but in a weak market, that one has closed. You know, it's pending buy orders on that one. At some point of time, we should get it up for you on the screen. And as we said earlier, the Nifty bank has now moved into the green. The Nifty mid-cap index, apologies for that. And the Nifty is nearly 100 points higher from the time we started off the show, which is all of 20 minutes or so ago. I'll tell you what, we'll slip into a short break. On the other side, we'll focus on the rupee and how the currency as well is doing in light of the tariff threat. Stay with us.
Welcome back. So the equity market continues to put a fight back thanks to the fact that it's Thursday, so weekly expiry is playing out. Let's find out what's happening with the rupee market and the bond market actually as well. How have the money markets received this gift of 50% tariff from the US of A? Lata is here with the details. Lata?
Well, in the equity markets, it fought back. There never was a fight in the rupee market, which is the surprise. The currency has been fairly stable. It's all of a 9 pice movement, 87.67 to 87.76 was all that the currency has moved. Extremely ranged. The trader chatter is that Reserve Bank was there at the beginning And it again showed its face when it went to 87.76. That's the high of the day for the dollar. But it wasn't as if there was so much of a hungry demand for dollars that, that rocked the market. One would expect that with such a big tariff announcement. The market probably believes, again, like a taco trade, that something will happen within the 21 days. And so you don't need to come and burn your fingers. Also, there is a lot of expectation that the upcoming meeting with Putin might, lead to some kind of a outcome which may postpone or completely do away with these tariff threats. The other point in favor of the currency is that it has already fallen. The rupee has been the worst performing currency all of July. It's fallen by over 2%. When we started in July, it was like 85.6 or something. So, it's traveled a goodish bit. Therefore, the bad news is in the price, according to some of the traders. If it definitely does, pan out to be much worse, then it will cross 88. Otherwise, 88 is a fairly important resistance for the dollar. It won't be able to cross beyond that. There is, of course, a hit to the calculations about the hit to the current account deficit are there. About 0.2% current account deficit can rise if this 50% persists for a bit. GDP can take a hit of 0.5% if it persists. But everything is if it persists. That's not at the moment the bottom line, the base case belief of the market.
Got that. Thank you very much for that. Ajay Tyagi, Head of Equity at UTI Asset Management, is now joining us on the show. Ajay, thank you very much for joining in. Well, you've had nearly 20 hours to digest the news we've been hit with. So what is your approach? I mean, what's the advice that you're giving to manage money at UTI Asset Management?
Yeah, good afternoon, Rima. So, this tariff tantrum has been playing on since February of this year, and there has been a lot of back and forth that we have seen. And I would right now only recommend that we have to wait it out. We don't know whether this is the final number that would be applicable to India or there would be a give and take over the next 2-3 weeks. So as of now, we're not moved by what's happened yesterday. It does appear to be posturing by the US administration. So we will just hold on and not act right now.
All right. Hi, Ajay. Good afternoon. Good to see you. But, there'll be various pockets as well that, will not be impacted by this entire global uncertainty. Would you look inward? Will there be a couple of sectors? You have Page Industries that have come out with a set of numbers. Numbers look pretty okay, but they are guiding for better times ahead. They are confident that demand will recover. And similar is the case across various consumer-friendly, industries. People are talking about September onwards, we see a recovery. Would you be in that camp? And if yes, what will you look to buy? Discretionary has been top of mind. Would you be in that camp?
I think that's a great question. Let me just start by saying that we don't know what the final tariff number would be. But the fact is that there would be some impact to our exports. We would also have to see what is the tariff of some of the other competing nations in different sectors. And therefore, what's our competitive advantage post all of this playing out in the next few months. So that's going to be very, very speculative right now to comment. But I absolutely agree to your point of view that what's fairly insulated right now is domestic consumption, both discretionary as well as staples and durables. And by the way, there are a few pointers in favor of the consumption sector, the overall consumption sector that is. We, of course, started the year with a tax break by the government. That obviously has improved the disposable income for households. We are also looking at basically the pay commission coming in sometime next year. The payouts for that would obviously be some time away, maybe the next few quarters. But look, most of the things get discounted into the markets much before the D-Day. So pay commission obviously would lead to a big booster for households in India. So that will also be at the margin positive for consumption. Last but not the least, we've seen a fair bit of demand destruction in the last few years. Most parts of consumption are looking at a cyclical low right now. Our conjecture is from the cyclical low, we only have one way to go, which is up. So a confluence of all of these factors does make us more constructive on the consumption part of the markets. Yeah.
Okay. Ajay, hi, good afternoon. Great to have you on. Where are you placed on sectors like pharma and chemicals specifically, because a lot of people had started positioning for a turnaround, a final, recovery in the chemical cycle. And likewise, pharma was proving to be a great safe haven up until 2-3 weeks back, when the headlines against pharma and pharma tariffs, that rhetoric really started to grow. So where are you on these two sectors?
Yeah. So see, if I break up pharma into exports and domestic formulations, then very clearly the domestic formulation piece is again insulated. Like we discussed the domestic consumption a while back, I would say domestic formulations within the pharma space is fairly insulated, has its own drivers, increase in per capita income, increasing medical, going to be a propellant for higher demand in the coming years. The stress and the speculative part, I should use that word, is pharma exports into the US. And that's where we just don't know. There are days when we hear about an obnoxious 250% kind of tariffs that could be imposed on the exports of pharma into the US. So we just don't know how it plays out. So that would be, again, wait and watch. Look, as of now, we can only say that whatever increases the price of healthcare in the US may not be so easy to pull off by the US administration. And, the pharmaceutical plants don't come up overnight. There is a wait period of a few years before new plants can be erected in the US. Then, an FDA inspection happens, and then they start supplying drugs to, the local markets there. So, yeah, I mean, again, have to wait and watch, although I'm not too sure whether the kind of tariffs that have been doing the rounds are really plausible. You also spoke about chemicals. I think once again, we'll have to break it up into two parts. I think inventory correction should be behind us. We should be seeing much better days for chemical demand in general. This is where we have to look at India's competitive advantage against some of the other chemical exporters, and that will be clear only once we see the dust settle down on what are the final tariffs for different countries. So here again, slightly speculative at this juncture. Yeah.
More headlines coming in where politics is mixing with the economy. I think Russian President Vladimir Putin is planning to visit India. We'll get that flash up for you on your screen. Ajay, what about oil and gas, the entire energy complex? How should one go about thinking? You right now don't even know at what, where we will be procuring crude from. Is it going to be at the current Russian levels? Is it going to be higher? So in that context, what is the view on the individual constituents which make the oil and gas complex?
This is again a question where there are multiple parts. Let's just simplify it. Of course, there is this element of what India finally does, because procuring oil from Russia is in the eye of the storm. Maybe India will have to, at least optically, try to reduce imports from Russia so that we don't, look like a, economy which is very belligerent and not, giving into what the pressure from the other G8 countries is. While that's one part of the story, the other thing is, look, oil and gas is a fairly regulated sector. Even without the noise around import from Russia, the fact is that the government can come up with its own ways of pricing. The government can increase, decrease excise duties. All of this have an impact on the GRMs of the oil refiners. And of course, to an extent, they also have an impact on basically the marketing margin. So I would say, it's very unclear for us how the government will behave over the next few quarters. If there is one takeaway from whatever has happened, it is that maybe oil prices globally go up, to that extent benefiting upstream companies. But do remember, even for upstream companies, beyond a point, there is a windfall tax that was put in 2022, if I'm not wrong, and went on to 2023. So, this is where there is always going to be some bit of regulatory intervention. So, a lot of moving parts here. Not very, very clear in terms of outcomes over the next 1 year.
Okay, all right. Ajay, got it. Well, we'll leave it on that note, and we have to see the screen. Look at the Nifty go. What a pullback, what a recovery. It's been a rocket since 2 o'clock, actually, and that rocket has shot back into positive territory. And I think politics does dictate market sentiment, and it's very, very clear. As soon as those announcements hit the screen about a meeting between Putin and Trump, about Zelensky being ready to have a face-to-face meeting with the Russian president as well, suddenly those shorts were scrambling for cover, because if there is a breakthrough on the Ukraine war, then so much can change. That 25% additional tariff can perhaps go away instantaneously, and that's giving people hope and triggering that short covering bounce. We also have, I think, Nimesh joining in. And Nigel, you have a point to make? And let's bring in Nimesh as well.
Yeah.
Great time to get the chatter.
Now let's go to Nimesh actually and hear out. Nimesh, the long-awaited short covering bounce, it seems to have come about. Call writing was getting too easy. Shorts in the system. PCR went down to sub 0.7. The bulls will be happy to see some green. Tell us more, Nimesh.
Oh, absolutely, Nigel. It looks like it's a powerful short covering rally. Because even from a flow perspective, it's still negative is what my sense is. So this whole rally or a recovery in the last 1 hour of trade looks like it's a powerful short covering rally, and we've seen it across the board, right? All the short stocks are seeing a bit of a recovery in today's market. I guess it's a global news which is having a center stage now, and that's adding to the volatility. As Surbhi pointed out, there are reports about Trump meeting the Russian president and Zelensky. That actually led to a bit of a short squeeze in the Indian markets as well. And also from a technical point of view, I've been highlighting, and today looks like Nifty has respected that very crucial support of 24,450 on the downside, and we've seen a recovery from there. But as you rightly pointed out, the PCR close to was 0.74. That has now sharply moved to 0.9, if I'm not wrong. And even as we all know that the short in the systems are quite high from an FI perspective, so it looks like it's a very sharp and an aggressive short covering rally in the Indian markets, at least in the last 1 hour of trade. Can it sustain? It depends upon global news and what comes up. But again, from a flow perspective, it's negative. But looks like this is a short covering rally in the last 1 hour of trade.
So tomorrow is going to be crucial how we behave on Friday. But what about stocks? Nimesh, what have you picked up?
Well, so the first stock on my list is Canara Bank. That's been, the stock has been consolidating. Yesterday there was a large block and very high delivery been marked as well. I understand a leading long-only fund has completely sold out of Canara Bank, and yesterday some P-note investors bought into Canara Bank. So that's the color as far as the large block of yesterday's large block in Canara Bank was concerned. So that's the first stock. The second stock is Edelweiss. Well, the stock has been consolidating. The earnings got reported today, and now there could be a large block deal very soon. So there are two sets of investors who could be potential sellers. There is one global fund who could sell stake, and also some the Edelweiss Trust could be a seller as well in a block in the days to come. So expect some large block deals in Edelweiss soon. And the last is Affordable Robotic, a small company we don't talk too much about, but in a weak market that's been buzzing in trade today up 5%. And the sense is that maybe there is a fundraising lined up by a preferential very soon in that company. So that's the reason why even that stock is buzzing in trade today.
Okay, all right. It's all moving, and we'll try and get you more inputs on that all-important flash that played out. I think we have to get it confirmed with the independent sources as well on a potential visit of Russian President Putin to India. But let's wait by for that and see if we can get more confirmation and clarity on that piece of news. But global politics is making short scramble all over the place. Thank you for that, Nimesh. Thanks very much.
We should just get Surbhi on the screen with the Nifty Bank, as well as the Nifty and Nifty Bank, and pull up the mid-cap index. Surbhi is the only red on the screen. Everything else is green. Surbhi, you have been left alone.
I'm perfectly fine with that. I'm perfectly fine. Always good to, get that contrast going. But this is dramatic. It's drama on D Street, as you'd call it. And I guess, a lot has happened because of these announcements. Because otherwise, the shorts were getting so brave. People were calling for lower levels.
Getting overconfident. When you write calls at will, when you're shorting the index at will, the PCR as well had moved to oversold levels, and the India VIX didn't go up. That is the big indicator. The India VIX, even after this correction, is still down. But as I said, the only red on the screen for the time being, Surbhi Upadhyay.
Happy to be alone on this one. No problem whatsoever. Okay, let's just see what's moving. We're talking about the short covering. Let's also track stocks, which are taking things higher. So it's pretty much across the board. Hero Moto, of course, has been up and about in any case, but names like Bajaj Auto have moved up. L&T has seen a sharp move in the last, couple of sort of sessions, minutes as well. ITC's bounced in positive. Anyway, tech, there was always some buying because of the fact that, globally, it's a bit of a, situation of a safe haven. IT index is now at the highs of the session. So plenty moving on the screen. I think we can go to Hormuz as well now. Okay, after the break. Hormuz coming up with more buzzers, but in just a bit after the break. Welcome back. Since politics and geopolitics is moving the markets, here's the latest. I think we have a statement coming in from NSA Ajit Doval, who has just met the Russian Security Council secretary and saying that he's been quite excited and delighted to learn about Russian President Vladimir Putin's visit to India. So I think that's how we're getting the confirmation that Mr. Putin is coming to India. Let's listen in.
We have got a very special relationship, a long relationship, and we highly value our strategic partnership. We have had high-level engagements, and these relationships, these high-level engagements have contributed very substantially. We are very excited and delighted to learn about the visit of His Excellency, the President of Russia, President Putin, to India. I think that the dates are almost finalized now. The more important thing is this, that is, these summit meetings have always been the watershed points.
Well, that seems to be the confirmation. We'll wait by for more details on the dates. For now, let's track the markets. Nifty above 24,600. Lots of stocks are moving. Hormuz puts the spotlight on it.
growing up in an era of K-dramas, we'll now have possibly dramas from A to Z at this pace. But there are a lot of movers on the broader markets. So by this time, I guess almost all of them would have turned the tide. We talk about GPT Healthcare first up. At least on last count, the stock was down around 12%. Yeah, there you can see this recovery from the lows of the day. Still 9.5% lower though. And at this pace, the stock has now slipped below its IPO price of 180. And now it has had almost 20 lakh shares traded compared to a 20-day average of around 5 lakh shares. Now, Forgings is the other underperformer. Now, it is down in 6 out of the last 7 sessions, still around 7.5% lower. Holding on to those days' lows is the stock. And 3 lakh shares have been traded today. There's a 20-day average of around 35,000. And this is not the only time that the stock has declined. It's down already 35% this year, making it the worst calendar year the stock has had since 2019. Now, Prince Pipes is the other earnings underperformer today, 9% lower on the stock. And it has also declined in 5 out of the last 6 trading sessions. But look at the volumes here. 9 lakh shares have been traded today, and compared to a 20-day average of just around 1.1 lakh. And it's been an underperformer over the last 2 years now. It's down 30% so far, and it was down 40% last year as well. Now, the volumes bit was actually reserved for Lincoln Pharma, and that is the biggest single-day gain that the stock has seen since February this year. And it has already seen close to 9 lakh shares traded here as well. But here the 20-day average is only 20,000 shares. So not a very significantly traded stock, but look at the volumes today and 11% higher on that stock. It's already down 28% this year after having doubled over a period of 2023 and 2024. And lastly, Rain Industries, that too on the positive side, the biggest single day gain since December of last year. We've already had close to 4 crore shares traded on the stock today and a 20-day average of just around 8.5 lakh. But despite this move, over the last 3 years, the stock has returned a big zero to its shareholders. Back to you guys.
Okay, all right. Thanks a lot for that, Hormuz. So, well, let's hop across to Mitesh Thakkar, who joins us for a couple of buy-or-sell trades. Mitesh, before we get to your stock trades, what would you advise someone? Does this have more in store? Because this is the first real signs of a short covering. I look forward to the data in the evening. It could be expiry related, but my guess is there will be some shorts that got trapped on the wrong side. Ride it for a little bit more?
No, I think, as I said, getting past 24,550 means that this bounce back should get stronger. Given the fact that we are doing this in the last half year means that the closing is likely to be above that. So I think I would be, as I advised earlier as well, exit shorts. If you are not doing long on the index, at least on the stock side, take long positions. I have BTST on Indian Bank with a stop at 642 for targets of 659. And the other one is Cummins India, which is also a stock trading at a fresh high and days high. So BTST here with the stock below 36.47 for targets of around 3,700.
Okay. All right. Got that, Mitesh. Thank you very much for being with us and giving us all that trading advice. See you again tomorrow. For now, let's move on and address, of course, the tough geopolitics and negotiations playing out between India and the United States. US President Trump has doubled, of course, as we know, the tariffs on India to 50%. But could further negotiations still be on the cards? What's happening with the back channels? Let's go across to Parikshit with the latest. Parikshit.
CNBC TV18 has learned from sources that while India considers the imposition of penalty to be unfortunate, the focus will now shift to negotiations and back-channel talks to find a way out. The actual date of imposition of this penalty is after 21 days, and sources say this is being seen as giving space to negotiations to find a way around the additional tariffs. India will try to negotiate a solution in the next 21 days within the larger ambit of the bilateral trade agreement. India hopes to work towards finding a solution which is a mutual win-win for both sides. Sources adding that it is important to take a long-term view of the larger India-US partnership which has been built over decades. Also, the purchase of Russian crude is not being seen as the only reason by India for US to impose this additional tariff. This is because China too is a big buyer of Russian crude. This is being seen as a negotiating tactic to put pressure on India in the trade talks. When it comes to crude purchases, Indian oil PSUs have been purchasing crude oil from all over the world, and they're guided by the best market prices. Oil imports from the US have significantly gone up in the last 6 months and are up by approximately 114 to 120% this fiscal. Indian PSUs are buying oil and gas from the US companies and will continue to increase purchases. So India will look at ways to resolve the situation, keeping in mind that India shares a very close linkage with the US industry and businesses.
Okay, all right. Thanks for that, Parikshit. Well, earlier today, we spoke to a handful of experts on the impact of Trump's tariffs and the road ahead. As we slip into a short break, let's listen in to excerpts from those conversations.
So if India put out a statement along with a deal that we are grateful for to President Trump for all the help he's given us, including in the India-Pakistan war, they can put in a way that is acceptable. But, Trump feels like Pakistan recommended him for the Nobel Peace Prize and acknowledged his help. And India is not. And I am sure it is a factor. How big a factor? I mean, there are other things like big numbers that he can boast about, but it'll soothe the ego. So there's definitely an ego component to everything that Trump does.
Very surprised. As I said, I follow RFK Jr. very closely. I think they're doing a lot of reforms in the US, specifically when it comes to big pharma. And if I look at the agenda seems to be to bring, the healthcare costs down. I find it strange that it's not like you can replace generic, pharma from India to some other country, because it takes a lot of time, FDA approval. There is a host of things that is to be done. Okay. So we don't think the tariff is coming, but even if it comes...
It's been an overhang for a while.
Yeah, but I'm just saying, even if it comes, there is no replacement for that. So these drugs will go to the US. Eventually, the consumer will have to pay. Nobody has that much of, margins in India.
Welcome back. The splendid recovery in our markets continue. Now it's a good 300 points off the lows on the Nifty, while on the mid-cap index, it's about 1,000-point recovery. The Nifty is now up close to about 300 odd points, a gain of about 0.5%. So short covering very much intact. But some of the sectors which have been hit hard, a water base, Avanti, we should just pull those up. And there are so many, the public shareholders in these companies is also quite high. For Avanti Foods, for instance, we've got about 42% of the shareholding with the retail, with the public. And for water base, I think the number is in excess of close to about 30%. So those sectors continue to get hit very hard. Amrish Balika is now joining in on the last leg. Amrish, so much has changed in that sense. So, give us 1-2 ideas to play it, either on the way up or either in terms of exiting some of the sectors that are hit. What would you advise?
See, one of the stocks I would recommend today is Vedanta. Again, a company which has operations across various verticals like aluminium. They're the largest producers in India, nearly 45% domestic market share. Leaders in zinc, lead and silver. Oil and gas, again, they're the largest private sector oil producers. In iron and steel, if you look at, they are the largest Indian private sector exporters of iron ore. Power, more or less the second largest private player. And in copper, they have one of the largest smelters in India. And we have witnessed record production of aluminium and zinc recently. They're planning to establish a greenfield copper smelter and refinery, as well as a copper rod plant in Saudi Arabia. Another aluminium refinery and smelter is being planned at Odisha. In the recent quarters, we have seen deleveraging, which was a major issue with this group. And financial discipline has improved. In fact, the net debt has reduced by 3,100 crores in the last quarter to about 58,000 crores. And in fact, 3 global credit rating agencies have upgraded their ratings. And Q1 performance was among the strongest, highest EBITDA margin in the last 13 quarters. It's about 35%, up 81 basis points Y-on-Y. And the demerger should be through in the current calendar year. So as of now, the target price is 520 based on a consolidated EPS of 52 for FY27. But I suppose the demerged entities, the sum of parts could be higher.
Interesting. Yeah, I think the only problem is whether or not that demerger does see the light of day. That's going to be important. Any of these numbers you track, rate gain is what we were speaking about. The numbers look, that they have been disappointing, but the deal wins were good. Savita Oil is another stock that's up 7-8%. I think it's a play on crude oil prices bouncing up. Any of the results today that impressed you?
Rate gain, I think, is fine. Like the way I see it is, we should see the stock possibly going to levels of about 520, 530, maybe in the short to medium term.
Okay. All right. Well, Amrish, request you to stay with us. For the time being, we'll wind down on the markets. It was a dramatic day of trade. It was the weekly expiry that played out. We had the PCR that went to oversold levels. The markets were net short. And the India VIX didn't budge, even when the markets were at the low point of the day. And that's why a dramatic recovery, more than 250-point recovery from the lows of the day. The Nifty Bank as well found its form. It was up more than 600 points from the low point of the day. The resistance comes in at around 56,000 odd mark. We've been making this point, but at least the lows got defended. The tech index seems to have turned around just for this week itself. And there is that argument that the valuation discount in comparison to the Nasdaq, that's got too wide, or the premium in comparison to the Nifty, it's come to the lower end of the 10-year band. So the tech, in fact, was the outperformer, was up close to 100%. What really makes you feel good is the breadth of the market, because the number of stocks advancing almost equal the number of stocks declining. 1,300 stocks were higher in today's trading session. From the Nifty pack itself, Hero MotoCorp, off in style, that was up 4.5%. Tech Mahindra and JSW Steel, well, both of them did well, and there was a clear-out trade on Eternal, Zomato, so that stock as well went home with gains. The Adani Group stocks came in for some profit-taking. Adani Enterprises, Adani Ports, both of them were a little bit lower in today's trading session. But broader markets, well, plenty of stocks did very, very well. NSDL, the second day of listing, that stock, in fact, was up close to around 20%. ITI was higher. RBL Bank, the street is expecting something in the month of August. We'll have to see whether or not that comes about, but there's been huge open risk build up as well on that one. So RBL Bank went on with gains, and Sagility was up close to around 3%. So a lot of movers moving on high volumes from the broader markets. On the flip side, Morpin Laboratories was down 6%. BHEL as well reacting negatively to its numbers. Jaiswal Nico as well was down close to around 2%. And Transrail Lighting, after seeing a big move, did come in for some profit taking. So all's well that ends well. You'll have to say that about today's trading session. The hope is that we can stitch up some kind of a deal with President Trump and then in fact the equity markets will get back to tracking domestic fundamentals. For the time being, we'll wrap up on this edition of Closing Bell. You don't go anywhere. The team of Markets Forward comes up next.
A sharp recovery in the last hour saw Dalal Street ended higher. Nifty recovers 300 points to end about 24,600. Nifty Bank sees a more than 500 point recovery. IT and pharma are the top gainers.
Lupin, Fortis Healthcare and others surge after a strong first quarter performance. Lupin expects double-digit growth in FY26, reiterates the $250 million sales guidance for the US market. And Fortis too reports a 16% year-on-year jump. The management commits to cutting debt by the end of FY26.
Hero Motor delivers a mixed bag of earnings in Q1 FY26. Revenue misses estimates, other income and lower input costs and profits are something that we were watching out for. BHEL tanks on a weak Q1. Net losses widened to 455 crores versus 211 crore rupees for the same period last year.
Good evening. You're watching us here on Markets Forward. It's definitely been a tale of two halves. In the first half of trade, we saw a big gash in the frontline indices. There was a lot of fear around what Donald Trump's next move would be after already imposing a 25% tariff, over a 25% tariff, making India's tariffs to the US exports at 50%. And thereafter, the street shrugged off those worries and said that maybe we're okay with it. Hopefully, there would be some negotiation. And there we saw a big recovery from the frontline indices. The Nifty IT actually was the one that led that gain. This is Markets Forward, the show where we get you all key data points to get up for the next trading day. I'm Mangla Malu, with me, Vinny Motiwala. Vinny.
Hi, evening Mangalam. So, interesting day, right? When I didn't expect this coming in through the day, opened up in the red, and look at the recovery, right? Nifty recovering around 300 points from the day's low. That is something we're watching out for. 24,600. That's a key level. Even Nifty Bank, we are seeing that recovery, 500-point recovery for the Nifty Bank. You mentioned IT. Obviously, that was leading the gains. We had pharma leading the gains. Media was the one which was managing to hold on to gains as well through the day. But a good recovery is what we've seen coming for the market. And that is what we'll watch out for if this sustains, right? Tomorrow will be key to watch out for from there.
Yep, you said you didn't expect it. Neither did a lot of those call writers who expected the market to, die in the last hour of trade from the highs. Did not expect that. And then once the market started moving higher, remember this was an already net short market where the FIs were 92% short. And today was also the weekly options expiry. So that led to some further short covering. The gain happened in the last hour itself. Quick succession post 3 p.m. Two charts that tell you the story of the day. First one is the advanced decline. That comes up for you. For most part of the day, we had the red line much above the green line. And thereafter, as we moved towards the end, the market ended virtually split right down the middle for 1,300 stocks, which ended in the green, for 1,400 stocks, which ended in the red. There you have it, those lines intersecting with the green ending above the red one. And the second chart of the day would be the India VIX. That comes up for you. For most part of the day, the India VIX was slightly high. And once we started to see recovery, the India VIX fell and ended at the low point of trade, telling you that the market believes that they have this covered. And what else do we have you covered for? For the next 20 minutes, we'll get you all the big news and big voices on the show. So let's tell you what exactly do we have on the show. We have with us some of the top stock movers. Hormaz joins in with all the stocks that move around from the big wall. Hormaz, there were a lot of movers and shakers, some in red, some in green.
A lot of movers, indeed. And if anybody would have predicted that at the start of the day that you'd have a reaction like this at the final few minutes, is definitely lying. But you'd look at the positive earnings reactions to start off with, considering we ended with a positive tilt. And Lincoln Pharma was one such positive mover in today's session, ending almost 14% higher after its results. Rain Industries was another one with a positive reaction. Kaplan Point reported results today, as did Savita Oil, both of them ending higher today. And Lupin too, the earnings outperformer from yesterday, and that spilled over into today's session as well. Among the negative earnings reactions, there were a lot of stocks that ended with double-digit losses. GPT Healthcare ended below its IPO price with this 9% cut. But take a look at the others. Lumax, Igarashi, Prince Pipes, all of them ending lower with cuts of anywhere between 10 to 12%. It was the banking stocks that led the recovery on the index today. You will not see that the gains are significant, but the lows, the recovery from the lows is a lot significant. Indian Bank, HDFC Bank was a prime contributor to the Nifty recovery, as was AU Small Finance Bank for the Nifty Bank as well. Lastly, some newsmakers today. Hero MotoCorp, after the earnings commentary, did well for itself, ended 4% higher. Avalon Technologies won an order yesterday. Godfrey Phillips, that one did well for the last 3 sessions and then saw some profit booking today. Eternal after the block deal. And Reliance Industries ending with a negative tick, but significantly off the lows of the day. Back to you guys.
Okay, thank you so much for that, Urma's important stocks that were buzzing in today's trading session. But on that note, let's bring our experts for today. And we have Amrish Baliga, independent market expert, as well as Richard Jain of Motilal Oswal Financial Services. Amrish, as well as Richard, good evening and thanks for joining us on the show. Richard, what a recovery that we've seen right today coming in. 24,340, around that was the low. And now we closed about 24,600. What are the key levels that we should be keeping an eye out on in tomorrow's trading session, especially, so that we know that is this going to sustain 24,600? Are we going to see a further recovery? What are we watching out for?
Yeah, hi, very good afternoon to everyone. But I think it was a perfect setup where we usually see recovery, because the stock index has already seen a correction of about 1,200, 1,300 odd points in last 1 month. Momentum readings technically were quite oversold zone because of this correction, and FIs had about 92% positions on the short side. So historically, we have seen that whenever markets is in oversold zone and FIs have such high short positions, the room to create fresh shorts reduces significantly over there, and which is followed by short covering move. I think a pullback move is there. Too early to say that the markets have bottomed and we would see a resumption of the uptrend over here. But at least the short-term relief could be seen, and on the higher levels, initial resistance would come around 24,750, 24,800 kind of levels. On the lower side, 24,300, 250 continues to remains a very strong support, where again, 200-day exponential moving average is coming in now. So I think, post the recent correction, the price-wise downside seems to be very limited from here on. Now one needs to see whether we see a time-wise correction in the short term before resuming the broader uptrend. But yes, this is the case where there are short heavy positions by FIIs. So as we go towards the support end at lower levels, we would see renewed buying interest.
All right, so that's the view coming in. Richard, thanks a lot for that. We, let's get talking about some of the individual stocks that moved around as well. Hormaz obviously did tell us about some of them. Amrish, your thoughts on a couple of outperformers today? We did see, the metals back do extremely well. HDFC ended at the high point of trade. Do you think, focus, because of the global uncertainty, now shifts back to domestic names? Some of the domestic consumption names, both staples and discretionary and financials?
Absolutely, because I think that's one segment which should outperform, and especially the consumption space, because we have seen a lot of underperformance, from them in the last 1.5 to 2 years. Especially FMCG and to a certain extent, some of the consumer durables. So out here, I would surely say something like a ITC, Dabur, HUL. I think these are the ones which will outperform. In the consumer durable side, I think Voltas, has corrected decently well in the recent past. I think that's one stock which should, I think has seen the bottom, at least the temporary bottom as of now. And I think we should see a decent move from here.
Okay, keeping an eye out on the consumption story going forward, and maybe that could see an outperformance. But today, what was outperforming was the pharma pack. We had Lupin as well as Fortis. Both of these gained almost around 3%, and this is after their numbers came in. Let's go across to Ekta, who's here to tell us, what came out in the numbers, what were the highlights from the con call as well. Ekta.
Well, yes, for Lupin this quarter, the commentary also enthused the markets along with the numbers which came out. So they have indicated overall revenue growth to grow in high single digits. The domestic business is set to outperform the Indian pharma market for the next 5 years. Diagnostic business is targeted to become EBITDA positive by FY27. They're looking at a guidance of around $250 million in terms of US sales per quarter, and they would currently stick to their guidance of around 50 to 100 basis points margin improvement at this point. Overall, good numbers coming in from Lupin, and that's what kept the stock steady. For Fortis as well, good numbers, and the commentary also was positive. So the hospital revenue was up 18%, the margins expanded to 22%, diagnostics was up around 6.3% year on year, but margins expanded to almost 26%. They expect occupancy to improve to 72% from the next quarter. Oncology growth has been fast according to them, and high-end specialty growth is faster than core growth at this point.
Amrish, you did speak about some of the consumption names which are doing well. Do you think pharma warrants a mention? Because while it is export-facing, it is still relatively resilient when it comes to tariffs, etc. Because,
that's true.
The US wouldn't want its medical bills to go up.
No, that's true, because US cannot stop buying Indian pharma, period. They cannot replace Indian pharma with something else overnight. So at least, again, assuming that this tariff issue continues for much longer, at least for the time being, I think Indian pharma is spared. So I don't think there's anything much to worry about. And in case these stocks correct because of these worries, I think it's a good buying opportunity if you're talking about the next 1.5 to 2 years. I think the same will apply to as far as Indian IT is concerned, because that again cannot be replaced overnight. And the third area is I don't think US can afford expensive iPhones. So I think the electronic manufacturing which happens in India, I think even that would be spared for much longer.
Okay, that will be interesting to watch out for. Electronic manufacturing is also something we'll keep an eye out on with the pharma pack. But let's talk about Hero Moto, because that was in focus as well. The stock gained almost 3%, and this is despite a big mixed bag of numbers that came in Q1 FY26. Okay, so we had seen the profits that were aided mainly because of income and lower tax rates that came in. That was something that worked for the company. Let's actually go across to Sudarshan, who's here to tell us about what happened in the stock, what are we watching out for, what were the highlights in the con call as well.
So Hero MotoCorp announced its Q1 earnings yesterday, and earnings were slightly missed or almost in line to our expectations. But the big move in the stock price that we saw today, it came after 10:30 a.m. when company held the analyst call. So some of the takeaways from the earnings call: first, on the margin front, for FY26, the guidance is in the range of 14 to 16%. But company is saying that in the near term, margin is expected to be in the lower band of the guidance, that is around 14 to 14.5%. So that is slightly negative. Now, on the growth part, which is positive, company is saying that for FY26, industry growth range is around 6 to 7%, and company will maintain that. That's positive. Second, on the export front, company is expecting growth to be more than 40%. So that is taken positively. On the market share, in the retail segment, company is holding on to market share of around 31%. And in the entry-level segment, where it's the market leader, it's holding on to market share of 66 to 67%. So that is also taken positively. Last part, why there is a big move in the stock price? Because the commentary that company is given on the launches. So in Q2 FY26, company is making 2 launches in 125cc segment, and 1 launch that is company is doing in the partnership with Harley Davidson, and that launch also will happen in Q2 FY26. So because of these major launches, market is expecting that companies launching and expecting a major demand in the festive season or ahead of the festive season, and that's the reason it was a big move that we have seen in the Hero MotoCorp. At the end, it was up more than 4%.
All right, Hero MotoCorp up more than 4%. Let's get in a view coming in on Hero MotoCorp. What do you think the chart suggests, Ruchit, on Hero MotoCorp?
The chart sector is quite bullish. We have seen about 2.5 months of consolidation since mid-May in Hero MotoCorp, where 4,400 was the resistance. Recently, a couple of days ago itself, the stock gave a breakout. And if you look at the volumes in last 3 or 4 trading sessions, along with the price of move, they are much higher than the recent daily average volumes. So I think even if you look at the sectoral move, then this two-wheeler segment within the auto space is showing a signs of good trended up move and a relative outperformance. You take stocks such as TVS Motors, which is trading at its 52-week high, even in such markets. Hero MotoCorp has given a good breakout recently. So I think two-wheeler as a space should do well in the short term. And Hero MotoCorp probably around the higher side. We are expecting targets around 48.50 in next few trading sessions.
Okay, let's move on to the next stock that was in focus today. That was BHEL. Now, that fell over 6%, and this came in after a weak set of numbers was reported by the company. The firm saw its net losses widen to 455 crore rupees versus just 211 crore rupees in the last year, same time. Meanwhile, revenue from operation, that was very flat in terms of a growth. What more were the details in terms of numbers or highlights that we're watching out for now? Vamakshay is joining with us for that.
Well, Vinny, absolutely dismal set of numbers coming in from BHEL this time around. Revenue was flat. When we look at the EBITDA, the EBITDA loss that has widened from 169 crores to 537 crores, and this is mainly on account of the other expenses, which nearly doubled to almost 675 crores. The street this time around was expecting a profit to come through from BHEL, but that has not transpired. Instead, the losses have only widened further from 211 crores to 455 crores, and this weak performance is largely being led by their power segment. Keep in mind that the revenue here saw a downtick of almost 5.5%, and in fact the EBIT loss also widened from 54 crores to 510 crores. On the other hand, the industry segment did quite well, 17% growth, and the margins have improved from 4.67% to 19.32%. The ordering activity on the flip side was quite robust. Order inflow saw an uptick of almost 42%, and the order book stood at 2.04 lakh crore, which is above what the street was anticipating. But that does not take away from the fact that it was a miss as far as the earnings estimates were concerned, and therefore the stock closed lower in today's trading session.
Okay, thank you so much for that, Vama. Amrish, your thoughts coming in for BHEL? Now what should we be keeping an eye on? This quarter wasn't exciting, but overall for the sector as well as the company.
No, in fact, for BHEL, generally June quarter is a weak quarter, but unfortunately, and it's quite disappointing that the losses are widened. In fact, I was expecting the losses to be reduced because the last 3 quarters, the performance was better than at least on a Y-on-Y basis. But then this has been disappointing. So I'll not be surprised in case we see BHEL, in fact, slip below that 200 levels. But at about 180, 190, one could look at buying from a longer term perspective because I'm quite bullish still on this sector.
All right, still bullish on this sector. What we'll do is let's talk about some of the other movers as well. A lot of numbers that came in today and a lot of stocks that were in the news. Bajaj Electrical, Prince Pipes fell after weak first quarter numbers. Prince Pipe, actually gained on a good set of numbers. Bajaj Electricals was the one which fell. Upasana Bhatt joins in with the details of that one. Upasana, good performance coming in from Kaplan Point and Bajaj Electricals, not so much for Prince Pipes.
Firstly, let me start with Bajaj Electrical. Overall, it's been a weak set of numbers below what Street was anticipating. Revenue saw a downtick of 8%. While there was a one-off this quarter with an exceptional item of nearly about 6.6 crore, which impacted the margins of the company as well. Now, EBITDA margins stood at 3.1% versus 6.5% on a year-on-year basis, and PAT stood at just 1 crore around with a downtick of nearly 97%. Now, the company's key segment, that is consumer products, which forms nearly 75% of the company's revenue mix, saw a downward pressure with a revenue downtick of nearly about 11%, versus the other segment, that is lighting solution, which reported a growth of about 3% on a year-on-year basis. Now, coming to Prince Pipes, overall the revenue and profitability remained weak for the company. Revenue saw a downtick of 4%, PAT saw a downtick of 80%, and EBITDA margin saw a downtick of nearly about 270 basis points due to continued drop in the PVC prices. But irrespective, company has reported a volume growth of nearly about 4% this quarter on year-on-year basis. And lastly, coming to Kaplan Point, which reported a strong set of numbers, the revenue saw an uptick of 11%, net profit saw an uptick of 23%, and EBITDA margins also increased sharply from 33% to 35%. Now, US revenue saw a growth of nearly about 36% on year-on-year basis, which was the main growth driver for the company.
Okay, Upasana, thank you so much for that. Ruchit, any of these names that you will be looking out for? Kaplan Point, Prince Pipes. Prince Pipes has seen a significant correction, right now after this earnings, and in the last 1 month also has not done anything exciting. So on the charts, would that be something you would watch out for?
I think amongst all these three names, only Kaplan Point is a stock where chart structures are a bit positive. Although a good consolidation has been seen, but at least the recent past indicates a good support base buying near 1800, 1900 kind of range. And even today, along with the recovery, the volumes are quite good. So both other names, Bajaj Electricals as well as Prince Pipes, they're still in downtrend, no signs of reversal. But if one is looking for a bit delivery-based buying for maybe 1 or 2 quarters, then Kaplan Point can be considered at current levels.
All right, Amrish, do you like any of these?
In fact, Kaplan Point I don't track. Bajaj Electrical was a disappointment, but the stock has bounced back a bit. I think it's a selling opportunity. Prince Pipes has been an underperformer for a long time. In this space, I would surely prefer something like a Phenolix Industries or a Astral as compared to Prince Pipes.
Okay, gentlemen, thank you so much for joining us and giving us your insight in terms of individual stocks as well as the market. But on that note, we're going to step into a very short break. We'll get you the top corporate voices along with the key market events to watch out for in tomorrow's trading session after this break.
You've been watching us here on Markets Forward. We told you about what the way forward for tomorrow's trade would be, but let's also get you some corporate voices that we had. Jindal Stainless, the stock slips in trade today. Despite reporting good set of numbers, the management says the stainless steel industry is not anticipating any impact of Trump's tariffs since it's already in the 50% tariff bracket. Also said US is a small part of sales of the company. The company is guided for its volume growth in FY26 to be between 9 to 10%. Also, its consolidated EBITDA per ton to be around rupees 20,000.
Next up, we spoke to Bharat Forge. The management believes US President Donald Trump's 50% tariff on India will cause pain to any industry in India. The management is optimistic that there will be some political resolution to the tariff issue sooner than later. The company's exports to the United States are around $200 million with a revenue exposure of 10%. The management says that due to the tariff, it has taken a hit of 14 crore rupees in FY26, while noting that significant capital investment had been made over the past 2 to 3 years in the United States market, and the management guides that the defense business too sees a 15 to 20% uptick and is extremely bullish about aerospace business.
All right, that's not all. We also had the management of Torrent Power joining us on our channel. It says that power demand is subdued due to the early onset of monsoon and the higher LNG prices. However, this has not affected growth and expansion plans of the company. The company is exploring coal assets as part of both greenfield and brownfield thermal asset expansion. Also said it has a strong balance sheet.
And before we wrap up Markets Forward today, we bring you the key events to watch out for in tomorrow's trading session. And for that, we have Upasana to take us through that. Upasana?
Well, first up, let us look at the important results that we'll be closely tracking for tomorrow. Companies like SBI, Tata Motors, Grasim, Voltas, Siemens, HAL, InfoEdge and GRSE will be reporting their numbers. Now let us look at the key stocks that will be in focus on the back of corporate action. Paris Defense tomorrow marks as the record day for the dividend. Also, Nestle India will be in focus as bonus issue in the ratio 1:1 is scheduled for tomorrow. Sandur Manganese and Iron Ore also in focus as board will consider bonus issue for tomorrow. Now let us look at the global cues. France and Canada will be reporting its unemployment data, while Russia will be reporting its GDP and inflation data. Now Trump sets August 8th as the deadline for Russia-Ukraine peace deal. Trump will also host leaders from Armenia and Azerbaijan at the White House on Friday, that is tomorrow. So we'll be keeping a track of that as well. And lastly, the most important cabinet meeting is scheduled for tomorrow, wherein PM Modi will discuss the impact of tariffs with various ministers. So we'll be looking out for that as well. So all in all, looks like a power-packed day tomorrow.
Indeed, a power-packed day tomorrow. Upasana, thank you so much for that. We will obviously watch out for what takes place overnight with Donald Trump tariffs and all that takes place as well. With that, we wrap up on this edition of Markets Forward. Thank you for watching. We'll be back with more news and updates on the other side.
Hello and welcome to Business 360. I'm Archana Solanki. Here are the headlines we're tracking this evening. More than 90 countries face higher taxes on their exports to the US starting today. India faces a 25% tariff rate. This will double to 50% from the 27th of August as President Trump penalizes India for importing oil from Russia. Prime Minister Modi pledges to protect the interest of farmers after US President hits India with the highest tariff rate in the world. PM says he's ready to pay a heavy price. Government sources say India will try to negotiate with the US as the 50% tariff rate takes effect only after 21 days. Textile, jewelry, engineering and other industries fear a standstill on exports. Many say a 50% tariff rate is similar to a trade blockade, but India Inc. remains hopeful of a resolution. Indian economy braces for a growth hit as Trump doubles the tariff rate. Citi projects GDP growth to be impacted by nearly 1%, expects rupee to come under pressure as capital flows are likely to slow down. Russia's President Putin will visit India later this year, says National Security Advisor Ajit Doval, who's on a visit to Moscow. Prime Minister Modi will visit China for the first time in 6 years on the 31st of August. Chinese embassy calls both nations to deepen trust and widen cooperation. Kremlin says US President Trump and Russia's Vladimir Putin have agreed to meet in the next few days, says the Kremlin. Ukraine's President Zelensky says Russia seems more inclined to a ceasefire now. A roller coaster ride on Dalal Street, Sensex and Nifty stage a dramatic recovery in the last hour after declining to a 3-month low. Rupee gains marginally against the dollar as dealers suspect RBI intervention. Shares of Zomato parent Eternal exchange hands in a block deal worth over 5,600 crore rupees. Alibaba-backed Antfin is likely to have exited the company. This will mark Antfin's second exit this week after Paytm. SoftBank books a profit of nearly $3 billion in the first quarter. Tech investments, especially in Nvidia, boost profits. The value of the Vision Fund rises $4.8 billion thanks to gains from listed companies like Swiggy. Rescue operations continue for the third day after a cloudburst in Uttarakhand triggered a landslide. At least 6 people are dead and dozens feared missing. Over 150 people have been rescued so far and over 270 people relocated to safer areas. Congress MP Rahul Gandhi accuses the Election Commission of colluding with the BJP in a massive voter fraud, claims there was a sudden addition of 1 crore new voters between the Lok Sabha and Maharashtra state elections, adds that a Congress probe found over 1 lakh fake voters in Karnataka's Mahadevpur seat. The Supreme Court dismisses Justice Yashwant Verma's plea against the in-house committee's report on the cash pile found at his residence. The verdict sets the stage for an impeachment motion in Parliament. All right, the top story this evening. US President Donald Trump's new tariff regime takes effect today. More than 90 countries face higher taxes on their exports to the United States. In a social media post, President Trump claimed that billions of dollars were now flowing into the United States due to hike in tariffs. Exports from India face a 25% tariff starting today. This will double to 50% from the 27th of August after President Trump penalized India for importing oil from Russia. Textiles, leather, engineering goods, agri and seafood exports are expected to be hit the hardest by the increase in tariffs. However, certain sectors are exempt. This includes goods targeted under sector-specific duties such as steel and aluminium, pharmaceuticals and semiconductors. India's electronics exports are also exempt, at least till the 14th of August as things stand. Prime Minister Modi pledged to protect the interests of farmers without explicitly mentioning the tariff hike by the US. Speaking at the Swaminathan Centenary International Conference, which is in memory of the father of India's Green Revolution, Modi said that he's ready to pay a heavy price if need be.
हमारे लिए अपने किसानों का हित सर्वोच्च प्राथमिकता है। भारत अपने किसानों के, पशुपालकों के और मछुआरे भाई बहनों के हितों के साथ कभी भी समझौता नहीं करेगा। और मैं जानता हूं व्यक्तिगत रूप से मुझे बहुत बड़ी कीमत चुकानी पड़ेगी, लेकिन मैं इसके लिए तैयार हूं। मेरे देश के किसानों के लिए, मेरे देश के मछुआरों के लिए, मेरे देश के पशुपालकों के लिए आज भारत तैयार है।
Meanwhile, the Trump administration has continued to defend Washington's additional tariffs as a response to India buying Russian oil. Now, White House trade advisor Peter Navarro called India the Maharaja of tariffs.
The fact that India is the Maharaja of tariffs. It's the highest tariffs in the world, charging on American products, and it's got high non-tariff barriers, so we can't get our products in. So we send a lot of dollars overseas to India to buy their products in an unfair trade environment. India then uses American dollars to buy Russian oil. Russia then uses those American dollars that come from India to finance its armaments to kill Ukrainians. And then American taxpayers are then called upon to pay for the weapons that have to defend Ukraine against Russian armaments paid for by American dollars that came from India. That's got to stop. That math doesn't work. The president understands the connection between economic security and national security, so that was the bottom line there.
And staying with tariffs, the Trump administration has given India a 21-day window for further negotiations. Sources have said that the Indian government is working towards finding a solution and aiming for a win-win deal. Parikshit Luthra now joins us on how crucial these 21 days are and what impact it could have on relationship between the two countries. Parikshit.
Well, CNBC TV18 has learned from sources that while India considers the imposition of penalty to be unfortunate, the focus will now shift to negotiations and back-channel talks to find a way out. The actual date of imposition of this penalty is after 21 days, and sources say this is to give space to negotiations to find a way around additional tariffs. India will try to negotiate a solution in the next 21 days within the larger ambit of the bilateral trade agreement. India hopes to work towards finding a solution which is a mutual win-win for both sides. Sources adding that it is important to take a long-term view on the larger India-US partnership built over decades. Also, purchase of Russian crude is not being seen as the only reason for US to impose additional tariffs. This is because China too is a big buyer of Russian crude. This is being seen as a negotiating tactic to put pressure on India in the trade talks. Now, when it comes to crude purchases, Indian oil PSUs have been purchasing crude oil from all over the world and are guided by the best practices and prices. Oil imports from the US have significantly gone up in the last 6 months and are up by approximately 120% this fiscal. Indian PSUs are buying oil and gas from US companies and will continue to increase purchases. So India will look at ways to resolve the situation, keeping in mind that India shares very close linkages with US industry and businesses. Overall, if you look at major buyers of Russian crude, it is first China at 47%, India at 38%, EU at 6%, and Turkey at 6% as well.
All right, thank you, Parikshit, for that. Moving on, industry bodies have said that a 50% tariff rate is similar to a trade blockade and are seeking government intervention. Manisha Gupta has more on the impact of the higher tariffs on specific sectors. Manisha, who will be the worst hit?
Well, dozens of sectors will bear the brunt of Trump's tariff take. Let me take you through the gems and jewelry industry first. And US is the largest export destination for the industry, accounting for $9 to $10 billion annually, which is almost 30% of overall exports. The fear of higher tariffs has led to a 75% drop in exports in the month of July. As things stand, all exports have been suspended. The Jewelry Export Association is seeking government intervention and has requested state governments of Gujarat and Maharashtra already to provide relief to the workers. Next on my radar is the textile industry, where the US accounts for more than $8 billion in annual exports. This is 35% of India's overall textile exports. Industry believes that the US buyers will not accept such a steep hike in prices. They have also halted all shipments to the US and trade has completely stalled. The Federation is calling for support from the government, including the removal of 11% import duty on cotton. They have also asked the government to release cotton stocks to cushion the impact. Another industry that will be impacted is the seafood. Total annual exports to the US stand at nearly $3 billion for this one. The Industry Association is estimating loss of 24,000 crore rupees. They believe that India is at disadvantage compared to other countries and have called on the government to explore alternative markets. And finally, it is the Rice Exporters Federation also fearing that it could lose out to Thailand, which faces a much smaller tariff at around 19% compared to India's proposed tariff rate of 50%. The rice exports last year was worth $42 million. The Industry Association has said that trade stands suspended as they await clarity. These are just some of the worst affected industries due to the US tariffs. Here are the reactions from the corporate leaders on the US tariff hikes and its implications.
For Bajaj, I can tell you in a word that we are quite unconcerned, and I'll tell you why. Our exports to the US are basically in two brands, KTM, that's about 10,000 vehicles a year, and Triumph, which is about 5,000 vehicles a year. So, firstly, it's 15,000 vehicles a year in a volume of about 5 million vehicles. So that's less than 0.5% as far as volume is concerned. Nevertheless, it's an important market. It's a very profitable market. So it's not a business we would like to lose. And I don't think we are going to lose this business. And
it's very difficult for any industry to mitigate a 50% tariff.
Yeah.
Well, let's understand that. That's impractical. We've been talking to our customers. The customers understand this. They're supportive. And they all believe that there will be a political solution on the table sooner than later. We have taken a tariff hit of about 14 crores, okay, which is roughly about $1.6 million on an export of roughly 200 million.
If there is a 200% or thereabouts, I'd say anywhere from 20% to 200% tariff on pharmaceuticals, it would have a significant impact on the US market per se. I mean, as we've talked in the past, 70% of the drugs in the US are imported. 50% of generics are imported from India. So obviously, high tariff will have an impact on drugs that are imported from India.
They want our US part of the business to be moved out to Bangladesh, Indonesia, and Vietnam, where we have our facilities. And I think that would be I would say, a death knell for at least for this particular season, which is coming up for the Indian industry, because 50% tariff, most of the retailers won't be able to absorb or have any mitigation.
As an industry player, as a player in the Indian economy, how do you see these tariffs playing out on a domestic as well as an international level?
No, so if you look at what's happening in the US, first from the JSW Group's perspective, we have operations in the US. We manufacture steel there. And obviously the tariffs that are being imposed by the president of the USA is helping our domestic manufacturing in the United States. So there's a positive on that account. Now, when it comes to India and when it comes to the tariffs that he's imposed, the 25% first and now 50% tariff, I think that there are two things. One is we are a sovereign country. For us, our domestic economy and 1.4 billion people come first. And whatever is in the interest of our country is what we need to prioritize. And if that means we have to buy oil from wherever we get it cheaper, that's in the benefit and in the interest of 1.4 billion Indians. And hence nobody and no country can bully our country. So that's the step and stand that's been taken by the government, and we completely back that and support that because that's in the right interest for the country. So for me, it's kind of unbelievable what's going on. I'm not able to fathom it.
I hope both sides are able to iron out their differences because we are natural allies and these are the two powers of the 21st century. There's obviously the United States, there's China and there's India. And I think the United States knows that. I think India knows that. So I think, I hope that better sense will prevail and this kind of, this kind of diktat that's going on, the kind of use of language that's going on stops and we go back to being friends, we go back to respecting each other. We may have our differences, but this is no way to negotiate between two great countries.
Right, President Trump's tariffs will also impact India's GDP. Brokerages have said a sharp fall in exports and stress on India's current account deficit could pose a short-term downside risk to India's growth. Citi has projected that GDP growth will be impacted by nearly 1%. Meanwhile, Jefferies, the brokerage, also expects the rupee to come under pressure as capital flows are likely to slow down. India's National Security Advisor Ajit Doval has said that Russian President Vladimir Putin will visit India soon. According to a Reuters report, the Russian leader could visit by the end of this year. Speaking in Moscow alongside his Russian counterpart, Doval said that the high-level engagements during his visit were substantial and fruitful.
We have got a very special relationship, a long relationship, and we highly value our strategic partnership. We have had high-level engagements, and these relationships, these high-level engagements have contributed very substantially. We are very excited and delighted to learn about the visit of His Excellency the President of Russia, President Putin, to India. I think that the dates are almost finalized now. The more important thing is this, that is, these summit meetings have always been the watershed points.
The Chinese embassy spokesperson has responded to Prime Minister Narendra Modi's visit to China later this month. The spokesperson said, and I quote, "In today's complex landscape, it makes far more sense for both nations to deepen trust, manage disagreements, widen cooperation and promote peace in Asia and globally," end quote. Prime Minister's trip to China will be the first one since the Galwan clash in 2020. As the US moves to impose secondary tariffs on Russia's trading partners, the Kremlin has said that President Donald Trump and Russian President Vladimir Putin have agreed to meet in the next few days. White House too hinted that Trump is open to meeting both Putin and his Ukrainian counterpart. Ukraine's president also said that Russia seems more inclined to a ceasefire now. On Wednesday, US Special Envoy Steve Witkoff met Putin in Moscow. Trump described the meeting as highly productive. Now, if the summit happens, it would be the first direct meeting between a sitting US and Russian president since Russia's full-scale invasion of Ukraine.
There's a very good prospect that they will, and we haven't determined where, but we had some very good talks with President Putin today, and there's a very good chance that we could be ending the end of that road. That road was long and continues to be long, but there's a good chance that there will be a meeting very soon.
All right, on to the day's market action. A recovery in the last hour pushed the market into the positive territory, with Nifty ending close to the 24,600 mark. Broader markets performed well, and more than 30 Nifty stocks ended the session higher, led by IT, metal and auto stocks. Surbhi Upadhyay joins us now with the day's market action. Surbhi.
What a day on the street. Call it drama on the Lal Street. I mean, it was volatility, it was chaos, it was digesting the hit, and it was bouncing back. It was all happening over here. Digesting 50% tariffs. Well, the first hits came in, and the market very quickly, actually in the middle of the day, had slumped to a near 3-month low. The Nifty had actually hit that level of 22,425, which we last saw on the 12th of May. But then the dramatic turnaround started. Shorts started scrambling for cover. Now, why did that happen? The trigger came in the form of geopolitical news headlines, which suggest that there indeed is going to be a meeting with between the US President Donald Trump as well as Mr. Putin. Not just that, there were reports indicating that Mr. Zelensky is willing to have a face-to-face meeting with Putin to quote-unquote end the war. This was enough to get the shorts to scramble. So what we saw was a dramatic bounce from the lows. The Nifty rocketing higher to finally actually end the day positive. The mid-cap index also followed suit, and suddenly a lot of sectors that were taking the market down, they were all recovering. So the market is now pinning its hope on the prospects of at least the additional 25% tariff, that being taken away if there is a breakthrough on the Russia-Ukraine war. So let's talk about the sectors and the stocks then. The gaining sectors, IT, pharma, capital markets, and banks. Some of the losing sectors were PSU and defense. And if you see how this played out in terms of stocks, so look at the Nifty. Gainers included Hero MotoCorp, again, great numbers there, so thumbs up. A lot of IT names, Tech Mahindra, Wipro, HCL Tech. And then there were stocks across the spectrum, Eternal, Maruti, Bajaj Auto, and also HDFC Bank doing quite a bit of the heavy lifting. The losers, Adani Enterprises, Adani Ports, Tata Motors, and some of the FMCG and consumer names like Trent and Lever, they were on the back foot. NTPC as well. Like I said, PSUs were a weak lot today. Mid-cap movers, some hits. Rain Industries, Fortis Healthcare, Lupin, all the numbers, all the stocks reacting to numbers or earnings commentary did fairly well. There were names like First Source, Shakti Pumps, all on the positive side. But the tariff hit concerns continue to linger on the sectors that will get impacted, even at 25%. So Avanti Feeds, Waterbase, these are big seafood exporters or shrimp feed exporters to the US. So these stocks were down. Pearl Global, Gokuldas, after falling 14-15% so far this week, finally ended flat for the day. Now, while the short covering bounce has led to a dramatic recovery and a great positive close to the Nifty, tomorrow onwards, we'll have to answer the main question again. When will this tariff uncertainty on India end? Will we be able to finally negotiate lower rates? Because till this clears up, the critical question for the market is FPI outflows. That's the big worry. Will India see a derating in terms of how foreign investors are viewing us till we can negotiate some kind of a trade deal with the US? So uncertain times, but a great Thursday finish.
Great Thursday finish. Thank you, Surbhi, for that. In the currency market, the Indian rupee remained steady despite Trump's tariff announcement. It ended a little change from its previous close of 87.72. Dealers suggest the RBI may have stepped in with dollar supply early in the day. Dollar buying also remained muted, with traders expecting a possible resolution within 3 weeks. The rupee is down over 2% since July 1, making it the worst performing currency in Asia. And it's time for a short break. Coming up next, Congress MP Rahul Gandhi accuses the Election Commission of colluding with the BJP in a massive voter fraud. More details in a bit. Welcome back. Rescue operations continue for the third day after a cloudburst in Uttarakhand triggered a landslide. At least 6 people are dead and over 120 have been rescued. So this is the latest as far as rescue operations are concerned, and over 270 people have been relocated to safer areas. 3 CRPF jawans have been killed and many were injured after a bus fell into gorge in Jammu and Kashmir's Udhampur district. The vehicle was carrying 23 jawans. Rescue efforts were launched immediately while 2 personnel died on the spot. 1 succumbed to injuries on the way to the hospital. Leader of opposition in the Lok Sabha, Rahul Gandhi, has alleged large-scale voter fraud in 2024 Lok Sabha elections by the BJP and the Election Commission. In a press conference, Gandhi flipped through a booklet of alleged fake voters added in the electoral rolls in various constituencies. He claimed there was a sudden addition of 1 crore new voters between the Lok Sabha and Maharashtra state elections. He also added that a Congress probe found over 1 lakh fake voters in Karnataka's Mahadevpur seat.
This is not our data, this is EC data. And EC कह रहा है कि हम फ्री एंड फेयर इलेक्शन करा रहे हैं, और उनके डेटा में एक असेंबली में 1 लाख फेक वोटर्स हैं, फेक एड्रेसेस, डुप्लीकेट, फॉर्म 6, अलग अलग तरीके. तो हम इलेक्शन कमीशन से नहीं कह रहे हैं, हम हिंदुस्तान के युवाओं से कह रहे हैं, हिंदुस्तान की जनता से कह रहे हैं, ये आपका भविष्य है, गरीबों का भविष्य है, ये आपके आंख के सामने पूरा का पूरा सिस्टम चोरी किया जा रहा है.
And with that, it's a wrap on this edition of Business 360. News and updates continue right here on CNBC TV18.
Welcome back. Financial markets are pretty resilient. I mean, the rupee is pretty resilient as well. In the face of the additional 25% tariffs, an expectation is that things will perhaps work out in the next 21 days. We're in conversation with 2 seasoned diplomats about what can happen. And before I took that break, Thank you for waiting, both of you. I said, let's talk about what went wrong. Mr. Trigunya, if I can come to you, sir, because it is the goalpost has shifted constantly. Do you think what to your mind is the real problem here? Because once we kind of sort of know that, then you can address it.
There are two things that we need to keep in mind. Apart from President Trump's temper and his the kind of person that he is or behaves in an international manner like an emperor. The thing is that number one, when he came back second time, he was basically talking about India as a tariff king many times. He's been saying it every time that he met or anything was going on. So in his mind, he has somehow made the decision that India charges such high tariffs and therefore it needs to be fixed, so that he goes from that premise. Second premise that he came was that he will end the wars in the world wherever they are. For the Russia-Ukraine war, he said that it would not have happened in the first place, or if he was there, it will end in 24 hours. He misread Putin, who knows they both know each other rather well. Then when Israel-Hamas war, he was able to do it for a day, and just after that, Israelis went back, and once again the war began. So he has not got that success. He tried to claim for the Rwanda and Congo also. What happened there? Now, the biggest, I think the pick for him has been that he has been claiming at least 33, 34 times that he is the one who mediated and ended this war between India and Pakistan. India's position has been very clear that we don't want any third-party mediation. And that is what has really pricked him, in my view. Personally, he has taken it very personally. And therefore, he is going after us. Firstly, he went directly, and then secondly, under the garb of the Russian oil purchases. Because neither Putin is listening to him. He can't hurt Putin anyway, because they are also dependent for their rare earths with them. They could not hurt China, because China stopped supplying some of these rare earth minerals to them. So they know that it's going to be directly impacting on them. And therefore, now he's going after the other BRICS countries, because that's what in his mind is that the BRICS is something which is indulging in de-dollarization. It is doing this or that. And so he started with Brazil first, and then now he's gone after India. South Africa was the first one he went after for various other reasons as well. So I think that in his mind, he has this warped impression about India's tariff regime, which India is ready to discuss. And that's what you are negotiating in this bilateral trade agreement, mini or otherwise, whatever deal it is. But then he, of course, started playing up Pakistan, and those kind of things he's doing. So in my view, this is a very difficult thing, because if something becomes so personal, then strategic, then becomes increasingly difficult to deal with it, unless you are going to swallow your pride.
Yeah, but if again, you can't put a lot of things go into that mix, right? And who knows what all go into the mix. But there are a bunch of factors, not just trade considerations. What Mr. Trigunya, what number would you put to it? Weightage of that India-Pakistan thing that you spoke about? I mean, is it 30%, 40%, 50%?
Pakistan is a nuisance. So, I mean, I don't give much credit to Pakistan.
No.
It becomes a problem.
No, I'm saying the fact that he may have felt snubbed.
Yeah, so he's basically, because Pakistan is sucking up to him all the time.
Correct.
They are the ones who
Correct.
sought
So my question, exactly.
They gave him credit to him. He's inviting Munir again the second time, as you know. So it shows that he's putting his eggs in that basket to some extent. And it's not the first time. I mean, let us not fool ourselves that he has been a great friend of ours and not that of Pakistan.
Yeah.
Forever, Pakistan has been one of the tools in their kit, especially the military regime.
No, absolutely.
I mean, they have always supported
but for the purpose of this, because there is the actual tariffs, etc., involved here, you think it's an important factor in his mind, according to you?
Well, I don't think so. It is such a big factor, but it is becoming an irritant for us, at least domestically.
And it complicates.
That is something that we need to give this thing. For him, it will just be to snub you, nothing else. But at the same time, I think that President Trump, the way he deals with things is like, I mean, you know that everybody sees that how the way he behaved, maybe in the Iranian context or whatever, But at the same time, I think that this is not the first time. They have
Yeah.
been very close.
Yeah.
And with Pakistan. So this is something he's trying to win away, perhaps Pakistan from China, which is once again a folly.
Yeah.
I mean, I feel that Pakistan will have problem going forward, choosing between Pakistan and between US and China.
Yeah. No, absolutely. Absolutely. And that's another conversation we can have. But it makes no sense, right? Because, I mean, I think if there was one bipartisan agreement in the US, even 2-3 months ago, was that, you know, it was basically trying to curb and limit China's influence. And now that is, and now we are here. So it kind of baffles the mind and that's why I asked you, what has changed? I mean, are there any other factors at play here? Because, yeah, you're right. I mean, he's called India the tariff king for a long time. But, you know, this is, there seems to be maybe a few new elements at play. Ma'am, you want to come in? Your thoughts?
Yeah, let me say one thing. I think tariffs, this is something that has been on President Trump's mind right from his first term as president. He wanted this to be his great contribution. And, you know, we do know that his son-in-law, Jared Kushner, found this, I think, economist, Peter Navarro, not really an economist, but who talked about tariffs. And it began from there. And in his second presidency, he thought that this would be the big thing that he would contribute. But the fact is that tariffs is not a good idea. This business of putting tariffs up.
Ma'am, my question is, sorry to come in. You know, you can go back and look at his videos on YouTube, President Trump, from the 1980s. He's spoken about 30% tariffs on China. Back then,
yes.
I think he would be asked whether he'd run for president someday. He said, well, not really. But, you know, of course, tariffs are a bad thing, they're taxing the consumer, etc. But my question is specific. To your mind, are there, like Mr. Srigunyat said, are there any other factors? Or is this just retaliation to what he says are high tariffs on India's parts on US goods? Are there any other things in the mix? Yes.
No, I'm coming to many other things in the mix, but I think on tariffs itself, the fact that India has reacted in the way it has, and India is not rushing in to give concessions or to renegotiate, and our Prime Minister's message is very firm. Our Prime Minister is working on our own national interest. He's talking about Atmanirbhar India. So on tariffs, he has not got from India what he wants. I think the Pakistan factor certainly came in because we do know that Pakistan had been, right from the time that President Trump was re-elected in November of last year, they've gone in with these 13 lobbyist firms. There are a lot of people around Trump who are again and again and again from the 13 lobbyist firms telling him things, you know, against India and in favor of China, in favor of Pakistan. Now, we do know that this has resurrected the old deep state feelings. We do know that what happened in Bangladesh last year, a year ago, was because of the deep state in America. President Trump promised to end the deep state, but he has not. He has joined the deep state. So what is continuing is exactly what happened last year when he used Pakistan, when the American deep state used Pakistan to end Sheikh Hasina's 15-year rule in Bangladesh, working through some portions of the army and the Jamaat-e-Islami, the radical Islamist party. Now, this is what is now continuing. This is continuing because you've seen everything that's happening in Pakistan and Bangladesh today is to rile India on this subject. The deep state wants India in an unsettled neighborhood. Even on Myanmar,
right.
You know, when America first wanted to go to a deal with the Arakan army, that didn't work out. So now they're trying to talk to the junta itself and lifting sanctions on certain individuals in Myanmar on which he had put sanctions. So I think President Trump is trying to build up everything for his forthcoming negotiations with China. And we do know that in the beginning, President Trump had put a very harsh position against China, but he has backed off considerably from it. And on China, not even China buys much more oil from Russia than India. Turkey buys more oil from Russia than India, but they're not putting tariffs on them. The key is going to be the American negotiation with China, which is forthcoming. And the one, apprehension that I have on this is that are America and China preparing to go back to the Barack Obama idea of a G2? You know, that you have USA and China as the two big superpowers in the world, and they will then decide who are their friends. Of course, this will be a very uncomfortable situation. India does not want this situation at all. India has always opposed a G2 situation. India is in favor of multipolarity. We believe in strategic multi-alignment. So this is, but I think this is the core factor behind. He is thinking of what he's going to do with China, and he's building up the cards. You know, he's thinking he's taking the Pakistan card away from China. He's taking the Bangladesh card away from China. Of course, he's riling India in the process. That seems to be collateral damage as far as Trump is concerned. And he's also trying to work with Myanmar. Again, the Myanmar card, taking it away from China. So he, on these factors, I think it's building up to this core meeting between USA and China that is going to happen, they say, in September. Let us see what timing works out. And they want to do some kind of trade deal. They want to do some, and if they do a kind of a trade deal which involves a give and take, it might really mean going back to this G2. And again, Trump is going to go back on his earlier ideas, on when he was so anti-China, when he was so anti-Pakistan. It's a complete reset in Trump's global approach. But India is going to stay put on its own positions, on its own strategic autonomy, and I think we will win the day.
Yeah, no, absolutely. Just as it was getting interesting, you brought in a new aspect, right? China into the mix, and I would have loved to get Mr. Trigunyat's views as well, but we're completely out of time on this episode. But this is a platform where we can sort of continue to debate this, talk about this in terms of how this develops, and we'll have both of you back once again. Thank you very much, Madam Sikri and Mr. Trigunyat, for joining us. Really appreciate your time here. Well, that's this episode of the Global Reset. Thank you for watching. More coming up on the other side. Hello and welcome. You're watching the Global Reset on CNBC TV18 Prime with me, Prashant Nair. Now, the big story today, without any delay, is US President Donald Trump singling out India in his tariff war. Once again, he slapped an additional 25% tariff on all Indian goods, penalizing India for its continued purchase of Russian oil. Remember, he did sort of promise that something big is going to happen in the next 24 hours, and unfortunately, he's delivered. The new tariffs, which take effect from the 27th of August, bring the total US tariff burden on India to a staggering 50%. The move came after Trump, in an interview to CNBC, had said, and I quote, "They're fueling the war machine, and if they're going to do that, then I'm not going to be happy, end of quote. The White House says the order could be revised if India takes measures to align sufficiently with the US. In another instance, the order could be revised if India retaliates. Remember, Trump has upped the ante in his trade war with India, slapping unilateral tariffs after months of stalled talks. The US president accused New Delhi of blocking market access for American goods and took aim at India's growing alignment with the BRICS bloc as well. Well, there have been many things. It's not just one thing. India, in turn, has had called Trump's threats, quote, unfair and unreasonable, end of quote, setting the stage for a fresh showdown in global trade diplomacy. Let's also hear what Trump had to say at that press conference about the tariffs that he imposed.
Please. Indian officials have said that there are other countries that are buying Russian oil.
It's okay.
Like China, for instance, buys more.
Yeah.
Why are you singling India out for these additional sanctions?
It's only been 8 hours, so let's see what happens over the next.
Sanctions.
You're going to see a lot more.
So this is a taste of.
You're going to see a lot more. You're going to see so much secondary sanctions.
A lot more. Meanwhile, Prime Minister Narendra Modi has given his first very reaction to these tariffs. Listen in.
हमारे लिए अपने किसानों का हित सर्वोच्च प्राथमिकता है। भारत अपने किसानों के, पशुपालकों के और मछुआरे भाई बहनों के हितों के साथ कभी भी समझौता नहीं करेगा। और मैं जानता हूं व्यक्तिगत रूप से मुझे बहुत बड़ी कीमत चुकानी पड़ेगी, लेकिन मैं इसके लिए तैयार हूं। मेरे देश के किसानों के लिए, मेरे देश के मछुआरों के लिए, मेरे देश के पशुपालकों के लिए आज भारत तैयार है।
Okay, how's this going to play out essentially is the question. So let me get into experts in diplomacy, veterans really, former diplomats, Ambassador Anil Trigunyat and Veena Sikri onto the program. Thank you both very much for joining us. Mr. Trigunyat, if I can ask you, sir, I mean, how do we even talk through this? 50%. I mean, basically, if this is implemented, there is this 21-day window. Basically makes any exports unviable, right? I mean, it's just the absolute the tariff level. What is your sense? Will this be negotiated lower, and what's the path forward?
Well, I think that these are like those terrorist strikes. These are tariff strikes. And this is the fondest tool that President Trump loves to deal with and handles. It's like a toy for him. And because he's totally taking an irrational approach, making all the unjustified decisions, especially against India, because we have tried to tell him that it was with concert with the United States that India had been buying it, of course, for its own national interest. The Russian oil was, and India became the largest supplier of diesel to the United States. So they have been buying it, so that stabilized the whole market. But he has put everything on top down now. So he is trying to completely invert the whole thing and put blame on India. That is totally unfair. And of course, with President Trump, I think that you can't expect to reason out with him. We have seen what he has been doing in the last 6 months. He's just been imposing tariffs on every country. So we were, I'm quite sure, prepared for this kind of behavior and approach, even though some people would be thinking that we have so-called global comprehensive strategic partnership and this will pass over. Now you can imagine when we are negotiating a trade deal, which was almost done on July 6th, and he didn't like it, so he went it back. So when you are doing the trade, why do you then impose tariffs in the meantime or increase them? But he did, first 25, and he brings about the Russian angle to it, and he starts forcing India. Now, we don't know what kind of secondary tariffs he's going to impose on the European Union or Americans themselves, because they are also importing large quantities from Russia. So this kind of a hypocrisy, the world knows about. So just because they happen to be a superpower, so-called largest economy in the world, will have impact on themselves also. So this is kind of harakiri that they are trying to commit. And the impact of it will be known in due course. But in the meantime, India will have to brace for it. We'll have short-term problems. There will be, as Prime Minister said, that we have these red lines which cannot be left to anybody's manipulation, irrespective of whether you are a hyperpower or superpower or a partner or otherwise. So India wants good relations with the United States, wants fair relations, normal relations, but not when you are putting a gun on our head. So I don't think that's going to happen. In my view, India will look for more diversifying its markets and also trying to create more self-reliance and so-called Atmanirbharta. Now we have many options. I don't know if we'll go that path. Firstly, is to reciprocate the tariffs that we had done last time in the Trump 1.0. So it is not the first time that he's doing it. Last time also he did it. He also took us out of the GSP regime completely, saying that India is a developed country. Why does it need it? Now, the same kind of a thing can happen. This time, India had started with unilateral concessions on certain items. Even I believe that we were ready to give 0% tariff on the industrial goods, but they want to have the whole hog. Which is not possible for India. Secondly, we are talking of some kind of a digital tax. I was just seeing some stats today that there are about $85 billion that some of the big American companies earn here in India. And they take it. That is the total quantum of the trade that exports that India conducts. So if we intend to do something about it, that is one of the options that is available to us. Of course, we'll have to now look at other options very, very seriously. And if the trade meeting takes place as it is said on 25th, 26th of August, we'll have to see where we go from there. But I believe that there is something more left. That is, tomorrow is the deadline, I guess, for the Russians. So let's see how the Russians behave. But we have seen he's exactly using the same methodology that he had used against China.
No, absolutely. I mean, by the way, to what you said, right? The one option is retaliate, but I think you've seen the statement, right? I mean, it is firm. It is saying it is unfair, calling the US out, but kind of stops short of doing anything else after that. And maybe that is to keep the window open, because if you kind of sort of throw up your arms and say, well, it'll perhaps cause a break, which you don't want. Ma'am, if I can come to you, your first thoughts in terms of how this goes forward.
Well, I must say that I think India's reaction has been correct and very firm. This is two important points. It's a very calm, cautious, and collected reaction. And we are not ruling out negotiation. I think the important point is the negotiating table is open. We are prepared to go to the negotiation table. And we are prepared to talk some more to the Americans. We're not going to walk out of the talks. That's very important. But we have a 21-day window to complete that till the 27th of this month. And certainly the talks are scheduled in Delhi for the 25th. But I think that looking at the bigger picture, there is an important aspect, 2 or 3 important aspects that we have to look at. First of all, India will not overreact because there are a lot of windows in this 50%. There are a lot of exemptions. The pharma is exempt, the iPhones are exempt, many aspects are exempt. Prime Minister Modi has been absolutely clear in what he is on his red lines, that he's not going to give in on dairy or agriculture, on the interests of the farmers and the fishermen and the entrepreneurs and the micro, small and medium enterprises. So these red lines are known. I don't think there's going to be a change. I think certainly we will be looking at the broader picture as well. I think the biggest factor that has been hit in this trade war is the trust. The trust factor between India and the USA. This has taken a big beating, and India, we know there's already a report today that we have, put a stop on certain defense purchases like maritime aircraft and so on. I don't know whether more of this can happen, but this trust factor is the most important factor that we have to look at, because for rebuilding, for getting back to where the relationship was, will this trust factor be able to revive so quickly? I think diversification is a very important factor. There's already talk that India's jewelry exporters may now set up shop in Mexico or set up shop in Dubai, from where they will be able to export much easier to the USA. There are a lot of ways out of the situation, and I'm sure that we can negotiate ourselves out of the situation. We can take steps on diversification. We can take steps on the ways in which our manufacturers can do. But I think this overall trust factor is vital as we carry this strategic partnership forward. It's an amazing factor that people are looking at, that every 27 years there comes this huge bump in Indo-US relations. In 1971, in Bangladesh Liberation War, we saw a huge bump. 27 years later, 1998, there was Pokhran and all the sanctions were there. And now we are again facing this situation 27 years later. And I must say that when you have this kind of a trust factor breaking down, it does take time to rebuild. It does take time to rebuild. I do see that India is going to adhere to its strategic economy. I must say also that one more factor that has come out in all the calculations, that even if you have this 50%, the total impact, the impact of the 25% has been calculated. It's not going to be that much on India's GDP. And even if you take the 50%, it's not going to be that much given all the exemptions. Maybe 0.2%, maybe 0.3% or 0.5% at the maximum. So India is within its rights, A, to continue to be calm and collected and cautious, B, to continue the negotiations, and C, to look at this global reset, which is the title of your program, which is possibly being forced on us, but which may in the long term be a good thing, because we have to adhere to our strategic autonomy. I do see this. You know, this talk about the anti-BRICS and de-dollarization. India has never been a part of that. We are doing swap currency arrangements. We're doing, trading in national currencies, but we are not against the dollar. So this kind of building up, and whether Trump is doing it for his own internal consumption, there are legal challenges in the US to this. I think all these come into factor, but I don't think we should be very calm in building up our responses. This is vital, and I think that's exactly what we're doing.
Absolutely. I mean, I had Jim O'Neill, the man who coined BRICS back in the day, on this program a few weeks back, and he said his point was, well, what has BRICS really done in the last 20 years since that acronym was, coined in that sense? So actually, it makes no sense to call out BRICS and say, well, BRICS is doing this or that. That was from the man who sort of, coined it in the first place. I have to take a break, both of you, so stay with us. I want to come back and ask both of you a simple question. What went wrong? Between India and the US, because I think if we can identify that, then it gives us maybe a way to think about what can be done to fix what went wrong. I think because surely it is not access to agriculture like what the US has been saying or had been saying for a while. It's now, of course, also Russian oil, but is that even it, or is there something else? So we'll come back and discuss that. Just a couple of more sound bites I want to sort of leave you to hear as we take that break. Coming right back.
The president is clearly very frustrated about the unwillingness of the Russians to agree to a ceasefire and to end this war. And that frustration is reflected in these recent decisions. The entire context has changed since a couple of years ago, when people were focused on inflation and price controls and all of that. The frustration of the president, I think, has to be addressed in some way, because this war has gone on too long. It has killed at least 1 million Russians, if not many more Ukrainians. And I think, there's a point where India and the United States have to have a conversation at the highest level about it. I would also say that these conversations are best done privately. The US and India can't afford to row away from each other.
Unless there's more of a willingness on the part of the U.S. side to relent and make some of its own concessions, it could be difficult to come back to the negotiating table. I think in the meantime, here, India's ongoing talks with the EU about the trade deal they're trying to come out with becomes much more important. India needs to look for ways to defray the potential damage or to ease the potential damage of these tariffs that could be coming from the US. And in that regard, getting that deal with the EU by the end of the year, the EU, of course, being another key destination for Indian exports, that would be big. That would be significant. I think it could give India a bit of breathing room. But no, the US-India relationship is experiencing one of its most difficult moments. I'd say its most difficult moment over the last 2 decades of strategic partnership.
Hello and welcome to News Center. I'm Parikshit Luthra. The top story this evening, US President Donald Trump's new tariff regime takes effect today. More than 90 countries face higher tariffs on their exports to the US. In a post on social media, President Trump claimed that billions of dollars were now flowing into the US due to hike in tariffs. Exports from India face a 25% tariff starting today. This will double to 50% from the 27th of August after President Trump penalized India for importing oil from Russia. Textiles, leather, engineering goods, agri and seafoods exports are expected to be hit the hardest by the increase in tariffs. However, certain sectors are exempt. This includes goods targeted under sector-specific duties such as steel and aluminium, pharmaceuticals, semiconductors. India's electronic exports are also exempted at least till the 14th of August as things stand. Prime Minister Modi pledged to protect the interests of farmers without explicitly mentioning the tariff hikes by the United States. Speaking at the Swaminathan Centenary International Conference, which is in the memory of the father of India's Green Revolution, Modi said that he is ready to pay a heavy price if needed. The Trump administration has given India a 21-day window for further negotiations. Sources have said that the Indian government is working towards finding a solution for a win-win deal. To take this forward, we're now joined by Surjit Bhalla, who is an economist and former executive director for the International Monetary Fund. Mr. Bhalla, thank you very much for joining us on the program. How is this 50% tariff going to impact the Indian economy?
Well, before we decide how it's going to impact, as you yourself mentioned, it's a long road to 50% becoming effective. I personally don't think we will see 50%. There's plenty of time for negotiations. We have been negotiating for the last 5-6 months. And this is part of a chess game. And, you know, Indians are the best chess players in the world right now, and whether men or women. And I hope and believe that our negotiators are also playing a chess game.
Right. But do you also believe that this current crisis is an opportunity to possibly usher in the next phase of reforms, maybe open up our markets more?
100%. You know, I have said this from even before Trump's reciprocal tariffs entered the picture. We should be reforming, that it is in our interests to do reforms, and that remains or should remain the only guiding principle as far as we are concerned. The rest is, as I said, noise, optics, and a chess game. We should be singularly focused on bringing about economic reforms, particularly on the trade side. Indeed, it's an area, and agriculture, the two areas that have been immune, and especially agriculture, from any reform whatsoever for the last 35 years. So this is an opportunity, and I hope we realize it. And it's a difference, if I can add, between us, India growing at 6.5%, 6 to 6.5, give or take, and India growing somewhere 7.5 to 8.5% per annum in terms of GDP growth. That's the difference.
Right.
If we are
Mr. Bhalla, you spoke about...
Yeah. Go ahead.
You spoke about agriculture, Mr. Bhalla, and, we have been drawing a red line, saying that we will not bring agriculture and dairy to the negotiating room at all. Many decades have gone by, and this has been a problem that negotiators from different countries have had with India. Do you think we can now comfortably open up our agri and dairy markets?
Well, rice exports have been a big success. So I don't know where we come up with the myth that agricultural exports or opening up agriculture will hurt India or the farmers. Mind you, I would like to remind the listeners and you that, we didn't, after the failed agricultural reforms, the Supreme Court ordered a survey of farmers in India to see whether they were in support of the farm laws. And something like 87% said they were. So I think, who are we protecting? If the farmers wanted reforms, all of them, 87% is virtually all, except a few large farmers and interest groups, we should be opening up. I think it is a win-win. Agriculture, we are now in 2025. We have surplus grain. We are exporting, and our exports to the US in terms of agriculture has been a success story in recent years. So why not try and open it up? So I think the big mystery to me is this projected belief that opening up of agriculture will be bad for India or bad for the farmers. I think it's just not supported by any empirical evidence whatsoever. It's a belief, but we can believe whatever we want to. But I think if we were to open up agriculture, and there's nobody saying we should be 100% opening up tomorrow, but we should have a graduated scale with some large cuts in the beginning and large reforms in the beginning, and then move to a open agricultural system, just like we have. Nobody is telling us on what to do on software. Nobody is telling us on what to do on other export items that we have. And I quite honestly don't understand why it's being projected that the farmers are best helped by the kind of protection that we are providing them. Just the contrary. So, that is why I've been saying this is a huge opportunity for India, for the farmers, to bring about reforms. Something, as you mentioned, has not been touched in agriculture for a long, long time.
When you speak about trade, sir, the sense that we get that we're willing to open up India to industrial goods from the US almost at zero duty. When it comes to reforms on trade, what do you think is the kind of reform that we need? you know, the reforms that we had in the early 90s, that ushered in decades of growth. What is this kind of reform that we need in trade to open up markets to win global markets?
Well, we need to open up trade, which means less tariffs, which is exactly what Trump is, coincidentally, Trump is arguing. But just because Trump is saying it doesn't mean he's not telling what is accurate. So we need to lower tariffs, and at the same time, we need to deregulate. And this is something that the government itself has been saying. In the budget on February 1st, they went out of the way to say that deregulation, labor market reforms, deregulation, and this is independent of tariffs, was the #1 agenda item as far as the government was concerned. So, you know, it's not just tariffs that need to be changed. We have to look at the fact that our manufacturing, share of manufacturing, has stayed stagnant for decades. And this is where we have a lot of low-hanging fruit if we were to cooperate with reforms. So a lot of low-hanging fruit in manufacturing. And, you know, what I like to point out is, look, what is our big success story? Our big success story is software. Our big success story is pharmaceuticals. Now, the government has had very little role to play in the promotion of pharmaceuticals and especially in the promotion of software. That is the strength of India, that we have been able to do so well, a world leader in software and pharmaceuticals. So if we can do it there on our own, maybe less government involvement in policy making will help us to do the reforms and help us to go forward in manufacturing and in agriculture, where there's massive government intervention at all levels. So the lesson is less government intervention, the better off the country will be. And indeed, that is what Mr. Modi had promised in 2014, maximum governance. So, or minimum, I guess, whatever the slogan was.
Right.
Yeah, just,
you know, Mr. Bhalla,
intervention by the government will do us a lot of good.
You know, Mr. Bhalla, the argument also being made is that Trump is not painting the right picture. When he's calling India the tariff king, he's not completely right, because India's agriculture subsidies, tariffs, average weighted tariffs are similar or even lower to some of the other South Asian economies. What do you think is the guiding principle that India needs to follow when we make these comparisons and try to defend ourselves?
Well, you know, we have to be very careful when we say what our level of tariffs are. So it is not the tariff that is actually paid, which is you look at the total volume of imports and thereby decide. Many of the imports, many of the tariffs are non-price tariffs. So therefore, that's where a lot of the intervention is, and by the government, and what hurts the economy much more than a tariff rate going from 10 to 15 or 15 to 25 or vice versa. So it's a non-tariff barriers, which are the real killer for growth and the real killer of reforms. So, but I think once you have, now that Trump has made tariffs as the #1 slogan or the #1 item, behind the scenes is really bringing down non-tariff barriers. And if you look at India in terms of the non-tariff barriers as well as the tariff barriers, we are probably, very close to the royalty, may not be the king, but very close to the royalty in terms of high tariffs.
Right. And very briefly, sir, we're running out of time. Even if we manage to keep the tariffs at 25%, or if we're not able to have a trade deal with the US, how badly are we going to be impacted because of a 50% tariff?
No, look, I really don't. I dread to think about a 50% tariff as what it'll do to India and India's growth prospects. So I think I'm comfortable hoping that, all sides will do the right thing, and that we will bring about reforms, and that there won't be that much need for 50 or even for 25% tariff. I think what we were constantly looking at is a tariff rate of somewhere around 15%. And that will give, India, if you're thinking of Viksit Bharat, if you're thinking of India being at the forefront, you need tariffs in the nature of around 15%, as well as deregulation in India, which I think will automatically, hopefully automatically follow.
All right, thank you.
Speculate on what 50% will do. I think it'll be disastrous. That's an easy conclusion. And, I'd like to see this as a chess game being played out with international optics all over the place. And
right. Thank you so much, Mr. Bhalla. I've unfortunately completely run out of time, but those are very important points. This is a critical time when India should go for those big bang reforms. Thank you once again for being with us on the show. We're taking a short break, but don't go anywhere. We are going to be getting you more important news. Welcome back. You're watching News Center, and we are looking at the fallout of Trump's announcement of an additional 25% tariff on India as a penalty for import of Russian oil. He has said that if the negotiations don't lead to a positive result and India does not stop buying Russian oil, then these tariffs would come into effect on the 27th of August. But what will be the larger impact on the long-term India-US strategic relationship? Joining us on the show is Vikas Swarup, former Indian High Commissioner to Canada, former spokesperson of the Ministry of External Affairs. Thank you very much for being with us in the studio, Ambassador Swarup. We were among the first countries to start negotiating a trade deal in February. What's gone wrong?
I think obviously what has gone wrong, Parikshit, is the fact that we have not caved in to the US pressure. And I look at these imposition of these fresh tariffs on India as part of the maximum pressure strategy of the so-called art of the deal. You know, ratchet up the pressure on us to such an extent that we are forced to shift the goalpost. So the fact that we did not agree to the US maximalist demands on access in agriculture, dairy and genetically modified foods, I think is what has led to the imposition of these tariffs.
Right. Is it only about buying Russian oil?
No, I think it is much more than that. So let's look at this in totality. I think if you look at the way things have evolved in the India-US relationship, I think first of all, we have to acknowledge the fact that Trump is indeed miffed with India. He's miffed with India, first of all, for our membership of BRICS, which he sees for some reason as an anti-US alliance, which is hell-bent on creating an alternative currency to the US as the world's reserve currency. That's number one. But more than that, I think he's miffed at our repeated snubbing of his role as the chief architect of the ceasefire between India and Pakistan. Because now Trump has, I think, repeated about 25 times that he was the one who got India and Pakistan to agree to a ceasefire. He was the one who got India and Pakistan to stop a so-called nuclear conflagration in the subcontinent. And contrast the approaches of the two countries. On the one hand, you have Pakistan, which has publicly acknowledged Trump's role in bringing about the ceasefire and has nominated him for a Nobel Peace Prize. And on the other hand, you have India, which has declared in its parliament that there was no external mediation at all and that the ceasefire was mediated directly between the DGMOs of India and Pakistan. So obviously Trump would be miffed. But more than that, I think this is also a signal to Russia, because Trump is now frustrated at his inability to bring about a ceasefire between Russia and Ukraine. Remember, he had promised that he would end hostilities in that part of the world within 24 hours of assuming office. Well, now it's been much more than 24 hours, and he's not been able to get the two warring parties to agree to a ceasefire. So this is also a signal to Russia that if you don't play ball, then we are ready to cut off your economic supply chains.
Does India have any leverage available? You're already saying that he's miffed with us for not thanking him, for not acknowledging his role. But at this point, in the next 21 days, do we have any options left in the diplomatic toolkit?
Of course, I think, as President Trump told President Zelensky that you have no cards, I don't think it's correct to say that India does not have any cards. Let's not forget, we are the fastest growing major economy in the world. We are the fourth largest economy in the world. Many American tech companies, for them, India is the largest market. Then we have a 5 million strong Indian-American diaspora, which wants closer ties between India and America. We have 330,000 Indian students studying in America who are contributing to the US economy. So I think we do have cards. And more than that, we are the only strategic bulwark to China in the Asia-Pacific region. And Trump knows that. Apart from that, I think we are the jointly developed by ISRO and NASA. So I think we do have some cards, but that does not mean that we have to play all our cards at once. Right now, I think the need of the hour is strategic patience. We have to wait out and see. Maybe on the 25th of August, we will have American negotiators come in once again. We will see whether we can sweeten the deal to a certain extent, which can appease the Americans. And I think we should wait this period out, because there is also a possibility that there may be a ceasefire between Russia and Ukraine. President Trump has declared that he wants to meet President Putin and President Zelensky in probably a week's time. And if I think a Russia ceasefire comes along, then I think the Russian sanctions would be off the table.
Should India even consider retaliation?
India should definitely consider retaliation if even after 6 months, these tariffs are not removed, because then I think, the exposure that American companies have to India also should be part of our matrix.
When it comes to trade protectionism, Donald Trump calls us the tariff king. Is it time for India to consider reforms for the long term, use this crisis as an opportunity? Is it time to drop some protections in agriculture and dairy as well?
I think it is definitely time for India to drop some protections. I think some sectors need to be protected. Particularly, I think genetically modified crops, will have a huge impact on the livelihoods of our marginal farmers. And don't forget, 45% of our population is engaged in agriculture. So I think dairy, marine exports, agriculture, these are certainly red lines for us. But that does not mean that we should not open up other sectors of the economy. Because if you look at it, Indian manufacturing, I think, has been far too much shielded from international competition. And that is why Indian products are still not competitive in the international markets. We spend just a fraction of our GDP on R&D compared to 2.5% in China. So unless we allow fair competition to come in and this, increases the competitiveness of Indian industry, we will not be able to compete with the rest of the world. So I think we must use, as you rightly said, this crisis as an opportunity to open up the Indian economy. I had just read that there are 1,450 compliance burdens on MSMEs in India. Now, that is just far too much. So maybe it's another 1991 moment for us. It's time for the second phase of the opening up of the Indian economy, making it more competitive and turbocharging it.
What would we stand to lose if the 50% tariffs stay and we're not able to have a deal with Washington?
No, obviously we stand to lose quite a bit because let's not forget, 18 to 20% of our exports go to the United States. The Federation of Indian Export Organizations has said that up to 55% of India's exports to the US would be impacted by these high tariffs. Because at 50%, basically none of our products will be competitive in the US market. Because let's not forget, even the competitors we have in the region, whether it is Sri Lanka, Bangladesh, and then far afield, whether it is Malaysia, Vietnam, Philippines, they all have much lower tariffs than India at the moment, if the 25% Russia tariffs also come into play. So I think we have to absolutely ensure that we do not lose the US market for good. And I think US would also recognize that, over 2 decades, they have built up the India-US relationship. It should not be sacrificed at the altar of just these punitive tariffs.
Right. And if the deal does not happen, do you think there will be a long-term bearing, long-term damage to the relationship, which we may not be able to resolve for maybe the next 5 to 10 years? Because as we've been told by experts, once you deploy tariffs, it's very difficult to pull them back.
I agree. In fact, that's why many people are saying that Trump may go after 3.5 years, but Trumpism may remain. Because let's not forget, the tariffs are now bringing $100 billion into the US economy. And the US economy may become dependent on those tariffs to sort of balance out the massive trade deficit they have, the massive debt they have, about $36 trillion. So I personally feel the India-US relationship is far too important to be dependent on just one presidency. My sense is we will definitely outlast this particular turmoil phase. I would say this is a storm. This is not a rupture. And I think to the extent that, saner heads prevail on both sides and we are able to, pull back from the brink, I think it will be better for both the economies.
Also, would you say that what we're seeing right now in the US, Donald Trump is seeking strategic political alignment? It's my way or the highway. Either you be completely aligned with me or not at all. Do you also feel that perhaps this is time in the United States when the bureaucracy is thinking that we've invested so much in the relationship with India and we need greater strategic alignment, which we're not getting? Is that also true to some extent?
Look, India is too large and too proud a nation to ever become a camp follower. Strategic autonomy has been the bedrock of Indian foreign policy right from the 50s. We did not compromise in 1971 when the 7th Fleet was marching towards India. We did not compromise during the NPT negotiations. We did not compromise during the CTBT negotiations, the Comprehensive Test Ban Treaty. We did not compromise during the climate change negotiations. So I think that is off the table. Our strategic autonomy is non-negotiable. Our energy security is non-negotiable. Because let's not forget, the fact that India purchases Russian oil at a discount is important for our consumers, and it is also important for the global market. Because the International Energy Agency has estimated that if you take Russian oil, which comes to India, off the market completely, that leads to a 2% loss of supply. And a 2% loss of supply will translate into $6 to $10 increase of the crude price per barrel.
Right. My final question would be, is America making a strategic pivot towards Pakistan? We're also reading reports in the Pakistani media that Asim Munir may be visiting the United States once again.
I think I would characterize it the US as making a strategic mistake. If they choose Pakistan over India, then they are choosing a failed economy over the world's fastest growing major economy. And, we have much more equities with the United States than Pakistan can ever hope to have. So I think the US is making a strategic mistake. Even if there is this pivot to Pakistan, I think it will be a short term, because let's not forget, at the end of the day, Pakistan is an ultimate client state of China. And China is the biggest strategic competitor to the United States. 81% of Pakistan's military hardware comes from China. Would the US want to be in bed with the country which is the client state of China? Or you would rather be friends with the world's largest democracy?
Right, so that's an interesting note to end on, but we're living in Trump's times, and there's a lot of uncertainty every morning and at night. Let's see how we really resolve and get out of this situation. Ambassador Swaroop, it's a pleasure having you here in our studios to talk about the recent India-US trade tensions. That's all we have time for here on News Center. Thank you for watching. Goodbye.
A sharp recovery in the last hour saw the Lal Street ended higher. Nifty recovers 300 points to end about 24,600. Nifty Bank sees a more than 500 point recovery. IT and pharma are the top gainers.
Lupin, Fortis Healthcare and others surge after a strong first quarter performance. Lupin expects double-digit growth in FY26, reiterates the $250 million sales guidance for the US market. And Fortis too reports a 16% year-on-year jump. The management commits to cutting debt by the end of FY26.
Hero Motor delivers a mixed bag of earnings in Q1 FY26. Revenue misses estimates, other income and lower input costs and profits are something that we were watching out for. BHEL tanks on a weak Q1. Net losses widened to 455 crores versus 211 crore rupees for the same period last year.
Good evening. You're watching us here on Markets Forward. It's definitely been a tale of two halves. In the first half of trade, we saw a big gash in the frontline indices. There was a lot of fear around what Donald Trump's next move would be after already imposing a 25% tariff, over a 25% tariff, making India's tariffs to the US exports at 50%. And thereafter, the street shrugged off those worries and said that maybe we're okay with it. Hopefully, there would be some negotiation. And there we saw a big recovery from the frontline indices. The Nifty IT actually was the one that led that gain. This is Markets Forward, the show where we get you all key data points to get up for the next trading day. I'm Mangalam Malu, with me, Vinny Motiwala. Vinny.
Hi, evening Mangalam. So, interesting day, right? When I didn't expect this coming in through the day, opened up in the red, and look at the recovery, right? Nifty recovering around 300 points from the day's low. That is something we're watching out for. 24,600. That's a key level. Even Nifty Bank, we are seeing that recovery, 500-point recovery for the Nifty Bank. You mentioned IT. Obviously, that was leading the gains. We had pharma leading the gains. Media was the one which was managing to hold on to gains as well through the day. But a good recovery is what we've seen coming for the market. And that is what we'll watch out for if this sustains, right? Tomorrow will be key to watch out for from there.
Yep, you said you didn't expect it. Neither did a lot of those call writers who expected the market to, die in the last hour of trade from the highs. Did not expect that. And then once the market started moving higher, remember this was an already net short market where the FIs were 92% short. And today was also the weekly options expiry. So that led to some further short covering. The gain happened in the last hour itself. Quick succession post 3 p.m. Two charts that tell you the story of the day. First one is the advanced decline. That comes up for you. For most part of the day, we had the red line much above the green line. And thereafter, as we moved towards the end, the market ended virtually split right down the middle for 1,300 stocks, which ended in the green, for 1,400 stocks, which ended in the red. There you have it, those lines intersecting with the green ending above the red one. And the second chart of the day would be the India VIX. That comes up for you. For most part of the day, the India VIX was slightly high. And once we started to see recovery, the India VIX fell and ended at the low point of trade, telling you that the market believes that they have this covered. And what else do we have you covered for? For the next 20 minutes, we'll get you all the big news and big voices on the show. So let's tell you what exactly do we have on the show. We have with us some of the top stock movers. Hormaz joins in with all the stocks that move around on the big wall. Hormaz, there were a lot of movers and shakers, some in red, some in green.
A lot of movers, indeed. And if anybody would have predicted that at the start of the day that you'd have a reaction like this at the final few minutes, is definitely lying. But you'd look at the positive earnings reactions to start off with, considering we ended with a positive tilt. And Lincoln Pharma was one such positive mover in today's session, ending almost 14% higher after its results. Rain Industries was another one with a positive reaction. Kaplan Point reported results today, as did Savita Oil, both of them ending higher today. And Lupin too, the earnings outperformer from yesterday, and that spilled over into today's session as well. Among the negative earnings reactions, there were a lot of stocks that ended with double-digit losses. GPT Healthcare ended below its IPO price with this 9% cut. But take a look at the others. Lumax, Igarashi, Prince Pipes, all of them ending lower with cuts of anywhere between 10 to 12%. It was the banking stocks that led the recovery on the index today. You will not see that the gains are significant, but the lows, the recovery from the lows is a lot significant. Indian Bank, HDFC Bank was a prime contributor to the Nifty recovery, as was AU Small Finance Bank for the Nifty Bank as well. Lastly, some newsmakers today. Hero MotoCorp, after the earnings commentary, did well for itself, ended 4% higher. Avalon Technologies won an order yesterday. Godfrey Phillips, that one did well for the last 3 sessions and then saw some profit booking today. Eternal after the block deal. And Reliance Industries ending with a negative tick, but significantly off the lows of the day. Back to you guys.
Okay, thank you so much for that, Urma's important stocks that were buzzing in today's trading session. But on that note, let's bring our experts for today. And we have Amrish Baliga, independent market expert, as well as Richard Jain of Motilal Oswal Financial Services. Amrish, as well as Richard, good evening and thanks for joining us on the show. Richard, what a recovery that we've seen right today, coming in 24,340, around that was the low. And now we closed about 24,600. What are the key levels that we should be keeping an eye out on in tomorrow's trading session, especially, so that we know that is this going to sustain 24,600? Are we going to see a further recovery? What are we watching out for?
Yeah, hi, very good afternoon to everyone. But I think it was a perfect setup where we usually see recovery, because the stock index has already seen a correction of about 1,200, 1,300 odd points in last 1 month. Momentum readings technically were quite oversold zone because of this correction, and FIs had about 92% positions on the short side. So historically, we have seen that whenever markets is in oversold zone and FIs have such high short positions, the room to create fresh shorts reduces significantly over there, and which is followed by short covering move. I think a pullback move is there. Too early to say that the markets have bottomed and we would see a resumption of the uptrend over here. But at least the short-term relief could be seen, and on the higher levels, initial resistance would come around 24,750, 24,800 kind of levels. On the lower side, 24,300, 250 continues to remains a very strong support, where again 200-day exponential moving average is coming in now. So I think post the recent correction, the price-wise downside seems to be very limited from here on. Now one needs to see whether we see a time-wise correction in the short term before resuming the broader uptrend. But yes, this is the case where there are short heavy positions by FIs. So as we go towards the support end at lower levels, we would see renewed buying interest.
All right, so that's the view coming in. Roger, thanks a lot for that. We, let's get talking about some of the individual stocks that moved around as well. Hormaz obviously did tell us about some of them. Amrish, your thoughts on a couple of outperformers today? We did see, the metals pack do extremely well. HDFC ended at the high point of trade. Do you think, focus, because of the global uncertainty, now shifts back to domestic names? Some of the domestic consumption names, both staples and discretionary and financials?
Absolutely, because I think that's one segment which should outperform, and especially the consumption space, because we have seen a lot of underperformance. From them in the last 1.5 to 2 years. Especially FMCG, and to a certain extent, some of the consumer durables. So out here, I would surely say something like a ITC, Dabur, HUL. I think these are the ones which will outperform. In the consumer durables side, I think Voltas, has corrected decently well in the recent past. I think that's one stock which should, I think has seen the bottom, at least the temporary bottom as of now. And I think we should see a decent move from here.
Okay, keeping an eye out on the consumption story going forward, and maybe that could see an outperformance. But today, what was outperforming was the pharma pack. We had Lupin as well as Fortis. Both of these gained almost around 3%, and this is after their numbers came in. Let's go across to Ekta, who's here to tell us, what came out in the numbers, what were the highlights from the con call as well. Ekta.
Well, yes, for Lupin this quarter, the commentary also enthused the markets along with the numbers which came out. So they have indicated overall revenue growth to grow in high single digits. The domestic business is set to outperform the Indian pharma market for the next 5 years. Diagnostic business is targeted to become EBITDA positive by FY27. They're looking at a guidance of around $250 million in terms of US sales per quarter, and they would currently stick to their guidance of around 50 to 100 basis points margin improvement at this point. Overall, good numbers coming in from Lupin, and that's what kept the stock steady. For Fortis as well, good numbers, and the commentary also was positive. So the hospital revenue was up 18%, the margins expanded to 22%, diagnostics was up around 6.3% year on year, but margins expanded to almost 26%. They expect occupancy to improve to 72% from the next quarter. Oncology growth has been fast according to them, and high-end specialty growth is faster than core growth at this point.
Amrish, you did speak about some of the consumption names which are doing well. Do you think pharma warrants a mention? Because while it is export-facing, it is still relatively resilient when it comes to tariffs, etc. Because,
that's true.
The US wouldn't want its medical bills to go up.
No, that's true, because see, US cannot stop buying Indian pharma, period. They cannot replace Indian pharma with something else overnight. So at least, again, assuming that this tariff issue continues for much longer, at least for the time being, I think Indian pharma is spared. So I don't think there's anything much to worry about. And in case these stocks correct because of these worries, I think it's a good buying opportunity if you're talking about the next 1.5 to 2 years. I think the same will apply to as far as Indian IT is concerned, because that again cannot be replaced overnight. And the third area is I don't think US can afford expensive iPhones. So I think the electronic manufacturing which happens in India, I think even that would be spared for much longer.
Okay, that will be interesting to watch out for. Electronic manufacturing is also something we'll keep an eye out on with the pharma pack. But let's talk about Hero Motor, because that was in focus as well. The stock gained almost 3%, and this is despite a big mixed bag of numbers that came in Q1 FY26. Okay, so we had seen the profits that were aided mainly because of income and lower tax rates that came in. That was something that worked for the company. Let's actually go across to Sudarshan, who's here to tell us about what happened in the stock, what are we watching out for, what were the highlights in the con call as well.
So Hero MotoCorp announced its Q1 earnings yesterday, and earnings were slightly missed or almost in line to our expectations. But the big move in the stock price that we saw today, it came after 10:30 a.m. when company held the analyst call. So some of the takeaways from the earnings call: first, on the margin front, for FY26, the guidance is in the range of 14 to 16%. But company is saying that in the near term, margin is expected to be in the lower band of the guidance, that is around 14 to 14.5%. So that is slightly negative. Now, on the growth part, which is positive, company is saying that For FY26, industry growth range is seen around 6 to 7%, and company will maintain that. That's positive. Second, on the export front, company is expecting growth to be more than 40%, so that is taken positively. On the market share, in the retail segment, company is holding on to market share of around 31%, and in the entry-level segment, where it's the market leader, it's holding on to market share of 66 to 67%. So that is also taken positively. Last part, why there is a big move in the stock price? Because the commentary that company is given on the launches. So in Q2 FY26, company is making 2 launches in 125cc segment, and 1 launch that is company is doing in the partnership with Harley Davidson, and that launch also will happen in Q2 FY26. So because of these major launches, market is expecting that companies launching and expecting a major demand in the festive season or ahead of the festive season, and that's the reason it was a big move that we have seen in the Hero MotoCorp. At the end, it was up more than 4%.
All right, Hero MotoCorp up more than 4%. Let's get in a view coming in on Hero MotoCorp. What do you think the chart suggests, Ruchit, on Hero MotoCorp?
The chart sector is quite bullish. We have seen about 2.5 months of consolidation since mid-May in Hero MotoCorp, where 4,400 was the resistance. Recently, a couple of days ago, it said the stock gave a breakout. And if you look at the volumes in last 3 or 4 trading sessions, along with the price of move, they are much higher than the recent daily average volumes. So I think even if you look at the sectoral move, then this two-wheeler segment within the auto space is showing a signs of good trended up move and a relative outperformance. You take stocks such as TVS Motors, which is trading at its 52-week high, even in such markets. Hero MotoCorp has given a good breakout recently. So I think two-wheeler as a space should do well in the short term. And Hero MotoCorp probably around the higher side. We are expecting targets around 48.50 in next few trading sessions.
Okay, let's move on to the next stock that was in focus today. That was BHEL. Now, that fell over 6%, and this came in after a weak set of numbers was reported by the company. The firm saw its net losses widen to 455 crore rupees versus just 211 crore rupees in the last year, same time. Meanwhile, revenue from operation, that was very flat in terms of a growth. What more were the details in terms of numbers or highlights that we're watching out for now? Vamakshay is joining with us for that.
Well, Vinny, absolutely dismal set of numbers coming in from BHEL this time around. Revenue was flat. When we look at the EBITDA, the EBITDA loss that has widened from 169 crores to 537 crores, and this is mainly on account of the other expenses, which nearly doubled to almost 675 crores. The street this time around was expecting a profit to come through from BHEL, but that has not transpired. Instead, the losses have only widened further from 211 crores to 455 crores, and this weak performance is largely being led by their power segment. Keep in mind that the revenue here saw a downtick of almost 5.5%, and in fact the EBIT loss also widened from 54 crores to 510 crores. On the other hand, the industry segment did quite well, 17% growth, and the margins have improved from 4.67% to 19.32%. The ordering activity on the flip side was quite robust. Order inflow saw an uptick of almost 42%, and the order book stood at 2.04 lakh crore, which is above what the street was anticipating. But that does not take away from the fact that it was a miss as far as the earnings estimates were concerned, and therefore the stock closed lower in today's trading session.
Okay, thank you so much for that, Vama. Amrish, your thoughts coming in for BHEL? Now what should we be keeping an eye on? This quarter wasn't exciting, but overall for the sector as well as the company.
No, in fact, for BHEL, generally June quarter is a weak quarter, but unfortunately, and it's quite disappointing that the losses are widened. In fact, I was expecting the losses to be reduced because the last 3 quarters, the performance was better than at least on a Y-on-Y basis. But then this has been disappointing. So I'll not be surprised in case we see BHEL, in fact, slip below that 200 levels. But at about 180, 190, one could look at buying from a longer-term perspective because I'm quite bullish still on this sector.
Right, and in stocks and news, we have Bajaj Electrical and Prince Pipes, which fell after weak first quarter numbers, while Kaplan Point saw solid gains on a good set. Upasna joins in with the details. Upasna.
Firstly, let me start with Bajaj Electrical. Overall, it's been a weak set of numbers below what Street was anticipating. Revenue saw a downtick of 8%. While there was a one-off this quarter with an exceptional item of nearly about 6.6 crore, which impacted the margins of the company as well. Now, EBITDA margins stood at 3.1% versus 6.5% on a year-on-year basis, and PAT stood at just 1 crore around with a downtick of nearly 97%. Now, the company's key segment, that is consumer products, which forms nearly 75% of the company's revenue mix, saw downward pressure with a revenue downtick of nearly about 11% versus the other segment, that is lighting solution, which reported a growth of about 3% on a year-on-year basis. Now, coming to Prince Pipes, overall the revenue and profitability remained weak for the company. Revenue saw a downtick of 4%, PAT saw a downtick of 80%, and EBITDA margin saw a downtick of nearly about 270 basis points due to continued drop in the PVC prices. But irrespective, company has reported a volume growth of nearly about 4% this quarter on year-on-year basis. And lastly, coming to Kaplan Point, which reported a strong set of numbers, the revenue saw an uptick of 11%, net profit saw an uptick of 23%, and EBITDA margins also increased sharply from 33% to 35%. Now, US revenue saw a growth of nearly about 36% on year-on-year basis, which was the main growth driver for the company.
Okay, Upasana, thank you so much for that. Ruchit, any of these names that you will be looking out for? Kaplan Point, Prince Pipes. Prince Pipes has seen a significant correction, right now after this earnings, and in the last 1 month also has not done anything exciting. So on the charts, would that be something you would watch out for?
I think amongst all these three names, only Kaplan Point is the stock where chart structures are a bit positive. Although a good consolidation has been seen, but at least the recent past indicates a good support base buying near 1800, 1900 kind of range. And even today, along with the recovery, the volumes are quite good. So both other names, Bajaj Electricals as well as Prince Pipes, they're still in downtrend, no signs of reversal. But if one is looking for a bit delivery-based buying for maybe 1 or 2 quarters, then Kaplan Point can be considered at current levels.
All right, Amrish, do you like any of these?
In fact, Kaplan Point I don't track. Bajaj Electrical was a disappointment, but the stock has bounced back a bit. I think it's a selling opportunity. Prince Pipes has been an underperformer for a long time. In this space, I would surely prefer something like a Phenolix Industries or a Astral as compared to Prince Pipes.
Okay, gentlemen, thank you so much for joining us and giving us your insight in terms of individual stocks as well as the market. But on that note, we're going to step into a very short break. We'll get you the top corporate voices along with the key market events to watch out for in tomorrow's trading session after this break.
You've been watching us here on Markets Forward. We told you about what the way forward for tomorrow's trade would be, but let's also get you some corporate voices that we had. Jindal Stainless, the stock slips in trade today. Despite reporting good set of numbers, the management says the stainless steel industry is not anticipating any impact of Trump's tariffs since it's already in the 50% tariff bracket. Also said US is a small part of sales for the company. The company is guided for its volume growth in FY26 to be between 9 to 10%. Also, its consolidated EBITDA per ton to be around rupees 20,000.
Next up, we spoke to Bharat Forge. The management believes US President Donald Trump's 50% tariff on India will cause pain to any industry in India. The management is optimistic that there will be some political resolution to the tariff issue sooner than later. The company's exports to the United States are around $200 million with a revenue exposure of 10%. The management says that due to the tariff, it has taken a hit of 14 crore rupees in FY26, while noting that significant capital investment had been made over the past 2 to 3 years in the United States market, and the management guides that the defense business too sees a 15 to 20% uptick and is extremely bullish about aerospace business.
Right, that's not all. We also had the management of Torrent Power joining us on our channel. It says that power demand is subdued due to the early onset of monsoon and the higher LNG prices. However, this has not affected growth and expansion plans of the company. The company is exploring coal assets as part of both greenfield and brownfield thermal asset expansion. Also said it has a strong balance sheet.
And before we wrap up Markets Forward today, we bring you the key events to watch out for in tomorrow's trading session. And for that, we have Upasana to take us through that. Upasana?
Well, first up, let us look at the important results that we'll be closely tracking for tomorrow. Companies like SBI, Tata Motors, Grasim, Voltas, Siemens, HAL, InfoEdge and GRSE will be reporting their numbers. Now let us look at the key stocks that will be in focus on the back of corporate action. Paris Defense tomorrow marks as the record day for the dividend. Also, Nestle India will be in focus as bonus issue in the ratio 1:1 is scheduled for tomorrow. Sandur Manganese and Iron Ore also in focus as board will consider bonus issue for tomorrow. Now let us look at the global cues. France and Canada will be reporting its unemployment data, while Russia will be reporting its GDP and inflation data. Now Trump sets August 8th as the deadline for Russia-Ukraine peace deal. Trump will also host leaders from Armenia and Azerbaijan at the White House on Friday, that is tomorrow. So we'll be keeping a track of that as well. And lastly, the most important cabinet meeting is scheduled for tomorrow, wherein PM Modi will discuss the impact of tariffs with various ministers. So we'll be looking out for that as well. So all in all, looks like a power-packed day tomorrow.
Indeed, a power-packed day tomorrow. Upasana, thank you so much for that. We will obviously watch out for what takes place overnight with Donald Trump tariffs and all that takes place as well. With that, we wrap up on this edition of Markets Forward. Thank you for watching. We'll be back with more news and updates on the other side.
Hello and welcome to Business 360. I'm Archana Solanki. Here are the headlines we're tracking this evening. More than 90 countries face higher taxes on their exports to the US starting today. India faces a 25% tariff rate. This will double to 50% from the 27th of August as President Trump penalizes India for importing oil from Russia. Prime Minister Modi pledges to protect the interest of farmers after US President hits India with the highest tariff rate in the world. PM says he's ready to pay a heavy price. Government sources say India will try to negotiate with the US as the 50% tariff rate takes effect only after 21 days. Textile, jewelry, engineering and other industries fear a standstill on exports. Many say a 50% tariff rate is similar to a trade blockade, but India Inc. remains hopeful of a resolution. Indian economy braces for a growth hit as Trump doubles the tariff rate. Citi projects GDP growth to be impacted by nearly 1%, expects rupee to come under pressure as capital flows are likely to slow down. Russia's President Putin will visit India later this year, says National Security Advisor Ajit Doval, who's on a visit to Moscow. Prime Minister Modi will visit China for the first time in 6 years on the 31st of August. Chinese embassy calls both nations to deepen trust and widen cooperation. Kremlin says US President Trump and Russia's Vladimir Putin have agreed to meet in the next few days, says the Kremlin. Ukraine's President Zelensky says Russia seems more inclined to a ceasefire now. A roller coaster ride on Dalal Street, Sensex and Nifty stage a dramatic recovery in the last hour after declining to a 3-month low. Rupee gains marginally against the dollar as dealers suspect RBI intervention. Shares of Zomato parent Eternal exchange hands in a block deal worth over 5,600 crore rupees. Alibaba-backed Antfin is likely to have exited the company. This will mark Antfin's second exit this week after Paytm. SoftBank books a profit of nearly $3 billion in the first quarter. Tech investments, especially in Nvidia, boost profits. The value of the Vision Fund rises $4.8 billion thanks to gains from listed companies like Swiggy. Rescue operations continue for the third day after a cloudburst in Uttarakhand triggered a landslide. At least 6 people are dead and dozens feared missing. Over 150 people have been rescued so far and over 270 people relocated to safer areas. Congress MP Rahul Gandhi accuses the Election Commission of colluding with the BJP in a massive voter fraud, claims there was a sudden addition of 1 crore new voters between the Lok Sabha and Maharashtra state elections, adds that a Congress probe found over 1 lakh fake voters in Karnataka's Mahadevpur seat. The Supreme Court dismisses Justice Yashwant Verma's plea against the in-house committee's report on the cash pile found at his residence. The verdict sets the stage for an impeachment motion in Parliament. All right, the top story this evening. US President Donald Trump's new tariff regime takes effect today. More than 90 countries face higher taxes on their exports to the United States. In a social media post, President Trump claimed that billions of dollars were now flowing into the United States due to hike in tariffs. Exports from India face a 25% tariff starting today. This will double to 50% from the 27th of August after President Trump penalized India for importing oil from Russia. Textiles, leather, engineering goods, agri and seafood exports are expected to be hit the hardest by the increase in tariffs. However, certain sectors are exempt. This includes goods targeted under sector-specific duties such as steel and aluminium, pharmaceuticals and semiconductors. India's electronics exports are also exempt, at least till the 14th of August as things stand. Prime Minister Modi pledged to protect the interests of farmers without explicitly mentioning the tariff hike by the US. Speaking at the Swaminathan Centenary International Conference, which is in memory of the father of India's Green Revolution, Modi said that he's ready to pay a heavy price if need be.
हमारे लिए अपने किसानों का हित सर्वोच्च प्राथमिकता है। भारत अपने किसानों के, पशुपालकों के और मछुआरे भाई बहनों के हितों के साथ कभी भी समझौता नहीं करेगा। और मैं जानता हूं व्यक्तिगत रूप से मुझे बहुत बड़ी कीमत चुकानी पड़ेगी, लेकिन मैं इसके लिए तैयार हूं। मेरे देश के किसानों के लिए, मेरे देश के मछुआरों के लिए, मेरे देश के पशुपालकों के लिए आज भारत तैयार है।
Meanwhile, the Trump administration has continued to defend Washington's additional tariffs as a response to India buying Russian oil. Now, White House trade advisor Peter Navarro called India the Maharaja of tariffs.
The fact that India is the Maharaja of tariffs. It's the highest tariffs in the world, charging on American products, and it's got high non-tariff barriers, so we can't get our products in. So we send a lot of dollars overseas to India to buy their products in an unfair trade environment. India then uses American dollars to buy Russian oil. Russia then uses those American dollars that come from India to finance its armaments to kill Ukrainians. And then American taxpayers are then called upon to pay for the weapons that have to defend Ukraine against Russian armaments paid for by American dollars that came from India. That's got to stop. That math doesn't work. The president understands the connection between economic security and national security, so that was the bottom line there.
And staying with tariffs, the Trump administration has given India a 21-day window for further negotiations. Sources have said that the Indian government is working towards finding a solution and aiming for a win-win deal. Parikshit Luthra now joins us on how crucial these 21 days are and what impact it could have on relationship between the two countries. Parikshit.
Well, CNBC TV18 has learned from sources that while India considers the imposition of penalty to be unfortunate, the focus will now shift to negotiations and back-channel talks to find a way out. The actual date of imposition of this penalty is after 21 days, and sources say this is to give space to negotiations to find a way around additional tariffs. India will try to negotiate a solution in the next 21 days within the larger ambit of the bilateral trade agreement. India hopes to work towards finding a solution which is a mutual win-win for both sides. Sources adding that it is important to take a long-term view on the larger India-US partnership built over decades. Also, purchase of Russian crude is not being seen as the only reason for US to impose additional tariffs. This is because China too is a big buyer of Russian crude. This is being seen as a negotiating tactic to put pressure on India in the trade talks. Now, when it comes to crude purchases, Indian oil PSUs have been purchasing crude oil from all over the world and are guided by the best practices and prices. Oil imports from the US have significantly gone up in the last 6 months and are up by approximately 120% this fiscal. Indian PSUs are buying oil and gas from US companies and will continue to increase purchases. So India will look at ways to resolve the situation, keeping in mind that India shares very close linkages with US industry and businesses. Overall, if you look at major buyers of Russian crude, it is first China at 47%, India at 38%, EU at 6%, and Turkey at 6% as well.
All right, thank you, Parikshit, for that. Moving on, industry bodies have said that a 50% tariff rate is similar to a trade blockade and are seeking government intervention. Manisha Gupta has more on the impact of the higher tariffs on specific sectors. Manisha, who will be the worst hit?
Well, dozens of sectors will bear the brunt of Trump's tariff take. Let me take you through the gems and jewelry industry first. And U.S. is the largest export destination for the industry, accounting for $9 to $10 billion annually, which is almost 30% of overall exports. The fear of higher tariffs has led to a 75% drop in exports in the month of July. As things stand, all exports have been suspended. The Jewelry Export Association is seeking government intervention and has requested state governments of Gujarat and Maharashtra already to provide relief to the workers. Next on my radar is the textile industry, where the U.S. accounts for more than $8 billion in annual exports. This is 35% of India's overall textile exports. Industry believes that the U.S. buyers will not accept such a steep hike in prices. They have also halted all shipments to the U.S. and trade has completely stalled. The Federation is calling for support from the government, including the removal of 11% import duty on cotton. They have also asked the government to release cotton stocks to cushion the impact. Another industry that will be impacted is the seafood. Total annual exports to the U.S. stand at nearly $3 billion for this one. The Industry Association is estimating loss of 24,000 crore rupees. They believe that India is at disadvantage compared to other countries and have called on the government to explore alternative markets. And finally, it is the Rice Exporters Federation also fearing that it could lose out to Thailand, which faces a much smaller tariff at around 19% compared to India's proposed tariff rate of 50%. The rice exports last year was worth $42 million. The Industry Association has said that trade stands suspended as they await clarity. These are just some of the worst affected industries due to the U.S. tariffs. Here are the reactions from the corporate leaders on the U.S. tariff hikes and its implications.
For Bajaj, I can tell you in a word that we are quite unconcerned, and I'll tell you why. Our exports to the US are basically in two brands, KTM, that's about 10,000 vehicles a year, and Triumph, which is about 5,000 vehicles a year. So, firstly, it's 15,000 vehicles a year in a volume of about 5 million vehicles. So that's less than 0.5% as far as volume is concerned. Nevertheless, it's an important market. It's a very profitable market. So it's not a business we would like to lose. And I don't think we are going to lose this business. And
it's very difficult for any industry to mitigate a 50% tariff.
Yeah.
I mean, let's understand that. That's impractical. We've been talking to our customers. The customers understand this. They're supportive. And they all believe that there will be a political solution on the table sooner than later. We have taken a tariff hit of about 14 crores, okay, which is roughly about $1.6 million on an export of roughly 200 million.
If there is a 200% or thereabouts, I'd say anywhere from 20% to 200% tariff. 70% of the drugs in the US are imported. 50% of generics are imported from India. So obviously, high tariff will have an impact on drugs that are imported from India.
They want our US part of the business to be moved out to Bangladesh, Indonesia, and Vietnam, where we have our facilities. And I think that would be a death knell for at least for this particular season, which is coming up for the Indian industry, because 50% tariff, most of the retailers won't be able to absorb or have any mitigation.
When it comes to India and when it comes to the tariffs that he's imposed, the 25% first and now 50% tariff, I think that there are two things. One is we are a sovereign country. For us, our domestic economy and 1.4 billion people come first. And whatever is in the interest of our country is what we need to prioritize. And if that means we have to buy oil from wherever, we get it cheaper, that's in the benefit and in the interest of 1.4 billion Indians. And hence nobody and no country can bully our country. So that's the step and stand that's been taken by the government, and we completely back that and support that because that's in the right interest for the country. So for me, it's kind of unbelievable what's going on. I'm not able to fathom it. I hope both sides are able to iron out their differences because we are natural allies and these are the two powers of the 21st century. There's obviously the United States, there's China, and there's India. And I think the United States knows that. I think India knows that. So I think, I hope that better sense will prevail and this kind of, this kind of diktat that's going on, the kind of use of language that's going on, stops and we go back to being friends, we go back to respecting each other. We may have our differences, but this is no way to negotiate between two great countries.
President Trump's tariffs will also impact India's GDP. Brokerages have said a sharp fall in exports and stress on India's current account deficit could pose a short-term downside risk to India's growth. Citi has projected that GDP growth will be impacted by nearly 1%. Meanwhile, Jefferies, the brokerage, also expects the rupee to come under pressure as capital flows are likely to slow down. India's National Security Advisor Ajit Doval has said that Russian President Vladimir Putin will visit India soon. According to a Reuters report, the Russian leader could visit by the end of this year. Speaking in Moscow alongside his Russian counterpart, Doval said that the high-level engagements during his visit were substantial and fruitful.
We have got a very special relationship, a long relationship, and we highly value our strategic partnership. We have had high-level engagements, and these high-level engagements have contributed very substantially. We are very excited and delighted to learn about the visit of His Excellency, the President of Russia, President Putin, to India. I think that the dates are almost finalized now. The more important thing is this, that is, these summit meetings have always been the watershed points.
The Chinese embassy spokesperson has responded to Prime Minister Narendra Modi's visit to China later this month. The spokesperson said, and I quote, "In today's complex landscape, it makes far more sense for both nations to deepen trust, manage disagreements, widen cooperation and promote peace in Asia and globally," end quote. Prime Minister's trip to China will be the first one since the Galwan clash in 2020. As the US moves to impose secondary tariffs on Russia's trading partners, the Kremlin has said that President Donald Trump and Russian President Vladimir Putin have agreed to meet in the next few days. White House too hinted that Trump is open to meeting both Putin and his Ukrainian counterpart. Ukraine's president also said that Russia seems more inclined to a ceasefire now. On Wednesday, US Special Envoy Steve Witkoff met Putin in Moscow. Trump described the meeting as highly productive. Now, if the summit happens, it would be the first direct meeting between a sitting US and Russian president since Russia's full-scale invasion of Ukraine.
There's a very good prospect that they will, and we haven't determined where, but we had some very good talks with President Putin today, and there's a very good chance that we could be ending the end of that road. That road was long and continues to be long, but there's a good chance that there will be a meeting very soon.
All right, on to the day's market action. A recovery in the last hour pushed the market into the positive territory, with Nifty ending close to the 24,600 mark. Broader markets performed well, and more than 30 Nifty stocks ended the session higher, led by IT, metal and auto stocks. Surbhi Upadhyay joins us now with the day's market action. Surbhi.
What a day on the street. Call it drama on the Lal Street. I mean, it was volatility, it was chaos, it was digesting the hit, and it was bouncing back. It was all happening over here. Digesting 50% tariffs. Well, the first hits came in, and the market very quickly, actually in the middle of the day, had slumped to a near 3-month low. The Nifty had actually hit that level of 22,425, which we last saw on the 12th of May. But then the dramatic turnaround started. Shorts started scrambling for cover. Now, why did that happen? The trigger came in the form of geopolitical news headlines, which suggest that there indeed is going to be a meeting with between the US President Donald Trump as well as Mr. Putin. Not just that, there were reports indicating that Mr. Zelensky is willing to have a face-to-face meeting with Putin to quote-unquote end the war. This was enough to get the shorts to scramble. So what we saw was a dramatic bounce from the lows. The Nifty rocketing higher to finally actually end the day positive. The mid-cap index also followed suit, and suddenly a lot of sectors that were taking the market down, they were all recovering. So the market is now pinning its hope on the prospects of at least the additional 25% tariff, that being taken away if there is a breakthrough on the Russia-Ukraine war. So let's talk about the sectors and the stocks then. The gaining sectors, IT, pharma, capital markets and banks. Some of the losing sectors were PSU and defense. And if you see how this played out in terms of stocks, so look at the Nifty. Gainers included Hero Motor, again, great numbers there, so thumbs up. A lot of IT names, Tech Mahindra, Wipro, HCL Tech. And then there were stocks across the spectrum, Eternal, Maruti, Bajaj Auto, and also HDFC Bank doing quite a bit of the heavy lifting. The losers, Adani Enterprises, Adani Ports, Tata Motors, and some of the FMCG and consumer names like Trent and Lever, they were on the back foot. NTPC as well. Like I said, PSUs were a weak lot today. Mid-cap movers, some hits. Rain Industries, Fortis Healthcare, Lupin, all the numbers, all the stocks reacting to numbers or earnings commentary did fairly well. There were names like First Source, Shakti Pumps, all on the positive side. But the tariff hit concerns continue to linger on the sectors that will get impacted, even at 25%. So Avanti Feeds, Waterbase, these are big seafood exporters or shrimp feed exporters to the US. So these stocks were down. Pearl Global, Gokuldas, after falling 14-15% so far this week, finally ended flat for the day. Now, while the short covering bounce has led to a dramatic recovery and a great positive close to the Nifty, tomorrow onwards, we'll have to answer the main question again. When will this tariff uncertainty on India end? Will we be able to finally negotiate lower rates? Because till this clears up, the critical question for the market is FPI outflows. That's the big worry. Will India see a derating in terms of how foreign investors are viewing us till we can negotiate some kind of a trade deal with the US? So uncertain times, but a great Thursday finish.
Great Thursday finish. Thank you, Surbhi, for that. In the currency market, the Indian rupee remained steady despite Trump's tariff announcement. It ended a little change from its previous close of 87.72. Dealers suggest the RBI may have stepped in with dollar supply early in the day. Dollar buying also remained muted, with traders expecting a possible resolution within 3 weeks. The rupee is down over 2% since July 1, making it the worst performing currency in Asia. And it's time for a short break. Coming up next, Congress MP Rahul Gandhi accuses the Election Commission of colluding with the BJP in a massive voter fraud. More details in a bit. Welcome back. Rescue operations continue for the third day after a cloudburst in Uttarakhand triggered a landslide. At least 6 people are dead and over 120 have been rescued. So this is the latest as far as rescue operations are concerned, and over 270 people have been relocated to safer areas. 3 CRPF jawans have been killed and many were injured after a bus fell into a gorge in Jammu and Kashmir's Udhampur district. The vehicle was carrying 23 jawans. Rescue efforts were launched immediately while 2 personnel died on the spot. 1 succumbed to injuries on the way to the hospital. Leader of opposition in the Lok Sabha, Rahul Gandhi, has alleged large-scale voter fraud in 2024 Lok Sabha elections by the BJP and the Election Commission. In a press conference, Gandhi flipped through a booklet of alleged fake voters added in the electoral rolls in various constituencies. He claimed there was a sudden addition of 1 crore new voters between the Lok Sabha and Maharashtra state elections. He also added that a Congress probe found over 1 lakh fake voters in Karnataka's Mahadevpur seat.
This is not our data, this is EC data. And EC कह रहा है कि हम फ्री एंड फेयर इलेक्शन करा रहे हैं और उनके डेटा में एक असेंबली में 1 लाख फेक वोटर्स हैं, फेक एड्रेसेस, डुप्लीकेट, फॉर्म 6, अलग अलग तरीके. तो हम इलेक्शन कमीशन से नहीं कह रहे हैं, हम हिंदुस्तान के युवाओं से कह रहे हैं, हिंदुस्तान की जनता से कह रहे हैं, ये आपका भविष्य है, गरीबों का भविष्य है, ये आपके आंख के सामने पूरा का पूरा सिस्टम चोरी किया जा रहा है.
And with that, it's a wrap on this edition of Business 360. News and updates continue right here on CNBC TV18.
The point is I'm changing the incentive structure.
Yeah.
The hospital loses money when they treat people. Now you tell me, Shireen, if today 6.5% of people are getting hospitalized, what do you think will happen when I change the incentive totally? And I say the hospital loses money when people come to hospital.
Nobody's going to be kept in hospitals. Now let's talk about how you're going about doing this.
I think what we are doing is for our customers, at renewal, when their price goes up and they are suffering on claims, we're advising them to move to narrow networks. All I want to hear in my ears is that the social security problem, yes, this company is at the forefront of solving social security. I know I will not get this credit ever. That's the only credit I want.
That you solve for India's social security problem.
For India's social security problem in a very, very thought-through manner. If you want to solve for social security, you will have to solve for hospitals. There's no other way. These are only 4 products I talk about. I don't talk about a 5th. Health, term, child education, pensions. Health insurance and term insurance, 150 crore rupee market. The whole industry should have been doing that.
Yeah.
That was the most important product. So I thought I was the person coming in to solve the biggest issue that our industry had. So why would the regulator have a challenge with me? People have their vested interests because of which they make your situation harder and harder and harder.
What's the aspiration in terms of size, scale, and impact?
I think 4 years is 1 lakh crores of insurance premium. We are planning to start something in pension very, very soon. I say things which I'm okay to have an argument about. I don't say things which I'm not okay to have an argument about.
As a young person who's starting up today, as a young entrepreneur who's looking to start up today, what is it that you would tell them?
It's the same as my children, what I tell my children. I tell them decide. Decide has everything in it. It has commitment, it has direction, you have put blinkers on, you're not doing anything else.
In 2008, an encounter with a group of retired army officers led Yashish Dahiya to a stark realization that millions of Indians were investing their life savings without transparency, financial protection, or guaranteed returns. Now, that moment sparked the birth of Policy Bazaar, a platform designed to bring clarity to India's insurance market. And today, it's grown into a full-stack fintech powerhouse. PB Fintech, which is the parent company of Policy Bazaar and Paisa Bazaar. Hello and welcome to Young Turks Reloaded. I'm Shireen Bhan. With an omni-channel presence in over 200 cities, market leadership in term and health insurance, and a growing footprint in the UAE in healthcare delivery, PB Fintech now clocks around 30,000 crore rupees in ARR. The company went public in 2021 and is now PAT positive. Joining me on the show today is the man who's been at the heart of this journey, an IIT, IIM, INSEAD grad, an Army kid and an Ironman athlete who cycled through grit, clarity and conviction to build one of India's most trusted fintech brands, now ready to give shape to his next big dream, making quality healthcare accessible to India's middle class. Yashish Dahiya, Chairman and Group CEO of PB Fintech, many thanks for joining us here on Young Turks Reloaded. It's great to have you on the program again. Yashish, thanks very much for your time today. But, I want to start by talking to you about what I believe is one of the most important aspects of entrepreneurship, and that's endurance. And in many ways, your Ironman journey converges with the need of entrepreneurship, which I again pointed out is resilience, perseverance, and endurance. How much of this do you think comes from the fact that, like me, you're a 4G kid who's had to bounce around every 2 years, packing up, starting afresh?
I think that has a lot to say for it, because you take things for, things that are hard, you take them for granted. Like, many of us stayed away from our dads as we were growing up.
Yeah.
Because they were in field postings and we just thought it was normal.
Yeah.
That, dad would come home for 2 months in a year. And we used to change schools every 2 years. Today, when I talk to my kids, they are not willing to do that. I think many of the things we take for granted as army kids are actually not very normal in the civilian world. But I think that certainly tells you to get along and not make a fuss.
Yeah, it certainly does teach you to just get on with things. And I think there is an inherent sense of discipline. There is an inherent sense of duty as well, which I think you kind of grow up with subconsciously.
Absolutely. Absolutely. You automatically feel the need to do the right things. I'll tell you a small anecdote. I did the half Ironman in Dubai at some point.
Right.
And I've done it many times. But at one point, I got off social media and all that stuff, and I did not post anything. Of course, I did not post anything. I did not even tell my own family that I had completed it. So Shikha, my wife, tells me that one day when we were just talking, that I know you did not complete the Dubai Ironman. You must have got injured and you must have stopped. So, and she said, show me the medal as proof that you have actually completed it. I said, Shikha, do you realize I have never not completed anything I have started. And that's just the way it is.
Well, so let's talk about what you started in 2008. And you were telling me before the show that people's perception is that this is a very easy business to do. But in 2008, and when I look back at that cohort of 2008, there was you, there was Dippy Goyal trying to do Foodie Bay, which then morphed into Zomato. There was the Bansals doing Flipkart. E-commerce and things like that. That was the sexy thing to do. Insurance, this sort of came out from nowhere. Why would you want to bet on a regulated sector? Why would you want to bet on a sector that for all practical purposes, had the government's imprint all over it. What made you want to do this?
I did not understand regulation as well as I could have. That said, I would have still done it because it's sort of, to me, this whole changing, making sure social security is there for the middle class in India is worth one life at least. So I feel very good that I'm spending my life solving that. So I would run it. But the only person who warned me about it was Sanjeev.
Bikhchandani.
Yeah, Bikhchandani. So when I met him the first time itself, he said, Yashish, do you realize this is a heavily regulated sector?
Yeah.
And regulation will be your biggest challenge. I heard him. I remember those words. I didn't give any weightage to it, any bhav to it. And I, because I did not know what it was. I had come from the UK.
Yeah.
And I was in a regulated sector. And the regulation was very light touch, right? They just said, do what is right for the consumer. That's broadly what the regulation says. They just do what is right for the consumer.
Yeah.
And what we were doing was the absolute right for the consumer. Think about it. Health insurance and term insurance, 150 crore rupee market. The whole industry should have been doing that.
Yeah.
That was the most important product. Today we all agree those are the most important products. The entire industry was not doing them. So I thought I was the person coming in to solve the biggest issue that our industry had. So why would the regulator have a challenge with me? I couldn't fathom that. But the moment you start walking, you realize that you're crossing wires at various stages. And it's a hard thing. And people have their vested interests because of which they make your situation harder and harder and harder.
I wanted to close your eyes and go back in time and think about that one moment. Perhaps there is one defining moment where all of this business of people telling you you're stupid to have considered doing this, why are you doing this, it's regulated, so on and so forth, it's hard stuff. Is there one defining moment where you felt that this is worth going all in on, and there was almost a validation of your hypothesis?
I don't think that kind of ever happened. I did it because I needed a job. I didn't have a job at that point. And I had to do something. So I was actually looking for a job back in the UK. And at the same time trying to do this. And genuinely, I was not super convinced about this. The real reason it happened was because my colleagues were a little more convinced that me and them should do something together. And even today, the validation is not there. I don't think anybody says out there that, oh, Yashish has really solved for social security in a big way.
Yeah.
All I want to hear in my ears is that the social security problem, yes, this company is at the forefront of solving social security. We have 300 million people in our country. We have 30 million people in our country who, like you and me, speak English, live English, they travel abroad, they have credit cards, they are well off.
Yeah.
Then there's 300 million who earn between 50,000 rupees to 1.5 lakh rupees a month as a family.
Yeah.
Okay? They're not poor. And they don't want to send their children to poor schools. They don't want to send they want to give their children good education.
They want the private infrastructure.
They want the private infrastructure.
Yeah.
Right? But the private infrastructure can set them back. The private infrastructure has been designed for the 30 million, not for the 300 million.
Yeah.
And that's our problem. And that is what I'm solving for. Right? My only hope is at some point in my life, and I know I will not get it. I already know it. I was speaking to Sanjeev the other day. And I said, I know I will not get this credit ever. That's the only credit I want.
That you solved for India's social security problem.
For India's social security problem in a very, very thought-through manner for maybe 30 years. 17 are over, maybe another 20 years. Right? And yes, you got this right.
So here's the interesting part. You're saying you're already assuming that you're never going to get the credit for it, and it's probably
that's the only thing I want.
And that's the only thing you want. And yet you've decided to now pivot to another business which is seen as complex, which is seen as highly regulated, and you're trying to now solve for India's healthcare problem. I mean, who does that?
If you want to solve for social security, you will have to solve for hospitals. There's no other way, right? What is, just look at the Europe, let's look at Europe. Look at the government spending. What is the highest amount of government spending for? It's for healthcare.
Yeah.
It's roughly 13-14% of GDP. And they do quite an efficient job from a government standpoint. It's not totally inefficient, right? You need that kind of money to solve for healthcare, right? Now, for this 300 million people, today, this person is earning 50,000 rupees a month. Saving is about 50,000 rupees a year. Right? You're talking about that person buying an insurance policy and going to a hospital where the per night cost is 78,000 rupees.
Yeah.
How's that possible? 6.5% of anybody who buys an insurance goes to hospital. That's the actual data in India, 6.5%. They stay in hospital for a little over 3 days. That means for every 100 people, 20 room nights are used.
Yeah.
Right? If the room night's going to cost 50,000, how is it possible? Right? The person can't afford it because 10,000 has to go for this. So basically, there's a problem.
Yeah.
And our problem is multifold. Insurance is also, remember, this 300 million people we are speaking about are a people who have very low trust. And they also, once they are ill, they really want to buy a health insurance policy somehow.
Yeah.
Right?
Yeah.
So they also are able to try and navigate the system to try and get a policy with some kind of false declarations. That does happen. Let's not walk away from the reality.
Yeah.
Right? There is a risk out there. And so how do you solve for both disclosure and cost at the same time? It's impossible to do it without, in some way, having a narrow network of hospitals.
Yeah.
See, today there are 14,000 hospitals. If I tell you, Shireen, you can go to any hospital you want to, whenever you feel like. You have a little malaria, you go and sleep in a hospital. That hospital, because it wants to make a little more money, puts you in the ICU for some time. Right? Who can argue with a doctor that, look, you're over-treating, you are over-indexing on various tests?
Yeah.
You can't. They're medical professionals.
Yeah.
So they're always right.
So how are you going to solve for that?
You're changing the incentives. Today, the incentive is, look, whatever we say, the incentive is, if you do an operation, you make money. Very simple.
Yeah.
If I go to a hospital and they look at me and they say, Yashish, you're very good, go back home. They make no money. But if they say, listen, Yashish, you've got a problem in your heart. You've got 75% blockage or 80% blockage. It'd be good if we put a stent through. Right? In fact, you've got this in 3 arteries. We'll do 3 stents, all separately. And I think the hospital makes money. Now, that's the incentive. That's the incentive problem. I'm trying to get to a position where the hospital does not make money by putting the stents.
So how does the hospital make money?
I pay the hospital 10,000 rupees at the beginning of the year. I may not fall sick. That is full profit for the hospital. 10,000 rupees in the hospital, and you do not have to make money. I fall sick. I go to the hospital. I suddenly need surgery. When I have the surgery, it costs the hospital.
Yeah.
They don't make money. It actually costs the hospital. Now you tell me, Shireen, if today 6.5% of people are going to hospital, are getting hospitalized and staying in hospital for 3 days on average, what do you think will happen when I change the incentive totally? And I say the hospital loses money when people come to hospital.
Nobody's going to be kept in hospitals.
Do you realize the 6.5 will automatically come down to 4? Do you realize the 20 room nights have suddenly become 8 to 10? Totally affordable. And that is what we're trying to solve.
That's not a small change, Yashish. This is a massive change that you're trying to bring about. The idea to get people on board with this, the medical fraternity on board with this, the current corporate hospital infrastructure to kind of see what you're doing. I mean,
No, I'm not trying to get anybody on board. That's why I'm setting up my own hospitals. And we'll hire our own doctors. And that's why we are leaning a lot towards the army, because retired army officers who have been doctors, we are hiring a lot of those people. And we are hiring young doctors who like this idea. We're both Army, Air Force kids.
Yeah.
Why do our parents have to go to a doctor to take, for any planned surgery, and get their permission to go to hospital?
Yes.
Why do they have to do that? You tell me, why do they have to do that?
Because the government's footing the bill.
Exactly.
Yeah.
The reason you have that gatekeeper is because the gatekeeper is essential to make sure that the costs don't go out of whack.
Yeah.
And there's no misuse.
Now let's talk about how you're going about doing this.
Yeah.
So you are going to be building hospitals yourself. You're going to be buying hospitals as well.
The hospital build is actually not important.
Right.
I could work with infrastructure from anywhere.
Yeah.
And I'm sure as we go forward, we will work with infrastructure built by others. It is just the first step. I think what we are doing is for our customers, at renewal, when their price goes up and they are suffering on claims, we're advising them to move to narrow networks.
Okay.
Because their price will be controlled, and plus, we will stand guarantee that their claim will be settled. But then they don't have the choice to go to any of the 14,000 hospitals. They have to do exactly what the army structure is. There is a gatekeeper. The gatekeeper will advise you where to go. And the narrow network does not need to be just our hospitals. It can be a narrow network of maybe 500 to 1,000 hospitals. If you need to be in hospital, you will be in hospital. If you don't need to be in hospital, you will not be in hospital. And in those hospitals, whatever treatment you require will be if it is required. It won't be because the hospital makes money out of it. That's broadly what we're doing. But the hospital is not the game changer. The game changer is the gatekeeper. We call it gatekeeper. You can call it general practitioner. So you have a general practitioner. So next, if you buy a policy from us, it would come at a lower price. But you would have to speak to a general practitioner for every planned surgery. If you have, or any planned hospitalization, if you have an emergency or what do they call it, accident or emergency, that time you can go wherever you want. No problem. Data is telling me at least 50% of the consumers will take
move your way.
100%. Zero doubt.
50%?
50% minimum. Because they already are doing it. 1/3 of the policies we sell are narrow network products. Already. And we started only 1 year ago. We started narrow network products. And now narrow network products are increasingly becoming more and more popular.
So now let's come to the point that people are confused about. What is this? Is this philanthropy? Is this your version of corporate social responsibility? What is this? Because your stock price has seen a significant fluctuation and volatility on account of PB Fintech's decision to invest in this business. And perhaps there has been some misunderstanding of the comments that you've made previously to say this is your passion, but this is also your idea of giving back to society. How should we read what this is about?
Hospitals cannot be my passion. Okay? If I was to do something from a passion perspective, I'd probably set up gyms. I'd probably set up...
Is that coming next?
No, nothing. I don't spend money on my passions. In fact, this is the only thing I spend on my passion, which is a watch, which I have to track my, running performance and all with. And I will not spend my company's money on my passions. I'm not that stupid and that dumb, right? Why people initially got confused when they heard hospitals, they thought some idiot who has built some online business is now planning to go and compete with the best hospitals in the country. Now that, I have no particular ambition. I have a huge amount of respect for the way hospitals are run today to try and claim I can run them better. No. If I was to build a hospital and try and compete with the best hospitals the way they are run today, I don't think I will be able to win. But please understand, I'm not a better seller of insurance than an agent. They are probably much better than my employees at selling insurance. I changed the incentive structure. And I'll explain what I did. I said, let us sell those products which are useful to the consumer. Let us not push those products only which make us the most money. And so what the agent, and don't get me wrong, but in typical, the distribution community is very good at is peddling the product where they make the most money. What Policy Bazaar is very good is at peddling the product where the consumer gets the biggest benefit. We also make money. It's not like we don't make money. We make money because of scale of operations. We make money because if you do good to the consumers, they come on your own. Why does Policy Bazaar make money? Because customers come to us on their own. The customers do not go to an agent on their own. The agent has to go scouting for customers. You have to understand, I changed the incentive. I did not become a better seller. I changed the incentive so that I was no longer in competition. That's what I'm doing here. I'm changing the incentive structure altogether, so nobody's competing with me.
So you're not up against the Max and the Fortises of the world.
How will they compete with me when I start reducing the incidence rate? They don't want to do it. The outpatient is set up to drive people to the inpatient. The outpatient does not make money. It drives people to the inpatient. What is my outpatient doing? Stopping people from coming to the inpatient. Treating them right there. Sending them back home. How do you compete when the other person wants to do the opposite of what you want to do?
So the aspiration of addressing or solving for India's social security problem, insurance done, 17 years on, hospitals, a journey that's about to begin. Is there anything else that you believe you want to address?
Let's try to see what is social security. Social security is, in my opinion, 4 things. One is health insurance, the biggest.
Yeah.
The second is pure life insurance, in which we actually have no major skill, except for the fact that we have an intention to work on it. And actually, nobody else in the distribution world actually has an intention to work on it. The other 2, child education.
Yeah.
I don't think we can support for schooling, because that people have to plan for themselves. So that will only happen if government ever, because like in the UK or in Europe, you have government schooling, right? So most people would send their kids to government schools.
Yeah.
That's not a problem we want to solve. But higher education is a growing cost. I think people need to plan for that. And why I say child education and not mutual funds is because mutual funds are great. But what if the person who's planning for the child expires? And that is why a child plan. Child plan only because it has waiver of premium, which means if anything bad happens, the insurance company pays the premiums for the next 20 years. The insurance company gives on top of that income support. That is why a child plan. And the last thing, pensions. Again, why do I say insurance for pension? Why do I not say other factors? I don't want to go into any specific ones. Because insurance is for 2 people. Pension is for 2 people. One of them can die. And that may be the earning person. And that is why, again, insurance. Because you buy the product through insurance because you pay that 0.5% or something you lose. Because you take essentially a life cover or a survivor benefit.
Yeah.
Please understand, whether it's mutual funds, whether it's NPS, whether it's PPF, nobody has that.
Yeah.
So insurance is a very unique product, and social security can only be solved through, and these are only 4 products I talk about. I don't talk about a 5th. Health, term, child education, pensions. And that's what keeps me alive. That's what keeps me going to office, right? Other than that, I have made enough money for myself, which I will not spend in my entire life. I won't be able to spend even 5% of it. I can happily, I can't even spend 1% of it, right? Because on the other hand, I'm competing for using less and less. And I have quite a bit, right? So anyway, I've spoken about what I mean by social security.
Yeah.
We'll address all 4 of them. Health is the most complex and the biggest of them. And so that is the one we are probably farthest down the line in trying to solve for. Pension, we are planning to start something in pension very, very soon, both within Policy Bazaar, with Paisa Bazaar, and maybe as a standalone portal as well.
Okay.
Focused only on pensions.
As a young person who's starting up today, as a young entrepreneur who's looking to start up today, what is it that you would tell them? What is the Yashish Dahiya playbook?
See, I got very lucky, so there's no Yashish Dahiya playbook. But I would say it's the same as my children, what I tell my children. I tell them decide. I said decide is a very important word. I will make one promise to you. If you decide something, it will happen. 100%. Decide has everything in it. It has commitment, it has direction, you have put blinkers on, you're not doing anything else.
Yeah.
So decide is a very big word. I used to tell my kids when they were kids that, listen, decide. And they said, what do you mean? If I decide to become an Olympic champion, I'll become an Olympic champion. I said, 100%, 100%, not 99.9, 100%. But I said, don't take decide lightly. Decide is a word you'll have to live with for the rest of your life. When you decide, also build trust and patience.
Yeah.
Trust that it'll happen and have patience.
So let's end by talking about what the next 15 years, what could perhaps capture the journey that you intend to make over the next 15 years? What's the aspiration in terms of size, scale, and impact?
Size is very hard to think when you think 15 years.
Yeah.
I think 4 years is 1 lakh crores of insurance premium.
Okay.
That puts you at a pretty large scale, right? And I think we'll be growing from then on also. We'll be part of the solution, not part of the problem.
So this 40-50% growth rate, you think is sustainable?
I just said 1 lakh crores premium. Do the math. Yeah. Last year we were at 23,000 crores. From that time we have 5 years. So all I'm saying is we are quadrupling in 5 years.
Yeah.
That's pretty average for us, right?
Well, Yashish, it's been an absolute pleasure speaking to you. Thanks very much for joining us and giving us an insight into how you're building out a new incentive structure as far as the healthcare business is concerned, the hospital business is concerned. We look forward to hearing much more from you when you're ready to talk about the rest of it as well. But it's been fabulous speaking to you. We wish you the very best of luck. Thanks very much for your time. Well, with that, it is time for us to wrap up this edition of the Young Turks Reloaded podcast. We hope you enjoyed watching this conversation. If you did, then tune in to us next week. Till then, from all of us here on the program, many thanks for watching. We'll see you again next week.
Let's talk money.
Hello and welcome to a brand new edition of Let's Talk Money. I'm your host, Surabhi Upadhyay. Well, it's been a little over half the year gone now, and it's been a different year, perhaps a difficult year for investors because it's not been a year of straight line equity market returns. So now, as you're assessing your portfolios, what's the prognosis? What's the advice? Not just for the second half of the year, but on a longer term basis. Is this a new normal of sorts that we are in when it comes to markets? Well, today on the show, we are going to get you the Motilal Oswal Private Wealth View. Ashish Shankar is with me on the show to take up a couple of questions that investors really have on their minds. Ashish, thank you so much for joining and welcome to the show.
Yeah, hi Surabhi, always a pleasure to be on your show.
You know, that's where I really want to start because a lot of people got used to very good returns, and returns in quick bursts. But the last couple of minutes, the equity market has been testing our patience. So first of all, you tell us, before we talk markets and portfolios, you tell us what investors are telling you when you talk to them across the length and breadth of the country.
So, I feel it is the much needed temperance that has come in. Because if you look at the last 3 years, it's been outstanding. I mean, till last October, you felt nothing can go wrong with equity markets. Portfolios were doing CAGRs of upwards of 20, and certain mid-cap, small-cap portfolios are doing 25-30%. If you remember, we were hearing about stocks going up in a vertical fashion on the SME exchange. Yep. Now you don't hear about the SME exchange. So I think this temperance was much required. I mean, as you know, we released a note at the beginning of the year in our publication called Alpha Strategist. And the title this year in January was Opportunity in Adversity.
Yes.
Right? Or Opportunity in Crisis. Because we felt that this year is not going to be as smooth after 2-3 years of spectacular returns. And it's been a very, very testing year, to say the least, so far.
Yeah, I mean, I'm just looking at the returns as well. I mean, at the index level, the Nifty is up barely 3.5-4% for the year as a whole. And even if you're looking at the mid-cap index, at the index level, we haven't seen gains. Individual stocks could have done, of course, much, much better. But Ashish, do you still get the sense of optimism from investors in terms of deployment? I mean, even if you look at flows that are coming to mutual funds, for instance, the SIP flows are intact, but the overall flows are, almost 40% lower from the peak. So what's the sense you get?
So it's a mood of skepticism right now. I mean, if you look at the indices, they don't tell you the full picture, right? Nifty seems to be up 4-5%. The mid cap is also doing fine. But if you look under the hood, right, there have been a lot of shifts. There have been sectoral shifts. There have been stocks which are down 20-30%. There are some stocks which are testing new highs. So the kind of exuberance we saw in September, October is not there today. So people are being a little skeptical about their allocations, especially when it comes to equities. So I think the mood is that of tempered optimism, which means that if you take the medium and longer term, yes, people are continuing to be positive on India, but they're saying, let me make my allocations in a gradual fashion. Absolutely. Because the last 6 months, whenever you've made an allocation into equities, you've got hit by something or the other.
That's true. Right? No, absolutely. And that is where, I mean, these are the markets that make you realize the importance of asset allocation and not having all your eggs in one basket, right? And we've seen that. We've seen gold do so well relative to equities over the last 12 months or so. So actually, let's start there. Now, let's come to your mid-year call as it stands. Purely in terms of asset allocation, where were you at the start of the year? And have you changed at all between fixed income, equities, precious metals, or anything else?
Right. So, same time last year, if you recollect, we had given a, I mean, even earlier actually, we had given a clear buy call on gold. Although we've always had gold in all our portfolios as a hedge. But we gave a buy call on gold because we believe that the future looks good and optimistic for gold as an asset class. So, it's done extremely well. Now we are saying that you must have gold in the portfolio. But it's probably not an investment call, right? It's more like a hedge, back to gold being a good old hedge in the portfolio. So about 10-15% gold, I would say. And I'm right now talking about a balanced portfolio, right? Equities, I would say still we are optimistic. But the outlook from a return point of view, you have to temper down. Let's say 12 to 15% is a good range to expect in equities in India going forward as well. So maybe 55% equities. And the rest, you could do it through hybrid funds, debt kind of an allocation, because hybrid funds give you the tax advantage. Obviously, for portfolios which are much bigger, you have things like structured debt where you can enhance the yields on the portfolio. But this is how, I would say you should look at your portfolios. And just to give you an analogy, because we've just had a historic win yesterday, right, over England. Right. So if you actually compare the markets to cricket, this month, the title of our report is called Middle Overs, right? So you have the pinch hitting overs at the beginning, right? And then there is a period where, it's a very boring period, but you should not lose your wicket, right? Those are the periods where you keep adding singles. I think in equity markets, we are at that stage, right? Don't do anything adventurous, don't do anything funny, stick to your asset allocation, do your flexi cap, large cap allocation. And just bide your time in the markets.
So take the singles. Maybe the big hits are not coming right now. Take the singles, save your wicket. It's that kind of time in the equity market. That's so nicely put, very well put. Now, within that, let's dive a little deeper. And actually, let's start with gold, because you mentioned that, right? And I remember our conversation many years ago where you took a very clear call saying portfolios can even go up to 15-20% on gold. Now, isn't the gold rally looking tired to you? I mean, what's the sense? And people are now moving to silver. So people think, chalo, gold chal chuka hai, let's buy silver. What do you say to that trend?
So gold and silver are not the same asset class, because silver also works on, economic growth. It's an industrial, it's a part industrial, part precious metal. So I'm not too sure about silver, because globally economic growth outlook has been moderated after whatever has happened over the last few months. Gold, we believe, should continue to be there in portfolios as a hedge. So I would say between 10 to 15%, depending on what kind of equity allocation you have. Because remember, gold is a hedge to equity allocation, right? So 10 to 15% is where I would put gold at. But between gold and silver, I would still stick to gold. I mean, silver is a little more complicated than gold. Because for silver to do well, you need global growth, you need industrial growth. Because silver is a commodity often used, in industrial applications as well.
Okay, all right. So don't sort of extrapolate the wins and the sparkle of gold entirely onto the silver market. Got that. So let's talk equities now. And you're saying, maybe about 50-55% of the portfolio should be direct, full equity. That sounds fairly low, right? Because historically in India, especially people who have the risk appetite, young or middle, sort of middle-aged, they'd want to have a lot more equity. Is this one of your, lowest historic equity allocations in the model portfolio?
No, not really. I mean, basically, I was giving you color on a balanced portfolio, right?
Sure.
For people who are doing SIPs and building longer-term portfolios, I think you can continue to invest into equities and be a little be aggressive as well. It's just that we are saying this is not a time to take a very bold call on equities. Right. So, which means overweight is not a stance that I would recommend. I would say that you should be neutral to all asset classes. And like I said, this is a time to bite through markets rather than trying to be very adventurous and trying to create a lot of alpha in the portfolio. So it's a time to just be careful. That's all.
Fair enough. Now, like I was going back to returns, and the whole question that then next comes for investors is mid cap, large cap, small cap, how to break up that equity allocation. this year, nothing has worked. I mean, the Nifty is up 3.5%. The mid-cap index is flat. The small-cap index for the year as a whole, year to date, is down almost 5%. So it's been tough in that sense. Between the market capitalizations, what's your call, Ashish?
See, it's a classical market for alpha managers, right? Because if you look at Nifty, even in the Nifty, you have stocks which have fallen 30-35%.
Yes.
Right?
Yes.
Take a TCS, which
Tata
is a
Motors,
bellwether
TCS,
stock.
IndusInd Bank. Yeah.
Right.
Yeah.
Who would
Yeah.
think TCS will fall 35%, right? And then if you go under the hood, right, below the Nifty, there are stocks which are hitting all-time highs. So what is basically happening is there are shifts happening in the economy.
Yeah.
So India is going from, let's say, a low-income country to a middle-income country over the next 3 to 5 years. So consumption patterns are clearly changing, right? A lot of money is going into newer sectors like renewables, manufacturing, and then you have the classic sectors like capital goods and defense coming back because of government capex. Now, unfortunately, a lot of these sectors do not have representation in your main index. So I think this is a period for stock selection. I would say I would be agnostic towards market caps. So a flexi cap fund works well. But in any case, a flexi cap fund will have between 50 to 60% large caps. Within large caps also, right, you have a digital platform which is hitting all-time high. And you have a traditional tech company which is hitting, you know, a 52-week low. So there's that divergence. So I think this is a classical pitch for a alpha manager, right, to pick up the right themes and create alpha in the portfolio.
I have to ask you this, and I know you have the 4 C's framework. I think that's what it's called.
That's right.
Since it's all going to be about the fund manager that you choose to back, right? Give us some names. I mean, so much churn in the industry as well. There are the old stars.
Right.
But in terms of, say, the top 2-3 fund managers that you have your eye on for the next several quarters.
Yeah, so we have more recommendations in the flexi cap category, as you would have guessed from my view. So there are 4 managers that we've put out there. One is somebody who has a small fund but very, very experienced in markets. Both of us know him well, Samir Arora, the Helios Flexi Cap Fund, excellent stock picker. Then, you know, Naren, again, the ICICI Pru Opportunities portfolio, slightly contrarian bent of mind, but, you know, creates alpha through sector rotation. Then we have the Motilal Oswal Large and Mid Cap Fund, which is a high quality, high growth kind of a fund, and the Nippon Flexi Cap Fund, again, a very experienced manager. I think between these 4 funds, you will get a reasonable diversification in terms of style, and all 4 have demonstrated track record in creating alpha. If I go to the mid and small cap names, maybe, you know, an Edelweiss mid cap fund has done extremely well. A Motilal Oswal mid cap.
You know, just hold that thought, because what I want to do is dive a little deeper into these funds and some of the fund managers as well. So we'll take a break and come back with exactly that, some of the key fund recommendations and why Ashish likes both the funds as well as the fund managers. Back with that in just a bit.
Let's talk money. Let's talk money.
Welcome back. We're discussing the mid-year outlook and the mid-year perhaps regime as you're evaluating your investment portfolios. What is it that you should keep in mind? And we're in conversation with Ashish Shankar of Motilal Oswal Private Wealth. Ashish has just told us that it is good to be very well diversified when it comes to your asset allocation, looking at the way markets are shaping up right now. So Ashish, let's now take it step by step. And you've given us a sense that you are going to be market cap agnostic in the equity space. So let's start there. I mean, maybe some funds for what it's worth in the large cap category and some in the flexi as well, which gives the fund manager the right to move wherever he or she wants to.
Right. So I think the first name that I took was Helios, right? Somebody who's been in markets for close to 3 decades, right? Is an excellent stock picker. Someone who believes that not committing mistakes is a way to create alpha. So I think a seasoned manager like that in this kind of a period will definitely benefit your portfolio, because it's a tricky pitch, right? I mean, you are hit with some news or the other every few weeks. So you need to ensure that your portfolio is positioned in decent quality names At the same time, you have some earnings tailwind as well going in the portfolio. So that's one name that I would definitely have in my portfolio. Then, of course, somebody who's, again, very experienced, believes in valuations a lot, which is the iPro Opportunities Fund. And it has a track record of creating alpha through sector rotation, right? And this is a perfect market for that.
And it's market cap agnostic.
It's again market cap agnostic. But this is a perfect market for sector rotation. If you look at the last 7 months, at the headline level, like you rightly mentioned, Nifty's not done much, mid cap, small caps have also not done much at the index level. But if you look under the hood, right, there are sectors which have corrected sharply, there are sectors which have come back. And just to name two of them, defense has come back very sharply after a deep correction, and you have NBFCs which have corrected sharply. So I think a sector rotation kind of a strategy will work quite well in this period. The third fund that I named was the Motilal Oswal Large and Mid Cap Fund. Now this fund actually blends in perfectly with the first two names, and I'll tell you why. Because of the thesis that a lot of the newer sectors are under the index. So if you look at the index, right, it's got the traditional sectors, and just to name two of them, banks and IT, where I believe that these sectors are fairly large now in terms of representation, plus earnings growth has been very, very slow.
They may not lead earnings
These
growth.
are tired sectors and they may not lead the earnings growth. A lot of the newer sectors are below the index, right? Whether it's renewables, digital, etc., etc. And Motilal Oswal as a fund has the track record of picking up high quality, high growth stocks and creating alpha. So actually between these three funds, you get a very, very good selection of sectors and stocks, and your ability to create alpha goes up quite sharply.
So great. Those are three ideas where you can be in a more or less market cap agnostic way. You give the flexibility to the fund manager to pick and choose across large cap, mid cap, and even small cap. But let's move on. For a lot of Indian investors, they love their mid caps, right? So they're wondering at some point mid caps have to start firing up, mid and small caps. Over here, which are the funds and the fund managers that you're liking now?
So in the mid-cap space, I think Edelweiss is one fund which has been very consistent in the mid-cap space. They've demonstrated consistency. They demonstrated the ability to pick stocks. I mean, they are basically running as per the GARP philosophy, growth at reasonable price. The quality selection is very strong. And then they also look at the valuation criteria. So that's one fund. The second fund, I would say, has been like the top performer over the last few years, which is again the Motilal Oswal Mid Cap Fund. They have demonstrated their ability to go through cycles in spite of a concentrated portfolio. Generally, you would find that the mid cap portfolios are very, very diversified.
Yes.
But this is a fund which holds 25 to 30 stocks and has managed to create alpha. So between the two, you get a reasonable diversification in the mid-cap space. In the small-cap space, we have two recommendations. One is the Invesco small cap. Again, an experienced manager. Because in the small-cap space, what is very important is you don't want mortality. So as you
companies dying out, basically.
Yes. As you go down the cap curve, quality becomes extremely important. Right? So I think Tahir is somebody who brings in that experience and attention of quality to the portfolio. So I think Invesco small cap has a good track record, and then you have the Bandhan small cap, again experienced CIO at the helm, which is Manish Gunwani. So these are some of the recommendations
on the equity side. Got that. So that's pretty helpful for those who are looking to add more money and looking at enhancing their equity portfolios. You have plenty of options to choose over there. Now, Ashish, hybrid funds. And, we've been seeing that. I track the data on a monthly basis as well. Last couple of months, very steadily, hybrid funds are now pulling in as much money as, pure equity funds. So clearly, investors are understanding the benefits of diversification. But how do you choose a hybrid fund? It's a very vast category, a lot of different types of funds, aggressive hybrid, balanced advantage, etc. So where do you start?
Right. See, generally, the hybrid funds are a stepping stone to mutual funds, right? People who are traditionally bank deposit investors, or people who've just opened a demat account and now want to start investing through mutual funds, they come through the hybrid category, and advisors also often recommend that as the first stepping stone towards building a mutual fund portfolio, right? So in that category, typically people go with tried and tested. Okay, so one of the funds which is the largest fund and still doing extremely well is your iPro Balanced Advantage Fund, right? Which is more aggressive towards equity, but they balance the portfolio also pretty regularly. Then the second one is HDFC. HDFC is more aggressive than ICICI. So these are stepping stones towards getting closer to equity allocation. Then you have the multi-asset category as well, right? Within the multi-asset category, one of the smaller funds that we've recommended is Vitok, right, which is true to label multi-asset. It's got gold, it's got equities, it's got debt, and even the debt portion, what they've done is partly, they've done it through the arbitrage strategy. So you get a taxation which is better. After 2 years, it's long-term capital gains. So these are few of the hybrid categories that we like. And then if you wish to be even more conservative, then you have the equity savings category, where the equity portion further goes down.
It's more like debt-like returns.
It's more like debt-like returns. The risk is debt-like, the returns are debt plus.
Okay.
So that's also a good category. So
and any specific AMCs you like here?
So again, I think there, you go with the bigger ones like an ICICI or an HDFC because they have track record in that category. So these are, and these funds actually come very handy in these kind of markets where the volatility is extremely high and you don't want to stomach that kind of volatility. For somebody who's not experienced and starting off investing, so on and so forth.
Speaking of debt-like returns, I wonder what your view is on REITs. It's a new asset class and again promises to be fairly steady but more tax efficient than even debt funds, which lost the pure debt funds, which lost that tax advantage. Is this an asset class you're liking?
Yes, for portfolios which are larger in size and people who can access, the exchange, REITs definitely make a lot of sense. The only thing to take care of in REIT is the volatility in the near term can be much higher than, let's say, a conservative debt fund like a equity savings fund, because the asset, the prices move almost like equity, right? So you have to take a 5-year call. Over a 5-year period, you will be fine because you get the rental income on a regular basis. Plus, the asset value also stabilizes over time. But in the near term, based on supply demand, right, the prices can vary quite a bit.
If you look at the REITs price on a daily basis, trading on the exchange,
very volatile.
then it could be.
It trades almost like equities, albeit less volatile than equities. So, if you do not have the stomach for that, then REIT would not be the first category that I would recommend. Probably you come into equity savings or balanced advantage funds, and then the next step could be having a REIT portfolio. And if you take a 3 to 5 year view, you'll be fine. You'll get returns higher than equity, and you'll also get the tax advantage.
Understood. So this is really helpful, and now we have ideas to choose from across all the different asset classes. So let's recap then. What is the final advice? And what would you say would be perhaps one or two of the big mistakes that we as investors need to avoid as we navigate these rather confusing markets?
Right. So every time, we say the markets are different, but they teach the same lessons. So if you look at last year, right, everybody was super bullish on small cap, mid cap, and a lot of people started investing in SME. Many people started going to IPOs, right? So ultimately, when it comes down to equities, it's about buying good funds, good stocks, staying for a longer period of time, having that patience going through volatility. So I think one big mistake that people probably would have committed, and now they are wiser, is going down too much on the cap curve, right? And buying these stocks directly, because a lot of these stocks don't have coverage, you don't have hand holding. So that's one mistake. Second is, going overboard on any asset class, right? So when equities were doing extremely well, people tend to load up on equities. They tend to go overboard. And then in markets like these, right, then you get a, rude shock on how your portfolio is performing vis-a-vis expectations. So I think, ensuring that you don't go down too much on the cap curve, take too much risk in frothy markets. Second is, sticking to your asset allocation. And in these markets, right, currently the markets we are in, I think the best thing to do is stick to the basics.
Keep it simple.
Yeah, things are tough. They will continue to be tough because I don't think this entire, challenge of what's happening globally on tariffs, etc., is over as yet. So we will see more of it.
Hunker down, stick to the basics, follow your asset allocation, and don't take on too much risk. So great advice. Thank you very much for putting it out so simply and beautifully for us, with some ideas, of course, of where we can be investing. Many thanks, Ashish. Great session as always. Thank you for joining us today.
Thanks, Surbi.
All right. Well, with that, we're out of time on this edition of Let's Talk Money. Keep sending us your feedback, comments, and queries. We will see you again next week.
Let's talk money.
Hello and welcome to News Center. I'm Parikshit Luthra. Donald Trump gets set to hike India tariffs substantially for buying Russian oil. This even as India has hit back, calling it unfair and unreasonable. India has denied Trump's charge that Delhi was fueling Moscow's war machine, instead asserting that it was the United States which had encouraged oil imports from Russia in the first place. And in the midst of all of this, Prime Minister Modi is scheduled to fly down to Beijing for the SCO meeting later this month. This would be his first visit to the country post the Galwan clash in 2020. As India and China attempt to improve ties, Trump's tariffs loom large. Speaking to CNBC yesterday, President Trump said, and I quote, "I think I'm going to raise India's tariffs substantially in the next 24 hours, end of quote. The US has already imposed a 25% tariff on imports from India, which is scheduled to take effect tomorrow. He was also vowed to impose additional penalties on India without divulging any details. Responding to the US President's threats, the Ministry of External Affairs has promised to take all necessary measures to safeguard national interests and economic security. India said it began importing from Russia because traditional supplies were diverted to Europe after the Ukraine war. In fact, India went on to say the US is actively encouraging imports of Russia oil by India as it strengthened global energy market stability. Meanwhile, India has called out both the US and the European Union for continuing to trade with Russia. In a statement by the External Affairs Ministry, India said US has been importing uranium hexafluoride for its nuclear industry and palladium for its EV industry, along with fertilizers from Russia. President Trump was asked about this today. He responded saying he does not know and will check and get back.
India says that the US imports Russian uranium, chemicals, fertilizers, while criticizing their energy imports. Your response to that, sir?
I don't know anything about it. I'd have to check, but we'll get back to you on that. Yeah, please.
Now, as Donald Trump threatened India with action due to high purchases of Russian oil, several economies, including European Union, have not been able to decouple from Russia completely. As per data from CREA, EU has paid Russia over $100 billion for gas imports since the start of the Russia-Ukraine war. European Union's payments for Russian imports were approximately 75% of the 2024 Russian military budget. EU's LNG imports from Russia were up more than 67% since the first quarter of 2021, while EU imports of Russian gas are down 70% in first quarter of 2025 versus quarter one of 2021. Now, these were not due to sanctions, but because of payment issues and infrastructure damage. Europe is also clearly struggling to decouple from Russian gas due to long-term contracts running till 2040 and the failure to attain sufficient non-Russia gas supply overall. EU has reduced trade with Russia, but as of 2024, the two-way trade was approximately $78 billion. This is less than $68.7 billion worth of trade between India and Russia. EU imports in 2024 were $41.5 billion and were dominated by fuel and mining products. European Union's trade with Russia has fallen sharply in 2025, but imports were still over $10 billion in the first quarter of this year. So who are the biggest buyers of Russian exports since December 2022 till June 2025? For coal, China was the highest at 44% of Russia's coal being bought by China, followed by India at 19% and Turkey at 11%. If you speak about crude oil, China was the biggest buyer, topping the list at 47%, followed by India at 38% and EU at 6%. For LNG, European Union was the leader of the pack, coming in at 51% of the purchases from Russia, followed by China at 21%, Japan at 18%. Now, let's put the spotlight on fossil fuel exports from Russia overall. Now, Russia earned 922 billion euros in revenue from fossil fuel exports since February 2022. EU purchased more than 212 billion euros worth of these exports. China is the biggest buyer of Russian fossil fuels, followed by India. But these are not the only two countries. More than 10 nations, including European Union, Turkey, Brazil, Singapore, Hungary and South Korea were also buyers. To take this discussion forward, I'm now joined by former Foreign Secretary Shashank and former Indian Ambassador to WTO Anjali Prasad. Also on the show with us is Ajay Sahai, Director General and CEO at the Federation of Indian Export Organizations. Mr. Sahai, if I can ask you first, what's been the current estimate analysis of the hit that exporters are going to face starting this month with a 25% tariff and penalty, which could take the tariffs anywhere upwards of 35%?
In fact, we have not been able to quantify how much is the loss because we are not sure of how much will be the exact duty. He keeps on shifting the goalposts. I'm not sure whether on account of penalties he will impose 10% duty or 15% duty. As an industry, we only look forward to two things. One is the clarity, other is the stability. Once he announces the duty, we will have at least the clarity in place. I'm not sure of the stability because 3 weeks, 2 weeks down the line, he can come with any levy on account of the fact that India is part of the BRICS. So that kind of challenges will remain. But fact of the matter is, even with 25% duty in some of the sectors, we will be definitely taking a hit because many of our competitors are at a lower duty, and probably from that perspective, unless the industry comes forward to absorb that much of duty, it will not be able to get the business. As of now, all orders are on hold because industry is not in position to calculate how much is the duty which they have to absorb.
Bajaj Auto posted a revenue growth of 6% year-on-year in Q1 FY26 at 12,584 crore rupees. The company's exports, premium motorcycle sales, CVs and Chetak delivered double-digit growth. The company delivered an EBITDA of rupees 2,500 crore and profit after tax of 2,100 crore. Bajaj Auto and TVS Motor Company have been leading electric two-wheeler sales, followed by Ola Electric. But the big issue and hurdle for the EV industry has been the rare earth magnet crisis, and now the industry will also have to face tariff uncertainty. There are US-India trade tensions, but that also has a ripple effect on tensions all around the world. Joining us now to discuss Bajaj Auto's trajectory here on in this uncertain environment is Rajiv Bajaj, the Managing Director of Bajaj Auto. Mr. Bajaj, thank you very much for joining us. Let me begin by asking you first about the US tariffs. An additional penalty of 25% coming in 21 days. If we don't have a solution, the tariffs would be 50%. How bad is this for the Indian industry overall?
Hi, Parikshit. Well, I don't know about the industry because every company's situation is specific to itself. For Bajaj, I can tell you in a word that we are quite unconcerned, and I'll tell you why. Our exports to the US are basically in two brands, KTM, that's about 10,000 vehicles a year, and Triumph, which is about 5,000 vehicles a year. So, firstly, it's 15,000 vehicles a year in a volume of about 5 million vehicles. So that's less than 0.5% as far as volume is concerned. Nevertheless, it's an important market. It's a very profitable market. So it's not a business we would like to lose. And I don't think we are going to lose this business. And I'll tell you why. In any case, from around this time, from August, September onwards, exports to such markets, including the US, do dip. Because goods will only reach there, by November or so, by which time the winter sets in. and demand turns down significantly. So in any case, the next 3-4 months are the weakest months as far as exports to such advanced markets are concerned, which means we have time to rejig the supply chain until almost December or January, when we will start again exports for the spring and summer season. And therefore, we have many options, whether we continue exporting from India because there is a rethought on the tariff, or whether we go via facilities that are in Europe or in Asia, such as Thailand, or somewhere in LATAM. There are many possibilities. So frankly, we are not impacted significantly, and we are not concerned.
Right. I would also like to ask you about how the global tariff situation is impacting your exports, and do you expect a hit in FY26 because of the sentiments and the uncertainty globally?
Not really, Parikshit. I mean, in a word again, or in two, I would say I don't see any impact. That post-COVID, once our export markets started recovering, particularly in Africa and LATAM, exports came back to a level of about 140,000 a month compared to about 200,000 a month pre-COVID. And as you may have seen, in recent months, they have come now nicely to a level of 180,000 a month, with an all-round secular recovery, and particularly so in LATAM, which we are very happy about because, again, with pulsars and dominars, it's a very rewarding market for us. Really, the single sore point that remains is Nigeria, that used to average 50,000 motorcycles a month and is still hovering around 15,000-20,000. So with the exception of Nigeria, for motorcycles and some markets like Egypt for three-wheelers, where three-wheelers are now currently banned, really our export markets have come back strongly. And I'm actually quite hopeful that if this trend continues, it may not be long before we are back to that level of 200,000 a month.
Right. Just to speak about the rare earth magnet crisis. In April this year, you had said India's EV industry could come to a grinding halt due to the rare earth magnet restrictions by China. What would be your outlook now, as China has not lifted the restrictions for India still?
Well, that is still a very, very uncertain situation. I must say this, every day is a new day. Again, it's a very company-specific situation, Parikshit. For us, as you are aware, that in the first quarter of this calendar year, the Chetak became the market leader in the electric scooter segment. And in the recent Q1 of this financial year, our electric three-wheeler, the GoGo, became the market leader in that segment. So what I'm trying to say here is that our volumes are quite high. We would like to do typically 30,000 Chetak a month and in excess of 10,000 electric three-wheeler a month. So for a high volume player, there is a big impact because we don't carry the kind of inventory in number of weeks or months that a low volume player would. And therefore, the immediate solution that seems to be working for us now is to get low rare earth, or LRE as it is called, magnets from China. That has started up. The next step would be to try and source LRE from elsewhere, because what if China bans LRE tomorrow? Then you're back to square one. So where else in the world can we source these from? And finally, I think all of us are working towards ferrite magnets or solutions that have no rare earth at all. So I think that is the roadmap ahead of us.
Right. What has been the cost implication of this to get low rare earth magnets? Have you had to do re-engineering?
Yes, of course. You have to incorporate certain changes in fundamentally your motor design to be able to operate at temperatures that are conducive to maintain performance, to maintain reliability with low rare earth. So fortunately, the R&D has really been working through the day and night on this for the last several weeks. And they have solutions in place for both the Chetak and the GoGo. And therefore, even as we speak, we are producing now with low rare earth magnets.
Right. Now, to what extent is the rare earth magnet crisis impacting your deliveries? In Q1 of FY26, what was the impact in percentage terms? And what is the kind of impact you expect in Q2?
As things stand today, I must again say this is a very uncertain situation, and tomorrow I could have a different answer. As things stand today, first of all, in Q1, we had almost no impact because the inventory that we were carrying between ourselves and our suppliers has seen us through in Q1 largely. And for the whole year, also, I think we will not have impact. Now, more specifically, in July, as you know, with the Chetak, we were at about 50%. With the three-wheeler, we made it to about 90%. I think we made 8,000 of the GoGo electric three-wheeler. I had said a couple of weeks back that I see us staring at a zero production month in August as far as electric vehicles are concerned. But I'm happy to say that, as I just mentioned, things have changed a lot in the last 2 weeks with the availability of LRE. We are now looking at least a 50% availability as far as the Chetak is concerned in this month, in August, and perhaps about 70% as far as the GoGo is concerned. Things stand today. For the month of September, actually, we should post our highest numbers ever, again, as things stand today. But we will still fall short of demand only because, demand is really high next month, anticipated to be very high because of the festive season. So today, if I have to hazard a guess, I would say something like 40,000 electric scooters, that is the Chetak, and well over 10,000 of the GoGo electric three-wheeler in September is not out of the question if the LRE magnet supply continues as it is continuing today.
Right. So if we were to ask you about the full fiscal, would you trim the production outlook, or you would say you will remain on track despite the crisis?
Neither of those two. I will actually say that we think we can now do better than we had even planned for the whole year, because by October, production should completely normalize. We should have made up for what we will lose, what we have lost in July and what we will lose in August. And in fact, the reception is so good. As I said, both these brands are market leaders in their segments. So in fact, I think we will hope to make and sell more in the second half of this financial year than we had anticipated at the beginning of the year.
Right. So if I could ask you, sir, what is the kind of overall numbers that you're looking at for the full fiscal in terms of production and the growth over FY25?
That's hard to say, Parikshit, because again, it's very, very uncertain. So it can get a little hypothetical. But I will tell you this, that in terms of capacity, we've pushed it up to 40,000 for the Chetak, and in anticipation of future launches, we are moving it up to 60,000 in the next few months. And for the three-wheelers, I think I would be right in saying we are pushing to 15,000 a month. We'd like to go even higher because although we are market leader, we are still a shade under 40% share. With the ICE three-wheeler, as you know, we have close to 80% share. And that's certainly our goal that, why shouldn't we have 80% share in the electric three-wheeler segment as well?
Right. In terms of more launches, what about the EV electric scooter plans? Are we going to see more variants of the Chetak at different price points, electric motorcycles, other EV products?
A bit of everything, actually. So as far as the scooter segment is concerned, as you know, we exited the ICE segment nearly 20 years back. So this is a segment in which we had to, we had a fresh start. So we started with the new avatar of Chetak as the electric. I think to answer your question, various SKUs of this platform at various price points, that's been done, I think, quite effectively, which is why we acquired leadership. Of course, more of the same will continue to happen, but we need to launch a new platform, which quite frankly, we would have launched in this quarter. We have deferred that now to Q3, possibly even Q4, as in January. It all depends on the availability of magnets because, as long as there is some constraint, we want to keep making more of what is obviously currently selling. before we introduce a new product and make life even more difficult for ourselves in terms of additional demand. As far as three-wheelers are concerned, unlike with the scooter, this is where, as I said, we are 80% ICE share. We are the market leader. We are leveraging that leadership, or we have leveraged that leadership with the GoGo. And I think we are going to take it further. I anticipate you asking me a question on our e-rickshaw foray. And again, we are starting production as we speak. I believe we will go to market in the first 4 markets on 10th of August under the brand Riki, R-I-K-I. So that's going to be our brand for the e-rickshaw segment. And as we have done with the GoGo, we'll build it up slowly. We will wait a quarter or 2 before we scale it up, because again, we need to get the product absolutely right. We are still, making our way up the learning curve in all respects of technology, product, and customer service as far as electric technology is concerned. So the scale-up will be gradual, but we are going to be in the market from this month. As far as motorcycles are concerned, this is not something that we have talked about so far, but I'm happy to share a first information on this, that this is a segment where, it's a bit between the Chetak and the three-wheeler. It's not that we are not in the ICE motorcycle, but we are not exactly the market leader or overwhelmingly the market leader. So what we're going to do here is, I think we're going to work with 2 of our strongest brands, the Boxer in export markets and the Pulsar, the world over, quite frankly, is a very, very strong brand. We're going to work with these 2 brands, and hopefully in the near future, we'll have something on that front, i.e. on the electric motorcycle as well.
All right. So you're saying you're working with the Boxer brand that is available in African markets and the Pulsar to develop an electric prototype. Is that what you're saying, sir?
To develop 2 electric motorcycle platforms, one each in the Boxer brand and the Pulsar brand, as a commuter and a sports motorcycle.
Bajaj Auto is infusing 7,200 crore rupees in reviving the KTM brand. This is one of the biggest investments that Bajaj Auto has made in many years. Why do you think this is so important for the group's future?
Well, fundamentally, Parikshit, while it may appear that a motorcycle is a motorcycle is a motorcycle, there are two worlds of motorcycles out there. There is one world of the volume brands, such as Honda, Yamaha, Enfield, TVS, Bajaj, etc. And this is roughly an industry size of 50 million vehicles. Of course, mopeds, scooters, step-through, motorcycles, all put together. This is, let's say, the mass or the volume space. And then there is the more premium or lifestyle space. That's more dominated, I would say, by brands, Western brands, such as, let's say, KTM, Triumph, Ducati, BMW, Harley. These are the better known ones. And this is a annual industry size of a little under 1 million a year. So it's 50 million here, it's 1 million there. And quite frankly, these are very different businesses, different business models, obviously, because the scale is very different. The whole the levers of brand, technology, quality, cost, distribution work very differently in these two spaces. And we have always been of the belief the last 20 years that while the Bajaj brand is very appropriate, very competitive in the first world of 50 million vehicles, where we have a lot of headroom to grow because we are under 5 million in a industry size of 50 million worldwide. But however, I think we have the humility to understand that our brand is not going to carry over effectively in terms of pricing power, let's say, in the second world of the premium or the lifestyle products. And that's where the association with KTM and Triumph is really invaluable for us. And that's fundamentally the reason why it was necessary for Bajaj to step in when it became necessary because of this crisis that came upon KTM to keep this brand going, to keep this operation going, because even for us from a business point of view, it's a significant revenue and a significant contribution to our bottom line.
Right. That's an important statement. I'm sure that investors would also be wanting to hear. Now that you've decided to invest so much money in the KTM brand, how would you like to now scale it up, considering that Bajaj Auto is now fully in the driver's seat with KTM?
Quite frankly, scale is not the most important thing for KTM, I think. I think, in this world of motorcycles, as I mentioned, the industry size is about 800,000 a year. Market shares don't move by much. The qualitative metrics are more important here. And I think, we've obviously been grappling with this issue for the last 6 months. We've had some very good meetings with our counterparts at KTM. Almost the entire senior management team was here last week for 2 days. And I can tell you that the roadmap ahead rests fundamentally on these two thoughts. First, we have to restore the brand. As unfortunately happens sometimes with success, you tend to diffuse the brand by extending it into too many categories, too many segments, even beyond the core segment. And the second thing that then leads to, the brand diffusion leads to, is this proliferation of SKUs that makes the business very complex, right from R&D to the dealer workshop. So we have to first, in my opinion, we have to restore the brand to the core. And from that will follow a great simplification of the operations, which will have a very salutary effect on the company. The second thing we have to do is to reset the cost. To put it very simply and bluntly, European manufacturing is dead. I think the auto industry, including the car industry, understands that. Now, they would have the political, social, and other compulsions why they cannot move everything out of Europe to somewhere in Asia to produce more competitively. But let me give you an example of Triumph. Mr. Blower moved 100% of Triumph production to Thailand over 15 years ago. Every single Triumph motorcycle that is made today is made either in Thailand and of course more recently in India. If Triumph can do this 15 years back, in principle, why not KTM? And I have never, or we have never shared this specifically before, but let me tell you that while KTM struggles in Europe, the KTMs that we make and export out of India to different parts of the world bring us a EBITDA margin of over 30%. And the main reason for that is the great cost competitiveness that India and the Indian supply chain and our excellent suppliers offer. So we have to reset the cost of KTM. We have to restore the brand. And if we are able to do this effectively, then I think KTM has a very bright future.
Right. That's an important point. What does this also mean in terms of revival of KTM exports?
KTM exports, well, before this disruption, you would know that our exports of KTM motorcycles worldwide were of the order of about 15,000 to 20,000 a month. As I said, very profitable. If I'm not in the Jan-Feb March quarter, this fell to zero, so it reduced progressively as they found themselves in trouble from the middle of last year. And in the first quarter of this calendar year, I think we exported nothing. In Q1, if I'm not wrong, we are back to 14,000 or so. So I would say the lower end of the normal. And I'm quite hopeful that as we move forward, for two reasons, we should do even better. One, because KTM is, step by step, every week getting stronger, which means dealers, distributors, etc., things are normalizing. And secondly, perhaps you are aware that in terms of the new Duke, the new Adventure, the new Enduro, and Supermoto, we've just started up with several new products. So I think that will bring us additional business as well. So I think the short story is that KTM exports may well hit a new high, of course, subject to the Trump tariffs.
Subject to the Trump's tariffs. I would also like to ask you about the possibility of launching a twin-cylinder bike. I think you had teased this in an interview to us a few years ago. Mr. Bajaj, what's the status of that?
No, you are right. I mentioned it to you. In our industry, there is no maxim, no principle that is more true than this, that there is no replacement for displacement. So yes, we are working on such a motorcycle characterized by being bigger in displacement, by being a twin, and really having a lot of new technology, a lot of cutting edge stuff on it. Still work in process. I think still about a year or so away. It takes time, but certainly we will be out with that.
So this will be the biggest Bajaj Auto product till now, bigger than any of the KTM bikes, bigger than the Pulsars?
The biggest, the fastest, the sharpest, the smartest. Yeah, I think it will set a new benchmark.
In terms of strengthening measures to recover market share in the 125cc plus segment, how has that fared so far in Q1, and any more actions that we see?
Yeah, so I will be very candid in saying this, Parikshit, that on the one hand, I think we have done very good work as far as product is concerned with, as I just mentioned, KTMs. As you may be aware, in this month, we have launched the new Triumph Thruxton. Soon the Triumph Tracker will come to market, if I am not wrong, by October or so. Great work's been done on the Chetak front, on the three-wheeler front, including the electric three-wheeler and the Riki, the e-Rick. Having said that, we have also failed somewhere, and we should be, honest about that. And we have failed a little bit with the Pulsar. When you speak of the 125cc plus segment, I believe you are referring to our domestic motorcycle performance. And I think, Pulsar is a very, very strong brand. It's a, 15,000 crore brand for us annually. It's a brand that in the domestic market, even now, from 125 to 400cc clocks about 100,000 vehicles a month. So when the brand is fundamentally strong, the primary reason for it to lose some space, some traction in the marketplace, can only be that it's at the end of its life cycle, which is the case with the Pulsar. We need to see some new product in there, and I'm happy to share with you that starting October, that will happen in quite a significant way. And then every quarter, we have something exciting in the Pulsar brand for our customers. And I'm sure that, the little bit of share that we have lost, which we don't like at all, because Pulsar is really the mainstay of the company, especially in the domestic market. I'm sure it will come back quite quickly, because that's how, strong brands behave.
Mr. Bajaj, thank you very much for joining us on the program, giving us your overview of the industry right now, the tariff situation, and how Bajaj Auto is really rejigging its product lineup for the future.
Thank you, Tariff.
Hello and welcome to India Business Hour. I'm Shireen Bhan. The big stories that we're tracking for you this evening. More than 90 countries face higher taxes on their exports to the US starting today. India faces a 25% tariff rate. This will double to 50% from the 27th of August as President Trump penalizes India for importing oil from Russia. Prime Minister Modi pledges to protect the interests of farmers after US President Trump hits India with the highest tariff rate in the world. The Prime Minister says he's ready to pay a heavy price. Government sources say India will try to negotiate with the US as the 50% tariff rate takes effect only after 21 days. Textile, jewelry, engineering and other industries fear a standstill on exports. Many say a 50% tariff rate is similar to a trade blockade, but India Inc. remains hopeful of a resolution. The Indian economy braces for a growth hit as Trump doubles the tariff rate. Citi projects GDP growth to be impacted by nearly 1%, expects the rupee to come under pressure as capital flows are likely to slow down. Russia's President Putin will visit India later this year, says the National Security Advisor Ajit Doval, who's on a visit to Moscow. Prime Minister Modi will visit China for the first time in 6 years on the 31st of August. The Chinese embassy calls both nations to deepen trust and widen cooperation. The Kremlin says US President Trump and Vladimir Putin have agreed to meet in the next few days. Ukraine's President Zelensky says Russia seems more inclined to a ceasefire now. A roller coaster ride on Dalal Street, the Sensex and the Nifty stage a dramatic recovery in the last hour after declining to a 3-month low. The rupee gains marginally against the dollar as dealers suspect RBI intervention. Shares of Zomato's parent Eternal exchange hands in a block deal worth over 5,600 crore rupees. Alibaba-backed Antfin is likely to have exited this company. This will mark Antfin's second exit this week after Paytm. SoftBank books a profit of nearly $3 billion in the first quarter. Tech investments, especially in Nvidia, boost profits. The value of the Vision Fund rises $4.8 billion thanks to gains from listed companies like Swiggy. Rescue operations continue for the third day after a cloudburst in Uttarakhand triggered a landslide. At least 6 people dead and dozens feared missing. The army says 70 people have been rescued so far. More than 50 people are still missing. Congress leader Rahul Gandhi accuses the Election Commission of colluding with the BJP in a massive voter fraud, claims there was a sudden addition of 1 crore new voters between the Lok Sabha and the Maharashtra state elections, adds that a Congress probe found over 1 lakh fake votes in Karnataka's Mahadevpur, a seat BJP hits back, accusing Gandhi of attempting to destroy democratic institutions. The Supreme Court dismisses Justice Yashwant Verma's plea against the in-house committee's report on the cash pile found at his residence. The verdict sets the stage for an impeachment motion in Parliament. Well, let's go straight to the top story this evening. President Donald Trump's new tariff regime takes effect today. More than 90 countries face higher taxes on their exports to the U.S. In a social media post, President Trump claimed that billions of dollars were now flowing into the U.S. due to a hike in tariffs. Exports from India face a 25% tariff starting today. This will double to 50% from the 27th of August after President Trump has penalized India for importing oil from Russia. Now, textiles, leather, engineering goods, agri and seafood sectors are expected to be hit the hardest by the increase in tariffs. However, certain sectors continue to remain exempt. This includes goods targeted under the sector-specific duties like steel, aluminum, pharmaceutical and semiconductors. India's electronics exports are also exempt at least till the 14th of August as things currently stand. Prime Minister Modi has pledged to protect the interests of farmers without explicitly mentioning the tariff hike by the US. Speaking at the Swaminathan Centenary International Conference, which is in the memory of the father of India's Green Revolution, the Prime Minister said he's ready to pay a price if needed. The Trump administration has given India a 21-day window before the tariffs kick in. That's the additional 25% tariff. Sources tell us that the Indian government is working towards finding a solution and is aiming for a win-win deal. Here's the Prime Minister. Take a look.
हमारे लिए अपने किसानों का हित सर्वोच्च प्राथमिकता है। भारत अपने किसानों के, पशुपालकों के और मछुआरे भाई बहनों के हितों के साथ कभी भी समझौता नहीं करेगा। और मैं जानता हूं व्यक्तिगत रूप से मुझे बहुत बड़ी कीमत चुकानी पड़ेगी, लेकिन मैं इसके लिए तैयार हूं। मेरे देश के किसानों के लिए, मेरे देश के मछुआरों के लिए, मेरे देश के पशुपालकों के लिए आज भारत तैयार है।
Well, that's the Prime Minister. Now, industry bodies have said that a 50% tariff rate is similar to a trade blockade. They seek the government's intervention. Manisha standing by with more on the impact of higher tariffs on specific sectors. Manisha, the sectors that are likely to be the worst hit, take us through them.
Well, dozens of sectors will bear the brunt of Trump's tariff take. Let me take you through the gems and jewelry industry first. And U.S. is the largest export destination for the industry, accounting for $9 to $10 billion annually, which is almost 30% of overall exports. The fear of higher tariffs has led to a 75% drop in exports in the month of July. As things stand, all exports have been suspended. The Jewelry Export Association is seeking government intervention and has requested state governments of Gujarat and Maharashtra already to provide relief to the workers. Next on my radar is the textile industry, where the U.S. accounts for more than $8 billion in annual exports. This is 35% of India's overall textile exports. Industry believes that the U.S. buyers will not accept such a steep hike in prices. They have also halted all shipments to the U.S. and trade has completely stalled. The Federation is calling for support from the government, including the removal of 11% import duty on cotton. They have also asked the government to release cotton stocks to cushion the impact. Another industry that will be impacted is the seafood. Total annual exports to the U.S. stand at nearly $3 billion for this one. The Industry Association is estimating loss of 24,000 crore rupees. They believe that India is at disadvantage compared to other countries and have called on the government to explore alternative markets. And finally, it is the Rice Exporters Federation also fearing that it could lose out to Thailand, which faces a much smaller tariff at around 19% compared to India's proposed tariff rate of 50%. The rice exports last year was worth $42 million. The Industry Association has said that trade stands suspended as they await clarity. These are just some of the worst affected industries due to the U.S. tariffs. Here are the reactions from the corporate leaders on the U.S. tariff hikes and its implications.
It's very difficult for any industry to mitigate a 50% tariff.
Yeah.
Well, let's understand that. That's impractical. We've been talking to our customers. The customers understand this. They're supportive. And they all believe that there will be a political solution on the table sooner than later. We have taken a tariff hit of about 14 crores, okay, which is roughly about $1.6 million on an export of roughly 200 million.
If there is a 200% or thereabouts, I'd say anywhere from 20% to 200% tariff on pharmaceuticals, it would have a significant impact on the U.S. market per se. I mean, as we've talked in the past, 70% of the drugs in the U.S. are imported. 50% of generics are imported from India. So obviously, high tariff will have an impact on drugs that are imported from India.
For Bajaj, I can tell you in a word that we are quite unconcerned, and I'll tell you why. Our exports to the US are basically in two brands, KTM, that's about 10,000 vehicles a year, and Triumph, which is about 5,000 vehicles a year. So, firstly, it's 15,000 vehicles a year in a volume of about 5 million vehicles. So that's less than 0.5% as far as volume is concerned. Nevertheless, it's an important market. It's a very profitable market. So it's not a business we would like to lose. And I don't think we are going to lose this business.
They want our US part of the business to be moved out to Bangladesh, Indonesia, and Vietnam, where we have our facilities. And I think that would be I would say, a death knell for at least for this particular season, which is coming up for the Indian industry, because 50% tariff, most of the retailers won't be able to absorb or have any mitigation.
And if that means we have to buy oil from wherever, we get it cheaper, that's in the benefit and in the interest of 1.4 billion Indians. And hence nobody and no country can bully our country. So that's the step and stand that's been taken by the government, and we completely back that and support that because that's in the right interest for the country.
Well, reactions there coming in from India Inc. Meanwhile, the Trump administration has continued to defend Washington's additional tariffs as a response to India buying Russian oil. White House trade advisor Peter Navarro called India the Maharaja of tariffs. And as we've been articulating, both those claims are without fact.
The fact that India is the Maharaja of tariffs. It's the highest tariffs in the world, charging on American products. And it's got high non-tariff barriers, so we can't get our products in. So we send a lot of dollars overseas to India to buy their products in an unfair trade environment. India then uses American dollars to buy Russian oil. Russia then uses those American dollars that come from India to finance its armaments to kill Ukrainians. And then American taxpayers are then called upon to pay for the weapons that have to defend Ukraine against Russian armaments paid for by American dollars that came from India. That's got to stop. That math doesn't work. The president understands the connection between economic security and national security, so that was the bottom line there.
Well, India's stance is clear. It will stand its ground and not blink first, especially on allowing the US greater access to sectors like agriculture and dairy.